The Tamil Nadu twist. Join me in the midst of politics and people. Vanakkam Tamil Nadu. Here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show. You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open with Tamanna, Alex and Neeraj.
Very good morning. You're watching India Market Open, where you're probably going to see a different mood in the markets today, and for a couple of reasons. One is, after getting pushed down so bad, you need some kind of a rescue, and the other one is Benjamin Netanyahu appears midnight, gives a long press conference, proves that he's very much there, all fingers intact, and also gives indication that things are going to cool off.
Yeah, cross fingers for all of that, isn't it? So many times you've heard this.
No pun intended.
Yeah.
No pun intended. Really, yeah. But arguably the most important thing that has happened over the last 12 hours or 18 hours. These days, 12 hours seem longer than 24 hours, but yeah, be that as it may.
Yeah, so I thought that it was certainly a response to what was being said by the US, both the president as well as the administration. And I think his statements as well, Donald Trump, must be seen in the context of everything that's taken place. So both of those,
which statements?
Overnight, he's also made certain statements about the fact that, okay, you know, we're hoping that things cool off.
Yeah. So Trump has reiterated what he always does, that their army is over, their navy is over, their air force is over. But the problem is that after saying that several times, the attack still continues. But let's listen in to what Benjamin Netanyahu said. He's confirmed Israel has struck Iranian energy site, but this is the important part. He says that we did it without the US knowing. The US has now told us to stop, and we will. Listen in.
Well, I'll say two things. Fact number one, Israel acted alone against the Slawia gas compound. Fact number two, President Trump asked us to hold off on future attacks, and we're holding out.
Okay, the other developments overnight, missiles have struck the Ras Laffan, which is Qatar's LNG export capacity. It's caused them to slash their export capacity by 17% with a $20 billion annual revenue loss. As per the Qatari government's post, repairs may take up to 5 years, forcing long-term supply disruptions globally. Meanwhile, damage to Qatar's key LNG hub has disrupted supplies of gas to Europe and Asia, tightening global gas markets and raising risks of sustained shortages. Prime Minister Modi has voiced solidarity with Qatar and condemned the attacks on energy infrastructure, stressed the need for a safe Hormuz navigation and thanked Doha for protecting Indian nationals. Brent, meanwhile, is at $105 per barrel. So it's cooled off a bit as Qatar LNG disruption and Strait of Hormuz tensions on the one hand have stoked supply, but then after the comments from Netanyahu, Brent has cooled off a bit, still above 100. Treasury Secretary Scott Bessent's comment is also important. He's saying they may unsanction Iranian oil stranded at sea. So that's lent some comfort as well. As far as global cues are concerned, US markets closed lower but off lows after Netanyahu's statements that we spoke about. Just pull up the indices for how US markets closed, and you will see that down tick 200 points down on the Dow, but better than the low point of the day. Futures is something that we should pull up as well and see if there is a change in mood. They certainly is 150 points up on the Dow as per the futures trade. Treasury yields moved higher as war has fueled inflation fears. The 10-year was at 4.25%, but the real spike, about a 6 basis points spike, was in the 2-year, the short-term Treasury yield, showing that those fears are continuing. Gold and silver have followed the metal meltdown. Now, this is one of the big stories overnight. Metals have seen a massive meltdown, and gold prices, the gold future prices dropped nearly 5%, silver 10% before a mild uptick. Oil prices, like we said, have cooled off. What's added to that relief is Scott Bessent saying that US may allow Iranian oil, which is on the seas, to be sold. Let's pull up the latest Brent rates for you, and you are at about 105 on the Brent right now, compared to 119 as high as we hit yesterday. Definitely a relief. Asian markets, let's pull up Asian markets because you have the implied in India showing a bit of an uptick, but Asian markets not really looking like they're recovering anytime soon. 3.5% down on the Nikkei. The India implied is important to note at this point, and hopefully we will see some relief coming in. 184 points up, nowhere close to the massive losses yesterday. Steve Englander joining in. He's global head of G10 FX research and North America macro strategy at Standard Chartered Bank. Steve, a very good morning to you from where we are sitting. Thank you so much for joining in. Does it look like you'll see at least some further recovery in equity? Let me start with global equity and emerging markets if this trend continues. The problem is, even with Benjamin Netanyahu saying it's going to end very quickly, the credibility of anyone claiming that is now under a bit of a cloud, isn't it?
Well, there's a couple of elements to what he was claiming. I think the first important one was his statement that Israel wasn't going to attack Iranian gas facilities any further. And I think there's an expectation that Iran stops attacking Gulf energy production facilities. If that holds up, there's no reason we shouldn't see oil prices go down a little bit more. And, that would be positive for equities, weaker for the US dollar on a risk rally. And ultimately, it's very unclear which way things are going, but it did look like an opening from the Israelis to Iran to sort of, at least limit activity in a certain segment of the war.
Hi, morning from where we're at. The question I have for you is about monetary policy, and it's an important week, this. But having said that, I'm talking about what happens in the next few months, with now the street already penciling the possibility of rates going up instead of down, and the implications that has across asset classes. What do you think is the likely course from this point on?
Well, I think that the market's being very quick about pricing in aggressive hikes. Not so much in the U.S. where the rates curve is flat in terms of expected Fed moves, But in terms of Europe and the UK, they expect 2 to 3 hikes in the course of this year. That seems like a stretch. The economies aren't that strong. Inflation isn't that big a problem. But the markets have become very aggressive. And that was the theme in the US morning. Why did the dollar fall? It wasn't because of good news. It was because the Bank of England and the ECB seemed much more hawkish than the market had anticipated coming into those meetings.
Yeah, but I mean, Steve, to be fair, Australia, which has been, or RBA, which has been fairly hawkish, has done 2 rate hikes already. So the question therefore, the follow-up that I have to Alex's question is, could the sentiment, if not the reality of rate hikes, impede equity market valuations more?
It could, and that's perhaps part of the reason we're seeing gold and silver kind of weaker overnight. But they would have to be very aggressive. I mean, we think that for the central banks to move as much as they're moving, we probably actually have to see core inflation pick up in key economies. We don't think it's going to be the inflation pickup is going to be that dramatic. So as I said before, we're kind of, we think the market may be overpricing a little bit some of the some of the moves that are likely to be made by central banks. But I think the central banks want to retain credibility in the short term, and to them that means sounding hawkish.
Steve, a pleasure having you as always. Thanks so much for taking the time. I hope by the time we speak next that this is resolved.
So do I.
All right, let's talk about what happened in trade yesterday. As much as I hate to do it, it sets you up for what's going to happen today, right? You had a sharp across-the-board fall in the equity markets in India, and you had foreign institutions that were sellers once again. Don't be surprised at that, right? 7,500 plus crore rupees worth of equity sold on a net basis. Domestic institutions, for once, buying a lesser amount, 3,863 odd crore rupees have been bought on a net basis by domestic institutions. The benchmark Nifty 50 dropping as much as 3.3%, ending just above that 23,000 mark, which we broke below briefly during trade yesterday. All but one stock, the Lone Ranger, ONGC, everybody else lost ground on the Nifty 50, 49 constituents. And the Nifty 50 hitting the lowest level since April of 2025. It was also the biggest intraday fall since April of 2025. The fall from the 52-week high is now 13%, with quite a bit of what we gained during this week wiped out in trade yesterday. In fact, all of it. The Nifty 50 now trades below all of its key moving averages. HDFC Bank weighed the most on the downside, losing over 5%, having recovered from the low point of the day. The Nifty Bank lost 3.4% because HDFC Bank was not the only loser. In fact, all of the constituents of the Nifty Bank fell, but ICICI Bank, falling as much as 3%, was quite a big weight. Broader markets also declined quite sharply in line with the benchmarks, and all sectors lost significant ground. Even energy and oil and gas, which were the least impacted, were down 1.4%, 1.9% respectively. Only one stock gained for every 9 that dropped in trade yesterday. I haven't seen a market breadth as bad as it was yesterday in quite a while.
Really?
Yeah.
I mean, okay, maybe not 1:9, but 2:9 might have happened just
Not
3 days
as bad,
ago. Yeah, it's just been those kind of days, isn't it? Point well noted. And I think Alex rightly put it that as much as he hates doing it, it sets us up for what happens today. Just that today might be slightly different on morning, so that oil cool off may certainly aid sentiment, but frankly, it's advisable to be cautious. And I was at an investors meet yesterday, attended by a clutch of family offices, etc., and everybody was worried, cautious. I mean, these are the benign terms that I'm using, to be honest. It might be advisable to stay away from oil sensitives, and the reason being the volatility is extremely high on oil prices. So sure, oil prices may cool off today, or have cooled off today. You might see a bit of an uptick on oil marketing companies, but who knows? By the way, the difference between NYMEX and Brent is fairly high as we speak, so keep that in mind. Accenture numbers may aid sentiment, but note that the stock was lower in pre-open session, so keep an eye out for that as well for IT stocks. And I think the broader question about how to invest in the current scenario is that for the longest time, or for a lot of investors, I won't say for the longest time, but for a lot of investors, macro stopped being a headwind. It was always, oh, go bottom up. If there is a valuation that has come in, go out and bet the truck and buy. I think there is merit in respecting the macro cross currents. And even if growth doesn't collapse in India, because we might actually still come out of this looking very, very rosy on the growth front relative to a lot of other economies. In fact, I would say all the major economies, but rate hikes or potential of rate hikes, supply chain disruptions, etc., might all hit companies in Q4 and maybe Q1, and they may disrupt portfolios. Frankly, the one thing to do is, instead of putting in fresh money to work, please go and re-examine your portfolio. A lot of things that worked maybe in 2025 might have a completely different dynamic in 2026 because of what's happened in the last 4 weeks, and therefore it might be merit in trying to rotate things out of your portfolio and get in maybe things that might do well, banks, IT, who knows, whatever your poison might be right now. But that might be more advisable, even if it means booking losses in some of the things which are going to see massive operational metric and supply chain impact going ahead in Q4 and arguably Q1, because frankly, nobody knows when this is ending. So keep that in mind.
A few more sessions to go for the end of the financial year, you can actually harvest taxes.
Such a good point.
It's a great time now, more than anything else, before you start the new financial year.
And you've got what, 8 years, right?
8 years, you can set off capital losses.
So explain that properly. So if you book losses before the end of the financial year, it will actually help you.
It will help you. So here's the thumb rule. Short-term capital losses, which is what you make for holding a security for less than a year, can be set off against both short-term gains and long-term gains for a period of 8 years. Long-term capital losses can only be set off against long-term capital losses, and that and that is for a period of 8 years. But remember that this does not relate to intraday gains that you might make. Intraday gains, or rather losses, can only be set off against intraday gains that you might make.
Okay, so there might be some upside to the kind of red you're seeing on your portfolio one way or the other if you want to book those losses. Well, some of the other factors to watch out today, the fact that the coalition of some NATO nations led by the UK has put out a statement yesterday saying that they will be cooperating with the United States in securing the Hormuz is also an important sign, and maybe the markets will read that as positive. Having said that, the kind of drawdown we've seen in the markets will take some time to claw back. After a 13 lakh crore wipeout, the index is now fighting to prevent a fourth consecutive weekly decline. Market recovery seen earlier this week is completely gone. Last 2 Fridays have been brutal, characterized by weekend risk selling. So watch out for that. That's the problem, right? When there's a 12-hour news cycle or a 6-hour news cycle, can you really sit with a solid position till next Monday? So in March, Nifty dropped 1.2% on the 6th of March, that is on the 13th of March, these are all the Fridays, Nifty dropped 2%, with the index closing at 23,002. Any failure to stay above 22,950 could trigger an automated stop loss hunt. Crucial support 22,900 is the immediate floor. A decisive break below this opens the gates for 22,700 and 22,500. Any dead cat bounce will face stiff resistance at 23,200 and 23,500. The banking index is facing severe structural damage right now. It suffered its biggest correction since June 2024. Support sits at 53,265 and 53,050. Resistance at 53,960 and 54,175. So those are some of the factors you need to watch out for. But let me go across to Sharad now for the F&O setup this morning.
Well, overall, if you look at the opening cues, they are suggesting a little bit of positivity after, of course, Israel and US commentary coming on, the easing the tensions in the war, and that's why the Asian markets were also up. The US futures also trending up, and Nifty implied open. We are having a 200-point up move initially. We are expecting a little bit of technical reversal can be at play, but remember, the situations are developing and there might be a lot of volatility in the day's trade as well. But let's look at how the DIs and cash market is panning out, and we can see the FIs, the cash selling has increased again from 3,000 odd crore to almost 7,500 crore rupees, and for the 16th straight session, FIs have been selling in the cash market. DIs are absorbing roughly around 3,900 odd crore rupees of absorption is there. The F&O shorts, it's still, you could say, between 86 to 87 odd %. So we definitely need a good amount of short covering, and I think it's going to take some more time. Nifty, the net open interest PCR, that's a decent. It's around 1.1 times, but I would like to mention the put action where it's happening here. If you could just show the important contract between call and put and look at that amount at 23,000, a very big congestion level is coming here. But on the call, there is a 2303 and 23,500. This is where the action is coming. Stock specific moves, largely 90% of the stocks were seeing a short build up in yesterday's trade in the F&O market. My choice is Coal India. Over here, there might be some congestion on a positive basis, especially as it's a dividend play and some delivery based buying might happen. And on the other hand, PB Fintech might see much more sell-off also because of the adverse news flows coming in as well. But apart from that, the metal pack, the Tata Steels and even the Hindalcos will be under the pressure as there's a massive sell-off happening in the global markets.
Okay, thank you for that, Sharad. Let's get to the stocks on our watch list. A group of stocks in some cases. HDFC, I'm looking at first. I mean, so much said and talked about HDFC, such in-depth coverage that we have done here on NDTV Profit, including an exclusive interview with the CEO of HDFC. Just taking you through what brokerages are saying this morning after the drawdown, and largely it's positive, which is why that thumbs up. BofA maintains a buy with a target price of 1,175. Says the unexpected chairman exit adds to uncertainty, but fundamentals remain intact. Believe the exit reflects personal differences between Atanu and the senior management. Bank has demonstrated a consistent track record of best-in-class governance with no significant issues in over 25 years. Remain constructive on the bank given current valuations and improving operating performance. Sustainable improvement in loan growth is key to drive the next leg of re-rating. Jefferies has also maintained a buy. The target price is 1240, saying the comment from the outgoing chairman of no wrongdoing. That's, by the way, from an interview to NDTV Profit that Atanu Chakravarti gave, a statement to NDTV Profit that Atanu Chakravarti gave, where he said no wrongdoing. That's what's been quoted by Jefferies. It says that and the clarification from RBI are comforting. Valuations appear attractive. Kotak has a slightly more nuanced view, which is why I've added it. They've said limited clarity on the reasons for the exit is likely to remain an overhang, prompting heightened investor scrutiny of senior management changes and or renewal timelines. They're talking about the CEO, Shashidhar Jagdishan's renewal of position, which is coming up. This uncertainty poses a risk of valuation derating despite steady execution. They've maintained a buy on valuation comfort, but re-rating triggers remain unclear. They also say discount to ICICI Bank would widen and premiums converge to Axis Bank. So keep that in mind. IT is the other one that I'm looking at. So the Accenture results are out. This is usually an early indicator of what it means for Indian IT companies, or a read-through as we call it. Here's what Morgan Stanley says. They say a largely inline read across for Indian IT peers. Historically, Accenture's managed services business has shown stronger correlation with Indian IT service revenue so far. Trends in this business show some deceleration. That's why the thumbs down, because they're saying this particular managed service business, which is closer to what Indian IT services revenue looks like, shows some deceleration versus last year for Accenture, though the overall numbers were steady. Key verticals such as financial services have shown deceleration in momentum year on year, which is slightly picking up for Indian IT services. CLSA on auto stocks is the other one I'm looking at, because you saw some recovery in auto, and they've titled it interestingly, the note, they're calling it crude is still rude. They're saying FY27 earnings decimation or just Q1 being impacted for auto is the question. They believe that if the current situation persists, there is a possibility of 30 to 40% cuts. Repeat, 30 to 40% cuts to FY27 earnings. So they are comparing it to what happened in COVID, saying that during the first COVID wave, over a 40-day period, Indian auto OEMs generally corrected in a range of 30 to 45%. Therefore, another 15% correction in the current environment cannot be ruled out. Beyond such a correction, margin recovery in FY28, supported by a reversal in commodity prices or adequate price hikes through FY27, should be reflected in evaluations. They've given their top picks within the space: M&M, Bajaj Auto, TVS, Tata Motors PV and Ashok Leyland. So it looks like maybe some more pain. Although whenever you see a mood recovery in the markets, autos also move in tandem now. But if this continues, and I'm seeing some reports maybe that even if things were to cool off now, you'll probably see crude coming back to 80 levels only by end of this calendar year. Because of the damage that has already been done.
Infrastructure, yeah, the infrastructure getting hit. In fact, the Qatar statement just ties into that quite well. It's going to take years to put that together, and significant cost as well. Metals is something that you should keep on your radar, the counters I mean, because the underlying commodities have actually seen dramatic price action on the downside. And that has not just been overnight, though one might argue that it was exacerbated or exaggerated overnight. This is now on various concerns. First, for silver and gold, you've seen prices drop on account of inflation worries. There is expected to be a spike in inflation across the globe on account of that energy disruption, the supply chain disruption, and that does not bode well for monetary policy. So you will see interest rates go up potentially, and that will have a bearing on bond yields, which in effect has a bearing on the dollar, and that has a bearing on commodities. So silver also falls on account of uncertainty in industrial demand. This is something that was looking absolutely red hot before the start of the conflict. Copper prices have fallen for the 7th day on Thursday. They've actually fallen on account of surging LME stockpiles as well as weak demand from China. Aluminium prices have also dropped quite sharply on profit taking as well as geopolitical uncertainty. So that whole raft of stocks which saw a dramatic correction yesterday as well could well be under the hammer in trade today as well. JK Cement, pretty standard update. The company has been declared a preferred bidder for a limestone block in Andhra Pradesh. The block is obviously something that they have bid for. It's spread over 1,188 hectares. And finally, Nestle India. This is also a pretty standard update. 225 crore rupees, not the largest amount of money for Nestle India, but this is to increase Munch production. I'm talking about the chocolate that you're probably familiar with. This is at the Sanand factory. The new line is going to have capacity of 8,300 tons per annum. Neeraj, when was the last time you had Munch?
Yeah, I was about to say, I didn't know it was this popular.
You know, I used to quite like Munch when I was a kid.
Perk and Munch, right?
Yeah, Perk and Munch. Perk over Munch.
For me, Munch over Perk.
Okay.
Loker over Perk and Munch both.
You are fancy. Loker, it seems.
I don't know what he's talking about.
Loker is this lovely imported chocolate.
Wow.
No, but wafer biscuits, effectively, right? Pickwick se chalu hua tha.
Pickwick, oh
Pickwick se
my
chalu hua tha,
God,
right?
that's now really retro. I wonder how many of our viewers know what Pickwick is. That would be interesting.
Not too many, I would guess. Okay, just a couple of names, not too much in addition to this. I think oil marketing companies keep an eye out for that. I thought the Jeffries note laid out what actually people should be saying. That one, remember that oil price sensitives difficult to trade, but Jeffries says this very well, that HPCL's earnings collapsed the most, followed by IOC, and BPCL is the most resilient. So the one pool where you shouldn't fish, and within that pool also, if you want to fish, don't fish HPCL out of the water, I must tell you, because that has got a real problem because of this crude price uptick. Happiest Minds could be in news again because EQT Partners Group apparently eyeing a chunk of stake in the company. Remember, this is one IT name which has actually gone ahead and hiked its guidance. So keep an eye out for Happiest Minds. It's come off a little bit in line with everything else after that spurt when it raised the guidance, but sure, keep an eye out for this one in the session today. So that is another one, and yep, I think keep an eye out for banks by and large. I think the uptick, HDFC Bank ADR was down just 0.8%. Tamanna highlighted all the notes around it. SBI is in news as well because SBI Funds Management has filed the DRHP for an IPO. So a lot of these stocks might be in news individually, but maybe banking as a space could be interesting.
Well, it's about time for banking to have some recovery coming in with after the massive happening that has happened.
For sure. Okay, let's slip into a break then, guys. Let's slip into the break on the note that we are not doing too bad. We'll come back and try and talk more about this. Speak to Sandeep Agarwal of Suvillo on what will happen, what could happen to the IT names because of the Accenture numbers.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m.
Welcome back. You're watching India Market Open. Pull up the implied. You'll see a bit of an uptick today. And why am I calling 192 points a bit of an uptick? Because when you finish a trading session with a 700-point drawdown, 188 points is just putting some balm on the bruise. And that's pretty much where the markets are right now. We also have to continue to see some up movement. Now, a couple of things might aid the sentiment in terms of what's happening geopolitically. We talked about Benjamin Netanyahu's press conference, midnight press conference, India time, in which he's saying we're going to win the war quicker than people expect, but we'll have to wait and see if that really happens. The important part, he's saying we're not going to attack gas fields anymore. The attack we did was without America's knowledge and against their wishes. They've told us not to do it anymore, and we won't. So that may create hope that there is, on the Iranian side, there are no counterattacks on Gulf countries' energy installations. So, which is why you're basically seeing that uptick. The other thing, of course, is a coalition of NATO allies or US allies coming together now and saying, okay, we will help you keep the Hormuz Strait safe. Now, how exactly that happens, is it military or not, will remain to be seen. Meanwhile, some stocks that we'll talk about this morning as well. Nazara Tech, just because we give you all the important brokerage notes, yesterday there was a bit of excitement about the stock because of their acquisition, though it did end about 5% down. And if you watched the show yesterday, you would have seen that we did say valuations could be a concern. This is something CLSA has come out and underlined. They've maintained an underperform with a target price of 190 rupees, saying continuing acquisitions and deal outflow of $300 million equals, in their view, risk of equity dilution. They continue to see Nazara's valuation as expensive and reiterate our underperform rating. So that's just one stock to keep in mind. But let's start our conversations this morning. We have a full table this morning, full house. Khush, Bora, Parag Thakkar in the studios, and hopefully we don't repeat the Friday curse. We would just put out data that every Friday, especially towards the end of the day, becomes very tough because people don't want to go into the weekend.
Yeah.
No,
people want to enjoy weekend.
Yeah, and so people have Dhurandhar tickets, I'm sure. So what would be the take today in everything that you've seen in the last 12 hours, Parag Bhai, especially from Netanyahu's press conference?
So one big takeaway for me is that Mr. Trump and the entire world wants to bring oil prices down. saying to Israel that you don't attack on energy infrastructure in Iran is a clear message, right? He wants to bring oil price down, which in my view is a very good beginning, and this might end up in de-escalation in next week. This is my hope, and I pray for it because oil yesterday was 119, today it is 106. So it's a good news to start with. But as you rightly said, this Friday curse is there, so people might go with lighten up positions. But I think on Monday we should be doing well. This is my hope, and the fact that Mr. Trump has said this, that you don't attack.
Add to that Scott Bessent saying we will unsanction
Iranian oil.
I mean, irony of ironies. You're in war with that country,
Yes.
which has some of the heaviest sanctions in the world, but you're saying right now
Yes.
you can sell your oil so
Yes.
that oil prices come
Absolutely.
down. If America ends up buying Iranian oil, that's, I don't know what that will tell you about how war is fought right now.
Yeah, but I completely, the big leaders, the big guys who matter, they have decided now that oil, enough is enough. Now we have to bring oil price down first, which is a very big positive.
The worry, Parag Bhai, is that they have overextended and they have done more damage than was thought initially. And they know that Iran is not going to backtrack at this point. So the worry is that thesis can maybe not pan out.
I think, see, worry will always remain in the market. We are never going to see a market which is worryless. There is no worry in the market. You will have this kind of things in market. But I think, I always go by intent. That is my way of working, and the intent is to bring oil prices down, which is very, very positive.
Is that borne out the idea of Monday looking more positive than today on the technicals?
You know, one of the reasons I smile is because we're talking about everyone going light on a Friday, कोई position लेके नहीं. Right now being light means short positions cover करके जाओ. Everyone is so heavily short on the market. So आज आप जो gap up देख रहे हो, that could perhaps extend. I'm not saying that it will. Let's see how the day progresses. But it would just actually mean कि इतना heavy short हो गया है कि light होना means taking those short positions off the table. But even before that, tell me, guys, are your social media feeds already flooded with everything Dhurandhar, and have you already heard of the surprises and the twists?
A little bit. I saw reviews saying it isn't that great, so I don't know.
Yeah, so like I said yesterday, I still prefer 1 over the 2, but 2 is still a good movie and you should watch it for sure. But talking of twists and surprises, I think market में bottom कब बनेगा और reversal कब आएगा, ये एक ऐसा twist है ना जो हम सबको साथ में पता चलेगा. Once all the sides come on the table and say that the worst is over, is perhaps we'll all know together. But that said, let me at the risk of putting myself out there are green shoots. Twice we've rebounded from the 20 to 950 zone, positive divergences, massively oversold. So this is something that it just needs that spark of things cooling off, and you could see a V-shaped recovery on the markets, at least from a short-term perspective. Not saying that will happen, but I'm saying there are indications. So I remain positive. And as is my philosophy, I will not buy the dip, but I will buy the rebound. Even if it is feeble, even if it is getting sold into the next couple of days, I still remain constructive. And like I said, I wouldn't buy the dip, but I'll buy the rebound. On the downside, 22,800 is the support on Nifty. And on the upside, 23,300 is the line in sand to cross for us to move higher.
The one thing that might actually help the markets a little bit as well, I mean, it's too fluid right now, but the one thing that seems certain is that new issuances and follow-on offers are going to go down quite dramatically because of the way the private market valuations have come off and the appetite in the market. So if there was capital which was competing for primary markets, pre-IPOs and private markets versus equity markets, I think a large portion of that will come in. So at least the IPO paper is safely out of the window for the next 3 months in a meaningful way.
To compete with
The secondary markets. And therefore, that is that little bit of an antidote that we may have. And frankly, but that is just clutching at straws. I don't think too many people.
That was the bane in 2025.
And perceived to be the bane in 2026 as well. I mean, not just in India, Hong Kong, etc. Everywhere, 400 IPOs in that index. But yeah, I mean, that is that one small thing that you got to keep in mind. I wonder though, Kush, just before we get to our guest, very quickly, your stock recommendations for the day.
Sure. So I'm going with 2 longs and 1 short call today. Wheels India, this has done phenomenally well. And by the way, I am very constructive on the auto ancillary space. A lot of names keep popping up. So for Wheels India, targets are 1015, 1040 and stop loss at 965. Aditya Birla AMC, one of the stocks that we've discussed in the past as well, has lost some ground yesterday, but on the whole, the structure still remains positive. So 965, 990, these are your targets. 900 is where you keep that stop loss and have to have a short position as a hedge. So ICICI Lombard is a short with targets of 1775, 1755 with a stop loss at the 1815 mark.
Okay, let's talk Accenture. Accenture reported its Q2 FY 2026 earnings, revealing a robust performance surpassing forecasts. Sharad is here with more details to highlight how this reflects for Indian IT. Sharad, take it away.
Well, interestingly, the numbers were stronger than the street estimates, be it the revenue front and even the bookings. Margins also saw a good jump. But interestingly, in the trading hours, the stock did fall in the trade session. The brokerages, if you take a look at it, it's been, you could say, neutral to kind of a mixed reviews coming in from the brokerages. And it seems like an inline to slight negative read-through for the Indian IT companies. But yes, there is an important tailwind, and that is the rupee depreciation, which might aid the numbers going ahead. But one important thing for the Indian IT stocks is the valuations and the return potential. You should look at that. The valuations have come off. Of course, the expensive ones like Coforge and Persistence are on the higher side of the 12-month forward P ratios. But the main big IT names, TCS, LTI, Mindtree, Wipro, HCL Tech Mahindra, all of their valuations are below the 20 times 12 months P ratio, and the 12-month return potential, if you look at it, these is more than 45% for most of the companies. So definitely value is there on the table, and most of the companies 10-year average P ratio is also below it. So we might see some kind of a technical bounce back if there is a positive momentum in the IT play.
Got it, Sharad. Thanks so much for that. Sandeep Agarwal, fund manager at Sovilo Investment Managers, joining in right now to talk about his takeaways from Accenture results and what is happening right now with the IT pack as a whole. Sandeep, as always, thanks so much for taking the time. We have spoken with you more often in the recent past, particularly because of the kind of carnage that we've seen in the IT pack. And the last couple of times that you've spoken to us, you've been more bullish on the pack than you've been at any point, I think, over the last 1.5 years at the very least. What did you make of the Accenture numbers, that guidance upgrade? And do you reiterate your stance to say that you can go out and look at IT companies, particularly because of the way that valuations have come off so dramatically?
Hi, good morning. So, thanks for having me on the show. So I was reading some of the notes, analyst notes on Accenture, and what I believe is that, I have a very contrarian view on that. So if you see 15, 16 months back, when Accenture's outsourcing book was very growing well and consulting was not doing well, that time I went very negative, because I always believe that always a demand environment should be gauged by the consulting piece. And if consulting piece is weak and outsourcing is strong, it means that in near term there is good demand, but in long term there could be challenge. Now, exact opposite is happening right now. If you see Accenture numbers, this quarter consulting has shown good green shoots of revival, and outsourcing is showing little weak. Unfortunately, because of this reason, many people have mixed to negative view. I think that is not the way probably we should see. In my view, this is the biggest positive, and things are definitely turning around. If you see all the statements made on the conference call also, like, increasing of headcount, allocating more money for acquiring talent, the AI employee strength already crossing 80,000, which was the target. All these things clearly suggest that, things are now again turning around in the space. And I am not saying that turnaround is like this, this sector is going for 20% growth, but can it go 5-6% growth for the large names? 100%, I believe so. And you have 3-4% tailwind from rupee, and all these companies very smartly has not recruited people for last 2 years. So I believe that, good money around 30-40%, I think, can be made quickly in this sector in the large names. Although I still am not constructive on the ER&D, because ER&D space, I believe huge correction should happen from here also, at least after all 30-40% which is gone, another 20-30% is due, and then when it will revive also, I am not sure. But rest of the pack, non-ER&D, that is the IT services, traditional services space, which is trading between 12 to 18 times, I think is very, very good. time to start buying them, there is definitely a tailwind of rupee also now.
Sandeep, you've been consistently positive on IT for some time now, and that shift we have also captured. But from Accenture specifically, the service management space doesn't necessarily show the kind of uptick which is a positive read-through. So are you positive on IT, Indian IT independently, or does Accenture make you even surer of your take which already exists?
No, so I'm very confident that 5%, 6% growth is not dependent on what Accenture has announced or not.
Okay, so that is separate.
That is independent, but I am only reading one line from Accenture whole numbers that, all signs are showing that things are reviving. So still, independent of that, even if Accenture numbers would not have come at current valuation, I am very positive on the IT services space. And that doesn't change. With Accenture gives me more read-through, positive read-through rather than negative. I always want consulting to be first turnaround, because if consulting turnarounds, you have 2-3 years of good pathway to growth. Here, consulting has shown a turnaround. What is not showing good is the services management services and the outsourcing, which is directly linked to Indian IT services, and that is the reason people are reading negative. But you also have to understand that first consulting has to turn around, and then only services will start showing up after 4-5 quarters of lag. So I think there is definitely a turnaround. You will not see very poor result in this quarter from any of the tech companies. I think they will be more or less in line with estimates, and there will be no more negative surprises. That is what my sense is in this quarter.
Okay, Sandeep, many thanks for that. Thanks for taking the time out and giving us your view. Parag bhai, I know you wanted to add something to that. So very quickly, you are constructive large cap IT.
I am very constructive on Infosys, TCS, HCL Tech kind of companies. HCL Tech promoter is buying. HCL Tech or Infosys or TCS dividend yields are in excess of 4% at current earnings, and I am also in the Sandeep's camp that 5% growth at least for companies like Infosys, HCL Tech next year, along with rupee depreciation, will take their EPS growth to 8-9%. And so at current 4.5% dividend yields, they are very attractive. And by the way, I would like to add that Accenture opened gap down after the results, but recovered 4.3% in the end. Cognizant was up 2%, Infosys ADR was up 1%. So I feel that what Sandeep is saying is right. The market has read it. It is as a positive for Indian IT services companies or IT services company as a whole.
Well noted. Okay. Well, we'll try and talk about the chart view as well on IT stocks once they open up. So keep that in mind. I think the proof of the pudding will be how the market reacts to them at 9 a.m. But here's a very interesting story. Like we've all been talking about how cheaper drones are reshaping rules in the battlefield. But drones have been used for saving lives as well in Bengaluru. Narayana Health's medical samples in the city now fly by drones. They don't get transmitted or transported by road. No pilots, no trials, 700 live flights, real patients, and 0 failures from what we learn. This is important not just in terms of scale, because but it's also, I presume, multiple times cheaper and more efficient. Is this the future of hospital logistics? Dr. Devi Prasad Shetty, founder and chairman of Narayana Health, joins us right now with more insights. Dr. Shetty, good morning and thanks so much for taking the time out. Now, is this true? 700 flights, no failures, and more efficiency? Or has the number gone up, by the way?
Yes. See, I just want you to understand the larger picture.
Please.
Technology will disrupt the healthcare beyond anyone's imagination. In the process, cost of healthcare will go down, safety margin will improve, and customer satisfaction will be huge. Now, we are in the process of building multiple hospitals. And the future hospital, the one hospital I'm talking about is in Banashankari in Bangalore, which will be commissioned in the next 2 months. In this hospital, there are only people who are going to touch the patient are going to be working there. This is a paperless smart hospital where people in scrubs are going to work. In this hospital, there is no lab for blood testing. There is no blood bank for collecting the blood from the donors. Every service required from the laboratory and blood bank point of view is done in our flagship hospital in Electronic City. And Banashankar is about 30 kilometers away. And in this hospital, entire blood bank services, lab services are provided through the drone. And we have done the trial already, connecting our clinic to the hospital, and we have, as you rightly pointed out, we have done more than 700 trips without any failure. These drones are very, very reliable, and the low payload you're talking about is blood sample is very light.
Dr. Shetty, is just, astonishing how technology is being used, and this is, of course, one part on the pathology side, but to widen its scope to diagnostics, especially when we're talking about technology and AI, how do you see that changing the way medicine works in India?
See, if you come to our ICU, when the blood gas report, in the ICU, one of the commonest tests done is a blood gas report. And the blood gas report is interpreted by less than 5% of the nurses, and even among the doctors, it requires a lot of skill. Now, in our hospital, when the blood gas report comes, along with that, a AI interpreted report will come, giving a clue to the doctors and nurses on what's going on and what needs to be done. Of course, finally, it's the doctors who decide. These are the tools which help the nurses and doctors to take action quickly, and doctors are there as the final opinion. Similarly, there are tools our team has developed. We have over 50 software engineers who have been working on AI for the last 8-9 years. AI became very popular after ChatGPT. Well before that, we were using a lot of AI tools. And this team has developed a risk score which can anticipate the cardiac arrest of an ICU patient at least 24 hours earlier, giving enough time to the doctors to preventing these disasters. It is essentially like these AI tools are like extremely experienced doctor sitting behind every bedside, constantly telling the nurses and doctors what is happening with the patient, what will happen, and what they need to do. It is amazing. As I said, healthcare will become extremely safe for the patient. It will become efficient with all these AI technologies.
Shetty, that's incredible. And so therefore the strides that we will make in preserving human life will likely be massive heading into the next few years, right? But for you as a business and provider of healthcare, I'm just trying to understand what the near to medium term changes will be. One, obviously, seemingly, will be productivity improvement and therefore likely improvement in margins. But the other, I'm just wondering whether the implication would be a change in the way that you build infrastructure, whether it's going to be a hub and spoke model where you will have centralized services and you have more smaller hospitals that you set up. Is that likely to take place?
It's not likely it is happening because the center hospital will have all the massive infrastructure and the other hospitals will support. So when you reduce the infrastructure of not having lab, not having all these accessories, your cost of building the hospital will go down dramatically. That is the major thing what will happen. Unit cost of delivering healthcare will go down. And also, more than anything else, in a matter of few months, there will be a different type of a health insurance which will be available to the people. People can buy health insurance paying daily, like a EMI, but paid on a daily basis. So once 70% of the people have a health insurance, there will be a massive transformation in the entire industry. Today, healthcare is available to 30 to 40% of the people who have enough money to pay. But it's a matter of time, within 1 or 2 years' time, everything will change in healthcare. People who cannot seek healthcare in a corporate private hospital will be able to enter those hospitals with dignity and get the care.
Got it. Dr. Shetty, just wondering, what happens in emergency cases if drones are indeed used to transport the pathology reports, etc. But if the patient needs emergency care and emergency reports at a hospital which doesn't have any lab?
Yeah. See, there are very few so-called emergency test reports are required, and these can be done with the point-of-care devices, wherein you just prick the patient and straight away you get those reports. But those numbers are very small.
Sir. Well, wish you more power in this. Hopefully, this changes the face of healthcare for the better, Dr. Shetty. But thank you so much. Very interesting experiment. We were amazed when we saw it, and which is why this conversation. Much appreciate your time.
Thank you so much. Thank you. Thanks.
Well, guys, a lot of things are changing. Healthcare is not aloof from that.
I hope there is widespread adoption of these kind of technologies, because this, of course, Dr. Shetty has been at the forefront of using technology and new processes in India. It just needs wider adoption to really make a change. That's fantastic. Really enjoyed that conversation. Hopefully we'll enjoy what happens in markets as well today. I want to talk a bit about IT. I want to talk a bit about HDFC Bank. Kush, I want to start with you on HDFC Bank. I see Parag Bhai is going
Finally, I've been waiting because we banned him.
थोड़ा और wait. Let's get the technicals on.
नहीं, आपको इनसे ही start करना पड़ेगा. जितना table thumping इन्होंने किया है, he deserves to start for HDFC Bank.
First of all, we got every side of the story yesterday. We spoke to the CEO, Shashidhar Jagdishan, as well. You must have heard that extensive interview. After the call, there were three things, right? His investor analyst call, then his media call, then his interview with us. You've heard from Keki, we've heard from everyone. अभी तक ये समझ में नहीं आया हुआ क्या?
वो जानना ही नहीं है ना.
That's my problem.
नहीं, मुझे simple है. HDFC Bank, after Mr. Shashi has taken over, okay, you have touched a very sensitive point. So sorry, I'll be always little bit aggressive. No. So after Mr. Shashi has taken over, Kazad Bharucha, Srini or Bhavin Lakpat, after this team has taken over, asset quality has remained pristine. Okay, so they have maintained the culture of 25 years of HDFC Bank, where asset quality across the cycles, we have seen in between some credit cost uptick in other banks. On credit card side, on personal loan side, on retail CB side, here there was no problem. Okay, why I want to know what was discussed in the board, what was the matter of disagreement?
Why not?
No, I'll tell you. First of all, RBI is saying there is no problem. Okay. Second, even with CD ratio, RBI never had a problem. After Mr. new RBI governor. Second, Mr. Atanu has also said on your channel, NDTV, when Hiral took the interview, that he is not pointing towards anything wrongdoing, right? It is just an ideological difference.
But what do you mean by ideological difference? It's a bank.
No, it's a simple
thing. It's the largest bank in the country.
But ideological difference can come, na? If you and me disagree here on NDTV Profit show, tomorrow morning I decide I will not come on NDTV. It's an ideological difference.
But this is the chairman of the bank quitting overnight. Saying immediately he's leaving, saying there are ideological differences.
And ethical. His letter says ethical. That's the problem.
But then his letter says ethical. That's what. But after you took the interview, and it was a very good interview, I would say.
He told
because you have to hear two sides. And he said that there is nothing wrongdoing.
No wrongdoing.
And there is no problem in the governance. RBI has said there is no problem, no governance, no material governance. I'll use RBI's word. No material governance issue. The stock is available at 10 times FY28 earnings, 1.6 times price
to book. So you think this is maybe an ego clash, an internal battle, whatever it may be?
You can disagree on a simple point also, right? We many times on the show we disagree on a simple point, and somebody can be that sensitive that okay, if there is disagreement, I would like to discontinue.
The only difference here is not with regards to whether HDFC Bank becomes a good stock to buy or no. Surely the valuations are, but I think the RBI should be stricter with maybe even outgoing chairmen who leave words out in the open like this. You brought about, thankfully for Keki Mistri's con call yesterday at 9 a.m. Else the stock could have been 10% lower as well.
It did start 9%
Exactly
lower.
Right. So it is not as much on HDFC Bank as much on the outgoing chairman to not leave words like this in the open.
But that is not a mistake of HDFC Bank.
I'm not saying no.
And plus, I would say, as you rightly pointed out.
Parag, the only difference where I have is Keki Mistry said on the call yesterday that RBI got to know about it only in the evening when the board met in an emergency fashion. So RBI I don't think has gotten the time to examine the matter as well as to why Atanu Chakraborty has done.
But now RBI has been doing periodical checks.
That is the SOP, as per SOP.
And they have not found any material governance or any kind of a misconduct, right?
It just also brings into question how large banks are run, and should they be so dependent on individual whims and fancies? That's what I would say. If this is someone having a change of heart or something that someone individually didn't like, to have this kind of an outsized impact on a company that is so heavily owned by mutual funds. I mean,
it is 11% of Nifty.
If you look Nifty, if every pretty much every Indian equity
Absolutely.
investor has gotten impacted
Absolutely.
yesterday,
That I
one way or the other.
Tamanna, my limited point, and I said this yesterday at around this time as well, before the markets opened, before the stock went down, which is that generally when somebody leaves an organization, they have a choice. They can either choose to burn bridges or they can choose to walk away with dignity, preserving the relationships that they have had across the board. There is a decision that has been taken to not do that. In my opinion, this is my personal opinion. I want to state that. So the person who has done this has known very clearly what they are doing. Let's not mince words.
No. The question here is, can we prevent something like this happening because of the outsized impact that an individual has on charts? Clear hai na? No view. Charts tell you what charts tell you.
No, but two things. Credit where it's due. One, to the board. Just for the fact that the con call took place before markets opened. इसीलिए आपने एक dip देखा, but recovery sharp थी. And second, to you and Hiral to bring out that other side, because that message, when it came out, from the outgoing chairman, seemed as if it was a corporate governance issue. That message clarified that it did not hint towards that, which was, I think, the saving grace, and the stock recovered so quickly. Now to the fact that should you buy now? Okay, so like you already said, heavily owned stock, be it individual portfolios or be it via mutual fund or be it just via the fact that there is a lot of weightage on the Nifty, on the bank Nifty, HDFC Bank affects everyone, right? So everyone's already got a position. If you didn't have it and if you were buying now, I would say yes, this is a fantastic opportunity to go out and buy now. Considering the fact that the stock has underperformed massively, अब हम जाके average करें क्या? Maybe to some degree, but I would avoid that. अगर fresh capital deploy करना है, अब तक exposure नहीं है, then this is a very good time to buy HDFC Bank. Otherwise, I would say if you've already got an holding, stay put. There are a lot of other choices which will move, much faster than HDFC Bank. But yeah, like I said, fresh capital deployment, yes. Averaging, no.
Okay.
And just to finish, as Neeraj pointed out, that Mr. KK Mistry has a fantastic reputation.
Yes.
And he has said on the call that at the age of 71, I'll not risk my reputation. Right?
If there was something wrong. And he has said that he's taken journalist calls yesterday. He's been so open with it. He spoke to us as well. I mean, hats off with KK Mistry, and he spoke to us as well. I mean, HDFC is banking on his reputation. Okay,
Nice
we also
one.
had a word with Shashidhar Jagdishan, CEO of HDFC Bank, very detailed conversation. And we asked him about what really went wrong. Listen in to what he said.
The developments of yesterday, when the former part-time chairman has decided to move on, I think that was a little bit of a surprise for not just me, but for the entire board. Obviously, we've had a very constructive relationship over the last 5 years. He brought in a fair amount of intensity in terms of various aspects in governance, which is something that we have taken away rather positively, and therefore we insisted his continuation. I'm keen, that's number one. But having said that, there is a fair amount of robust and a very transparent process which is undertaken by the Nomination and Remuneration Committee of the board, and which will then recommend to the board and then post that to the regulator for approvals. As of now, I don't want to sort of second guess any of these authorities. I would like these authorities and the processes to take forward in the manner that we would like as a great governance company.
All right. Both Shashi as well as everybody involved in that call, KK Mistry as well, saying that there was no knowledge about what exactly Mr. Atanu Chakraborty was suggesting when he made those statements. Let's head over to my colleague Somit Sarkar though right now with the chatter from the dealing rooms. And Somit, you've still been picking up some very interesting talking points. I wonder what you've got this morning.
Yes, a few interesting stocks that dealers have highlighted. Firstly, it's Manappuram Finance. Despite the downtick, dealers are quite positive on this counter. Now, post the RBI approval, dealers are now expecting a revision in the open offer price that could happen. Now, do remember that Bain Capital, when they announced the acquisition, the open offer price was set at close to 236 rupees, while the current market price is anywhere between 265 to 270. Now, dealers are expecting that this open offer price will be revised and should be at a premium compared to the current market price. So keep an eye out for that counter. For Thomas Cook, the board meet is today, where the board is supposed to consider corporate restructuring. Now, the buzz on the street is that there could be a potential demerger and separate listing of Sterling Holiday Resort, which currently operates as a subsidiary under Thomas Cook. And lastly, when it comes to Suzlon, there are buy flows on the large HNI desk. Dealers are expecting some positive news flow here, so keep an eye out for Suzlon as well.
Okay. Let's talk about the rupee as well, because it's been under pressure. Of course, it was closed yesterday on account of Gudi Padwa and Ugadi. Let's go across to Somit actually as well. Somit, while you're with us, let's talk about why there has been such a weakness in the rupee and what it's caused, and a divergence across sectors, of course, Somit.
Well, as multiple sectors stand to get benefit or impact because of this sharp depreciation that we have been seeing against in Indian rupee against the US dollar. On the beneficial side, IT sector stands to get benefited the most, because most companies have an exposure on the revenue front towards because they get most of the revenue in US dollar terms, and INR depreciation boosts their revenue. Now, as per analyst, 1% depreciation of INR could translate into a 3 to 5% EPS uplift for multiple or major IT companies in the country. For auto OEMs, that is auto manufacturers, it's a positive impact for multiple of them. TVS Motor has exports of around 30% when it comes to volume. Bajaj Auto exports gets nearly 50% of the revenue from exports, and from 1% INR depreciation, TVS Motor and Bajaj Auto see an EPS uplift of anywhere between 1 to 3%. And for Tata Motors, Maruti Suzuki, Hyundai and Eicher, 1% depreciation could increase their EPS by anywhere between 0.3 to 2%. When it comes to oil and gas explorers like ONGC and Oil India, again it's a positive impact given the fact that billing of crude happens in US dollar, and INR depreciation increases their realization and their revenue as well. And as per analyst, every 1 rupee depreciation that we see increases ONGC and Oil India's EPS by anywhere between 1 to 2%. When it comes to pharma sector, it's a positive but limited given the fact that 53% of the industry's turnover comes in from the export market, but most companies have hedged their dollar exposure as well.
Okay, thanks Somit for that. Abhishek Goenka, founder of India Forex and Asset Management, joins in with his thoughts as well. 92.9, Abhishek, we knew this would have been coming. Had it come so soon? Well, remains to be seen. So is this now critical levels, or do you believe this is the trend which will continue?
Good morning, Neeraj. Thanks for having me. Well, rupee has become a bad word when we see and when we read newspapers and we talk to people. And it's been a bad word for a pretty long time. What I would like to say is that, we in India got hammered multiple ways. Earlier it was earnings slowdown, then it was the tariffs, then it was service export revenue concerns, and now this entire oil prices because of the war, and because of which RBI has let rupee depreciate, because they are also stuck in this impossible trinity, and now because growth concerns are there, they are let rupee go. Now, the sense that I get, and I have no way to predict the future, the sense that I get is that at $120, $130, there's going to be a huge demand destruction, and we are already seeing extreme fear and extreme panic at these levels. When I talk about rupee or oil or the future uncertainty regards to stock markets or the overall current account deficit or the balance of payment. So I get a sense that technically 93, 93.30 was the levels that was possible in rupee, and we have almost reached there yesterday in the NDF markets. If things don't worsen from here, then possibly we could see a trend reversal coming in the rupee. And the confirmation is only going to come once we see a consistent break of 91.85, 92 breaking on the downside. Then technically also we get confirmation from the charts. But fundamentally, if you talk to me right now, things are a little better since yesterday, but we are still not out of the woods. That's what I would like to say.
Yeah, well put, Abhishek. And the perfect storm at this moment, right? With the dollar strengthening and with crude oil prices where they are. The question, though, is what, in your opinion, will the RBI's intervention be? Because so far, seemingly, they've had a relatively light touch. Would you agree?
No, I think they have intervened very, very heavily. The market expectations are they are short close to $90 to $100 billion. And the last few days also they have intervened very heavily. If they would not have intervened, then possibly we would have been much, much higher. If you remember the times of 2008, 2013, when 15-20% depreciation used to be a new normal. And that time we didn't have the support of such high foreign exchange reserves, which we currently have. And the growth, the fiscal numbers are also very good. So, I am happy to be wrong and be an optimist than be right and be a pessimist for India. And time and again, we have seen that if you sell the US dollars on a long-term basis and earn the premiums, we are going to be slightly better off by 1% with regards to depreciation and the premium. So this time around, this entire journey of depreciation has been pretty long. So my expectation is the second half of 2026 and 2027 is going to be much better. And we are not going to see these kind of negative headlines for the rupee. And things are definitely going to get stable.
Excellent. Well put, Abhishek. Better to be optimistic and right as well. Not be optimistic just for the sake of it, but let's hope that absolutely comes true. Abhishek Goenka there talking on the rupee. New low once again, 92.90 are the levels that we're seeing, and maybe the pain will 92 right now, and the pain could continue for some time. All right, a lot to unpack. We've got Ajit Mishra on for technicals. We're going to Sharat Dubey next for Heard on the Street. Just want to quickly tell you what's moving in the pre-open session. Max Financial about 10% up. Adani Total once again running. Happiest Minds was on our watch list. That's showing a 4% uptick, as is Ola Electric and Ather Energy. Some kind of EV play seems to be developing in the markets as well, as crude remains above $100 a barrel. So that's one to look at. Meanwhile, HDFC Bank. Let's pull up HDFC Bank. Let's pull up some of the IT companies and see what's happening there. About 1.5% down right now in the pre-open session. So no massive buying flowing in, but definitely the losses have stemmed. Infosys about 2% up. We were talking about the Accenture read-through and what it means for the markets. Seems like an uptick, at least at this point, across the board, between 1% and 2% down. The Nifty itself very quickly 105 points up. So you might see that up move on open as well. But let me go across to Sharad on the big brokerage call of the morning. HSBC initiating a buy on LG Electronics. What are they saying, Sharad?
Well, interestingly, this is an initiate buy rating, and the target price, if you look at it, it's at 1,850 rupees for LG Electronics. And now HSBC is long on growth for the company, and despite the weakness in the last 2 quarters, the growth outlook still remains bright for the counter. Then the margins are expected to expand over the forecast period, and there are multiple triggers also for LG Electronics. They are mentioned. This includes capacity expansion, leading positions, especially in the premium category, a wider range of price points, and exports as well. And interestingly, right now the valuations are looking undemanding, and that is why HSBC is bullish on LG Electronics.
Right. Okay, LG Electronics. Let's talk about that as well. And Parag bhai, I want to talk to you about that, right? Because amidst all of this geopolitical tension and crisis and all of that, one thing that you can't ignore is the fact that it is getting hotter faster. The summer is here, truly. And so therefore, what are the implications for the earnings for these companies? Not just LG, but a couple of the others as well.
So LG, Blue Star, Voltas, I think all these credible companies in this who have summer-heavy portfolios, which should do well in my view, and LG Electronics is my holding in this space.
The worries,
but you cannot predict weather to the perfection, right? So last year also summer was hot in the beginning, then suddenly monsoons came. So you have to restrict your weights in this space.
But very quickly, those supply chain issues now you're not worried about.
The supply chain issue anyway is a matter of 1 or 2 months. So I'm not too much worried about that part. It might spoil one quarter here or there. Of course, for summer heavy companies, that one particular quarter might be of a lot of importance. That's why we have a lesser weight compared to other stocks. But this is one stock through which I am playing this summer theme.
Okay. Interesting.
Very high ROIC company actually, above 50%.
Wow. Okay. And we'll talk about this in detail maybe next week about why that would matter. But let me welcome in today, since the pre-open rates have settled, let me welcome in Ajit Mishra as well with his thoughts. Ajit, just wondering, are you taking any trades with the index on the benchmark index itself, whether intraday or overnight or over the weekend rather?
Yeah, good morning, Neeraj. So Neeraj, when it comes to the index, we know the kind of volatile swings that the index has been experiencing. Means the last 3 days of rebound, it fizzled out in no time in yesterday's trade. We made a new low. Today, we are seeing that after the cool off from $119 mark in crude, there was a bit of a relief or a rebound that we are experiencing. But again, if you see the crude, it's again gradually inching higher towards $107, $108 mark. So I doubt that we can sustain, these areas around 22,800 mark, and probably we might set further lower. So in case if somebody is looking for any trade in the index, the ideal approach is to continue with the sell on rise until we decisively see the trend reversing in crude and sustaining at the lower levels. So 22,500 is what we are eyeing. So what one can do is by buying 22,800 put and shorting 22,500 put, is something that one can look for intraday or positional as well.
Okay, and what about specific stocks, Ajit?
Yeah, so pharma, I believe that it's likely to remain, comparatively resilient. And Oro Pharma, after this marginal dip, there was hardly any volume during this corrective phase post the consolidation range breakout. So I feel it's a good opportunity to start accumulating Oro Pharma even at current levels with stop at 1200 mark and 1345 as the immediate target. At the same time, one should not stick to the long trades only. Few short recommendations be in the index or on the stock specific front, that is also recommended. So PGEL, the PG Electroplast is something that we see as a fresh shorting candidate post this consolidation range breakdown. And we believe that 468 is something that the stock might test in the near future. So with stop at 523, one can go short in PGEL.
Those are individual stocks that you're looking at. By the way, measured response at this moment after the pre-open rates have settled, 0.5% gain for the benchmark Nifty 50, and the broader market's actually looking better than that. Let's see if that holds out when we start trade in just a few minutes. The IT index looks like it's bouncing back a little bit. So, Kush, how would you play that?
Not from a near-term perspective, for sure, because everything else that is happening geopolitically, I mean, the issues still persist on IT, right? The index itself is at multi-year lows, and so are some of the stocks. So I will not play it for an immediate V-shaped recovery. Like I said, because the stocks and the index itself are at multi-year lows, there could be a medium to a long-term play that could come in. So I would be very selective. So maybe something like a Coforge or Infosys for that matter, with a very small allocation I would consider. But right now I'd prefer to go with strength, pockets of strength, in a market like this. So like I said, there are auto ancillaries, pharma, and as and when dust settles, I think the banking names will actually run, or the BFSI names will run faster than the IT space. So the allocation there, even if you want to put it, should be rather small, and Coforge, Persistent and Infosys are something that you can consider.
Okay, keep an eye out for Coforge and Persistent amongst others that Kush has highlighted. In fact, Ajit, the same question to you very quickly. Are you trading IT stocks this morning, and if so, which ones?
So Neeraj, honestly, the rebound that, a day before we experienced, it fizzled out, with a very strong down candle. So this clearly shows that bulls are still on the back foot. And stock select stock like, HCL Tech, wherein we see strength, relatively higher strength. And we discussed about this earlier also. In case if somebody's looking for any opportunity, then stick to the names which are relatively, showing strength even during the down days. So HCL Tech is the only name wherein we see strength, means the stock is still hovering around, long-term averages on the weekly chart. So probably the downside seems capped, means close to around 1250, 1240 area. We have multiple supports to look at. So in case if somebody wish to accumulate, they can start, even at current levels and add more if it slips towards 1240, 1250 zone. And for the entire position, your stop should be at 1200. and use any recovery towards 1450 to 1500 to reduce your position and book profits.
Okay, just about 30 seconds to go. We might open with an uptick, but remember the Friday problem, which is that no one wants to go into the weekend with positions in place. So we have to look at sustainability at this point. The pre-open rates show at least some up move, which is a relief. IT, watch out for it. How is the street reading Accenture and its results for Indian IT, positive or negative? Are you seeing a recovery in banks? That will really determine whether we see an up move on opening. The pre-open rates settling with about a 0.5% uptick on the Nifty this Friday morning. That really is the question that we have. And yes, there you have it. Very quickly moving up about 200 points at 23,200, now looking closer than we have. But remember, you were 700 points down. So this is a small improvement. Advanced decline looking good as well. The broader markets also seeming fine, 0.75% on Bank Nifty. That's important to see. Mid cap about 1% up, as is the small cap index, about 0.75% up. I want to pull up the Nifty heat map for you very quickly so you have a sense of what's working there. And remember, crude prices above 100 but still relatively cooled off. Nevertheless, you have ONGC ticking down because you've cooled off from 119 to 107. HDFC Bank continues to be top loser, but its losses have been stemmed to some extent. You've had extensive communication from the new interim chairman KK Mistry and the CEO, but that question may be on the market's mind: what really went wrong? So that's still about 2% down. Hindalco also losing out, but what a nice breath for the market. And it is the IT pack which is dominated from a Tech Mahindra to an Infosys, which is up there, and HCL Tech as well. SBI really, perhaps because of the announcement of their IPO of one of their subsidiaries, is looking good this morning, as is Eternal continues that up move. Tata Steel doing well as well this morning. So all in all, I would say a nice start to Friday. One would have expected it technically as well, Alex, because after the kind of push down that we saw in trade yesterday, you needed to have some relief rally.
Absolutely, you said it. And I want to take a look also at the broader markets. The Nifty 50 also doing particularly well, but the broader markets, I think, will be doing even better. So 1.4% at this point for the mid-cap index. Pull up the small-cap index as well, about 1%. So clearly the broader markets and the breadth is witnessed in the way that these gauges are doing. Pull up the sectoral indices just to see where things are, and you will see a lot of green on the screen. In fact, only green on the screen. What is doing particularly well is the PSU banking index, possibly on account of State Bank of India, but there might just be a few other stocks that are bouncing back from the carnage yesterday. IT is the second top gainer, 1.9% or thereabouts. India Defense not doing too badly. Energy as well as then the mid cap. See, the auto index is up about 1.3%, was one of the worst performers in trade yesterday, also bouncing back. So quite a few stocks moving out of that oversold zone or bouncing back to a certain extent from that oversold zone. The question is, do we hold on to that heading into the rest of the session? Well above 250 at this point, 23,250, I mean, for the Nifty 50. Let's talk about individual counters. And a few stand out, right? You have stake sale buzz for Happiest Minds. It's something that we were keeping on our radar. I wonder how it's doing. It's up as much as 6%. So there's certainly some action in this particular counter. Watch out for this over the course of the day. Nazara, remember, it was in focus on account of the acquisitions that it has made. CLSA has affirmed a sell call. The stock is up about 0.4%, so it's shrugging off those worries. LG Electronics, HSBC is buy call. It's up about 1% or so. And remember, this is something that you should watch out for as a play in the summer season as well. The metal pack as a whole seems to be taking a bit of a breather in trade today as well, but it's okay, it's not too bad actually. Muthoot Finance, because it's sensitive to gold prices, down about 0.5% or so, and gold prices have come off. Hind Zinc is actually ignoring the sharp slide in silver. It's up as much as 3%. Manappuram as well, ignoring that. Let's go to Coromandel Fact and as well as Kajaria Ceramics. The government talking about improved gas supplies to certain industries, and that's certainly being looked at positively.
by FACT, which is a fertilizer company, as you know, and Kajaria Ceramics. A lot of these tile manufacturers already saying they've paused production and prices have gone up in the market as well. But EV is in focus on account of the possibility that people will shift out for their incremental purchases. Ola Electric, Ather up and about. And finally, Accenture read through on a couple of the smaller IT companies. Pull them up. Coforge, Persistent Systems doing reasonably well. And I think the entire IT pack, Neeraj, is the top gainer that is doing particularly well in trade.
Yeah, most certainly. That is doing well, and some of the oil sensitives are actually doing well. So BPHP, RC are doing well. There is Happiest Minds, which is up 6%. Lloyd's Metal is up about 4%. So some of the beaten down stocks are certainly shining in trade right now. Okay, I think we'll just get the conversation with Tata Power started in a minute. GMR, the management should be joining us in just moments from now. Keep an eye out for GMR Airports, that is up 3% too. And there is strength in transformers and rectifiers. So Trill is up about 5%, and that one seems to be doing okay as well. So all in all, not a bad start, 1.25% if I'm not wrong. So that's a really good first tick. Let's see how long does this last.
Okay, Praveer Sinha is with us on the phone line, CEO of Tata Power, on the news that has come in shortly that Gujarat state has approved a revised power supply pact with Tata Power and cleared the way for long-term electricity supply to resume from its 4 gigawatt Mundra plant. Can we first of all confirm this, Mr. Sinha, and very good morning to you. Great to have you on NDTV Profit. Can we first confirm that this has indeed happened, because what we're quoting from is a Newswire report currently?
Good morning, and this is the correct news on Wednesday, 18th. Gujarat government has approved the SPPA, and we are now in the process of signing it with the DISCOM over there, the GUVNL, and the same PPA will also get finalized with the other procurer states, for which we have been in discussions with them. And I think this will also pave the way for 4 gigawatt of power to be supplied. And as this is one of the most efficient plants in the country, the power supply will be at a very, very economical rate in the merit order. And with summer coming in, this will be a big boost to the power supply in the country.
Just trying to understand the significance of this for the Mundra plant, sir, that it's back in the long-term supply mode, and what was the basis of this decision as well?
So this SPPA is similar to the other SPPAs that have been signed for imported coal-based plants in Gujarat, namely the Adani plant and the SR plant. One of the significant things is that the cost of coal is a pass-through. So whatever is the cost of coal that is being used in this plant will be a pass-through, which was a problem for the generating company. And there are certain other aspects in terms of operating parameters and certain incentives that have to be given. So those have been finalized. Exactly similar to what has been done for other imported coal-based plants.
Mr. Sinha, good morning. Neeraj here. So this immediate restart of operation should be great news. How much of an earnings boost does this bring in your estimate, sir, for Tata Power, annualized or otherwise?
So basically the objective was that we were losing, there was a cash loss in this because we were not getting the full cost of coal. We will not have a cash loss in the plant operation.
Okay, but even that, sir, in some sense supports the growth story, because we are, I presume you as a company as well, are on this whole capacity expansion drive too. So in some sense that will have a direct bearing as well, as opposed to just reducing the cash flows, right?
Absolutely, it will help in our EBITDA, and which will support us in generating internal cash for the new growth that we are doing, not only in renewable, but including in our hydro plants and transmission and distribution. So I think this was long overdue, and we are thankful to Gujarat government for supporting us in finalizing this arrangement.
Very quickly, is this ruling therefore a catalyst for any other such ruling that may be still in abeyance? Sorry, I'm not aware of it. Better to check with you.
So this is basically for the imported coal-based plants because as they are very economical, there was a necessity that this plant operates and supplies power because on an average basis, this is very good in the merit order. And I think this is a good template that has been developed by Gujarat to ensure that such a large plant operates.
Mr. Sinha, good morning, Alex here. And just while we have you, just wanted to get a sense of the picture as things stand right now, right? Huge disruptions in terms of gas availability, in terms of LPG availability, in terms of oil availability. But on the power side here in India, what is the current dynamic? Are you seeing already a spike in demand? And what about availability of coal for the rest of the season?
I think in India we have large quantity of power which comes from domestic coal produced generating stations, and all of them are operating at full capacity, and everyone is geared up to meet the summer peak of nearly 270 to 280 gigawatt. So I don't feel that we will have a great impact because we don't use too much of gas, and with the imported coal-based plant also now tied up. This will add also to the overall requirement of power. So I think as a country, we are very well in terms of meeting our power requirement. And hopefully we will be able to meet whatever is the future demand in the country.
Mr. Sinha, I'm just trying to understand on this particular agreement, what is the rate of the power purchase agreement? Is it better than Section 11 terms or is it on par?
The purpose of this SPPA is that coal cost becomes a full pass-through, and to that extent, Section 11 also ensured that there was a full pass-through of coal cost, and the tariff is cost reflective. So that is the whole purpose of doing this arrangement, and it is on similar lines.
And what will be the addition then to your P&L as a result of this? Any back of the envelope calculations right now that this has been restarted?
So when the plant was not operating for 9 months, we had a loss on the plant, on Mundra plant of nearly 800 to 1,000 crores. So that loss will not happen, will become cash positive.
By when, sir? What do you see the timelines as?
It will happen immediately now that the plant should possibly start operating next week onwards. We should see that hereafter there would be no cash loss.
Thank you so much, Mr. Sinha, for speaking with us. Some important clarifications coming in there. Let's just pull up the stock price as well. That's, of course, the CEO and MD of Tata Power. Stock about 3.5% up at this point with some relief coming in. I thought the commentary about not being affected by gas prices is also important. There will start being a hunt, perhaps, and I'll get Parag Thakkar's view on this, on companies which are less dependent on LNG imports right now, who can either get alternatives domestically, different energy sources they use, or better imports coming in, because this constriction of supplies is going to go on for some time.
Correct. So I think one thing is very clear, that coal is new gold.
Coal is the new gold
for India's power sector. I'm saying. I'm not saying as a commodity you should buy coal. Because gas, of course, has become a problem. No? And now, in terms of, for example, there are 2-3 things which I say from long-term perspective, these are going to happen. Earlier, 2-3 years ago, 4 years ago, we were saying ESG concern. So people were not buying Coal India, NTPCs of the world, and they were trading at absolutely low valuations. Right? And now those days are gone. Now everybody has understood that we are so much exposed to Middle East problems when it comes to LNG, LPG kind of and oil, that coal will again come back in fashion. So coal, whether it is Coal India, whether it is NTPC, whether it is Tata Power, whether it is BHEL, whether it is Thermax, this entire chain should do well. in my view, from a thematic perspective. I'm not pointing out any particular stock. From a thematic perspective, this will come in fashion. Same way, on auto side, EV electrification will gain further momentum in terms of from government perspective also. You would like people to integrate more with Chinese companies or Chinese companies setting up plant in something in India, battery or something, battery storage or battery cell or something, so that the entire ecosystem gets created in India itself for EV.
Right. Just a quick follow-up to that, and you obviously probably thinking much deeper on this, but how much of demand gets taken care of by these diesel gensets in the country, and if the prices do go up, which hasn't happened yet, but if they do go up, what do you think the implication is for the diversion of power from current sources, from traditional sources, and will that be enough? That's the question that I have.
I feel that, see, I'll tell you, the coal is, as I said, you will have to produce more thermal power. And so coal is going to be a natural thing. Of course, gensets are doing well right now, Cummins or Kirloskar Oil kind of companies, because of whatever is going on in the country, power demand increase, and in long run, this data center theme, which is going to consume huge amount of power.
Got it. Okay, Ajit, coming to you, and just this energy theme, and it's a pretty broad theme, so you have several options to play it, but how would you trade any of these counters, either the energy producers or the transmission companies? For example, TRIL has been up and about in the recent past. Would you trade any of these?
So in fact, Alice, if you see that Power Grid, this stock, after like almost 1.5 or 2 years of consolidation or corrective phase, witnessed a very strong surge, in the recent weeks, followed by a very tight range of consolidation that clearly shows that it's not only the power distributors and generators, they are also holding strong, and that is what reflecting in fact in the entire energy basket, excluding the OMC pack. So Power Grid, I believe, has potential to set for the next leg of the up move towards 320, 330 area. So here the irrespective of the market scenario that currently we are seeing volatile swings, is likely to hold strong. So one can look for fresh accumulation even at current levels, and add more if it witnesses any dip towards 290. For the entire position, your stop should be at 280, and 320, 330 positionally should be your target area. And Tata Power also looks very strong on charts. Means it's been almost 1.5 years of consolidation. Here also we are inching towards the previous swing highs, so probably a break would result in next leg of the up move towards the record highs. So here also one can look for fresh accumulation opportunity with 380 as a positional stop.
No, we are about to talk to one chemical company, one auto ancillary company. In both the sectors, in some sense, have some impact of what the this conflict has thrown, right? So, to both of you, and Kush, maybe I'll start with you. Let's say auto ancillaries. Is there anything, auto ancillaries, defense, aerospace, etc., is there anything out there that looks good? I mean, stocks like Bellrise, Sansera, etc., have shown the propensity to rebound. Can you trade any of them?
I think this is the third time in this show that I'm mentioning that auto ancillaries are something that I'm very, very bullish on. Look at Wheels India.
Really?
Absolutely.
Third time?
Yeah, today his call is Wheels India.
Wheels India, exactly. And look at the kind of move that it's made in the last few sessions and the kind of volumes that it's clocking. Magnificent. So let me add a few more names. Bellrise that you mentioned, very much something that you should have in your watch list, even in your portfolio. Lumax Auto is a stock that we just, every time it gives you a dip, we look at it very constructively. So Wheels India, Bellrise and Lumax Auto, not in particular order, but yes, these are the stocks that should be on your radar.
Parag bhai, what about you? Anything in auto ancillaries?
No, so auto components, I continue to like auto components as a theme. We have stocks like Minda Corp, and various others in our portfolio, because they are small cap names. I will not like to name them, but I also remain reasonably bullish. The only thing is that for everything to play out, you need this war to end. This is or oil price to go below $100 and stabilize below $100. That is a key thing. See, one headwind, I should say, for this entire auto and auto component space is higher steel prices. The steel prices have also shot up significantly, and so this can put some pressure on margins in near term. And plus, of course, there's oil and gas related things. And see, India is the only country where petrol and diesel prices have not been hiked. due to the reasons we know. But every other country has seen a significant increase in petrol and diesel prices after this West Asia conflict. So that is another demand destruction factor for auto and auto components. So that is why it is very critical that oil prices should stabilize at lower levels.
Okay. All right. HDFC Bank is something we should talk about, and we have been talking about, but the stock price is off the low point of the day. And it's in fact very close to the high point of the day, just shy of that 800 mark. And this is one stock that affects practically everybody's portfolio, because if you have a mutual fund scheme, chances are that you own HDFC Bank. Whether it's through an index fund or otherwise, most people do have this in their portfolio. But let's take a look at what the MF exposure is. And let's go across to Somit for that, because he's pulled that up. Somit, how does it look?
Well, yes, as you were mentioning that if you have a mutual fund scheme, you are exposed to HDFC Bank. And I've never seen this number. Nearly 56 mutual funds own stake in HDFC Bank. They own close to 356 crore shares. That is nearly 23% of the stake in HDFC Bank. And this is as per the February data which comes out post the mutual fund SIP data comes in on the platform. Now, at the start of the month, the value of mutual funds stake in HDFC Bank stood at close to 3.16 lakh crore rupees. And as of March 19, that is just after yesterday's fall, this value has come down to 2.84 lakh crore. And on a month-to-date basis, mutual funds have lost nearly 32,000 crore rupees when it comes to HDFC Bank alone. And if you look at on a YTD basis, the value of mutual funds stake in HDFC Bank, that has come down by nearly 72,400 crore rupees. So which are the top 10 mutual funds who own stake in HDFC Bank? SBI, ICICI Pru, HDFC Mutual Fund, Nippon India, UTI Mutual Fund, Kotak, Mirai, PPFS, Axis and Aditya Birla Sun Life. Now they own a stake valued anywhere between 8,000 to 63,000 crore rupees. The highest one coming in from SBI Mutual Fund, who owns around 78.9 crore shares, which at yesterday's market price is valued at close to 63,000 crore rupees when it comes to HDFC Bank.
Okay, thank you for that, Somit, and thank you so much, Parag Bhai and Coach Bora, for joining in today. And hopefully we come back with a better Monday and things are calm over the weekend. I think we've been saying this every Friday, so we can only hope. Ajit, great to have you on the show as well. Thank you so much for joining us on this leg of the conversation. Even as we have been talking about how companies are getting impacted, there's still a lot of activity going on in India Inc. And Belrise Industries is expanding its global footprint with the acquisition of a UK-based precision engineering company catering to aerospace and defense sectors. Before we have a chat with the management on their acquisition, Mahima joining in with more details.
Right, Tamanna. So as you rightly mentioned, basically Belrise UK Holding has signed a share purchase agreement to acquire 100% stake in Chester Hall Precision Engineering. This company serves as, in the areas of global aerospace as well as space and defense industries. Now, the entire deal is attractively valued at 6 times EV to EBITDA, and overall includes deferred performance-based earning components as well. In terms of what the company does, basically, it manufactures high-precision engine and structural components, works with the aerospace alloys and exotic metals. It's world's one of the largest aircraft and space OEMs are this company's customers, and holds overall AS/EN 9100 aerospace quality certification as well. So this also kind of marks Belrise's foray into the entire aerospace and defense OEM space. And overall, we would want to understand as to what this means for the company foraying into the space, plus how and when will this materialize in terms of top line and bottom line as well.
Okay. Thanks so much for that. Sumed Badwe, Head of Strategy at Belrise Johnson, right now on the show to talk about the situation as it stands. Sumed, great having you. It's been a while, but thank you so much for taking the time out. Neeraj here, good morning. First up, broad umbrella question. Does this, how badly or does it, this whole situation impact you? And there are multiple ways it can, right? Availability of raw materials, freight cost, what have you?
So this is an evolving situation. I think conversations ongoing with OEMs. No immediate reactions. We're in a wait and watch situation. So let's see how it pans out.
is there, okay, let me try and read off my question. I know some of these things are imponderables, but increase in costs, if they are visible, are there, right? Because I think there are enough corporates now who have come and told us that they have seen an increase in input costs and a disruption in the availability of raw materials for the inputs as well. Are you facing those two things?
See, at the moment, we're working very closely with our OEMs to identify exactly how the input costs will fluctuate. We're working with them. Fundamentally, we work with them on we've fixed contracts for raw material purchasing and all of that. Of course, there are global turbulences. There are chances that there might be further increases, but let's see. It's a wait and watch situation. I'm sure the Indian government is working on sorting the situation out, and we'll see some positives, I think.
Okay.
Be positive in this environment, yeah.
Okay, let's no input costs increasing for you, right?
Sorry?
Are input costs increasing for you in any way, Sumit?
So at the moment, we'll not like to comment on that at the moment. I think it's a wait and watch situation. We'll see how it pans out, yeah.
Okay, I mean, if you need, for example, gas for any of your processes, that would be a very clear jump up in any case.
Yeah, for sure. Sure. So whatever is there, yes, sure.
Okay, let me come to your acquisition of Chester Hall for 13.2 million pounds. How much of this is upfront versus a deferred earnout component, and what are the synergies that you have with this company that you've acquired?
Right. So almost 85% is upfront. There is a incentive structure that is in place for further improvement in the operating parameters. We've acquired 100% of the stake, obviously, on a day one. All the existing management is continuing with us, so we've a lot of positive continuity with the business, retaining all the expertise and the talent. And we're very excited about the space. I think given this is our second acquisition in the space, really. First one, we acquired the French company, which is Bellrise SDM now, which allows us to get deeper in the aerospace and defense vertical. And now this being our second in a few months. I think there's a lot of positives around this and a lot of positives with the sector. So it's been a focus area for us for a while, and we're glad to be progressing in the right direction here.
So that's great, Sumit. This 85% upfront, how are you funding it?
So internal accruals.
Okay, so entirely from your balance sheet.
Yeah.
Okay, and what is the strategic outlook for this two acquisitions that you've talked about? What are the new spaces that you hope to get into?
Absolutely. So now we're getting deeper in the machining space, high precision machining space for aerospace, defense, and the space vertical. So in this, through this acquisition, we're actually now also manufacturing parts for satellites for one of the world's largest aircraft manufacturer and their space division. And then beyond that, also working with some of the largest aircraft engine manufacturers in the world. So in that sense, very strategic, we also obviously had to get government approval from the UK government and then previously from the French government as well to make both deals happen. It's a very sticky business, and we're looking forward to growing this and working very closely as we always do with our OEMs. It's a customer first approach, customer first philosophy for us, and we're looking to emulate that in the space again. Yes.
Okay, interesting. Sumit, good morning. Alex here. I'm just going to take that forward a little bit, which is to ask you about leveraging that and the fact that you have Chester Hall that already caters to the world's largest aircraft and space OEMs, as you've pointed out. How do you intend to leverage their certifications, and specifically the ASEAN 9100 certifications, to sell your existing product lines at Bellrise to those customers in the European market?
Absolutely. A very, very relevant question. Fundamentally, as we've always maintained, we're a process engineering company. We're process experts in the things that we do, including fabrication, including machining, as well as various other operations that we undertake. Fundamentally, we want to leverage the synergies in terms of manufacturing aerospace and defense parts in India as well. So we'll be leveraging the European footprints to have a much larger footprint now in the coming months in India. So perfectly right question. Yeah.
I do want to ask specifically about Chester Hall, though, Sumit, because the CY24 turnover stood at just shy of 20 million pounds, but the CY25 estimate is slightly lower than 18.5 million pounds. Is it just the nature of the market as things stand right now in Europe, where you're seeing that cool off in the turnover, or rather in the top line? And do you see that improving at this point in 2026, or will it take a little time to pick up again?
So Chester was a family business. It's a very, very strong legacy, upwards of 50 years, owned by the Brown family. They have in the past multiple times reached this 18-20 million kind of range, but given their risk appetite and being a family business and looking at their sort of strategy, they never wanted to breach this space. So it was a restrained approach from the family side in the past. So they've tried to retain it or sort of keep it in that range. And one of the main reasons why they've partnered with us and chosen us as their to take this legacy forward is the fact that we bring that large corporate backing, the capabilities, and essentially the further opportunity to sort of grow this business significantly. So that is the thought process. I think in that 18-20 range is what they've operated sometime in the past as well, and we're essentially stepping in to grow that in the future.
Okay, Sumit, we wish you all the best for this. It's a tough situation for most corporates, but hope things turn better soon. Thanks for taking the time out today.
Sure, appreciate it. Thank you so much.
All right, that's Belrise with their thoughts. And yes, it's a fluid situation, might be difficult to say. And in this fluid situation, there are some positives that have come in for one particular company or a set of companies, but in the listed space, one company, that is Deepak Nitrite. Because India's cracking down on cheap Chinese chemical imports. Authorities have proposed anti-dumping duties on DASDA, which is a critical input for textiles, detergents and paper, after finding imports priced below domestic cost. Before we get into management, let's get in my colleague Varsha for more details. Varsha.
Well, DASDA is actually an important product for Deepak Nitrite. It contributes almost, the intermediate segment contributes double digit to the overall revenue, and India has recommended, anti-dumping duty on DASDA imports. Now, what is DASDA? Now, the target is to, to stop cheap imports from China to protect domestic producers. And now, authorities found that the Chinese DASDAs were sold below normal value, and hence the Indian companies were having pressure on their margins. Now, why DASDA matters, and especially for Deepak Nitrite also, it's a key raw material which is used in optical brightening agents, which is called OBAs, and these OBAs are used in your textiles, in your detergents, in your paper, which has a wide industrial chain. Now, they have proposed a reference price based duty. If the import price fall below $3,450 per ton, importers must pay difference as a duty. Now, who benefits in India? As of course Deepak Nitrite, because if you see that advanced intermediate segment forms around 30 to 40% to the overall revenue, which includes DASDA and optical brightening agents. So hence this is an important news for Deepak Nitrite, because this will help company for their growth and of course for their margins.
Yep. Thanks so much for that. Let's welcome in Maulik Mehta. He's CEO and ED Deepak Nitrite for what this could mean. Maulik, thanks so much for taking the time out. Pleasure talking to you. This is Neeraj here. Good morning. I believe this is in lieu of an application filed by you for a period which was mid 2024, and it has come out now, right? So correct me if I'm wrong there, of course. How material is the quantum of duty laid, and what does it mean for Deepak Nitrite and indeed for the other players?
Thanks, Neeraj, and thanks for having me. So the period under investigation was actually an unusually long period that we deliberately chose to take, because we wanted to show that even though the last 5 years have been volatile with things like COVID and the Ukraine confrontation, etc., none of these factors have been instrumental in the behavior practices of certain Chinese manufacturers in targeting India. And so we deliberately chose a period to show that this is regardless of exigencies. Now, in that, what the government has done is that it has identified through its investigation, which was also remarkably long and very well studied and documented, that this is not only a price that is coming in which is lower than the cost of manufacturing for Indian entities, it is actually lower than the cost of manufacturing for Chinese entities as well. So here you have a situation which is a typical David versus Goliath thing, except that you have one Goliath which accounts for about 80% of the global manufacturing footprint of this product. And in India, you have several mid and small scale Davids. Now, what has happened over the last couple of years is because of this predatory practice of an 80%er trying to dominate the space, many Indian manufacturers have had to stop producing or curtail production to critically low levels where they're incurring a daily cash loss. Deepak itself, even though it is the largest of these players in India, is operating currently at about 50% or so.
Wow.
Now, the reason that this is important is because the target industry, India, actually is one of the largest paper manufacturing nations in the world.
Got it. And this is used for paper, if I'm not wrong.
It is. It is used for paper, for detergents, as well as for textiles. So anything you see around you, which is white, I see that you're not wearing anything white right now, but if you were, it would be. The papers you're looking at are probably using either Deepak's Das or China's Das.
Wow.
Or, at this moment, you have the other industries who are not able to manufacture because of these predatory prices. So this is
I hear you.
The situation which is ongoing.
So Maulik, how does this change? This quantum that is being applied, is this good enough to protect the Indian manufacturers and give them money?
So,
does it change fortunes for you, for example?
So the way that the Indian government has identified this value is by saying that this is the value under which it does not make sense for an Indian manufacturer to produce Dasta. Two, they put a very interesting factor in it. Is this enough for a company to make decent profits decently? So without resorting to shortcuts, which may hurt the environment or hurt the consumers and those things. Can they manufacture this well and continue to manufacture this as an entrepreneurial endeavor? And so this is the position that they have taken, that at this price, a good company can continue to manufacture it without trying to evade or cut corners.
Maulik, even as we're speaking to you, the rupee has gone past 93 to the dollar. So there is considerable pressure on account of the geopolitical situation globally, the fact that oil prices remain above $100 and the implications that has for our current account deficit. So clearly there is pressure on the downside. We've already spoken to an expert on the rupee and they anticipate that you could well head towards 93.5. The Reserve Bank of India is currently managing the situation, but as they've stated multiple times in the past, and they continue to state every time we speak to them, they're only intervening in order to maintain a lower volatility or to prevent significant volatility in the currency market. Maulik, you've explained very well what the importance of this particular formula or this particular chemical is. But what would the implications be on the financial side? Because one would assume that the natural repercussion of this would be that you'd once again be able to sell at a competitive rate. And so that improvement in pricing should pan out in the first quarter and heading into next year. So can you help enumerate that if you possibly can?
Okay, thanks. Just to be clear, this is a proposal that is tabled by the Commerce Ministry and DGTR. It is yet to be ratified, and we are confident that Ministry will look at this with the intention of protecting the Indian industry, no doubt about it. With regards to currency volatility, anytime that there's an anti-dumping duty, it does not specifically affect any company which is importing a feedstock to manufacture something and export it. Right. In fact, it is an advantage there because they're able to gain that benefit, which is a value-added benefit when they're exporting it, at a dollar value. So, in the sense of protecting the Indian industry, you have some of the largest consumers of this product also who happen to be in India, companies like Unilever, Procter and Gamble. You have paper companies, you have textile companies. India is one of the largest textile hubs. And then it exports a lot of it to the US, again at a value-added price. So this is inherently beneficial. I also want to mention one more thing, that the rupee depreciating by itself, last year the government and the RBI took a very interesting stance to say that it is now comparing the rupee's performance against a basket of peers. So it is not looked at, individually on a 1:1 basis against the dollar. And so we must always, stay alert to how the rupee is performing vis-a-vis. And with keeping that in mind, Indian chemical companies are still in a growth and an investment phase. At this time, they are particularly vulnerable to Chinese companies which may be in a mature phase, where predatory practices could actually negatively affect the risk and the entrepreneurial appetite of Indian companies.
Maulik, hi, good morning. Tamanna here. Just trying to understand, because of the Middle East war right now, has there been any kind of impact on your business, any plant closure, any inputs that have been stuck?
Okay. So Tamanna, thanks. Anything that I say right now, it is safe harbor within the next hour. So keeping that in mind, look, the situation is one where there is intense volatility. What's important is that we're constant as intermediate manufacturers. We are the bridge, we're the channel between the feedstock suppliers, which may be PSUs or oil companies in certain cases, and other companies, they may be fundamentally basic commodity chemicals, and to our customers who are downstream into fine chemicals, etc. So this is where we are the critical conduit. What we're doing is we're ensuring that our conversation with our customers and our suppliers is happening through us. So when we are, talking to our customers, we're telling them about what we are hearing from our suppliers. In some cases, if there has been, a force majeure that has been raised by a certain supplier, we're communicating that with our customers. We're also communicating the steps that we're taking to alleviate or to de-risk ourselves from, single supplier dependency. And where we have an increase in cost, what we're doing is we're talking to our customers to literally take their permission to purchase the raw material at an elevated price in order to supply to them. And at the same time, we're trying to tell them, look, this is not the right time to stock up inventory unless you're absolutely sure about your product moving.
So are you seeing order cancellations or postponements as a result of it? And I appreciate that you can't predict what's going to happen. Two specific questions. Have you had to call for any force majeures or any plant closures or limiting of production on your end?
We have not called a force majeure. We have received a few force majeures from our suppliers. We've been working to de-risk ourselves from overdependence on a single supplier. And that may mean that in a limited period, we are, we're forced to buy feedstock at a rate which is far higher than normal or even practical. But we're doing that in conjunction with our conversations with customers.
You're able to pass on those higher prices. Have you seen order quantums reduce or getting postponed?
Well, I mean, of course, we are expecting customers to be cautious about their buying behavior. Okay. But what we're finding is that they're encouraged by the way in which we are communicating. The chemical industry does not operate with a single hand. It operates in partnership with downstream and upstream.
Sure.
And so what we're finding is that this is the right time for us to boost our customers' confidence, or depend on Deepak, if you want to call it that. So even though we could gain higher prices and higher values in this quarter, we would do it at the expense of the forthcoming quarters. That's not something that we're willing to do. So what we're anticipating is that there will be a degree of caution, but that caution will be felt more by companies where they're not able to secure the co-product that they use along with Deepak's products.
Okay.
And the co-product may often come from places such as the Middle East.
Okay. Fair enough. We'll pretty much, you have anything that you want to add on it?
Just very quickly, Maulik, you do have operations in the Middle East, if I'm not wrong. What's the situation there? I believe you have it in Oman. So is the operation shut there? Is there some ops there? Some info there.
So the project is in a very, very active construction phase. There was a short blip there where it was affected because this is Salalah, which ironically is literally as far away from the Gulf as possible.
Okay.
It's like the last little bit of Oman that is there before you start getting into the Red Sea space.
Okay.
So on one hand, it is the most insulated from everything that is going on, and the fact that we have pipeline supply from the feedstock manufacturer is going to be it's a structural advantage henceforth. The small little caveat in this period of time is also that it does house certain oil storages and things like that, which can occasionally be used to refuel things like warships and all. It's done in permission and in alignment with the Omani government. So to that extent, there have been one or two, a few hours of incidences in the last 2 weeks. But I want to clarify that this is, it's not even a tiny fraction of what, resources and assets in the Middle East, especially along the Gulf, are dealing with.
Of course. And yes, point well noted, Maulik, and point well noted that it's safe harbor for the next 1 hour and not beyond that. But thank you so much for taking the time out and being with us, and all the best with all the vagaries around the business.
Absolutely. Thank you very much.
You're welcome. We need to slip into a very quick break. Back with more.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
Delhi, the Greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro App, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi. He has been tracking markets for over a decade. Spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Okay, let's talk geopolitics, but before that, let's talk markets. Clearly, there has been some relief that is coming in as far as markets are concerned. And look at this, it's not too shabby, guys. About 220 points up on the Nifty and sustaining through. So this is more than a hesitant up move, isn't it? Not half of what we lost yesterday, since we lost 700 points yesterday. So not even 50% recovered yet.
Yeah, this week will look good, right? 4 days in the green. Even if Thursday
but
was
that
very
one
bad.
day, that one day, sab pe bhari. So I suppose that's one way to look at it. Dr. Wael Awad joining in. He's a West Asia strategist. Dr. Awad, thank you so much for giving us your time on NDTV Profit. We want to understand, and we spoke to you closer to the start of this entire war, nearly 2 weeks in. Are we any closer to it ending?
Thank you for having me, Tamanna. I believe the war is aggravating, and it's coming out being a regional war into a global war, especially with the global market is being directly affected by the development in the region, especially after the Israeli intentional attack on the gas of the Iranian, were in the largest gas reservoir in the world, and then followed by Iranian retaliation against UAE, Saudi Arabia, and Qatar itself, which also brought down the production of Qatar 17% lesser than the actual production. So therefore, there is a current situation, need the international community attention to make sure that this war should be put to an end.
Dr. Awad, the tone and tenor of the messaging that has come both from the US as well as from Israel seems to suggest that US did not know about this strike on the gas facilities, right, on the gas fields. And Israel saying that because the US have said that they should not hit these gas facilities, that they will cease doing that. It seems implicit in that they're saying that now Iran should not be targeting oil infrastructure of the Gulf countries. But there is no reason for Iran to accede to that. So is that something that will cause even more problems in the near term?
Well, it sounds like, a corrupted leaders having a brat son who bought a car and smashing the people and expecting the world to receive it with a good tendency that he cannot go to the jail. I think both are criminals in attacking the Iranian installation, and they knew it. If a superpower, the largest, the strongest power in the world, does not have a saying in this world, I think it is a gimmick. It's a rhetoric by the president who is suffering from dementia. He definitely knows that he only gave the code to the Israelis who unleash all the American technology and the artificial intelligence in attacking every place in Iran, and a carpet bombing and a systematic bombing. So let's be realistic in speaking that this war, yes, he was drawn into a war with Iran on the behest of Prime Minister Netanyahu, but that does not give him the excuse that he was not aware. He was fully aware, and he knew what was going on the ground. But the problem with the President Trump, he doesn't understand. He has not been educated about the culture of the region. So he does not been educated about the intention or the objective of the war of Israel on the region. Therefore, I think what we are witnessing now, illogic explanation for a war which was a violation of all international law and forms. So I think what we need at this moment, like you suffering, we are suffering, everybody is suffering in this war. We should tell the United States and Israel that this war unnecessarily, and we need to survive and live in peace.
Dr. Awad, if that is indeed how the picture is shaping up, do you fear that this could last a lot longer? Because for both sides to claim victory, it is the difficult thing as things stand.
Well, I think it's going to be more tougher in the days to come. You're absolutely right, because now I think what will happen is the American and the Israelis are enlarging their attack on the Iranian oil installation, and Iran have already warned that any
but
attack...
Dr. Awad, sorry to interrupt you, sir, but just trying to bring that. But yesterday, Benjamin Netanyahu has said that they are not going to be attacking any of the energy infrastructure of Iran at the behest of America. So maybe that is a bit of a solace.
Well, I don't take a single word from a criminal wanted by international criminal courts that he can dictate us what is going to be the next. Let's be realistic again. I come back to you on this point. Actually, the deep state in both the countries wanted this war to expand. America is only eyeing the $5 trillion of the Arab Gulf country in the American bag where they wanted to extract it. If they stop the war, they will charge him 2.5 crore. If they continue with this war, they will continue to take all the $5 trillion that in the American banks. So who is the beneficiary on this, by the way? I mean, you are talking of a profit. The profit is only the arm industry and the excise company, and the American currently is the largest exporter of oil, including Russia. So who is winning, who is gaining out of this, and who is suffering? I think we need to address a serious talk on these issues till we understand the game plan of the superpower fighting on the control of gas and oil in the world, which goes against the Asian country, particularly China, for the United States, and also for the region who have been prosperous and they were living in peace prior to this war.
Just what is the what is the outcome that is possible? What I'm trying to get at is what you're saying makes absolute logical sense, but ultimately you're talking about countries in Europe that have distanced themselves and said they will not participate, but they're not engaging in dialogue to say you need to stop this. And so how is that possible? How is what you're suggesting going to be possible where countries around the world step in and tell all three parties involved to cease and desist?
Yeah, so absolutely. I think what we are witnessing is the disturbances and no more unilateral world. It's a multipolar world, is under form. And if we have the G20, if we have the BRICS, if we have the Shanghai Cooperation, if we have the South-South Cooperation, and they can raise their voice against this war, even the Europeans are against this war. I fully agree with you on this. But the problem with the dragging this country onto this war is nothing but to an expansion. And there are remnants in their brain of those who colonial power who still think that they can reoccupy this part of the world and colonize it. And that is where we are facing this problem. I am talking because I belong to the region. We have been inflicted by wars after wars after wars. So we need a voice that can tell stop, and that's the end. That is what bothering us. The Europeans are already suffering. Now the gas, who is benefiting? Russia, they will not sell them the gas. America gives them the little leverage to buy from the United States. 4 times the price they used to get from Russia. So who is benefiting out of these wars? When you're looking for a battle zone, different part of the world, that means you have a global fight where you are not ready to compete honestly with the other rival, but you are going to take it into your own hand because you don't accept a rivalry or a competition. This is the world. This is the reality what we are facing in this world. European will not join until and unless they feel that the American part of the NATO has been brought them into this, dragged them into this war, and that is why Israel have dragging the United States and wanted the United States. Maybe they use a false flag. We don't know. I'm not going to hypothetically saying here, Taman, but the fact of the matter remain on the ground that there is people who wanted this war to continue for at least months or 2 months or 3 months. They ensure.
I hope not. I don't think the world can afford it even at this pace. Dr. Awad, thank you so much for joining in and giving us your perspective. At least what the screens are reflecting today is some optimism that things will cool off. And when I say screens, I mean equity, definitely not the rupee. What's happened with the rupee in the last 20 minutes is a little worrisome. The situation has deteriorated quite quickly. I'm seeing 93.16, 93.15 right now on the dollar. Naveen Mathur, Director, Commodity, Currency and Gift City at Anand Rathi, joining in this morning. Naveen, if I just look at the last 20 minutes, 25 minutes is a sharp plunge. And markets, otherwise, equity seems not too worried. What do you think is making this situation worse? Because you've not seen any sharp moves on crude.
Thank you very much, and good morning to you, yes, the rupee did close Wednesday at around 92.64, and we did saw the opening down by around 0.6% to a level of 93.18. Now, there are various fundamental factors we all know about the geopolitics, the geoeconomics related to the oil spikes. The Brent is around $103 a barrel. The WTI is quoting at around $94, $95 barrel. So I think the inflationary pressures, the strength of the dollar index, the dollar index has gained strength. It is around 100 from the lows of 95 few months back. So inflationary concerns, particularly with the spike of crude oil, the Middle East tensions, kind of jittery for the FPIs to stay in the market, in spite that the India has strong macro fundamentals. But it's a global phenomenon, so FPIs are selling big time over the last 2 weeks or so. And the RBI has been intervening. They have intervened to an extent of around $11 billion for the period that was started till March 6th. So I would say that the RBI is intervening to curb the volatility, but they are not restricting the rupee against the dollar to find an equilibrium.
Got it. Just to follow up to that, Naveen, and good morning, Alex here. Just wondering if this is something that we're going to have to contend with. The first sign, would you say, is crude oil coming off? And if that does happen, if it goes back, say, hypothetically, because all we can deal with at this moment are hypotheticals, if we move back to $80 to the barrel, does that mean that we come off substantially from the lows for the rupee?
I would say, and good morning to you, I would say that the market would need a breather to stabilize. Just the oil factor would not be critical for rupee to hold on. The global sentiment should become better. Means I would say because of the sentiments around the emerging markets. I won't say, as I mentioned earlier too, India is not seen as an emerging market currently, but then still the foreign participants wants to exit. They would like to exit from their core in the times where we are today. So one is that reason, definitely, which would be better once the Middle East crisis actually tapers off. So I would say the structural deficit which may entail because of the crude prices spiking would be the other macro fundamental which the people would be looking forward to. And if, say, for example, the crude sustains at around $70 or so, I would say $80 or so, there would be pressure on the current account deficit, which would be negative, so to say, for the sentiments of the flows to India.
Fair call. Naveen, thanks so much. Much appreciate your time and thanks for taking the time and giving us these thoughts. Well, while the markets are doing well, the rupee markets are not. Sushant Bansali, CEO of Ambit Asset Management, Johnson, right now, as we hit 93.23. Well, this is depreciating very, very swiftly. Sushant, thanks so much for joining in. How difficult is it to take an investing decision right now? Because we may have been sold, we may have sold off quite considerably, but there is no saying that this cannot worsen further.
Yeah, no, definitely tough time for investors and fund managers in a sense on what to do because there's so much uncertainty around, and the biggest one, which is war, nobody knows how it will end and when it will end. Our going in thesis right now, the way we are working, is that it's not going to end soon. Probably might go for an extended period of time. As you've seen, like just till end of last week, it looked like the intensity is coming down, and that shall give, I would say, especially Iran, an opportunity to continue for a long period of time because of whatever inventory they have of the drones and missiles. It might continue for a longer period of time if they bring the intensity down. But with what has happened in the last 2-3 days, the intensity has gone like much ahead of probably similar to where it was in the first few days. And that might shorten the time frame. But all like too much uncertainty. And what we are trying to do is we are trying to keep our head cool, stay calm, not do much of activity, because there's no point taking a view and which will get decided by how the war plays out, which nobody knows, I think, how it will play out.
Yeah, that's a fair call, Sushant, and we're dealing with a lot of conjecture at this point because we ultimately are dealing with news on a 1 hour basis. We spoke to a chief executive officer of a listed company just a short while back, and he said, I would like to have a safe harbor that lasts 1 hour. And I think those are the timelines that we're dealing with right now. But having said that, from an investment perspective and from building your portfolio, the kind of cracks that we're seeing in frontline companies is absolutely massive. So are you not doubling down on certain ideas where you say that from a fundamental sense, there is relative security or there is relative insulation, and where would those pockets be in your opinion?
Yeah, no, I think there are few opportunities, I think, which are there, especially, let's say, on public crop protection, etc., where, because I think the Chinese New Year, people had developed lots of inventory that might play out well in this extended period of time. The other play, I think, from a short-term perspective, with respect to what happens to war, is items related to, I think, consumer durables related to, I think, heat wave, because we are experiencing that El Nino is there for sure, and so far. And that segment should play out well. So very few pockets, I would say, to play around. Not much depth into these sectors in terms of market capitalization or the number of options. So a little to play. Everything else, I think, is just, I think, stay where you are, be in good franchises. Hopefully, when times are uncertain, the companies which have good pricing power, companies which have better moats, they will any which way deliver better than others. It's more relative game than an absolute game in terms of earnings. So if you are on the better side of earning growth of companies, money aren't going out of markets in a rush. So it will rotate to companies which will deliver on a relative basis. And that's where I think one needs to hide behind probably in these uncertain times.
Got it. Sushant, do banks give an opportunity? Rates will definitely not go down any further. If anything, we may see a hike there, and credit growth might, even if it comes off a little bit, might still be half decent.
Yeah, we are, I think, quite gung-ho till about February on banks for FY27, because FY26 earning growth was relatively slow, getting the impact of the change in interest rates over the last year. So FY27 looked very promising, but given what's happening around, I think credit growth might be less than expected, and the earning growth might still, I would say, be relatively better compared to the current year. But in relative terms, compared to other sectors, I think it might still be a better play because there is no impact on margins. I think from a rate cycle perspective, we don't foresee in the current moment any rate hikes in the current year. Definitely, I think the case for further rate reduction is out of play for the next 2 or 3 quarters at least. So in a stable interest rate environment, I would say that the lenders will have a good earning season relatively to many other sectors.
Sushant, couple of questions. One on the commodities plays. Just over the last few days, we've seen them come off in the international markets quite dramatically. But one would argue that this is also something that is relatively insulated, right? Because the way the world is going, even in certain pockets, as sad as it is to say, there is going to be a need to rebuild. And so from that perspective, are you looking at this pocket? And what specifically are you looking at? Are you looking at ferrous or are you looking at non-ferrous? And how are you playing this?
Yeah, no, I think, we were, I think, entering into a super cycle of commodities in the last few quarters, which generally lasts for 2 or 3 years. So as such, we were positive on commodities. The war definitely brings uncertainties on both sides. I think demand will be there in long term, which will increase. But at the same time, because of fuel prices, which I think is a big factor in terms of conversion, there will be a short-term impact on margins for sure. And the longer the war, I would say, escalates and crude remains, I think, at elevated levels, the impact on margin in short term will be quite high. So players, I think, with stronger balance sheet who will have the ability to sustain during these short periods of time, because it can be quite tricky for commodity companies in the interim.
Correct. Sushant, thanks so much for taking the time and pleasure speaking with you. Wish you all the best in the coming months. All right. That is in effect what we have to say about the markets. They're relatively doing much better than they were yesterday, but the rupees remains something to watch. What else should you watch out for? I think you should watch out for Dhurandhar. You're watching Dhurandhar this weekend, aren't you?
I'm watching it today.
Today? Okay, so that's something to look forward to. Neeraj has got his weekend plans on. But of course, the big screen is buzzing, and how Dhurandhar, The Revenge, has hit theatres and it's already sparkling strong reactions from audiences. We've got this special report for you. Take a look at this as we end the show. Thanks so much for watching.
Well, we're waiting here for the audience to just come out. It was a houseful show, packed hall right now. So we'll try and get some reactions. This alley is going to be full in just a few minutes from now. And we'll get you all of the audience reactions. So if you're waiting with that book button and waiting to book tickets, we'll tell you if you should or shouldn't. What do you think about the movie?
It's very good. I would recommend everyone should watch it.
Aditya Dhar, you are phenomenal. You have broken you have shaken the entire Bollywood. Really, hats off to you, Mr. Dhar.
I thought it was a roller coaster ride. Like, it was sometimes fast, sometimes slow, and there were many twists. And they were amazing. The movie exceeded my expectations.
Did you watch the first part? Is it better?
Yeah, I think it's similar to that. Impactful and definitely must watch for everybody.
What's your favorite part, and do you think the action was over the top or no?
No, I think he's managed it well in terms of storytelling, having sort of a realistic tinge to the action scenes, plus making it interesting to watch. That is difficult without going over the top like other universe type of movies. So that is what I like.
Around 20 minutes before the end, it was kind of कि हाँ चलो closer मिल गया. अब इसके बाद कोई और third part नहीं बनने वाला.
Do you think it's better than the first part? Did you watch the first part?
I would rather say that I would let everything sink in, then I can say that. But it's quite nice, like on par with the first part.
And how's the acting, storytelling?
I believe Ranveer Singh was mind-blowing, along with the actor that played Jamil. So he was the main role, I believe.
Did you miss Akshay Khanna?
Not
No,
really.
Major
Iqbal, Arjun Rampal didn't make us realize that, so it was very well.
Alright, then there you go. That's a thumbs up coming in from the audience.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
Delhi, the Greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro App, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi. He has been tracking markets for over a decade. Spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you.
Hello and welcome. You're watching NDTV Profit. This is Ask Profit. I am Mahima Vachhajani and with me is Soumit Sarkar. Well, let's take a quick look as to how the markets are doing. It's a relief for sure for the markets
but
today.
Will it last or not? Is the key question.
Will it last or not is the question that everybody has. But on a Friday at least, we'll end the weekend hopefully on a good note. The Nifty 50 right now is trading 1% higher, slightly off from its day's high point, but still trading 1% higher. The Bank Nifty also is seeing gains about 1% up around 1.2%. Let's try to pull up the Nifty 50 heat map and see as to what are the counters that are doing fairly well. Tata Steel topping that chart, up 3.8%, followed by JSW Steel. So both steel counters doing very well. Tech Mahindra also up 3.4%, Reliance, HCL Tech, so some IT names also doing fairly well. SBI, Coal India are some of the other names which are doing well. Eternal has seen a turnaround today, at least up 2.3%. On the flip side, you have HDFC Bank still losing ground, down by about 2%. Shriram Finance also down by about 1.8%. You have also Bajaj Finance and HDFC Life, which are slightly down in that range of 0.6 to 1%. So that's with regards to where the broader where the benchmarks go. But let's try to pull up the sectoral heat map to see as to how sectors are faring at the moment. At least in the morning, we saw all sectors in the green. Right now, also we are holding that. The PSU Bank topping that chart, up almost 3%, followed by metals up 2.5%, IT up 2% as well. Auto gaining the least, up by about 0.9%, followed by FMCG also up by about 0.9%. Let's try to pull up the advanced decline ratio to see as to how the broad end of spectrum is doing. The mid cap 150 is up 1.2%, the small cap 250 is up by about 0.7%, and that beautiful advanced decline ratio chart after a really long time, because you have 2000 advances versus that of just 400 odd declines, so that indicates that the broader end of spectrum is also looking positive. Let's quickly pull up the BSE 500 before I go ahead and introduce our guest for the day. The BSE 500 for some specific names. There you go. There is KIOCL, Lloyds Metal, Happiest Minds, Sri Renuka, Ether, all of these gaining in that range of anywhere between 5 to 12%. But on the flip side, you have Hatson Agro, MCX, as well as something like Petronet LNG losing some ground. So that's with regards to where the markets go. But with that, let's also welcome in our guest for the day, G. Choklingam, founder and MD of Economics Research, and Somil Mehta, head alternate research at Mirae Asset Sharekhan, joining us now. Welcome to both of you, gentlemen, and a very good morning to the both of you. Somil, before I start taking the queries, your quick take on the markets right now. We've seen a slight bounce back. Do you think it is there to stay?
Good morning to everyone. My view is positive in the very short term. I'm expecting a bounce, and it's just a bounce. The trend is still down, and I'm not expecting a reversal for this trend now. We're making low top, slow bottom formations on the weekly, monthly, quarterly charts, which is negative for the markets. Markets Nifty has been trading below 10 daily moving average. It has not even crossed the 10 daily moving average for a very for last, I think, 3 weeks now. So negative on the markets in the medium term outlook. However, in the very short term, I'm expecting a bounce, and the bounce could go till 23,600, 23,700. There are stock specific, sector specific good moves which we can play definitely in this bounce. However, the trend in the medium term still remains negative for a target of 22,750, which is the 78% retracement of the entire rally which we saw in the last one and a half year.
Okay, all right. So that's the quick take coming in on the markets. But let's start taking your queries. The first question is from Ramesh, who's writing us from Bengaluru, asking about Sharda Cropchem. He's only 8 shares at the levels of 1187. Wants to know as to what should be the next course of action for him. Mr. Oklingam, your view on this particular counter? He's sitting on a slight loss.
One can hold on to it. It's trading only around 16 times trailing PE. And also agri theme remains unaffected by the ongoing war mostly. And it is mostly domestic demand driven. So considering these facts, one can continue to hold the stock.
Right, the first caller query coming in from Gurugram. Manav, you can go ahead and ask your query.
Yeah, hi, good morning to everyone. So today I have query on National Aluminium Nalco. So I'm holding 75 odd shares at an average price of 191. So just the stock has shown a little downtrend for past 2-3 sessions. So I researched it a little bit about it. So I got to know that some aluminium prices have corrected in the globally. And while researching, I also got to know that Nalco is on track to commission its 5th stream aluminium refinery by June 2026. So what impact can be seen for the in a year or year term? Should I hold on to it or sell it off?
Okay. Mr. Chokhalingam, any view on Nalco given the fact that commodity prices have been quite volatile? What should Manav do here?
In the short term, it is fairly priced, though it is 11 PE, but that is the PE the metal stocks command in the bull market in the metal space. But if you ask me, beyond 1 year, there is a scope for further appreciation because, as we were also said, a lot of expansion plans are there. So beyond 1 year, it can give some significant upside from current price. Otherwise, I believe it is fairly priced. If there is any weakness in the aluminum price or in the market, it can correct 5 to 10%. So therefore, I would give hold recommendation for long-term investors.
Okay, the next question that we have is on Mahindra and Mahindra. Meher is asking this question, wants to know if this is the right time to enter into this counter from a short-term perspective. Saumil, your view on the charts?
Short term, yes. Not in the medium term. Short term, I'll be expecting a bounce till 3120, and the next target on the upside would be 3240. So short term, yes, positive. Keep a very strict stop loss around 3010, but you have to keep a very, very strict stop loss here.
Okay. The next query is coming in on Fortis Healthcare, and it's from Mohit from Ludhiana. He's holding 350 shares, bought at a price of 270. He wants to know, should he continue to hold this counter for the next 2 years? Mr. Chokhalingam, any view on Fortis?
Beyond 2 years, it can give some meaningful return, but otherwise, it is fairly priced at current juncture. But the hospital sector is a consistently growing sector. Long-term prospects are good even at current price. But therefore, I would give hold recommendation only for investors who are willing to hold at least 1 to 2 years.
Okay, all right. So that's the view coming in on Fortis. The next one is coming in from Tanmoy, who's writing us from Assam and wants to know if this is the right time to invest in Tata Power from a year-long perspective. Mr. Oklingam, I'll come to you on this one with the news update coming in. Of course, the stock did bounce up. Now it's off from its day's high point with regards to its purchase power agreement with Gujarat government. But do you think this is the right time to make an entry into the counter? It's up 2% as we speak.
For medium to long term, yes. The kind of aggressive approach they have followed in expanding the renewable energy and reducing the share of thermal power in the total, consolidated business is really tremendous. A lot of capacity expansions are lined up. So definitely, I believe beyond 1 year, it can give a very meaningful return. So I would give a whole recommendation in case stocks falls even 3-5%, then one can consider buying also.
Right. The next caller query coming in from Mumbai. Udit, you can go ahead and ask your query.
Good morning, Somit. Good morning, Mahima.
Good morning.
And my salutations to the panelists. My question, Somit and Mahima, is on Igarasi Motors. I hold 50 shares at 466. It's trading around 360 or something like that. I'm sitting on a loss. I just want to know whether it's worthwhile to sit on this loss and cover up at a later stage, maybe quick enough, or switch to a better auto pack.
And I believe you can hold for long term?
That is correct.
Okay. Mr. Chokhalingam, any view on Igarshi Motors?
See, unfortunately, the performance has not been good, and it valuation also too high, valuation multiple, and the return ratio are also poor. But then the stock also crashed enormously. So one can continue to hold, hoping for some turnaround in the growth momentum in the business.
Okay, all right. The next question that's coming in from Raja from Delhi, who's asking about Ashok Leyland, wants to know if this is a good time to go ahead and buy the counter. Saumil, would you recommend that?
Ashok Leyland, yes, definitely for long term, not in the very short term. Short term, there would be volatility. I'm expecting a little bit of correction as well till 160, 158 levels. So for long term investors, definitely you can hold on to it or probably start accumulating around 160 levels. But not in the very short term. Short term, the view still remains bearish.
Okay. The next query is coming in on Orient Tech, and it's from Manoj from Hyderabad. He wants to know whether should he buy this counter at the current market price. Mr. Chokhalingam, do you track Orient Tech?
Not really.
Okay, so technically, Saumil, any view on Orient Tech?
My view would be negative on Orient Tech. I think you're referring to the stock which is at 269. Yeah. Yes. My view is negative, bearish in short term, medium term both. So I'll stay away. Technology stocks, I am more positive on the large caps at this point of time. In the very short term, Infosys, Tech Mahindra, HCL Tech, they are looking good at this point.
Okay, all right. We've got our next caller. Mansing is calling us from Andhra Pradesh. Mansing, a very good morning to you. What's your query about?
Good morning, ma'am. I'm having 1 lakh rupees. Should I stay invested with? Should I go with Nesco and Bombay Burma Trading? I want to invest 50,000 in each stock. I want to know from Chokhalingam.
Sure, Mansing, I'll take your question with Mr. Chokhalingam. Nesco or Bombay Burma, what are you finding as a better bet to invest 1 lakh rupees right now?
Between these two, Nesco, but we have a buy recommendation on both Nesco and BBTC. We consider as a high conviction stock in our research coverage. And personally also, we have invested in both Nesco and BBTC.
Okay. The next query is coming in from Nihal Mohandas and from Mumbai. He wants to know multiple stocks, but I'll just choose Asian Paints at this moment. Would Asian Paints be a good buy for the next 1 to 2 years? Mr. Chokhalingam, any view on this?
I would not consider buying paint company at this point in time. As all of us know, the spike in oil price will hit its performance, mostly in Q1, April to June, because of the inventory. And I would consider only buying paint stocks only after seeing June results.
Okay, all right. So that's the view on Asian Paints as well as paint space as a whole. The next one is on Shelly Engineering. Santosh from Chennai wants to know if you can go ahead and buy this counter from a slightly long-term perspective. He says that he is a long-term investor. So, Mr. Chokhalingam, I'll stick with you for this one. Shelly Engineering, any view?
It looks too good in terms of growth, definitely, but still around 75 trailing PE, I am little uncomfortable. So I would consider buying only if it corrects at least 10% from the current level. But otherwise, growth-wise, yes, it looks too good. I mean, the kind of profit growth they have shown last 3-4 years. So maybe highly risk-taking investor can consider buying. Otherwise, from conservative approach, I would wait for at least a 10% correction before I consider buying the stock.
Okay, all right. So that's the view on Cherry Engineering. The stock is up almost 6% as we speak at its day's high point. But we've got Sanjay calling us from Mumbai. Sanjay, a very good morning to you. What's your query about?
Good morning. I'm holding 2,200 shares of Punjab National Bank at 121. What is the outlook for that stock?
What is your time horizon that you're looking at, Sanjay?
1 year. 1 year to 2 years, no problem.
Okay. I see that you're sitting on, sir. Okay, he's not. He's exactly at what the price it is at right now, PNB. Okay. Mr. Oaklingham, your view on PNB, it's trading at the same price at which he's bought.
Fundamentally, it is too good stock in my view. It is trading at a slightly discount to adjusted book value. Net NP has come down a lot. The quality of asset is at a record best level for this bank. And CASA, low cost deposit ratio access is also very high. And I am very bullish on overall PSU banks. And within that, PNB is one of the top recommendations from our research coverage.
Next query is coming in from Jashimuddin from Assam, and it's on IOCL. He's holding 1,000 shares bought at a price of 144 rupees. Should he hold for short-term gain here, Somil? Any view on IOCL?
On IOC, I would stay away at this point of time. My view is bearish. I'll be expecting the stock to go down till 135 and 132 levels. So bearish on the stock.
Okay, all right. The next question is coming in from, this is from Rajesh, who's writing us from Noida, asking about Bata. He says that he's directing this question to you, Mr. Oaklingham, and wants to know from a slightly long-term perspective, can he go ahead and buy this counter at the moment? What's your view?
See, the stock is still trading at around 44 PE, but then there has been a very substantial correction. And also, if you look at last 10 to 20 years, it's always had a very high beta also most of the time. Only this time it has not participated much in the rally. So little risk-taking investors, I would consider giving a buy recommendation on Bata.
Okay. The next query is from Mr. Reddy from Mysore, and it's on Embassy REIT, I believe. He's saying that the prices have come down to 50 from 116. Mr. Chokhalingam, do you track Embassy REIT? Any view here?
I would admit that my understanding of this REIT is still not, satisfactory. So I would avoid giving any view on this instrument.
Okay, the next question that we have is on SW Solar. Sanjay from Noida wants to know if this is a good time to average this counter. Somir, I'll come to you on this one. Sterling and Wilson Solar is what he's talking about. What are the charts indicating?
It's in the downtrend for a very long time now. Struggling above the short-term averages, struggling below the short-term averages as well. So I'll stay away. My view would be bearish, and I'll be expecting this stock to go down till at least 150, 155 levels.
Okay. The next query is from Venkat Raman from Hyderabad. He's holding 40 shares of Avanti Feeds for long term at a price of 1,210 rupees. Should he hold average of book profits? Mr. Chokhalingam, any view of Avanti Feeds?
I would suggest booking profit in a phased manner as it keeps moving up.
Okay, all right. The next one is on HDFC Bank. A lot of viewers are asking on HDFC Bank, so I'll take up both the fundamental and the technical view on this one. Mahesh from Bengaluru is asking if this is a good time to buy the shares. Somil, your view on the charts first?
See, it's in the downtrend in the last couple of months, and we've seen very sharp declines. However, there are very crucial supports around 750 and 720 levels. So let's watch out for those levels. We'll revisit once it starts making a basing out pattern around those levels, and we'll revisit and think about long term. But long term structure still remains positive, and we should strategize to buy on declines at lower levels.
Okay, and Mr. Oaklingham, your view on this entire development that has happened around HDFC Bank? Every other person is either invested through mutual funds or holding the stock in their portfolio.
I am not at all worried about what has happened last 2 days. I may be wrong, but I have a tremendous faith in the bank because the RBI is continuously monitoring all such big banks, and a lot of institutional investors are there in the bank as a stakeholder. So I can't imagine any serious governance issue from such an institution which has got excellent track record. Secondly, the bank used to trade at more than 4 times price to book value long ago. Now it is just around 2 times. And also, most of its subsidiaries are making decent profits. So, considering all these facts, I would continue to maintain a buy recommendation, and I firmly believe that 10-15% upside is very much possible in the short term itself once this, the war finds some compromise.
Okay. The next query is coming in on IDBI Bank, and it's from Murli Mohan from Kerala. He wants to know the view, given the fact that the share prices have fallen a lot, and there is nothing, not much of a development happening when it comes to privatization. Mr. Chokhalingam, any view on IDBI Bank?
It's a good bank, post correction. If you look at the book value, it's around 65, current price is 73. It's trading at only 1.2. This bank also improved asset quality in a tremendous way in the recent years. It's a good buy for medium to long term.
Okay, all right. So that's the view on IDBI Bank. We've got Raksha calling us from Bengaluru. Raksha, very good morning to you. What's your query about?
Hello.
Hi, I can hear you, Raksha. Go ahead.
Oh, very good morning, ma'am.
Good morning. Go ahead. Ask your query.
I hold Tejas Networks. Bought it around 464. I'm currently at a loss of around 6%. So I wanted to know if I have to sell it off and then buy something like Samvartana. My view is short term.
Okay, got your question. I'll take this up with Somil. Somil, Tejas Networks, what's the view? And she wants to know if she can go ahead and sell this counter and maybe invest into Samvardhana Motherson.
I think it's better to hold on to the stock. In the very short term, I'm expecting a bounce from here, but this is a very highly volatile counter. So keep a very strict stop loss around 405 and hold on to the stock. I'll be expecting the stock to go up till 535. That would be my target in the short to medium term outlook.
Right, the next query is coming in from Ayush from Delhi. He's holding few shares of Indigo at a price of 4,843. Somil, any view on Indigo?
Indigo, I'm bearish. I'll be expecting this stock to go down till at least 3,800, probably even lower. So I'll stay away from the stock.
Okay, all right. So that's the view coming in on Interglobe Aviation. But time to take a look at the F&O space. And we have Sharat joining by, as always, to give us a perspective and smiling today.
See, I'm a very optimistic person. And for the last 5 trading sessions, 4 out of them I have smiled. And today is the 5th day. But let's see how the markets are there. It's a technical recovery, but a sea of green here, and that's very much interesting. But of course, yesterday's SAR patch, which was there, HDFC Bank, it continues to be that. It's down 2%, but nevertheless, let's look at the brighter side. Tata Steel, Tech Mahindra, Eternal, Reliance, all of them up almost 3 to 4 odd %. And the same thing goes for BankX also. But remember, the Sensex setup is much better. The only bad point is the HDFC Bank, that's down 2%. Yes Bank, IDFC First, all are giving good reversal. Of course, this reversal, will it sustain or not? That's the big question. But nevertheless, the Friday fear seems to be away from the markets. Let's see the key long build-up, what's happening here. And we have Tata Elxsi, GMR Airports. So both of the stocks going up more than 4%. The IT stocks also reversals are there, especially in the product names. Inox Wind, that is significant buying happening across an important announcement. The stock is up 6% now. And BHEL, some defense stocks also doing well. In trade, stock is up 5%. Long unwinding, nothing much convincing. Let's move on to the key short build-up. Very little. But we have some capital market plays. MCX is down 2%, a little bit of profit booking, while Petronet LNG surprisingly is also taking that pain. It's down 3%. So these are the stocks in the market. But remember, almost 50 to 60% of the stocks are seeing fresh short covering and long build up.
Okay, all right. Thank you so much, Somit, for bringing us those details. But it's time to start our first rapid fire round. Mr. Chokhalingam and Somit, try to keep your answers as short as possible. The first one is coming on Aadhar Housing Finance. Prakash from Telangana wants to know if you can go ahead and book profits. Somil, your view on the charts?
Aadhar Housing Finance. I'll be negative on this stock. I'll be expecting it go down till 440, 430 levels.
Saumil, the next query is for you on Container Corp. He's holding 2,000 shares. Paresh Shah, he wants to know the 6 months target on this.
Container Corp, I'm a little negative at this point of time, but I would not short this stock. If you are invested, hold on to it. I'll be expecting this stock to go down till at least 430, 420 levels. You can hold on to it. Probably a sharp bounce is expected.
Okay, NHPC bought at the levels of 94. Is this a good time to average, Mr. Chokalingam?
Hold.
Mr. Chokalingam, the next query is for you from Manisha from Bangalore. It's on NMDC. She's holding 365 shares at an average price of 82. She wants to know whether should she accumulate more at the current levels.
I would not recommend accumulating this kind of mineral stock at this price.
Okay, latent view. Navneet wants to have a long-term view on this one. Can he average at the current levels? Any view on this, Mr. Chokalingam?
Yeah, it's a good quality stock. One can accumulate.
Saumil, the query is for you and it's on GMDC. Jeevan wants to know the short-term view on this counter. Saumil?
GMDC, positive on this stock. I'll be expecting the stock to go till 650.
Okay, any view on the luggage industry, both Safari and VIP? Our viewer has been tracking, wants to know if he can go ahead and buy any one of these, Mr. Chokalingam?
I would not. The rise in oil price will impact the raw material prices for packaging industry.
Saumil, the next query is for you and it's on Motherson Sumi Wiring. Shankar from Bangalore is planning to buy 500 shares for short term. Should he do that?
Short term, yes. I'll be expecting a target of 118 and 120. So, yes.
Okay, ICICI Bank is the next one. Puneet Saxena from Ghaziabad wants to know the target price for this particular counter for the next 6 months. Saumil, your view on the charts?
Sorry, what was the counter?
ICICI Bank.
ICICI Bank short term, definitely buy. 1320 would be my target, but in the long term, wait for a little bit of correction.
Okay.
Mr. Chokalingam, the next query is for you. It's on Hindustan Copper or Hindustan Zinc. What is the best buy for the next 12 months? It's from Venkatramani from Bangalore.
Hindustan Zinc is better than copper based on the valuation.
Okay, long-term view on Sanofi India, Mr. Chokalingam?
Buy and hold.
Okay, Saumil, the next query is for you. It's from Raghuram from Bhubaneswar. He's holding 1,000 shares of Sterlite Tech, bought at a price of 118. Should he continue to hold?
Sterlite Tech,
Yes.
hold, definitely hold. I'll be expecting a target of around 200 in the short to medium term.
Right. Well, with that, let's slip into a short break and we'll address more of your queries post that.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Delhi, the greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro App, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
Welcome back. Viewers, you're tuning in. You can give us a call or send your queries on WhatsApp. We'll help you solve all those stock-related questions. The next question is coming in from Parminder Singh, who's writing us from Jalandhar, asking about United Breweries. He's a long-term investor and wants to know as to what should be the next course of action for him. He's bought this at the levels of 1930. Mr. Oklingam, your view?
Yeah, one can hold it and even buy for medium to long term.
Okay. The next query is coming in on, okay, there are multiple. Okay, it's on NCC and it's from Asha from Bangalore. She's holding 700 shares at a price of 165. Should she continue to hold this for long term, Mr. Chokhalingam?
Yeah, definitely one can hold. Post this correction, it is trading at around 11 PE on trailing basis. For long term, it looks good.
Okay. We've got Pradeep calling us from Hyderabad. Pradeep, very good morning to you. What's your query about? Hi Pradeep, can you hear me?
Yeah, I can hear you.
Go ahead.
Am I audible?
Yes.
Okay, thank you. So I would like to know about Cochin Shipyard holding 47 shares at 1712 rupees.
Okay.
Wanted to know if I have to hold it or average out.
Okay, and what is the time horizon that you're looking at, Pradeep?
Long term, 1 year and.
Okay, Mr. Oklingam, any view on Cochin Shipyard?
It trades at quite exorbitant PE of more than 50. So I would give a hold recommendation.
Okay. The next query is he hasn't. Okay, it's from Rajesh from Indore, and it's on Hindalco. He's holding 550 shares at an average price of 462. He wants to know the short-term view on this. Somil, any view on Hindalco for short-term?
See, Hindalco, I'm positive on the stock in the very short term. I'll be expecting the stock to go up till 960, 980 levels.
Okay, the next one is coming in on Garden Reach Shipbuilders, and this is from Suman Reddy, who's writing us and asking about the target time for this one. Basically, she's holding, I think, 3,000 odd shares. She's not given the buying levels, but she wants to know as to what should be the next course of action for her. Mr. Oklingam, you gave a view on Cochin Shipyard. What's the view on Garden Reach?
Relatively, it is better than Cochin Shipyard in terms of the valuation. It trades around 38 PE, and also the return ratios are very strong. So one can hold in case it falls even around 5%, then one can consider accumulating it.
The next query is from Biju, and he wants to know whether should he buy Varun Beverages at current market price. Somil, any view here?
No, I'll stay away from the stock for now. It can slip till 375.
Okay, all right. So with that, Somil, thank you so much for helping us answer all those stock-related queries. On this side of the show, now we are joined by Rajesh Bhosle, who's the equity technical and derivative analyst at Angel One, joining us now. Rajesh, a very good morning to you. The next question that we have is on Tube Investment. Raj from Jaipur wants to know if he should average, hold or exit at the current juncture for this particular counter. Rajesh, your view on the charts on this one?
Just give me a minute.
Tube Investment is the counter. The stock is trading a % higher right now.
As of now, I would suggest him to hold on to it because if we see post Jan, the stock prices have started moving in a higher top, higher bottom structure. So hold on to it. Immediate support would be around 2350 levels, and on the upside, 200 DMA is placed around 2800. So from a short-term point of view, hold on for a targets of around 2800 with a stop loss below 2350 levels.
The next query is from Harsha from Vijayawada, and he wants to know, should he add more, hold or exit these two counters, SBI Card and Info Edge? Any view on these, Mr. Chokhalingam?
I would exit SBI Card. Info Edge, one can hold it after a recent meltdown in the IT sector. It can have a tactical bounce up 5 to 10%. So one can hold Info Edge.
Okay, the next one is on Piramal Pharma. Ramana Murthy has kind of invested 2 lakh rupees in this particular counter, currently sitting on a 40% loss. Not given us the quantity or the buying price, but wants to know whether he should hold or quit this counter. Mr. Oaklingam, I'll stick with you for this one because I believe that he's bought this from a long-term perspective. What should he do?
It's having a lot of stress on the bottom line. The profits have, in fact, come down a lot. But if you look at enterprise value to sales, there is some comfort in terms of valuation. So I would give a whole recommendation on Piramal Pharma.
The next is a caller query coming in from Bangalore. Prajakta, you can go ahead and ask your query.
I'm holding Anantaraj 91 shares at the rate of 503. So can I add more? This is for long term.
Okay. Mr. Chokhalingam, any view on Anantaraj? Should Prajakta add more shares at the current price, or should she continue to hold the 91 shares?
One can accumulate in a cautious manner during this volatile market. Price correction gives some comfort, and also its ambitious expansion plan in data center also gives some confidence. So one can accumulate in a phased manner. That's my research view.
Okay, all right. The next one is coming in from Afsar, who's writing us from Saudi Arabia. He's holding 300 shares of Ashoka Buildcon at the levels of 217. He says he's a long-term investor, wants to know if he can continue to hold this counter or not. Mr. Oaklingam, your view?
Somehow, trading at around a very small P, I am not comfortable. One can hold it. I mean, the stock price has crashed, but Personally, I'm not very optimistic on the stock, but then considering the meltdown in the stock price, the past track record, one can hold it and hope for some turnaround in the stock price.
Okay. The next is on Tata Capital. 20 shares is what the viewer holds on this counter. It's from Niva from Chennai. 20 shares of Tata Capital at a price of 318. What's the outlook for the next 2 years, Mr. Chokhalingam?
2 years, definitely one can hope for a decent return. It trades around 3 times price to book value, I think, which is very attractive for a finance company coming from reputed industrial house.
Okay, all right. We've got Sanjay calling us from Bengaluru. Sanjay, very good morning to you. What's your query about?
Good morning, ma'am. I hold 350 shares of Bajaj Housing Finance, purchased at average price of 93.45.
Okay.
Should I hold it for long term or shift to a better share like JK Cement?
Okay, Sanjay, got your question. Mr. Oaklingam, your quick view on Bajaj Housing Finance, whether he should shift to something like a JK Cement.
Between these two, if you ask me, I would go with the Bajaj Housing, though it trades at around 4 times price to book. The risk is only in terms of time element, not in terms of the stock itself. So medium to long term, definitely it can give some decent return. So I would hold Bajaj Housing. In case it declines more than 5%, one can accumulate also.
Okay, the next query is from Savio from Dubai. He had purchased 120 shares of Aster DM at a price of 2,850. Should he continue to hold this for the long term. Mr. Chokhalingam, any view on Aster DM?
I haven't studied it recently, so I'm not able to give view.
Okay. Rajesh, any technical view on Aster DM Healthcare?
I would suggest him to hold on to it. Recently, there was a strong saucer pattern breakout, and during the Feb month, where there was a broad-based sell of this stock has shown relative strength. So, holding on to its key moving averages. So, hold on. 600 seems to be a strong support. On the high side, 700 would be the immediate resistance. Once 700 is also crossed, can expect a move towards 770, 800. So, very interesting chart structure. Hold on to it.
Okay, Vedanta is the next one. Our viewer wants to know the short-term target and stop loss from this particular counter. Sunil from Pune is asking this question. Rajesh, your view?
So from a short-term perspective, not much is happening. If we see since Feb month, it's trading in a consolidation with 745 as a hurdle and 640 as a support. So from a short-term point of view, 640 would be the stop loss and 740 would be the target. But I would suggest hold on for a time frame of like 6 months to 8 months. Possibly the stock can rebound towards 800 levels.
Okay, the next query is on Salasa Techno. The viewer has around 12 shares. He has around 3,000 shares bought at a price of 12 rupees. Now the share prices are trading at around 7. Mr. Chokhalingam, have you tracked this counter, Salasa Techno?
Not really, but I find valuation extraordinarily exorbitant. So I would not give any positive recommendation on the stock.
Okay.
Okay, the next one is coming from Asha, who's writing us from Bengaluru, asking about Jyoti Laboratories. She's bought at the levels of 274, wants to know if she can hold. Rajesh, your view on the charts?
And of now, the stock is under pressure. During the March month itself, the stock has seen sharp sell-off from the levels of 260 to 210 levels. As of now, it's in a deep oversold condition. So usually bounced back towards 230 to exit position. So hold on to it, but exit or bounce towards 230.
Manisha wants to know whether is it a right time to invest in all cargo. Mr. Chokhalingam, any view?
Yeah, for medium to long term, yes, one can.
Okay.
Okay, the next one is coming from Mohit, who's asking about GAIL. Wants to know if this is a good time to enter into GAIL from a 1 year perspective. Rajesh, a slightly long-term view on the charts on GAIL?
I would suggest to wait for further dip. I mean, the stock is under pressure. It has broken below key averages and support. So as of now, wait. But when it comes towards 130 level, that is a key retracement support. So as of now, wait if he wants to add around 130 levels.
Okay, the next is a caller query coming in from Dubai. Amit, you can go ahead and ask your query.
Hi, morning everybody. I have Maruti.
Okay.
Decent numbers at 11,000 rupees. I would like to invest more, knowing that the auto industry hopefully will do well. But I'm not very clear how much this Gulf crisis is going to impact. So I'd like to know whether this is a good time to buy more.
Okay, Mr. Chokhalingam, should Amit buy more shares of Maruti given the recent pullback that we have seen in the share prices, or should he just continue to hold on to those 50 shares?
I would give a whole recommendation on Maruti. For buying, I prefer M&M because it is more diversified than Maruti across various verticals within automobiles, and also it has a highly successful business of tractor business. So for buy M&M, hold Maruti. That's my view.
That was the view coming in on Maruti. Well, let's step into a short break and we'll be back with more viewer queries on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
understand the Tamil Nadu twist, join me in the midst of our people, language, and politics. Vanakkam Tamil Nadu. Here we come.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Delhi, the greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro Am, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi.
Welcome back. You're watching Ask Profit. Viewers tuning right now can call us or WhatsApp us and go ahead and ask their questions. The next question is coming on Paytm. Our viewer wants to know the mid to long term strategy for entering into Paytm right now. Mr. Oklingam, your view?
Oh, I'm not very comfortable giving view on this company, so I would skip it if you permit me.
Sure. Rajesh, any view on the charts for Paytm?
Interesting observation that on July 20 last year during July the stock had given a strong cup and handle breakout around 950 levels. This week it tested those levels, and this week we are seeing a bullish engulfing pattern on a weekly chart with 50 weekly moving average as a support. So it's reversing from a strong support with a stop loss of 940. It can be bought expecting a bounce back towards 1200 levels.
Okay, the next query is from Suresh from Kerala. He wants to know the 1 year view on Bajaj Finance. Should he buy at today's price to average, Mr. Chokhalingam?
One can consider accumulating on declines. It still trades around 5 times price to book value. So fairly priced in the short term, but it has a medium to long term prospect. So therefore, my view is accumulate on declines.
Okay, the next one is on TCS. Jay Lower from Pune wants to know if this is the right time to buy TCS. Rajesh, your view on the charts?
Yeah, so accumulate in a stagger manner, can add some positions at current levels, and as it slips further towards 2200, add more. So bullish on IT space at very long-term support levels. So definitely can accumulate TCS.
Is holding 900 shares of Hudco, bought at an average price of 257. He's a long-term investor. Should he continue to hold or book loss, Mr. Chokhalingam?
If somebody is willing to wait beyond 1 to 2 years, yes, it is trading at around 1.6, 1.7 time price to book value. Short term, it is fairly priced, but for about 2 years, it can give some decent return.
Okay, the next one is coming on RFC. Our viewer wants to know if he or she can average or wait for this counter. The quantity is 1000 shares and the buying price is 110. Rajesh, your view on the charts?
At around the 90 levels, I mean, there we are seeing a 200 weekly moving average. So that would be ideal level to add.
Okay, the next query is from Venkat Reddy from Hyderabad. He's holding 5,000 shares of Engineers India, bought at a price of 221, currently sitting on a loss. Should he add more or exit for short term, Mr. Rajesh, any view on this?
So hold on to it. I mean, overall during Feb, there was a strong bounce back in this counter. With the broader market, it has slipped. But if we can add around 175 levels, there we can see open low Marubozu formation. So wait for now, but add more around 175, 180 levels.
Okay, the next one is coming from Vijay, who's writing us from Madurai, asking about ONGC. Considering the current volatility in the markets, he wants to know if he can continue to hold his position in ONGC. Mr. Oaklingham, considering the volatility in crude that we've seen, do you think he should continue to hold ONGC from a long-term perspective? What is the course of action for this particular counter?
For long term, no, but in the short term, one can hold. What is going on now in West Asia is positive. So till some resolution is fully found out, one can continue to hold oil and gas companies like ONGC.
Next is a caller query coming in from Hyderabad. Preetham, you can go ahead and ask your query.
Yeah, thank you. Thank you, panel members.
Yeah, please.
I'm holding NTPC 300 shares at a price of 365. By seeing this L&T and M&M, they have fallen sharply. I want to invest at least 100 shares. I want to sell and purchase M&M or L&T. Please suggest.
Mr. Chokhalingam, should he sell 100 shares of NTPC and buy either L&T or M&M? Any view here, or should he continue to hold NTPC?
The NTPC medium to long term, it's a good to hold. Still trading at around 15 PE, domestic demand driven and power. So there is a possible upside. As far as between L&T and M&M, both I have a buy recommendation, but in the short term, I prefer M&M to L&T.
Okay, the next one is coming on signed DLM. Ramesh Prabhu from Mumbai is bought at the levels of 357. He's a long-term investor, wants to know if this is the right time to accumulate more. Mr. Oaklingham, your quick view on this one?
Instead of Cyient DLM, one can buy Cyient parent company so that one can play on both IT services and this DLM business of Cyient DLM.
Edwin from Kerala is holding 100 shares of IRCTC, bought at a price of 540 rupees. Rajesh, any view on this counter?
Nothing is happening as of now, but the prices are in deep oversold zone and some positive divergence are there. So as of now, hold on to it. If he wants to add above 550 levels, once 550 is crossed, we can expect some positive momentum back towards 620, 650 levels. So as of now, it's a strong support. Once it crosses beyond 550, further traction can be expected.
Adani Total Gas, Vineet wants to know if we can continue to hold from a long-term perspective. Mr. Oaklingham?
Yeah, definitely one can hold. The theme has a lot of prospects in the long term.
All right, standard disclaimer, Adani Total Gas is also part of the Adani group of companies and so is NDTV Profit. The next question is on Jindal Worldwide. Muralidharan from Pondicherry wants to know if this is the right time to average this counter. Rajesh, your view on the charts?
So I wouldn't suggest him to average. This stock has been in a strong downtrend where it's struggling to cross its 50 EMA. So I wouldn't suggest to add, but if in case there is a bounce back towards 25 levels, use those bounce to exit longs.
Okay, Basavraj is holding 542. 126 shares of Transrail Lighting at a price of 542. He wants to know, should he average or hold on to this? Mr. Chokhalingam, any view on Transrail Lighting?
Actually, it looks quite attractive. One can consider buying for medium to long term.
Okay, GMR Airports is the next one. Kutresh is asking this question. He's got 480 odd shares at the levels of 96. Can he hold this counter? Rajesh, your view on the charts?
Hold on to it. This week we are seeing a positive reversal formation engulfing on the charts. It's precisely around its previous swing low. So hold on to it. 86 seems to be a strong support on a bounce back, expecting prices to rebound towards 100 levels.
Next query is on IRFC. Our viewer is holding 1,000 shares, bought at a price of 44. Should he average or just continue to hold what he has? Mr. Chokhalingam, any view on IRFC?
Yeah, post correction, it trades only around little about 2 times book value, price to book value. One can hold it for medium to long term.
Okay, all right. So that's the answer coming in for IRFC. But time for our rapid fire round. Try to keep your answers as short as possible. The first one is on Reddington. Our viewer is bought it from a long term perspective at 270. Is it a good hold, Mr. Choklingham?
One can hold after this significant fall.
Raghu from Bangalore is holding 1200 shares of Suzlon at a price of 42. Should he hold or sell, Rajesh?
Hold on to it.
Ganesh Housing, any short-term view on this one? Rajesh Furkan is asking this question.
Hold for a bounce for 680 levels.
Okay, Vasudevan wants to know which is a good bank to buy, IDBI or Bank of Maharashtra. Chokhalingam?
Without any question, Bank of Maharashtra.
Jupiter Wagons, 1000 quantity bought at the level of 320 from a short-term perspective. What are the charts indicating, Rajesh?
Expecting a move back towards 320, so hold on to it.
Rajesh from Noida is holding 1009 shares of Quality Walls bought at a price of 24.75. Should he buy more for long term, Mr. Chokhalingam?
Sorry, I have not tracked it.
Okay.
Okay, TVS Supply Chain Solutions, Shankar from Bengaluru wants to know if this is the right time to buy this counter. Rajesh, your view?
Add around 90 levels.
Shrivaharan from Chennai has bought 50 shares of CRISIL at a price of 5,010 rupees. Should he hold or sell? Mr. Chokhalingam, what is your view?
Definitely a good stock to hold for medium to long term.
Happiest Minds, 500 shares. Can I continue to hold or sell? Rajesh, your view on the charts?
Yeah, hold on to it, expecting 450 levels.
Shrikar is holding 100 shares of RVNL bought at a price of 410. Should he hold or sell, Mr. Chokhalingam?
Hold.
DLF from a 1-year horizon point of view, can I invest 50,000 right now? Rajesh, slightly long-term view on the charts?
Add around 540 levels, can rebound towards 640.
Okay.
Siva from Amravati is holding 1000 shares of Hindustan Aeronautics bought at a price of 5,050 rupees. Rajesh, should he sell or wait for the next 6 months?
No, hold on to it for move back towards 4,300.
Eternal bought at the levels of 60. 2,000 shares is what Srikanth is holding. Can he continue to hold for the next 10 years? Mr. Chokhalingam, your view?
I am not that bullish on digital business for 10 years. Maybe short term one can hold.
Satyan wants to know whether should he continue to hold NMDC from short to medium term. Rajesh, any view? NMDC
Yes,
Steel.
definitely hold it, definitely hold.
Tata Motors PV from a long-term perspective, can I average at the current levels? Umesh from Bengaluru is asking, Mr. Chokhalingam.
Yes, it's a good to accumulate. Tata Motors CV, not passenger vehicle, CV, commercial vehicle.
Okay, Karthik from Hyderabad is holding 175 shares of ITC at a price of 404, currently sitting on loss. Should he average or sell, Chokhalingam?
It's a good to buy at current price.
Okay, the best sector right now to invest in, Sayan is asking from long-term perspective, Mr. Chokhalingam.
Without much doubt, public sector banking space.
The next query is on Tanla platform. Viewer is holding around 25 shares bought at a price of 758. Rajesh, should he continue to hold?
Yeah, hold on to it.
Pondi Oxides is the next one. Sunita from Hyderabad is holding at the levels of 1180. Wants to know if she can average or book losses. Rajesh, on the charts?
Average when it comes around 950 levels.
Mahesh is holding 5,000 shares of IDFC First bought at a price of 32 rupees. Should he continue to hold this, Mr. Chokhalingam?
Yes, certainly one can continue to hold.
Hindustan Copper, 20 shares at an average price of 619. Is this a good time to average and continue to hold, Rajesh?
Average around 450 levels.
Okay, Bharat from Andhra Pradesh is holding 112 shares of Quality Power bought at a price of 916. Mr. Chokhalingam, should he continue to hold or sell?
I have not tracked it in the recent days.
Rajesh, quickly, any short-term view? Quality Power?
Yes, hold on to it. 930 would be the targets.
Okay.
Alright, so that brings us to the end of this round of Rapid Fire as well as Ask Profit. Mr. Chokhalingam and Rajesh, thank you so much for helping us answer all those questions. With that, viewers, completely out of time on this edition of Ask Profit. But do stay tuned because KYC is up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबां केसरी
बिटिया की शादी है हमारी।
बधाई हो
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Delhi, the greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro Am, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. It's the most loved KYC show in town. Also, let's give you some hints for the stock which we'll be discussing today, and the management will also be coming. The company is India's largest commercial and industrial renewable energy provider. That's the first hint for you. The second hint is the company listed on March 2. That means it's a newly listed company. So we'll understand how to actually judge the company, and also with the industry in which the company is operating. The stock is down 19% from the IPO price. Remember, the small and mid caps have been impacted because of global geopolitical tensions and massive sell-off in Indian markets. And the company, however, this is very much important, posted a really strong Q3 numbers, because at the end of the day, earnings matter the most. So that is something which we'll be talking about. But enough of hints. Let's get to the company which would be in focus. And the company in focus is Clean Max Environment Solutions. This is the company which we talk about. And in KYC, we'll be getting this company and asking more details from the management as well. But the question remains is, why are we getting this company? Ye company kyun aa rahi hai? The first reason is definitely going to be on the factors that led to a very strong Q3 performance, because this is the first time company came out with its numbers post its listing. The second reason why this is interest for me and for everyone who is following KYC is that the capacity expansion plans and the key commissioning times, this is very much important for this renewable energy player. The demand trends, especially in the C&I space, that the company says it's the largest player, that's called commercial and industrial segment, that is also very much important, which we'll understand more about. The debt picture post IPO, the reduction plans ahead, of course they have taken some proceeds and retired their debt, but we definitely like to know because this is an asset heavy business as well. Also important question is the cost of borrowing. That has improved from 9.46% last year to 8.7%. That means finance cost kam honge, profit badhega. That's an impact. Also, the impact on the pricing and the operations post these geopolitical tensions, the global inflation risk scenario is going up. Does this impact asset-heavy businesses like them? If yes, what are the mitigation factors? And the further collaboration and tech tie-ups, interesting global names have come in from US, Japan, and the company is very forward-looking, especially when it comes to the tie-up. So these are the key questions which we'll be asking, and to give us entire perspective, we'll be joined in by Kuldeep Jain. He's the founder and MD at CleanMax, to give us the entire picture of the company and the industry in which they are operating. But apart from this, let's talk more about the company CleanMax Energy. What's the entire story all about? How the earnings have happened, and is it too technical? No, it is not. I'll make it simplified for you. It's India's largest commercial and industrial renewable energy provider, and let's get into more details about this company. Almost 570 corporate business customers they have, and 3 gigawatts of operational portfolio across Asia. GW means gigawatt. 2.7 gigawatt contracted is already the execution capacity which we talk about. These are the key numbers you should know. And also a third important point about the company is the strongest market presence they have in terms of the state presence is Gujarat and Karnataka. That is where they are having a good market share also. Apart from this, if you look at the key details, the global tie-ups they have, this includes of course the bigger name which is Google, and also Toyota Tsusho. It's like a Toyota group company, and they also have a JV. It's called Osaka Gas Renewables. So futuristically, the company is making the right moves. There are 7 states where the commissioning is there: Gujarat, Haryana, Karnataka, Maharashtra, Rajasthan, and Tamil Nadu. And remember, these states are having a very good growth in the manufacturing setup as well. But what caught my eye is the data and AI. That segment contracted volumes are major growth drivers. Remember, they are high margin, high growth industry. So you can expect the company to command a high valuation also in this segment, and almost you could say 42% of this RE, which is the renewable energy power sales, is contracted just on data and AI, and there's a big explosion happening in this sector. But अगर ये ज़्यादा टेक्निकल हो जाता है तो मैं आपको सिंप्लीफाई करके बताता हूँ. RE means renewable energy. C&I, confused मत होइए, it's just commercial and industrial. PPA, of course you must have tracked a lot of thermal companies, it's called power purchase agreement, and the last one is the plant load factor. So these are the key abbreviations, and it's very simple, this sector. Now the numbers to track, that's very much important. 76% of the customers, the new contracted capacity comes in with the existing customers. That means the same repeat customers start coming in, and of course cross-selling also happens. If you look at the numbers, it's 3.84 rupees per unit tariff for the 2.7 gigawatt contracted capacity for the last 11 months ending in February 2026. And if you take it in the group level, this amount comes in at rupees 4.25 per unit as well. So this is largely in line with the industry, or actually I could say slightly higher on the premium side as well. And that's why the company might command a premium valuation with itself. Almost 53% of the renewable power sales revenue CAGR is something which the number has come over the last 3 years. That's the data, and this top line growth is of course going to be seen in the income statement as well, but that will come a bit later. Also, there's a very interesting takeaway here. DK Khara, Dinesh Khara, as we all know him as the SBI chairman, he's the ex-SBI chairman right now. He has joined the company as a lead independent director, and that definitely augurs well for the perception of the company. But let's go and understand what are the rating parameters where we judge the company in KYC. There are 8 of them, but the first one is the income statement, balance sheet and the cash flow. This is the holy grail of the numbers where we judge the company, and the return ratios. Of course, they might be a bit depressed in this industry, but nevertheless, it's very much important. Shareholding street cred, remember, stock को सिर्फ 1 महीना ही हुआ है लिस्ट में, लेकिन यहाँ पे देखिए street cred shareholding will have a limited history for that. Valuations, we'll compare them with their other peers. Interesting names are there, but these are larger players, and some of them are government related players as well. And the outlook, what the company wants to estimate and where the industry is going. So these are the 8 rating parameters where we'll judge Clean, Max and Viro. The first one is the income statement. Let's see what the numbers are, and the numbers are really strong. Revenue and EBITDA, let's look at it. 3-year CAGR, all of them above that 25% mark coming in. Even the PAT numbers are showing strength. What is important is the third quarter numbers. Let's see how that numbers has panned out, and this has been done really well. The margins, that has gone up to 62%. Now that's a big question. Are these margins sustainable or not? That's the number I'm talking about, 62%. But nevertheless, all the numbers beat street estimates as well. Brokerages also gave a thumbs up, and so I'm also giving a thumbs up because the income statement has been strong for the company. Let's talk about balance sheet, and remember, company has come from its IPO. Some of the proceeds were used to retire the debt, and the borrowing number is something, whenever you look at an asset heavy company like that, you should be always looking at borrowing first. It's still a bit elevated, but nevertheless some IPO proceeds have been used, and company is in its growth phase. A lot of commissions or a lot of plants are getting commissioned, so you're going to see elevated borrowing. But the cost of borrowing is something which is very much important, and that is coming down. Post listings, the bargaining power improves of a company. Cash bank balance, it's healthy, almost 1200 crores of that. So I would say the balance sheet management is strong by the company post its IPO. So I would be giving this a thumbs up as well. Talking about numbers, income statement, balance sheet, both of them have done really well. So I've given a strong thumbs up. But cash flow, let's talk about that. A little bit of lumpiness also comes in this type of industry. Remember, there's a renewable energy segment at play as well. The cash flow from operation, a good lumpiness jump in FY25, we are getting it. But nevertheless, this is very, you could say, the changes which are happening, it is not very much, you could say, certain. So that's why, to give it a balanced perspective, I'm going to give this a neutral rating for the cash flow segment. Let's talk about the return ratio. Generally, in this return ratios, the ROC numbers I have taken, and it's actually slightly coming down from FY22 odd levels, and it's kind of getting its long-term average numbers of 7 to 8% odd. So that's a kind of a discovery we are looking at, and it'll be pretty much interesting. But nevertheless, I'll be giving this a neutral rating. Let's talk about the shareholding, and याद रखिए सिर्फ एक ही क्वार्टर का डेटा है, nothing much here. Promoters are having roughly 49% stakes. FIs, DIs have lapped up. Remember, there is some good investments coming in from the FIs, or roughly 30% of that is coming from the shareholding. It'll be interesting to understand more, but let's give it more time. So I'm going to give this a neutral rating when it comes to the shareholding. Street cred, of course, the market condition was also bad. We saw that in the month of March from the IPO. Stock is down 19%, from listing it's down 11%. Let's give it more time to give us a more perspective, especially कितना कमाई होता है आपके portfolio में. That's something which we'll talk for, and it's a neutral rating when it comes to the street cred. Valuations, I had mentioned you, this entire industry, the valuations is on the higher side. Clean Max, this is the P ratio which I have calculated. Of course, this is the trailing numbers. It's around 186 times right now. These keep on changing on the earnings. NTPC Green, Adani Green also above 100, and Acme Solar, however, they have some commodity business also, and that's why it's on the lower side, almost 47 times. But net, this industry will command these valuations until and unless this becomes more matured. Then you will have a proper valuations to see in the industry. So let's give in a neutral rating for the valuations. So we have done 7 ratings. Let's go into the 8th rating. It's very much important. That's the outlook. Almost 11 gigawatt of portfolio one is continued momentum in the commissioning and the contracting. And also let's look at the other important futuristic outlook for the company. The second important point would be a strategic partnerships coming in. I'm very much interested in the Osaka gas renewables. What happens next year? The world is going under a lot of stress. So this company, if it reduces or not, that's the big question. Almost 1.5 gigawatts of power sales capacity addition you're expecting in FY26 to 27. We should be having that as well. And also, let's pull out other outlooks also. Almost 1800 crore run rate would be there from the capacity commissions. This is what I've picked up from their presentation in Q3. Data and AI, that caught my eye, and this is something will be a major growth driver. India is at the cusp of this explosion in this industry. Apart from these important outlooks, the current business cycle, the debt, that might continue to rise, but their cost of borrowing has become cheaper. So that's a good point to talk about. And let's talk about the final rating, because this is a strong thumbs up already. Income statement and balance sheet has done well. Cash flow return ratios, we need to wait it out. And also it's a newly listed company, so the thesis plays out for shareholding street cred as well. Valuations, this will keep on changing as the industry matures, but as of now 100 plus PE is nothing you could say extraordinary. It's largely happening across all the players, but the outlook is something, especially on data and AI and the growth capacity commissioning, is something I'm bullish on. So net on the higher side of the ratings which you give in KYC, I've given it 5.5 out of 8 when it comes to Clean Max Energy. But interestingly, we'll have Kuldeep Jain. He's the founder and MD of the company. He'll be joining us, and a little bit of snippets about him, about how things pan out. He has 26 experience in consultancy and renewable energy. It's 26 years on that. Also, importantly, he is an ex-partner at McKinsey and Company, and the education, if you look at it, he's from IIM Ahmedabad and a qualified CA as well. So pretty much interesting take. And so Kuldeep will be joining us, and interestingly in KYC we are doing this for the first time. The management is joining to me physically in our show, and I think joining us would be Kuldeep Jain. He's the chairman and the MD at Clean Max.
How are you?
I'm fine. It's a pleasure
My
to
real
have you
pleasure
here.
to be here with you today.
Exactly. Just to put that in perspective, we discussed about your company, Kuldeep. Of course, it's a new company, but there's a consultant in you who has started this company. The way I've checked your website.
Sure.
Just want to put that in perspective, how different you are from your other companies or your peers. What is it all about it? And then we'll of course talk about the other questions as well.
The most important differentiator about us is we are direct to customer, or rather if you think about the power or green energy, renewable energy business, we are the retail segment and not the wholesale segment. Wholesale segment is all the listed companies like an NTPC Green, Adani Green, Acme, Tata Power, JSW, which is that they participate in a government reverse auction, wherein at the lowest discovered price, they sell large volumes, say 500 megawatt per contract, to a state power distribution company. Now the state DISCOM does not consume the power, it then gives it to the end consumer who is in industry. We go direct to the end consumer. So we are retail and not wholesale.
Okay,
this is the difference.
So that means in this business model, if it's retail, that means your margins would be better. Yeah. And I checked one more thing, that 77% of them customers are repeat customers, to put it in a simplified manner. So how does this customer stickiness work?
So our tariffs are higher. So if you look at the last fiscal capacity we commissioned, our tariff on that capacity was 3.7 rupees. Look at for the other listed players, it would be around 2.5 rupees. So, you know, by going retail, you get a tariff premium in any business, true in our business as well. And then the other dimension is that, you know, then the question becomes in any retail business, who are your customers? So about 80% of our volumes are with customers credit rated AA, AAA multinationals, and 42% is with data and AI.
And Kuldeep, the Q3 numbers, because there's always a litmus test which Dalal Street does, you have passed with flying colors, and of course the global situation was such that all the small cap, mid caps, large caps fell. So of course the price discovery at times doesn't happen, and it's fine, it's a market condition. But I want to know this Q3 numbers, the margins was something, it went up to 60%. Now on a sustainable basis, what kind of margin outlook we can expect, and can we expect this to continue in fourth quarter, first quarter as well? How the earnings looking like trajectory?
See, we have two business segments and margins should be looked at differently, and I'll explain why. First business segment is renewable energy power sales. We own the asset, we sell the power, right? This is approximately 83% EBITDA margin business. right? So it's capital intensive, but 83% EBITDA.
So that's one part of it.
That's one part.
Okay.
And that has consistently been at this number. Even here, this year the margin is 83, last year it was 81, so it is on an improving trend. The second part of our business is renewable energy services. Some companies, so
basically it's like an asset management service. And
it's
I
an
suppose,
asset management service.
So if it's a core business, asset management services, that means it's like an AMC,
And-
so you'll have a higher margin profile in that?
No, in that there is no capital intensity.
Exactly.
But the margins are 20%, which is above industry average, but it's 20%. So two segments, one is a 83% margin business, one is a 20% margin business. So जो weighted average आप full revenue पे if you see, of course then it's a function of the mix between these two. But in both these business segments, our margins have gone up.
Okay, so
In
and this trajectory is expected to go up?
I think certainly in energy sales, yes, with operating leverage, we would expect it used to be 3 years ago 75%, last year it was 81, this year it's 83, this will continue to improve.
Tell me about the cost of borrowing. वो सस्ता हो गया है.
हाँ.
Debt आपका थोड़ा retire कर दिया आपने.
Yes.
Or right now debt is, of course, your business model is such you will have debt.
Yeah.
So how are you going to see this management going, and if finance cost gets reduced, can we get a good bump up in the little bit of margins also?
So as you've seen in our results, compared to start of the year, by end of the year, 50 bips or 0.5% finance cost has reduced
right.
on a weighted average basis.
Right.
And then if you see that the debt level at the end of the financial year should be around 9,000 crores, 50 bips of 9,000 is 45 crores of straight to the bottom line savings. So yes, that has been
So
a
this is
benefit.
happening fourth quarter, you'll get the benefit?
Fourth quarter and full next year is when you'll really see the full numbers come in.
Right. And also the AI and the data center pack,
Yeah.
India is a huge, it's at a, crossroads of, good explosion of this industry comes in. So how do you come in, just to make it a very simplified manner for our audience, and because 42% of that orders are coming in the RE segment. So how does it actually work? If you just give us the entire flywheel of that.
Thank you. So 2-3 points. First, data and AI is now 42% of our contracted volumes, right? And has grown 10 times in 2 years.
Just 10 times in just 2 years?
In just 2 years. Right, so it used to be, so as of 1st March 26, our data and AI contracted volumes is 2,400 megawatt or so. It used to be 240 megawatt 2 years ago. So 10 guna in 2 years.
10 guna in 2 years, that's pretty much interesting.
Right, so that is a reflection actually. Of course, we have done well, but it's a reflection of the kind of boom we are seeing in the energy demand. And what we've also said in our results is we have a number of data and AI customers, repeat volumes with companies like STT, new volumes with L&T Data, Princeton Digital, Iron
and
Mountain,
Kuldeep,
and so on.
Talking about the tie-ups also, there is Google, there is something from Toyota Group also, and also right now you are having a JV for your gas segment as well. So how does this, foreign tie-ups help? Is it the technology transfer here, or is there something more to it?
So we co-invest with a lot of foreign companies. Because it is an energy intensive, it is a capital intensive business, and lots of leading foreign companies in the energy space want to do this kind of business in India, but do not have our kind of capability. We are the market leader. So they say, look,
and if you talk about being a market leader, is there a market share attached to it?
Yeah, it's called the CNI market. The market is defined as commercial and industrial market, which is the way I was explaining, if you're the retail part of the market, you go directly to a corporate, that's called CNI market. We are number one player in that market in India. We have a 12% all India market share.
And that's the organized we are talking about.
That's the organized market for direct supply of energy to corporates.
Right.
Right. We are number one player in that space. Now, what are we doing with companies like Osaka Gas is that we have a CleanMax majority owned joint venture. So we own 51%. They own 49%.
That comes in your consolidated with the numbers.
So it is our controlled and managed entity. And they have invested about 190 crores or so of equity in the first phase to build a certain volume of assets with us. Right now, why would we do it? What is the benefit for us? One is, yes, as you said, the strategic value. You get a great partner in from Japan. You get access to some lower cost
and
capital.
You get access to their
certain
Japanese
clientele and so on. This is a sort of strategic value. But there's also a hard financial benefit, which is this is a capital intensive business and we are lowering the capital intensity for us. So that 190 crores, otherwise I would have had to raise and put and so on. So
exactly, because whenever we talk about net zero, Nordic countries comes to my mind, and eventually a Nordic tie-up and a Nordic funding is something which most of the Indian players also look forward or aspire to.
Yeah.
Is there anything in the work from the Nordic front as well?
So, we have a lot of, we have 2-3 such partners. In addition to Osaka Gas, we also have Toyota Susho, which is not Nordic, but part of the Toyota group. And they want to, also invest in India, initially serving automotive and other Japanese companies and then expanding. But we are open to partnerships from like-minded players. Our focus, though, is that we are not seeking financing or funding. This is not a loan. This is a true equity partner who is with us for life.
All right. Apart from this, global issues are there. Your costing is increasing, be it any energy setup. Is that going to impact you also? And if yes, any pass-through mechanisms is there?
See, the beauty of renewables is we are a 93% gross margin business. I used to be a consultant, you mentioned. I've never seen any business which is a 93% gross margin business. Because I always jokingly put it that Surya Dev or Vayu Dev paisa nahi lete, right? In other words, you don't pay for the cost of the fuel, right, which you have to pay in gas or coal.
But anything in the operational cost, any hit coming? Bit?
No, not really.
Not really.
Neither in operational costs, neither in capital expenditure. If anything, I think it's a huge plus because everyone's sitting up and taking notice and saying, listen, in the end, we've got to be self-sufficient in energy, which is our energy should come from our...
And maybe this is a big lesson. What we are going through right now.
All over the world that, you've got to be self-sufficient.
So energy security is important. But there's one kind of a concern. There is a word called net zero. It's at times used, at times it's abused. What is it actually all about, net zero? And does it actually fall under, where India is going towards? Or the net zero projects, have they actually come, or is it just the namesake certifications?
So net zero really refers to ki if you're doing any business or any activity, you should do it in a way where carbon emission nahi hota hai. Why carbon emission is important? Because all the carbon emission added up is causing climate change and global warming. And that has real issues for countries like India. We talk about rain patterns are changing.
Exactly.
And farmers are suffering as a result. So it's not a theoretical concept. It's a concept which is hurting us also as a nation.
So is India lagging behind on this, or are some green shoots coming in?
I think we are making progress. But I started this business 15 years ago with a purpose that I will be net zero partner to corporates.
Right.
Because half of the power consumption in our country is corporate sector. And we can give them cheaper and greener electricity. So in their journey of net zero, they're also saving money.
Okay. It's a pleasure talking to you, Kuldeep. We are out of time. I hope we had more time, but of course we'll have conversations in future also. It's a pleasure talking to you about your company and the industry.
Thank you so much.
Thank you. So this is the management of CleanMax Environment. And this is it, folks, for KYC. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Delhi, the greens are ready. The contest, the intensity, the energy. where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro App, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Bears take a breather today as Dalal Street sees a green run again. All sectors perk up. Nifty trades near 23,300. Broader markets mirror the benchmarks. Oil reprieve and global cues boost the sentiment. But the rupee plunges to a record low today, breaching the 93 mark for the first time as a surge in crude oil prices and war tensions triggered fresh pressure on our currency. Fertilizer and chemical stocks see positive impact as India recommends anti-dumping duty on Chinese chemical used in dye industry. Tata Power surges after Gujarat government approves a new power supply deal. The new agreement allows the company to restart its 4 gigawatt Mundra plant. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar. Let's take a look at the markets. And yes, it's good to see green on the screen back again. And Nifty 50 is the one which is trending with gains. But let's take it straight across to Sanjeev Kumar Bijli, who's the Executive Director at PVR Inox. That particular counter is in the green today, gaining, and it's the Dhurandhar release because of which we have called the management. So Sanjeev, good to have you on NDTV Profit. How's been the opening advance and the bookings in the advance? This is expected to be one of your good shows for this particular fiscal.
Yes, that's right. I know Dhurandhar 2 mania has swept the country once again, and we're very happy and very excited and elated by its response already. Of course, the producers took a bold step to release it a day prior. As you said, on Wednesday, paid previews were done all across the country, across 8,000 screens. The paid previews have garnered around 35 to 40 crores gross box office. And then yesterday, which is the official first day, the 19th, which was Thursday, I think it's done about 65 to 70 crores all across the country, GBOC. And I'm talking only Indian numbers, Indian box office numbers. I think that's where the focus is for this movie right now. Yeah, so phenomenal, response.
That's right. So that was about the opening rates as well as the advance booking. But Sanjeev, for the domestic market, you are going to see a huge amount of potential coming in from this particular venture of Dhurandhar 2. What is the projection for domestic as well as the lifetime potential of this movie?
I think the way it's opened, the first one did about 800 to 850 crores GBOC. And I would assume minimum that 800 to 850, but we're all hoping that this one will have even longer run. And we're all keeping our fingers crossed and being very optimistic that it reaches the magical number of 1,000 crores. Yes.
That's right, 1,000 crores mark to be reached by an Indian movie and a Hindi movie. That's going to be one of the milestones to be caught. So how will it really ramp up the Q4 numbers as well as this fiscal numbers? Because Q4 is generally tepid for you.
Yes, you're right. Of course, in your estimate that this quarter, January and February, were a bit tepid. We had Border 2 that performed in January. But February was very muted. The films that got released didn't resonate with the audiences. Even Dhurandhar 2 has come a little later in the month, on the 18th. But still, I think we will close at a decent quarter, not an overwhelming quarter, but still a very decent quarter. And therefore, the entire financial year for us looks pretty good as well, because the Q2 and Q3 was very strong. Again, on the back of Dhurandhar 1 in Q3, and also other films that did so well, like Kantara, and Mahavatar, Narsimha, Avatar. There were such great films this year. So we're pretty happy where this entire financial year will land up.
Right, the entire financial, numbers will get a lift up because of Dhurandhar 2. But give us a projection on the footfalls for this year and the revenue projection now that you've seen most of this quarter really pan out.
I think we probably end up with maybe about 150 million admissions for the whole year, give and take. Maybe slightly less than that. It all depends upon how well Dhurandhar do and how well does it hold. We've obviously can't give the revenue numbers for Q4 right now, but till Q3 the numbers are in public domain, and of course I think that's going to only get enhanced this quarter, all on the back of Dhurandhar 2.
All right, all on the back of Dhurandhar 2, but also, Sanjeev, the big competition of OTT window. And how is that competition going to be a spanner in the works, maybe for the 1,000 crore mark that you are trying to reach with Dhurandhar 2? How is the competition?
No, I think the OTT windows are pretty much settled now. They've been settled since post-COVID. It's a 8-week window post-theatrical. That's for every Hindi movie. And I think that's also happening now down south for the regional films as well. I think an 8-week window is a very comfortable window for a film to have its full theatrical run and for the people to enjoy the films on the big screen. And I think that's enough run for the movies. An 8-week window is a very healthy window. And as far as the competition from OTT is concerned, I think both the mediums have found its level now. There was obviously a lot more consumption of that during the pandemic because we were shut, cinemas were shut for like 2 years. But I think we've come to a point now, the water has found its level where OTT has its own market, definitely. And the big screen experience has its own market. I've always been saying, I compare it to eating in or eating out. So consumers are lucky enough, we're fortunate enough to have both the options. And if there is a big film like Dhurandhar or Ramayan coming this year or King coming this year, these are big screen films that can only be enjoyed on the big screen.
Right. Some of the names that you mentioned, being a movie buff myself, I'm pretty excited. Tell us about the strong pipeline of films that you have for this year.
I think besides Ramayan, I think that's going to be a big one, which is coming out in Diwali this year in November. King with Shah Rukh Khan after a long break is coming out in December this year. Those two, I think, are going to be massive. Then we also have some regional films, such as Toxic, which was supposed to release today, or yesterday rather, but now that's going to be released in June. That's a big film from down south. Peddy is a big film that's coming in end of April. And we also have Lahore 1947, Amir Khan production with Sunny Deol and Rajkumar Santoshi. That's looking massive as well. So the movie pipeline is looking very, very exciting. There's Alpha with Alia Bhatt and Yash Raj. They're known to obviously mount a big film. That's also coming in July. So there is a massive lineup of Hindi and regional films. And of course, we have our English films as well. Project Hail Mary, which is poised to do about $100 million opening in the US, is coming next week in India on the 26th of March. One of my favorites that I'm looking forward to is a Michael Jackson biopic, which is coming out on the 24th of April. I don't see anyone who doesn't relate to that, the music and that character. Devils Wear Prada 2. So these are all English movies as well, which are really tracking very well with the consumers. And it's looking like a really exciting lineup.
Right. So how many of these films, the lineup is pretty strong, but how many will I see on, OTT and on theatre? That needs to be seen, Sanjeev. But what about the occupancy and ad rate pickup visibility? Because we haven't yet reached the pre-COVID levels. How is that particular trend really emerging?
I think we just have to be at least cognizant of the fact that the occupancy levels haven't reached pre-COVID yet, where we were enjoying 32% occupancies. But this year we may close at about 27%, 27.5% occupancy. And it seems to be on the right trajectory. It seems to be going up every year. So that's a positive. And at the same time, we're adding a lot of screens. Especially down south. We opened 2 megaplexes in Hyderabad just last month. We're also entering into new markets such as Agra, Leh Ladakh, and even smaller towns like Muzaffarpur. And I feel these are the markets where movie-going index is very high, especially down south. Our focus is a lot on south. 40% of our screens already are in South India. And we've seen the occupancies that are very high. So on an average, we're hoping that with these new screen additions also, which we're opening very, very consciously at high density cities, which I mentioned earlier, and new cities where they haven't experienced the multiplex phenomena, we'll be able to inch up our occupancies. So we're trying to juggle wherever it's low, take it up incrementally, but also add on more profitable screens going forward. So the overall occupancy goes up. But having said that, we're still being very cognizant of the fact that there could be a slight structural change, and therefore we're focusing a lot on cost reduction as well. So the overall margins are improving. I mean, the focus now, obviously, of the company is profitable growth by adding profitable screens and having an eye on our fixed costs and variable costs, so that the overall margins expand going forward.
All right, Sanjeev Bijli, you sound pretty excited about Dhurandhar 2, and as movie buff, even I am. So all the best for this particular venture. Thank you so much for joining us on NDTV Profit, PVR Inox, because of the Dhurandhar 2 mania, which has been pre-launched as of yesterday, and there have been some pre-bookings. Well is gaining almost 1% in trade at the moment. All right, let's take a look at the overall market. Also, the momentum is there in the market, 1% gain on Nifty 50 as well. It's Bank Nifty, which is showing slight bit of underperformance to the key indices. All the sectors, sectoral indices are in the green. Let's welcome on the show Siddharth Vora, who's the head of Quant Investment Strategies and fund manager at PL Asset Management, joining in now. Siddharth, always a pleasure to speak to you. Looks like there is some relief coming into the market, but how much of the volatility and the uncertainty is still there, and you will be cautious?
So no, I mean, this is a value buying day. Clearly, markets have been oversold in the last 8-10 days. So we see some, recovery in the sentiment. Obviously, crude cues overnight. Crude has cooled down significantly overnight. There are some hopes of, temporary de-escalation where energy infrastructure will at least not be hit going ahead. So I think it's just a reaction to the news, and I think a lot of damage has been done and a lot of damage still could be done. The only good thing in this situation is that for new investors or people with a longer term horizon, such geopolitical and macro shocks create a good entry opportunity, which you otherwise wouldn't get in a market like India, which is on such a stable macro footing. But definitely short-term view, near-term view, cautious, a lot of volatility, a lot of noise. So be prepared for all of that.
So Siddharth, banking sector, which is the quasi investment into the economy, and also something that we watch very closely for the overall, nervousness that is building up for especially foreign investors into India. So bank index is underperforming the key indices. In fact, the broader markets are also doing much better. And also the banking index is depressed with the crisis at HDFC Bank, where the stock is still down today after so many measures taken by the company to really allay the concerns, 2% down. What's your view on this sector, and if you have a view on HDFC Bank?
So no views personally on HDFC Bank, given that the institution it has been and been for 30 years in India. I'm sure they will take the right measures and do the necessary things, either to improve the lacunas in the system or to come with the right clarifications. So no views on HDFC Bank as such. On banking, I think there are two things happening simultaneously. One is the fundamental story, and one is the technical story. Over the last few days, if you see, the banking index, except yesterday, still held up pretty well in the broader carnage in the market. So today, as value buying is emerging, the sentiment is temporarily shifting for the day. Other sectors which were beaten down even more are likely to get more buyers. So it's just a technical factor there. In terms of the fundamental factor, we all know the chain effect of crude going up. So energy costs, logistics costs go up, margins come down, earnings come down. Inflation, which has bottomed out in India, is only likely to go up. And therefore, interest rates also either will hold firm or we can be in a slightly tighter interest rate environment. So I think the banking sector will temporarily see some effect of the whole inflation and rate environment in India. But over the longer term, again, right now, pretty much the whole market is reacting to global flows, to geopolitical news, to crude prices, and to the overall macro of India.
So
I don't think it's sector specific.
So Siddharth, when you say value buying, and it's a day for value buying, we have also seen some of the large caps and the blue chip companies also not giving positive returns if you have bought in an oversold market. In fact, research shows that. So what is value buying in your view?
So right now, value buying is usually when earnings outlook is decent and there is a correction in the market, you get a better entry opportunity. The only dilemma right now is that are we in a real value zone, or is this an illusion of value? If earnings compress significantly, then the P's will look even more elevated, and therefore it will be a value trap in a certain sense. But if the earnings beyond a quarter do stabilize, normalize, then I think it's a great opportunity for investors to get in and, play the recovery. So right now, things are not so clear. I think the visibility continues to be low given the whole chain effect with crude to deficit, weakening currency, energy prices, logistics, supply chain disruptions. So we need to wait and watch and be very nimble-footed in this phase of the market.
Right, nimble-footed is the key strategy that needs to be really looked at, Siddharth, and well pointed that out. But when we look at the overall market, and of course in an oversold market, there are pockets which are still resilient because the entire IT sector has gone through a lot because of AI disruption. When we look at oil and gas sector, that is getting very volatile because of the crude oil pressures. And on the other hand, if we look at several other sectors which are impacted by the crude oil or feedstock prices, they are seeing some pressure built in. Apart from this, the resilient sectors, which ones would you really bet on, which are at better valuations to really step in at this time?
So I think we can't talk about resilience and valuations in the same lens right now. Resilience should be from a growth visibility, a demand visibility, realizations improving, all of that. I think metals are still well placed. Power stocks are well placed, and pharma is decently placed as well. So over the last 1 month, we've added some exposure to pharma in our portfolio. We've further increased exposure to energy and power stocks. Metals, we always continue to maintain an overweight for the last 12 months, and we still continue to maintain that overweight. Industrials, within industrials and capital goods, we do see some selective opportunities where positions could be built. Not necessarily your classic L&Ts, but some more niche engineers on the likes of Cummins. And overall, we're decently bullish on the public sector enterprises as well within India. And we allocate at least 15-20% of our portfolio currently to the public sector enterprises, to the likes of NTPC, Coal India, etc.
Yes, these were the stocks which were still holding up when we were in deep uncertainty and volatility. So somewhere the public sector enterprises have that trust factor in the market also, Siddharth, besides the various other fundamentals. But one question, which particular sector in a gaining market, it's also sell when the market gains, and which are those sectors would be a sell at this particular time whenever the opportunity arises of a gaining market?
Tough to kind of say that. I think crude sensitive sectors, the OMCs, which have really taken the beating for rising crude prices, is probably, if it gives you an exit opportunity, that's probably a sell on rise market. Sell on rise sector, sorry. And I think that's pretty much the only sector which I would, want to exit over time if the markets give you an opportunity. But this will also be the sector to respond the fastest to any, changes in crude prices coming down. So it's again a double-edged sword. So again, be nimble, be tactical in certain sectors, and be disciplined and patient in certain sectors. It's a complex market to deal with and very fluid. The situation is very, very fluid. So it's going to be very reactive in this phase.
Yes, I understand, Siddharth, and many takeaways from what you said, and the balancing, commentary also that you gave on the several of the aspects that you're looking at. Thank you so much, Siddharth Vora. It's always a pleasure to take your expert opinion on the markets. Thank you so much. All right, away from the market, remember the rupee market has a different trajectory of its own because of the crude price pressure. Well, the rupee has made another low, a life low in trading session today. Let's take it straight across to an expert coming in, Anindya Banerjee, who's the SVP of Currency as well as Commodities Research at Kotak Securities, joins in now. Anindya, pleasure speaking to you on NDTV Profit. First of all, your view on the rupee fall as of today and any semblance of RBI intervention.
A very good afternoon and thank you for having me. See, the Indian rupee is facing the storm of the global market, which is the oil prices. Because right now in the world, everything is priced off as if the Hormuz flows. So if the Hormuz flows, as long as they continue to be shut, it will push the oil and the gas prices upwards, which will continue to exert downward pressure on the Indian rupee. For example, over the last 3 weeks of March, close to $10 billion has been the FPI outflows. If we go back to October of 2024, that was the last time we had seen $10 to $11 billion of monthly outflows. And we have still one more week to go. So which means this kind of a pressure when it comes in terms of outflows, naturally the currency has to depreciate. Plus at the same time, what is happening, seeing the oil prices above 100, a lot of speculative pressure also comes in. But the savings raises that RBI is intervening quite aggressively. And also as we enter the last week of March, we tend to see a lot of exporter selling because they tend to repatriate their the foreign currency earnings into India. And that tends to support the rupee. But the major factor at this point in time is the oil. And as long as oil continues to rise, we could see the USD/INR head towards even the 94 levels.
Right. So in India, that's an important point at the financial year end. Those accounts being settled by expats, that's a critical point which is adding more pressure at this particular time while we are already dealing with crude oil price pressure on rupee movement. But you also mentioned that RBI is aggressively also intervening. There are some houses who are penciling in 95 to a dollar levels. What's your in-house view on what levels that rupee can really touch in this sell-off that we are seeing? And second, are those comfortable levels for the RBI?
See, if the Hormuz disruption continues for another 2 weeks, the oil prices would jump even higher because we have almost 10 to 12% of global flows offline, 20% of the gas flows offline. This cannot continue because we have never faced this kind of a situation in the past. We have already seen a price increase in energy, but we have never faced an energy shortage, which is happening right now. So if this, as I said, the disruption continues, we could see levels of 94.5 or beyond. But RBI is going to be there aggressively, and we could see them selling aggressively through the forward market. Because if they sell through the spot market a lot, it will tighten the rupee liquidity, which will hurt the economy more. Now, if it goes to 94.5, 95, what will be the impact on the economy? So it's like a clear tax on consumption, because for a consumer-driven economy, which India is, when you have a depreciating currency, even with let's say a low inflation, it can have a negative impact on your consumption. And that's what we would see. It can also lead to more outflows of FPIs, especially from debt, because it tends to increase the inflation impact going forward. So yes, beyond 94.5, 95, the rupee itself will actually feed into the inflation which oil and gas is creating.
Right, I get your point, Anindya. Thank you so much for giving us a sense on the rupee movement and also what could be the comfortable levels for the RBI. Thank you so much for joining us right here on NDTV Profit. With that, completely out of time on this edition of Markets at 12. But keep it with NDTV Profit. Lots of news and views on the other side. Thanks so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
A lot of legacy brands are sort of struggling to catch up with the pace of the change that this new generation of consumers are demanding. Add to that a layer of social media where global trends are creating local demands, builds a perfect opportunity for us to probably scale our business, our mission 10x from here.
For those who are not familiar with what Urban Platter is, how do you describe the company and what it does?
We are a specialty food company. Our mission is to make specialty and gourmet food available, affordable and accessible to everyone.
How do you then stumble upon food? as a space that you want to be in?
I used to just cook on the weekends and stuff like that. And sometimes when you want to buy an ingredient, have a certain quality of experience at home, it used to be a matter of struggle all the time.
2021 is when, Hari Bhartiya comes on, Jubilant comes on. That's a mega brand. But no investor activity since then.
In 21, we were very busy serving to the frenzy of COVID buying that was happening.
Yeah, there was a time when everyone wanted to become a master chef at home.
One thing I've learned is money is an accelerator. There were a few things that we were not necessarily very good at, and we did go in the red for 2 years. We were very bad at understanding finances and managing money.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Delhi, the greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro App, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of politics and people. Vanakkam Tamil Nadu, here we come.
Hello and welcome to NDTV Profit. You're watching Trending Stocks, and with me, Hira Dadia and Sharad Dubey, who's standing at the NDTV Profit news pit. Sharad, clearly, an interesting day of trade for the markets, because you have seen that kind of sentiment change that is happening. There is that little buying interest that is coming up as well. What are the key highlights that you're picking up so far?
Well, good afternoon, Hiral. See, there is a rebound at play, but the question we had raised earlier in the morning, will it sustain or not? And now we are seeing from the day's high, little bit of correction has come in. It's not that the indices are in the red, but nevertheless, there is a downtick coming in. It was up more than 1%. Now it's just 0.5%. So there is volatility in the market. And same thing goes for Nifty Bank also. If you could just show the picture, how this intraday move has happened in a wild correction. From the top levels, we can talk about when it comes to Nifty Bank, but overall the market setup, the breadth is still in the positive. There is a rebound at play. That's the first factor I would like to talk about. But the question remains is, will it sustain or not? And it's looking like it's not able to sustain that right now. The key support level, the first one is already broken. The second one is 23,100. So wait for that. Nifty Bank, let's see what the key support levels are looking like. Right now we see a good correction coming in between 53,600 to 53,800. Now it's in that range, both of them. So yes, both indices have corrected. Let's talk about other key factors to watch out for. There is some value buying happening in this mids, the small caps and the mid caps. That's a good trend which we have picked up, and that's auguring well. The Middle East war de-escalation is likely to be there, but when will it happen? That's the question, and that is why the markets are volatile. Brent crude oil has retreated. but nevertheless the action focuses on the inflation risk as well. Rupee hitting its fresh record lows after yesterday's holiday, that's a big concern in the markets. That might be also one of the reasons why there is a correction happening, but global yields, that's the biggest worry right now. But Hiral, what's there on your watch list today? Stock specific moves, sector specific moves we can expect?
Absolutely. It's a very interesting day of trade where you have that rebound that is coming in terms of IT as an index, because Accenture has gone ahead and increased the lower end of its guidance. HDFC Bank as well, Jefferies and Motilal Oswal, both are bullish on the counter. And that's why it's giving you some bit of a respite in spite of that crash that we saw yesterday's session. Now, FTSE and Sensex rejig is what's happening. Shriram Finance is going to be one of the beneficiaries where you will see the highest inflows. A whole host of other companies also, which we will be discussing. You have a subsidiary IPO which is open today for Coal India, and that's probably giving it a fillip, along with higher coal prices which are coming in its favor. SBI Mutual Fund has filed the DRHP and SBI becomes a beneficiary. Viatech Wabag buzzing on the back of an order win from Georgia. Tata Power, the Gujarat government PPA for Mundra plant, a key positive coming in on its way. Deepak Nitrite and Meghmani Organics, two stocks that are buzzing on the back of the DASDA imports anti-dumping duty that has been proposed. Steel stocks where Macquarie is seeing a buying opportunity at lower levels, and hence you're seeing some uplifting moves in terms of Tata Steel, JSW Steel and that entire gamut. Natco Pharma, now semaglutide goes off patent today. Today is the last day. And they have launched a product at 1290, which is almost $14. One of the cheapest generic version coming into the markets for the consumers. KIOCL, First Cry, Web Solar, all of these good volumes, good moves today. GMDC, government opens up rare earth scheme bids. That's why this is buzzing in trade. Aether again buzzing on the back of volumes, and Metropolis, it's the bonus issue record date today. MCX is down for 3 consecutive sessions, though the stock is seeing some moves today as well. So that's what the watch list is looking like. But Sharad, over to you for the rapid fire with Akshay Bhagwat of JM Financial.
Thanks a lot, Hiral, for that. Good afternoon, Akshay. Always a pleasure to have you. We'll start a rapid fire. And interestingly, there are important adjustments happening. AU Small Finance Bank, Shriram Finance, Swiggy, Sagility and IndusInd Bank. These stocks would be buzzing, especially in the last half an hour of trade also. Out of these names which I have taken, Akshay, anything which is looking good on the charts?
I think Swiggy and AU Finance are still on the negative side on charts, so better to avoid them. Shriram Finance, you can look to buy on dips.
Right, and also some inflows are also coming in from the Sensex related adjustments. This includes Bharti Airtel, Bajaj Finance, Eternal and even Sun Pharma. Out of these stocks, anything looking good on the medium term setup, because we are seeing a little bit of rebound in the market from yesterday's fall. So anything here?
Bharti and Sun Pharma can be considered to buy from a medium term perspective.
Right, and talking about the next stock, Akshay, is Tata Steel. Of course, Street is estimating that the Q4 numbers might be on the higher side, but how do you see this developing for the technicals?
Technically strong, but you need to give some more time. Probably from medium term perspective, 215 is the upside target you can look forward to.
All right, and in the pharma space, we see always Natco Pharma being an outlier in the Nifty Pharma Index most of the times in our analysis. Akshay, your views on Natco Pharma, anything to add on from the current levels?
920 is a support. A pullback rally can see the stock revisiting 1050.
Right, amongst the volume buzzers, we have KIOCL, Aether and First Cry as well. Out of these 3 stocks, anything which is looking good on the charts, Akshay?
KIOCL intraday positive 16% up, momentum stock which can go till 400. Aether is on the verge of a breakout, so assuming the breakout matures above 790, looking forward for targets of 870 plus.
In the last 5 sessions, Akshay, Web Solar is up 44%. Good time to book profits in this?
Web Solar, still some little more room for upside momentum till 80, where you can book profits.
And positive industry developments coming in, and GMDC is also buzzing in trade. You expect this momentum to continue?
Yeah, the momentum should take the stock up till 640.
Right, now the bonus issue impact is also coming in from Metropolis Healthcare. How is it looking on the charts, Akshay?
Metropolis Healthcare is more neutral setup. 430 to 470 is the range. Hold with stop loss below 430.
Right. Of course, last week we saw a rally in MCX happening, and now the correction is continuing. A little bit of profit booking in these counters. Important stop losses here.
Stop losses should be a bit wide. 2300 is the support, so positionally stop losses 2275 would be the stop loss. Further dips can be anticipated in the very short term.
Well, folks, that's the rapid fire round. Over to you, Hiral.
So, interesting names that we're looking at. In fact, let's quickly look at which are the stocks which are actually trending on Google. Last couple of days, we've seen a trend where a lot of energy companies have been in focus. Today, interestingly, you still have a Tata Power. NTPC Green has been on the radar over the last 2 to 3 days. HDFC Bank, yes, for obvious reasons. BBCL and Trident, a few of the other ones. Akshay, let me take your view with regards to where Tata Power and NTPC Green go. What are charts indicating? Because the uptrend on NTPC Green has been quite prominent.
Yeah, absolutely. The power sector are momentum buzzers, and NTPC Green potential targets work out till 112 to 115 from short-term perspective. Stop losses should be around 92. And Tata Power is also a momentum buzzer, but there is a trading resistance which it has already tested at 420. So fresh positions not advisable at this point. Book out your profits in case it sustains above 420. We will revisit the charts.
Right. Let's just focus on Accenture also, and of course remember these numbers came in, revenue beat the street estimates. However, in the post-market trading hours, the stock did see a correction, and my interest is that the lower guidance range of the revenue that has increased. Brokerages largely, we could say, have given a mixed tone. But the most important thing for the Indian IT stocks is it's a positive read-through coming in. And remember, the valuations are also suppressed, especially for the big.
We've just had a technical glitch in terms of Sharad's frame, but very quickly, let's just look at the entire IT basket that we've been talking about. All of the companies in terms of valuations and return potentials seem to be looking pretty strong, and Accenture has gone ahead and upped its lower end of the guidance. Now, basis the guidance uptake, the commentary is that probably the comments that the IT companies gave out, the guidance that the IT companies gave out in this quarter will be absolutely important to watch out for, and probably that's the reason why you're expecting some bullish trends there as well. Today, the entire sector seeing some smart moves. Narendra Solanki from Anand Rathi Shares and Stockbrokers joins in. Narendra, welcome to the show. Always a pleasure to speak to you. Hiral on this side. My question coming to you is, how are you looking at this entire IT space? Because somewhere it has been a washout. I mean, AI, whether positive or negative, no one really knows. There are fund managers, CIOs who are of the opinion that probably 2026 is going to be a year for Indian IT companies. At current levels, at current valuations, what would you advise investors to do?
Yeah, good afternoon. Certainly, the kind of underperformance we have seen from the sector. And if you see the kind of corrections, also we have seen more than 20% kind of downside we have seen in the sector. I think from the valuations perspective, I think on a historic valuation basis, the sector is trading below its 5-year and around its 10-year averages. However, if you look at the transition phase regarding the AI, I think the sector would take another 2 to 3 quarters in order to finish this transition phase. So right now, in our view, there is no immediate near-term hurry to buy, and one can be stock specific and may have a mix of some large caps and some mid caps. However, we are majorly favoring mid cap IT space in comparison with the large caps. Now, looking at the near-term headwinds, I think this West Asia war has actually provided some positive sentimental boost to the sector in terms of the kind of deployment we have seen on a large scale happening in the AI. I think it would be getting delayed because of the supply chain issues the companies would be facing regarding the hardware supplies for the AI driven chips. So the AI deployment would be getting delayed at least by 6 to 9 months. and that would actually help the SaaS companies and would give further and would also give them further time to actually move or run through this transition phase much more smoothly. So I think there is some positive things coming out with this for the SaaS companies per se. So I think 2 to 3 quarters down the line, we may see a good improvement happening. But I think right now there's no need to hurry, and one can be stock specific in stocks like Emphasis, Persistent Systems, and SCL Tech in the large caps.
So that's with regards to IT. Moving on to another large cap, HDFC Bank. You know, after the chairman actually resigned, you did see a cut of almost 8%, a mild recovery that did come in an intraday trade in yesterday's session. Today, it opened slightly higher. I mean, I would say still in the negative, but currently trading with cuts of nearly 2%. Now, if you're talking about brokerages, what I'm very interested to see is how Jefferies and Motilal Oswal have maintained their buy. What they're saying is that a target price of 1240 is what they're watching out for. Motilal Oswal has a target price of nearly 1100. They've maintained their earnings estimates as well, and the ROEs are also pretty decent in terms of expectations. Narendra, would you say this is an opportunity to accumulate a HDFC Bank, or would you still be on the sidelines till the time Keki Mistri's interim term ends in the next 3 months, number one? And two, you have Jagdishan as well, who will be up for renewal in terms of his tenure in October 2026. So in terms of the recommendations that the board would have to make, I think it would be latest by April or May is when that will go. Is this an overhang that will remain on an HDFC Bank in the near term?
Yes, definitely. This transition phase would remain an overhang, and I think there's no need to hurry and jump in the queue to buy it right now. Although, if from the long-term perspective, we have a positive view on the stock, but I think one can easily wait and watch and let the clarity emerge in terms of the leadership as well as the kind of growth plans and the kind of strategies the new leadership is going to take, and how and let the clarity emerge on the recent happening. So I think in the near term, I think wait and watch should be the better strategy.
Right, but keeping our discussion on the banking, SBI is gaining, but there's a value unlocking at play here. SBI Funds Management has filed its DRHP, and roughly it would be around 13,500 crore of an IPO. Two sponsors of the fund house, of course, SBI is the principal one, and Amundi, it's an FI from France. They'll be selling in a combined basis 10% stake in the company. And if you look at the current shareholding, SBI is having 62% stake and Amundi is having 36% stake. Now, this company, SBI Mutual Fund, is the largest player in terms of total assets and the second largest asset manager in terms of equity as well. And remember, SBI contributes 22% to the total assets to the SBI Mutual Fund. Just wanted to get your views on this, Narendra. SBI, this is a value unlocking move happening, and then later on maybe the general insurance arm also gets listed. Your views on the value unlocking and the fundamental prospects of SBI?
Yeah, definitely. There is going to be a value unlock for the parent company, and for the stock per se, we right now we prefer PSU banks in comparison to private banks, and this has been our strategy since last 3 to 4 quarters. So still, we prefer in PSUs, we prefer SBI in large caps and Indian Bank and Bank of India in tier 2 PSU banks.
Right, interesting development coming in Coal India also. It's a flight to safety stock. It comes up with a dividend yield also. Interestingly, now there's a demand for power that has increased. And to give us more perspective, we are of course joined by Varsha. Varsha, why is Coal India buzzing in trade?
The Central Mine Planning and Design Institute, the IPO is expected. It has opened today, and if you see, the price band is set between 163 to 172, and the total issue size stands at around 1,842 crore. Now, this offers consultancy and support services, and this is across the entire spectrum. When it comes to coal and mineral exploration. Now, talking about the financials overall, if you see, the important thing over here is the margins have been improving. That's a good thing. And of course, talking about the SWOT analysis, the company is market leader with 61% of the market share, and also this is backed by Coal India. And do remember, this is the subsidiary of Coal India, and this is an OFS, offer for sale. So no fresh issue has been done in this IPO. Even onto the opportunity side. They're expanding into rare earth and 5G mine digitalization, and also we have seen a rising demand when it comes to the mining consultancy in India. But any slowdown in Coal India capex reduces revenue for this company, is one of the threats that the company has.
Thanks a lot, Varsha, for that. And another PSU company, another value unlocking move, and this is the second one which we are talking in our show. Narendra, your views on Coal India as an asset play? Of course, there is a value unlocking also.
Yeah, definitely. This new IPO would be another value unlocking opportunity. Plus, one more IPO I think is lined up for a subsidiary of Coal India. So, a lot of value unlocking would be happening for the parent as well. As of now, we do not have any recommendation per se on the Coal India right now. But I think the mining sector is getting a greater push from the government, be it coal, be it rare earth elements, and other kind of different rare earth metals. So I think the overall the mining sector would continue to receive greater part of infrastructure investments going ahead in terms of diversifying supply chains away from the China-led or China-controlled rare earth elements. So I think the overall the sector tailwinds would continue to remain for 3 to 5 years down the line.
Okay, so that's Coal India. Let's just pull up a Bharat Coking Coal as well, because they have actually seen good production numbers and bookings in terms of yesterday's session, and that stock not doing much but still seeing gains of around 0.5% in trade. But moving on, the rupee has hit the new record. It's actually gone past the 93 mark. 93.38 is where it's trading at in today's session. Let me head across to Somit, who joins us to list down the weakening rupee impact on sectors, because a couple of things that are impacting the rupee, but what is the rupee doing in terms of markets is the key question. Somit, over to you.
Well, a host of sectors and companies that get impacted because of rupee depreciation. Starting off with the positives, firstly, it's the IT sector. Major beneficiary coming in because most companies have major exposure towards the US dollar, and INR depreciation boosts the revenues of the company. Now, if you look at a 1% depreciation increases the EPS estimates of IT companies of anywhere between 3 to 5%. Now, this is as per analyst estimates. When it comes to auto OEMs, obviously the impact is positive. TVS Motor gets around 30% of their volume coming in from the export market and 25% of the top line, and that benefits the TVS. Similarly, Bajaj Auto gets nearly 50% of revenue coming in from the export market, and a 1% depreciation in the rupee increases the EPS of TVS Motor and Bajaj Auto by anywhere between 1 to 3%. But apart from this, there are other companies as well, like Tata Motors, Maruti, Hyundai, Eicher. All of these companies see an EPS increase of anywhere between 0.3 to 2% for every 1% depreciation in the Indian rupee. When it comes to the oil and gas explorers like ONGC, Oil India, they also stand to benefit given the fact that billing of crude and gas, which they explore, happens in US dollar, and rupee depreciation means that the revenue and realization increases going forward. And as per analyst, for every 1 rupee depreciation that we see, that increases ONGC and Oil India's EPS by around 1 to 2%. When it comes to pharma sector, it is positive, but benefits are quite limited given the fact that 53% of the industry's turnover is through export, but most of this is already hedged, and then there is a lot of raw material. The impact gets neutralizes in that front. Now, for every 1% rupee depreciation, companies like Biocon, Cipla, Dr. Reddy, Gland Pharma, Piramal Pharma, Sun Pharma, a host of companies, their EPS increases by just 0.4 to 0.8%. As I mentioned, limited benefit coming in here. Now, when it comes to auto ancillary, it's a mixed impact. Some companies stand to get impacted because they have exports that happen to US and the European market, and rupee depreciation against both the currency does benefit them. Companies like Bharat Forge, Sona, BLW and Sambardhana Motherson, these companies stand to benefit, and for every 1% rupee depreciation, their EPS increases by anywhere between 0.2 to 2%. But on the flip side, Uno Minda is one company that stands to get impacted negatively because 70% of their revenue is on the domestic market and they have a significant import dependence. So that negatively impacts Uno Minda here. When it comes to chemical companies, the impact is neutral because 45 to 50% of the production in India that happens is exported. But again, raw material is something that gets imported, and that's how the benefits largely get negated for chemical companies. Now, for aviation companies, the impact is negative on this front because 65 to 70% of their cost is dollar denominated, and for every 1 rupee depreciation that we see, it impacts the profit of Indigo by at least around 900 odd crore rupees. So that is negative coming in. For oil marketing companies, again a negative impact here because purchase of crude happens in dollar, and they sell the final product in Indian rupees. So rupee depreciation impacts them negatively. And for IOCL, BPCL and HPCL, that is the three oil marketing company, every 1 rupee depreciation impacts the profit by around 11 odd %. For city gas distribution companies, similar impact coming in, similar to what we saw for oil marketing companies, the negative impact coming in for city gas distribution companies as well. And for IGL, MGL and Gujarat Gas, every 1 rupee depreciation impacts the profit by anywhere between 4 to 11%. The highest impact coming in for Gujarat Gas because their import dependence is much more compared to IGL and MGL. And when it comes to a set of consumer companies, they also get impacted negatively because import dependence is very selective in consumer companies. And for every 1% rupee depreciation, the EPS of LG Electronics, Asian Paints, HUL, Godrej Consumer, that gets impacted by anywhere between 0.4 to 2 odd %. So negative impact coming in for select consumer companies as well.
Okay, thank you so much for that, and that's an extensive list of the kind of impact that either your import dependent or export dependent companies would see as well. But apart from this, Deepak Nitrite and Meghmani Organics are few of the other names that are in focus today as well, and this is on the back of the anti-dumping duty on DASDA. Now, the target is unfairly cheap imports from China. The objective is to protect the domestic chemical industry, and they found that Chinese DASDA has been sold below the normal value in the Indian markets, which is putting pressure when it comes to names like Meghmani Organics and Deepak Nitrite. In fact, the imports have been priced below the Indian production cost as well. And DASDA is a raw material which is used in optical brightening agents, and this is something which all of these companies make as well. Narendra, what is your view when it comes to anti-dumping duty on DASDA? How big a benefit would this be for names like Deepak Nitrite, Meghmani Organics, as well as the Bhagaria Industries?
Yeah, definitely. It's positive for these companies because the DASDA is being used in as an optical brightening agent in paper industry as well as in as a detergent in detergents manufacturing, etc. So it is positive for the company, but I think individually it is different because the mix of DASDA as a percentage of revenue is different for each of these companies. And gradually, if you see historically, the contributions from the DASDA as a product for these companies has been declining, especially for the likes of Deepak Nitrite, and other products, value-added products has been on an increasing. So don't see any much of a greater impact in the near term.
Thank you. Sorry for butting in, Narendra, because we are running out of time, but it gives a perspective of what it would actually mean. But completely out of time. With that, it's a wrap on this edition of Trending Stocks with Sharad, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to Lunchtime Trades.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
A lot of legacy brands are sort of struggling to catch up with the pace of the change that this new generation of consumers are demanding. Add to that a layer of social media where global trends are creating local demands, builds a perfect opportunity for us to probably scale our business, our mission 10x from here.
For For those who are not familiar with what Urban Platter is, how do you describe the company and what it does?
We are a specialty food company. Our mission is to make specialty and gourmet food available, affordable and accessible to everyone.
How do you then stumble upon food as a space that you want to be in?
I used to just cook on the weekends and stuff like that. And sometimes when you want to buy an ingredient, have a certain quality of experience at home, it used to be a matter of struggle all the time.
2021 is when, Hari Bhartiya comes on, Jubilant comes on. That's a mega brand. But no investor activity since then.
In 21, we were very busy serving to the frenzy of COVID buying that was happening.
Yeah, there was a time when everyone wanted to become a master chef at home.
One thing I've learned is money is an accelerator. There were a few things that we were not necessarily very good at, and we did go in the red for 2 years. We were very bad at understanding finances and managing money.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
Delhi, the greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro Am, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful
Best take a breather as the Lal Street sees a green run again. All sectors perk up. Nifty trades near 23,250. Broader markets mirror benchmarks. Oil, reprieve and global cues boost sentiment. And fertilizer and chemical stocks see positive impact as India recommends anti-dumping duty on Chinese chemical used in dye industry. Meanwhile, Tata Power surges after Gujarat government approves a new power supply deal. The new agreement allows the company to restart its 4 gigawatt Mundra plant. Good afternoon. You're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, a very quick look at what the markets are up to right now. When you take a look at Nifty 50 hovering below that 23,300 level, in fact, close to 23,200 is where the Nifty 50 is at, with that 200-point gain also coming in. When you talk about Sensex as well, in great shape right now, about a 600-point uptick is what you're seeing there itself. And when you talk about the sectoral picture, that is very sharply tilted in the favor of green after that carnage that we had in the market yesterday. So right now, you have PSU banks leading gains with a 2.5% uptick.
Metals, pharma, energy, IT, all in good shape. What's not doing so well right now is perhaps realty and financial services. But barring those sectors, all in all, the sectoral picture, in fact, is looking great right now. When you talk about a bunch of counters also right now, you do have something like a Brainbees solution that is up about 18.5%. And when you talk about counters from within the Nifty 50 pack as well, you have something like a JSW Steel, Tata Steel, Coal India, Tech Mahindra, ITC, Reliance as well, doing a little bit of heavy lifting right now, with that 2.5% uptick also coming in there about. When you talk about Reliance Industries as well, of course, Coal India, you do have BCCL also having that record, the bookings also in just one day, which is more than their daily production. And that's also something that we'll get you a little bit of highlight on later as well on the show. But when you talk about the list of top losers as well, what makes it to this list is perhaps something like a Quality Walls. Even HDFC Bank is down and out in trade even today itself, 1.4% downtick coming in on that particular counter. Something like a Hindalco, BEL, L&T, all of those counters are also trading with a downtick at this point. But let's also get your word as far as the entire complex of commodities is concerned, be it industrial metals right now or gold prices or oil prices right now. Because when you talk about gold prices, you do have a very interesting trajectory that they've set out for themselves right now. Fell as much as 6.6% before paring some of your losses as well. Right now, headed for the biggest weekly decline in 6 years. And this is in the middle of an active war that you're talking about gold right now. It is a safe haven asset that is not currently trading like one. It's declined, in fact, more than 8% thereabout this week, dropped every week since the Middle East war also started. So quite a lot of interesting developments that you're seeing as far as gold prices are concerned. When you talk about oil prices as well, you're seeing a decline there itself also after its highest close since July 2022. And that's also something that you're looking at. So fell toward somewhere close to $107 a barrel. And we'll also get you the word in terms of what this really means when you talk about WTI as well and Brent. In terms of WTI also trading at a discount versus Brent, what those trends really mean is something that we'll decode right now in a conversation with Anuj Gupta, commodity expert, who's joining us right now. Mr. Gupta, very good afternoon to you, and it is not looking like a good afternoon at all when you talk about gold prices. Even oil, it seems to be a little bit of a volatile move that you're seeing right now when it comes to oil. But first things first, let's talk about gold. It's very interesting right now, everything that is happening with gold prices, because you're looking at the worst week in about 6 years, and this is in the middle of a situation that could, give it some impetus on the back of that safe haven demand also coming in.
Hi, good afternoon. See, there is a little concern about the inflation, and we are seeing that central banks are not, in that mood to cut the interest rate. They are, like to, do some monetary tightening policy. They can, raise interest rate in this year also. So due to this monetary tightening, we have seen some correction in gold and silver prices, because market is expecting some interest rate cuts. But right now, due to inflation,
Absolutely, and that's something that you're looking at when you talk about gold as well. That's quite the interesting insight. Of course, when you talk about gold, it's very important to take a look at what is happening currently in terms of the milestones that you're looking at right now when it comes to gold prices. Headed for the biggest weekly loss in 6 years, like I mentioned, which is important because you do have that safe haven demand initially. Of course, you do have gold prices that seem to be getting a little bit of impetus from that as well. Now you've seen much of that being lost. In fact, when you talk about the Middle East war, it's been 3 weeks of the war right now, and you do have gold also dropping every week since the war also started. So that's also a little bit of update coming in as far as gold prices are concerned. When you talk about gold for immediate delivery as well, it also capped the longest losing run since October 2023. Let's also talk to you about oil prices just a tad bit, because like I mentioned, it's very important to take a look at that gap between WTI as well as Brent right now. As you can very clearly see on your screens, you do have, a little bit of pullback that you're seeing as far as oil prices are concerned. But before we get you the complete picture on that, let's also get back to Mr. Gupta in terms of what he was saying about gold prices as well. You were making quite the interesting point there. We were discussing how the safe haven demand picture has not really been working out for gold right now. What are your exact insights when it comes to what seems to be happening right now for gold prices?
See, the monetary tightening issue is there, and central banks are not, like to increase, not decrease the interest rate. And due to this monetary policy, they are expecting to increase. So that's why we have seen that gold is losing its safe haven demand. And if they are doing a monetary tightening, so possibly they will increase the interest rate, and that is taking a cues that gold is correcting last trading day, and today is also we have seen a correction from the higher sides.
Absolutely, and that's something that you're looking at. I also wanted to try and get a sense of what you think about the gap between WTI and Brent right now, because when you talk about Brent, it's set for a weekly gain of about 4%, and WTI is on a path, on the flip side, to a 5% drop thus far this week. So you're looking at that really gap also widening to something that we've not really seen before. About a $13 gap is what you're looking at when it comes to WTI and Brent, and this doesn't really happen often.
See, WTI generally used in the US side, and we have seen, the inventory of the WTI is increased, very increased, and almost 6.8 million barrel. So that's why we have seen a sharp correction in WTI. But Brent is used in generally in the Asian side, and all the the shipments are blocked here due to the Iran war. So that's why we have seen a sharp increment in the Brent crude oil prices. So the demand of Brent is still there, and the supplies of Brent is not as much the supplies as per the demand. So that's why we have seen a sharp rally in the Brent crude. So this is due to only the demand and supply concern of the Brent, and the Strait of Hormuz is still blocked, not able to get the proper supplies. That's why we have seen a sharp increment in the Brent prices.
No, absolutely. And I also wanted to get a sense of what you really think about copper prices as well. And we'll try and come back to Brent as well and WTI in terms of some key triggers. But before that, it's very important to take a look at what's happened with copper right now, because it's given up, seems to have given up those 2026 gains, seems to have stabilized just a tad bit right now. But it did join the broader commodity sell-off. And that's something that's quite interesting that is happening right now when it comes to the entire industrial metals pack. Quick word on copper then.
See, these are two important points. One is the strength in the dollar. We have seen the dollar index is trading around 100 mark, so that will put pressure on the industrial metal. And also, we have seen a huge inventory buildup in the warehouses, LME warehouses, because there is no such kind of demand, industrial demand. That's why we have seen, sharp increment in the LME inventories. That's why we have seen sharp correction in all the industrial metal. And the investment demand is also from the ruled out from the base metal. So currently we have seen correction in the industrial metal. The major reason is the higher inventory in the LME warehouses.
No, absolutely. And quick word on aluminium as well, because what you're seeing there itself is also very interesting. You do have on one side supply disruptions, and also on the other side, the way that prices have really been functioning right now, it's quite interesting if you look at it.
See, aluminium, as far as concerned about the other base metal, it is little looking sideways to positive matter, because the demand of aluminium is increasing. But yes, it is correlation with the silver prices also. So we are not expecting so much rise in the price in the short term, because the price of aluminium is on a very overbought zone, and expecting a profit booking here. And also it is tracking all the base metal also. So we are expecting a sideways trend in the aluminium prices for the shorter period. But for the long term, yes, it is a positive commodity, because demand will be there, and the industrial demand will increase. So for the shorter term, we are not expecting so much rise in the prices of the aluminium.
No, absolutely. And I believe it's this similar price trajectory that you're also penciling in when it comes to silver as well.
Definitely, silver also we have seen that it's trading around $70 per ounce, and almost it is corrected by $50 from its high level. So the demand of silver is not as much, and definitely it's a part of industrial metal, so not so much industrial demand is there. Yes, definitely we have seen profit booking in silver prices also on the back of the gold, because it is following the gold prices, and gold prices correcting. Then definitely we have seen it's following the silver. That's why silver prices are correcting. So, and in domestic market, due to the crunch of supplies, so there is a scene that jewelers are neglecting the orders for the gold and silver jewelry. So silver trend is little bit on a negative mode on the technical charts also. Fundamental is not looking as much the supportive price.
No, absolutely, and it's a sister metal for a reason, right? You do have them both moving in tandem right now, and that's the trend that is unfolding right now. Thank you so much, Mr. Gupta, for taking time out and joining us. It's time for a very quick break right here on Lunchtime Trades. More news and updates on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
A lot of legacy brands are sort of struggling to catch up with the pace of the change that this new generation of consumers are demanding. Add to that a layer of social media where global trends are creating local demands, builds a perfect opportunity for us to probably scale our business, our mission 10x from here.
For those who are not familiar with what Urban Platter is, how do you describe the company and what it does?
We are a specialty food company. Our mission is to make specialty and gourmet food available, affordable and accessible to everyone.
How do you then stumble upon food as a space that you want to be in?
I used to just cook on the weekends and stuff like that. And sometimes when you want to buy an ingredient, have a certain quality of experience at home, it used to be a matter of struggle all the time.
2021 is when, Hari Bhartiya comes on, Jubilant comes on. That's a mega brand. But no investor activity since then.
In 21, we were very busy serving to the frenzy of COVID buying that was happening.
Yeah, there was a time when everyone wanted to become a master chef at home.
One thing I've learned is money is an accelerator. There were a few things that we were not necessarily very good at, and we did go in the red for 2 years. We were very bad at understanding finances and managing money.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad.
Welcome back. Thank you so much for staying tuned in. Well, it's time now to put the spotlight on the pharma space after Ozempic's patent expiry in India. The country's GLP-1 drug market, in fact, is set for a rapid expansion, which is driven by the entry of 50-plus branded generics from domestic pharma companies. Intensifying competition is what you're looking at right now, accelerating volume-led growth, also what you're looking at right now. It is quite interesting, everything that is right now, unfolding when it comes to the market.
Yeah, I mean, if you see in terms of Novo Nordisk, the patent expires today. They just have one more day, and everyone's concerned about pricing. Natco, a 1290 product per month, and that tells you how low the prices can go. But who better than taking this conversation with the management of Novo Nordisk themselves? Welcome to the show, Vikrant Kshatriya, Managing Director at Novo Nordisk, who's joining in. Vikrant, let me start off with your initial comments and thoughts with regards to where the patent expiry goes. I mean, today, probably I'm assuming is the last day.
Yeah, I believe there is still 1 day left when it comes to the patent expiry. And as an organization, we are very much prepared for this, like as a normal course for any kind of a product. Every product has a life cycle in which there is also something called as a loss of exclusivity. And we are also facing that loss of exclusivity in India. And this is completely natural for us. But this is not the first time. Hiral, if I have to say the patents or, exclusivity, we have seen this in another protein called insulin. Many of the players who have been there in insulin market, they started producing, and we were one of the original players. And we have seen that despite many of the players, every second person takes Novo Nordisk insulin, not only in India, but also across the globe. And likewise, semaglutide is also a complex protein. It's not a simple, you can say, chemical structure, or it is not something which can be made like a small molecule. This is a complex protein. It is made in our factories in Denmark.
with, you can say, years of production capabilities, not only 100 years for insulin, but for the last 12 years for semaglutide, made in septic conditions, made sure that the purity profile and the chemical structure remains intact. And not only that, the entire complete care cool chain of these biologics is stood test of time for 12 years. 49 million patient years have an experience of this product, and more than 40 clinical trials, in fact 50 clinical trials which has been done. So when you see the extent of this molecule, the experience of this molecule in the rDNA profile, we stand tall in terms of that experience and taking it forward more aggressively in this market, just to make sure that it doesn't become just a competition to gain more patients for the market share, but gaining more patients for better control, better outcome, and for what we call it, not only weight control, but for cardiometabolic outcome.
Okay, so tell me one thing, Vikrant, how will Novo Nordisk then adjust to the pricing when it comes to names like Ozempic, Wegovy, in markets especially where India and Canada go, because these are the ones where competition is going to be high. You're going to be dealing with what, 50 plus pending generic entries?
Yeah, and often this question is asked on the pricing strategy. We are very, very sensitive to the Indian market. The first step was to get the innovation in the form of injectable Wegovy as well as injectable for, you can say, diabetes. We did that. And then we realized with the feedback from the doctors and patients that we need to tailor make the prices for India. And we reduced it by 37%. From that time, we have seen an acceleration and multiplication of the accessibility of this molecule. And more patients have started benefiting this novelty of this molecule. So I think we took that step much more in advance, not driven by the patient, not driven by what you can say by the competition, but by the patients, for the patients. And that has been the center point for our own strategy. I often say this, that we are driven by care and commitment rather than just by competition. So prices are adjusted to India. And not only that, we have now launched along with Emcure as well as with Abbott, the solution for obesity and diabetes. And we have priced it very competitively for Indian market for a wider reach. So on one side, we have got the brands from our own portfolio, but we have also localized it for India and making it possible for many more patients across India.
So accessibility is going to be the key from here on. You know, when you're talking about it, you have a Natco, which has actually launched its generic version of semaglutide in India at $1290, what, $14. How competitive do you think this is going to get? And you think it's going to be easy to match this kind of pricing?
Yeah, and we have to yet to see these kind of launches. Of course, the announcements are there, but we know the way we produce, the way we quality control. We know that how stringent the entire production line is and how stringent the entire value chain in terms of getting to the end customer, this complete care cool chain that is involved. And I think we are also very confident of the safety and the tolerability profile of our molecule. And this is rDNA based. So we have yet to see these kind of launches if they are for acute time for a chronic disease, and how at the end of the day they remain, you can say, beneficial to the patient. I only can wish good luck, because all these things bring better accessibility to the Indian patients. But we remain confident for our pricing strategy, which is very much tailored for India.
Okay, so do you plan to launch your own authorized generic or off-patent alternative to retain patients who may actually otherwise switch to lower cost domestic versions?
Yeah, and when it comes to the generic, let me just also tell that, you know, we are the largest generic players when it comes to the protein chemistry or the protein molecules, whether it is for insulin, and also for semaglutide. Our factories have got the capacities like nobody's business. We have invested upwards of $20 billion in terms of making sure that these APIs, as well as the fill and ship formulations of these molecules, remain catered to the large population. So we are one of the largest. But at the end of the day, we just have to see that overall, you can say they cater to the masses also in India. And when we have launched with Abbott and we have launched with Emcure, we have kept that in mind that they also fight in the generic space.
Okay, last question, Vikrant. Are you working on any other breakthrough drug like a semaglutide?
We are looking forward to both Cagri Sema, let me tell you, and we are doing long-term trial. Redefine 4, Redefine 11, that's a trial name actually, which is a very, very long trial. And then we are also doing some of the trials in this molecule at a higher dose. And we remain confident of the outcome, but it is too early to comment on these kind of an outcome till the time result is out. But on the other side, when we are talking about this amitriptyline, we call it zengabatide, that also looks fantastic. It has just completed phase. These are actually in the development phase. We also have got a triple agonist, which is called as a UBT 251, which is also a triple agonist. But let me tell you, this science, this unique biology of amylin is just amazing in terms of finding out profound weight loss, also for HbA1c control.
Okay, so lots to watch out for. But thank you, Vikrant, so much for joining in. Always a pleasure to speak to you. So Shansi, this is going to be the hot topic now. For the next couple of days, the kind of generic launches that come in is going to be the key.
No, absolutely. It is definitely going to be the key, and that's also something that we're looking at right now. But other than that, you do have BCCL that is going to be in focus on the back of achieving the highest single-day coal booking, with the bookings also more than their daily production average as well. In fact, we caught up with the management. Let's go across and listen into a slice of that commentary where they're detailing their outlook when it comes to coking coal demand and also talking about this particular milestone.
Company has managed to have a single day record production, which is nearly 1.5 times of the production with the surge in the demand. Will we see this momentum continue going ahead as well? Because last time you had stated that there was a 1.6% decline in coking coal production in February, but has that improved in the month of March?
Yes, in the month of the March, production has been increased, and gradually it will further up to 31st March and new financial year. Rate will be increasing more, and coking coal production will improve further, whatever be the condition there is.
Right, and at what price point is this booking done, and where does this stand versus your notified standard price?
See, we are having coking coal of various grades. Grade 3 coal is 4568 rupees reserve price, and Vasri 4020 rupees per ton, and Vasri 5 it is 3260 rupees per ton. Average pricing of our coking coal reserve price is around 3500 to 3600, and we are giving discount of 100 tonni per rupees 100 tonni per tonni up to 4000 tonni. Different slabs have been created. 4000 to 12,000, it is around 2 to 3 racks in the term of racks. Right. We are giving 200 up to 600 per tonni. We are giving discount if anybody takes our coal more than 20,000 tonni, or it is coming around more than 80,000 tonni, it is coming around 20 racks. So it is the response of this discount that investor has attracted with us.
Right, and sir, of course, I just like to add one more point to this. Q3 numbers, we saw there was a little bit of margins did drop with this. Are you seeing the high realization booking? Will it be enough to swing the company back into net profit if we take the full year FY26?
Yes, definitely we will be in profit in FY26. Actually, what happened in our Dhanbad BCCL region, rainfall was extraordinary. It is around 1.5 times than the last year, and it continued up to November. Rather, last 3-4 days, every day there is rain. Its effect of rain further up to 31st March, our profit, our production, everything will improve.
And Mr. Agarwal, by when do you plan to achieve the projected 15% production increase which will reflect in the financials?
31st March, we will reach more than 35 million ton, and next year there will be extraordinary growth of about 6 to 7 million ton.
And also, exactly, and Agarwal ji, does the management see the depth in the e-auction market to sustain the bookings of 3 to 4 lakh tons per day in FY27 also?
Yes. Our booking, actually what happens, thermal power is having much core. They are having much stocks at their power plant. We are attracting NRS sector, hard coke, soft coke, cement, etc. And they will be booking further also, and our scheme will be continue with as our demand is, our stock is too much, and both way it will be.
Then there you go. So that's the word coming in from the management of BCCL when it comes to e-auctions and that particular milestone as well. But with that, it's a wrap on this edition of Lunchtime Trades as well. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
A lot of legacy brands are sort of struggling to catch up with the pace of the change that this new generation of consumers are demanding. Add to that a layer of social media where global trends are creating local demands, builds a perfect opportunity for us to probably scale our business, our mission 10x from here.
For those who are not familiar with what Urban Platter is, how do you describe the company and what it does?
We are a specialty food company. Our mission is to make specialty and gourmet food available, affordable and accessible to everyone.
How do you then stumble upon food as a space that you want to be in?
I used to just cook on the weekends and stuff like that. And sometimes when you want to buy an ingredient, have a certain quality of experience at home, it used to be a matter of struggle all the time.
2021 is when, Hari Bhartiya comes on, Jubilant comes on. That's a mega brand. But no investor activity since then.
In 21, we were very busy serving to the frenzy of COVID buying that.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Mahima. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade today. But before that, let's see what's on the show today. Firstly, we'll be speaking with the management of Ugro Capital. Now, the stock is down nearly 48% on a YTD basis. Why did this happen and what's the way forward is something that we'll discuss with the management today on the show. The second stock on the list is Websol Energy. Now, the stock has hit an upper circuit of 20% and it has been gaining for the last 5 consecutive sessions. The stock is up nearly 42% in the last 5 trading sessions. So what could be the potential reason behind this up move is something that we'll discuss on the show today. When it comes to Deep Industries, ONGC has lifted a provisional suspension which was imposed a month back, and that is the reason why the stock is up nearly 12% in trade. How does this benefit the company is something that we'll discuss on the show today. Then there is Centum Electronics. The stock has hit an intraday high today, and out of the last 5 trading sessions, the stock has been gaining in 4 of them. So what could be the potential reason is something that we'll discuss. And lastly, when it comes to Stovecraft and Butterfly Gandhimathi, some profit booking that we are seeing after 2 straight days of gain. Now these companies did benefit because of gas shortage and higher demand of induction cooker, but will that result into any financial benefit is something that we'll get to know on the show today. But now if you look at the market, Nifty, it's on an uptrend today. We had seen some profit booking coming in during the day, but it did manage to find some support near the 23,150 level, and it's up nearly 100 odd points from the day's lowest point that we have seen. But again, 23,350 is acting as a resistance, at least on an intraday basis. When you look at the sectoral indices, all the major sectoral indices are trading in green. Nifty PSU Bank and Nifty Healthcare is a top sectoral gainer, while Nifty Financial Service and Nifty Real Estate has gained the list, just up around 0.1% in trade. But Mahima, when it comes to the small cap sector, what's been buzzing there?
So Sumit, the broad end of spectrum is also equally looking good, right? Almost mirroring the benchmarks for the mid cap 150 at least is up 1%. The small cap 250 trading around with gains of 0.7%, slightly lower than the mid cap 150, but still at least trading in the green for the day. The advanced decline ratio indicates that the broad end of spectrum is also seeing healthy gains. We can quickly try to pull up the advanced decline ratio. There you go. Slight movement since the morning. Slightly the declines have moved up, but in terms of where the entire ratio goes, advances still are leading around 1800 odd advances versus that of 600 odd decline. So 3:1 ratio continues when it comes to the advanced decline ratio. Now for some specific names with regards to where the small cap buzzers go, you have Sumit was mentioning Websol, which is up 18% locked in upper circuit. You have Centum Electronics, which is up 11%, Deep Industries, which is up 12% as well. You have counters like Gujarat Apollo, which is up 10% as well. Solex Energy, which is also up 9%. You have counters like NPST, TVS Electric, Kaveri Seeds, Go Fashion. Go Fashion, by the way, has turned into green after a really long time. Deepak Builders up 7% as well. Dalmia Bharat Sugar also doing fairly well, up 7%. Awadh Sugar, so small sugar names also doing fairly well. Awadh as well as Dalmia Bharat Sugar. Apart from that, you have Magad Sugar, which is also doing fairly well. Dhampu Sugar, which is also doing fairly well. Some counters in the metal space like Steel Strip, Mathan Alloy also doing fairly well. Nahar Mills also doing fairly well. But on the flip side, less counters with regards to where the negatives go, trading in the red, but you still have counters like Sadbhav Infra, which is down 4%, Genus Paper, which is down 4%. All of these induction cook stove as a theme, Butterfly, Gandhimathi, Stovecraft, etc. seeing profit booking down 3 to 2% each. You have counters like Dhanlakshmi Bank, which is also slightly under pressure, down 2%, and something like VST Industries also seeing a downtick of around 2% in trade today. So that's with regards to where the broader end of spectrum goes and the small cap buzzers. But Deep Industries is in focus, Sumit, and what is causing that buzz?
Well, a month back, if you remember, when this announcement had come in where ONGC had done a provisional suspension of few orders of Deep Industries, the stock had crashed, and today that has been lifted, and that is the only reason why the stock is up nearly 12% in trade. So this provisional suspension, which was imposed on 13th of Feb, has been completely lifted by ONGC. And back then there were some issues that were related to one of the contract of workover rig in Bokaro, one of the fields of ONGC. So that was there, and hence this provisional suspension was imposed by ONGC. Now the company, now what does this mean? It means that the company can fully participate in all the new tenders that ONGC will give going forward. But there will be an exception of workover rigs, which is likely to be reviewed after 3 months. So after that revision is done, Deep Industries could go ahead and participate in those orders as well. And again, all the existing contracts that continue as it was for Deep Industries. That was the case back then also, and it continues right now as well. Now, apart from that, another reason why Deep Industries has been on an uptrend for quite a while is the fact that higher crude oil prices. Now with rising crude oil prices, companies like Deep Industries, which are into the rig business, stand to benefit. But how much of this will actually translate into financial benefit is difficult to quantify, but sentimentally it's definitely positive. and this is because higher crude oil prices lead to improved drilling activity, and improved drilling activity also leads to better and higher offshore rig rates. And given the fact that Deep Industries is into the business of renting rigs, higher rig rates would lead to better revenue or better realization for Deep Industries going forward. So that is the positive coming in for Deep Industries. Now, as of third quarter, if you look at, order book stood at close to 2,970 crore for Deep Industries, which was up nearly 10% and they also had an active bidding pipeline of close to around 800 crore rupees, where the company was already declared as L1. So that could also translate into order wins for the company in the fourth quarter. Now, they also mentioned that the conversion ratio continues to remain quite healthy, with 50% or more of these orders getting translated, and they're expecting one more rig to be deployed by March 2026. So this extra rig, which will get deployed now going forward, could fetch a higher rate, given the fact that crude oil prices are on the higher side. And for FY27 and FY28, management has already guided a revenue growth of more than 30 to 35% that could come in. So these are broadly the reasons why Deep Industries has been buzzing in trade. But let's also welcome in our fundamental guest Gaurang Shah to understand more about this counter. Gaurang, the news that has come in for Deep Industries, it's definitely beneficial at this moment. But how are you looking at this counter at current valuations?
Thank you so much, Amit, for having me on the show. Good afternoon to all the viewers of NDTV Profit and to you and your entire team. A small disclosure that all recommendations that I'll be sharing with you this afternoon on your show, all are part of our fundamental research team recommendations from a long-term point of view. Our company, Jijit or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar advice with our clients. They might have their investment interest. So firstly, I think this uptick we are witnessing is only because of the uptick in the crude oil prices. Point number one. Point number two, by default, Deep Industries, because it is into leasing of oil rigs, the short to medium term realizations could move upward north. But moment you have any kind of de-escalation or any kind of dialogue on the diplomatic side opening up in the Middle East, you will see a sharper and a deeper correction in the crude oil prices and natural gas prices. In that kind of a scenario, if you are attempting to, looking at participating into Deep Industries stock, you may end up on the wrong side. We do not cover on the fundamentals Deep Industries, so I'll refrain from commenting buy, sell and hold. But there is always an overhang in terms of resolution of this ongoing conflict and a resulting downward correction in the crude oil prices.
Okay, all right. So that's the holistic view coming on Deep Industries. But, moving on to our management conversation of the day, we are now joined by Sachindra Nath, who's the founder and MD of Ugro Capital, joining us now. Mr. Nath, thank you so much for taking out the time. Mahima this side. My first question is with regards to the recent news flow that has come in, that you might consider raising of funds tomorrow in your board meeting via NCDs. Just want to understand, if I'm not wrong, you had recently also raised 45 crores via NCD. So why, another fundraise in such a short time? And what are these funds going to be put to use for?
Mahima, we are a lending company. Raising debt for us is a daily activity. So we raise debt from banks, from financial institutions, DFIs, and also from capital market. So as and when investors line up, we do this, debt raising activity. It's hardly a news. It is just because it gets disclosed to the exchange and get to your notice. But this is no different. Money raised as debt goes to onward lending to our MSME clients.
So, Mr. Nath, I do understand what you just said, but just want to understand that this fundraising that you're doing, is that going to justify the growth rates that you'll be doing going forward?
No, that's what I'm saying, that we do a gross disbursement of roughly around 600 to 700 crore every month. And that means that much of money we raise on an almost every month basis. So there is nothing extraordinary about it.
Definitely, I believe the growth rates will be quite strong for Ugro, given the fact that your disbursement has been at such a high rate. Just one thing that I wanted to check with you, sir, and I completely understand you don't track share prices and everything, but from an investor perspective, I just wanted to understand, given the fact that you hold so many investor meets as well with analysts and investors, On a YTD basis, the share prices are down 48%. Any concern that either the analyst community or the investor community has shown that could have led to this?
Look, I do track prices. I won't say that it's not something which is not in our conscience and we are not, we are not looking at it. I think so. You have to look at it from this perspective. As of when we announced our result on February 7th, we announced a strategic realignment of the business. Roughly around 38% of our ownership structure is in the hands of the retail shareholders. This strategic realignment, we announced that we are taking out roughly around annualized cost of 220 crore, and we are stopping all fresh disbursement in our low yielding channels. So it's lab business, machinery business, business loan. We stopped all for fresh disbursement. Reason we did that, because for a company of our size, at our cost of borrowing, we realized that DSA-led intermediated channels were not generating enough margin for us. We have been waiting for this point, this thing to happen, because we are building our branch network. All of our small ticket lab emerging market branches got built up. So we are at a 313 total branches, as well as our entire merchant lending platform became fairly sizable. So we felt that this is the right time to rebalance the portfolio. These branches would start now disbursing at much higher volume at a higher yield. So what we will see over a period of 27, 28, 29, that our portfolio would rebalance from a lower yielding 10,000 crore portfolio, it will run down, and higher yielding portfolio would keep building up. I think so that the retail could not understand the strategic shift. They correlated this with some form of stress, and also it coincided with war and other things. And that's why stock price have corrected sharply. Right. We are today trading at 0.5 time price to book value. For an entity of our size, which is at 2% of return on asset, around 8% of return on equity, with a clear guidance that this would converge to a 3%, 3.5% return on equity, I think it's a fairly underpriced stock. We are making effort to gain more institutional shareholders entry into the stock.
Okay, as you were mentioning that low yielding loans would move out of your book, and going forward now you're expecting growth rates to improve. Any number if you could share with us, what is the target, internal target that the company has when it comes to AUM growth for FY27, FY28?
Yes, I think so. We have to be very clear. You have to look at from total balance sheet led growth versus rebalancing of portfolio. Today, our small ticket lab business is around 3,111 crore. Our merchant lending business is around 2,000 odd crore. Both of these segments would grow at a CAGR rate of 25 odd %. We expect by FY29, these two portfolio construct would form roughly around 8,000 crore and around 4,000 crore. And the balanced portfolio of lower yielding 10,000 crore would run down and become roughly around 4,000 odd crore. So in the transition year of 27, our total AUM would remain grow by around 5 odd %, but underpinning portfolio would shift from very low yield to high yielding portfolios. And that's why, in aggregate in next 2 years time, we will get to a 20% growth rate.
Okay. So Ugro Capital is oftenly called as a tech-led scaler of MSE financiers. But given the fact that you have an exposure towards MSMEs, and given the current situation that we are seeing on war front, then there is gas shortage. This is impacting a lot of manufacturing industries and a lot of companies. So any stress or any industries to which you have exposure that are seeing this kind of stress at this moment?
Ugro focuses on small business customer, which are in the trading turnover of 25 lakh to roughly around 15 odd crore. Going forward, actually, our exposure was more get limited to customer which have trading turnover of up to 3 odd crore. Large portion of our customer are small business owner, which are shopkeepers, small manufacturers and others. We don't see any stress coming out of the global environment for most of these customers, except that the customer which are in the food retail segment, or which are small restaurant, their cash flow may get impacted if their gas supplies remain constrained. But that's a very small portion of our portfolio, and we are watching it. And we are hopeful that overall on the balance sheet level, it should not impact us in any way, because our customers are not customers which are either in export or they are linked to the global economy.
Srath, I think if I'm not wrong, in your last Q3 con call, you had mentioned stress in that sub 7 lakh MSME loans in parts of southern India. Just want to get a sense if there is an update from there, considering the entire situation right now.
I don't think so. I've said southern India, and that was more for the industry. What I had said, and I'll reiterate, we continue to see, and which is a bit improving, not for us, but customers which are in unsecured loan or secured loan below, in a small ticket segment, continues to feel the stress. So what we have seen in the microfinance industry has gone to very small ticket business owners as well. UGRO lends between secured loans between 7.5 lakh rupees to 50 lakh rupees, and our merchant lending is to very small, businesses which are on a daily repayment basis. So we don't feel the stress, but I was more talking about generally about industry.
Okay, one last question, Mr. Nath, from my end with regards to your ROAs. I believe that you've said that they will reach that 3.4% mark by FY28. Just want to understand what will be the levers to that growth.
29, ma'am. And as I said that, today, if you look at it, 2% of our ROA, large portion of that return on asset component comes from our co-lending and direct assignment income. Given that the total contribution of direct assignment and co-lending is 24%, which is now going down to 4%. And our 2% ROA is moving to 3%, which is largely led by interest income. This uptick in the ROA is purely a function of yield enhancement by small ticket lab, by total yield going up by roughly around 2% and operating leverage kicking in. So it's a pure share execution and a rebalancing of the portfolio, which should give the ROA uplift.
All right, okay. Mr. Nath, thank you so much for taking out the time and helping us answer all those questions. We look forward to speaking to you once your Q4 numbers are out.
Thank you.
All right, Gaurang, I'll quickly come to you. Your view on Euro Capital and the entire space.
Well, Mahima, I was just listening into the verbatim that the management was sharing with you and Soumit's questions. One thing that I feel a little bit of concern, though we have no direct coverage on Euro Capital, so no specifics, is the correction in the stock price. Right from, I think, 190, 200 levels, the stock price corrected to close to 90 levels, if I'm not mistaken, over the recent past. Point number two is, I think they very recently raised some funds via NCD, and now once again they are coming to raise some funds. Mahima, one problem with the small microfinance, MSME, SME finance companies, the recovery run rate, and of course the risk towards any kind of default. Having said that, we are optimistic on the MFI segment. We have coverage on names like AU Small Finance, Credit Access Grameen, Equitas Small Finance, Ujjivan Finance. And I would just say that if the price correction is so deep, there is something more than what meets the eye.
Right, Websol Energy is another counter that remains in focus. The stock has hit an upper circuit of 20% and it has been gaining for the last 5 consecutive sessions despite the weakness that we have seen in the market. And in fact, the stock is up nearly 42% in trade. What could be the potential reason behind this? Let's get in Varsha to understand more on this.
Well, one of the reasons why the stock have seen a huge rally in the last 2 days is MNRE has extended ALMM framework to cover solar ingots and wafers from June 2028, and Websol has signed an MOU with Linton to explore PV ingots and wafer manufacturing to have that backward integration strategy to secure the supply chain. Now Websol plans to purchase ingot and wafer manufacturing equipment from Linton, and they're considering a 2.5 gigawatt of wafer line to start. So one of the reasons why you've seen a rally in this stock, and this applies to all the PV modules and solar modules companies who are into or who are going into wafers and ingots. Now onto the order book, if you see, order book stands at around 1,150 crore as of December 2025, and the demand is entirely from Indian DCR segment. Talking about the Q3 specifically, they're expecting overall, if you see the Q3 EBITDA margin fell from 45% to 41% due to higher module share, which is a lower margin product because your cell has a higher margin versus module, and the customer payment have delayed, causing revenue deferral. But they are expecting strong margins in the next 2 to 3 years, and the margin fluctuation is also expected within 3 to 4% range. Talking about their Andhra Pradesh expansion, when it comes to Topcom, they've approved a 4 gigawatt integrated facility, and the phase 3 has been built out with 2 gigawatt of Topcom, and the capex is aligned at around 1,600 to 1,700 crore, wherein the land has been allotted. So overall, because of the MNRE's extension of ALMM framework has led to a sharp increase in the stock price.
Right. Gaurang, do you track this counter Websol Energy, this ALMM which has been announced by MNRE? Do you see this as a game changer coming in?
This is a positive direction, Somit, but the problem is that the stock, like Varsha and you were mentioning, is up for the last 2 or 3 trading sessions. Point number 1. Point number 2, the back-end work that the company does for solar panels, solar cells, wafers, etc., and of course the fact that this industry, renewable I'm talking about, is likely to have a huge positive impact because of the government policies. There could be better times ahead. I won't give buy, sell and hold because we don't have a coverage. And secondly, it all depends upon how they are able to recoup their margins, Somit. I think that's going to be a little bit challenging.
Okay, all right. So that's the view coming in on Websol. But time to take a look at the FNO space, and we have Sharad joining by to give us some perspective on what's moved since we spoke last. Sharad, over to you.
Thanks a lot, Mahima, for that. And luckily, the markets have actually sustained those key levels. Little bit of volatility is definitely there, but this continues, and I really like this screen. Reliance is up 3%, ITC, Tech Mahindra, Tata Steel, all of them holding their gains. Of course, amongst the losers, SDFC Bank continues to be the biggest loser in the Sensex index. BankX also, that's the only drag, to be honest. Other banks are doing well. That means the recovery or the rebound, if you call it, is sustaining itself. And we are just in the last 90 minutes of the trade. But remember, there will be some kind of adjustments happening for FTSE and Sensex as well. So we'll expect some volatility coming in. BankX also, the story which I have already told you. But let's look at the long build-up. Interestingly, more than 60% of the FNO universe is having that. Tata Elxsi and JSPL make it to the list. Short covering candidates, let's just pull that up as well. Inox Wind and Vodafone Idea comes in. Interesting move on Vodafone Idea, and some good value buying is happening here. Long unwinding, I feel very lower companies are there. Ashok Leyland and Waaree Energy is not much of a trade. And short build up, capital related stocks would be there in focus. Yes, it is MCX, that's down 5%. Selling has intensified, and from the last 10:45 update, Petronet LNG is also down 4%. So this is largely, it's been unchanged, but nevertheless the important levels have sustained for both Sensex and BankX.
Okay, Sharad, thank you so much for getting us those details. The other counter, small cap counter, in fact, that we're putting spotlight on is Centum Electronics. Now, in these markets also, year to date, this counter has moved 30% and has hit an all-time high today. To give us a more perspective on what the company does and what is causing this rally, we are now joined by Parth, who will give us more perspective on Centum Electronics. Parth, over to you.
Thanks. So Centum Electronics is one of the largest electronic system design and manufacturing companies in India. They offer their services in sectors like space, defense and aerospace. And as you rightly mentioned, the reason why the stock is in focus today is because the shares have climbed more than 10% today, and the stock has hit a new all-time high of 3,066 rupees. In the last 1 month, the stock has gained more than 20%, and in the last 1 year, the stock has more than doubled. Now, this is interesting because we have seen how weak broader markets have been in the recent times. Regarding their order book as of 31st December stands at more than 1700 crores. In last month also, the company won an order from HAL for their radar systems. The phase 1 of this order stands, the value of phase 1 of this order stands at 66 crores, while phase 2 holds an estimated value of more than 500 crores. Regarding key takeaways from the last quarter, the company is currently realigning their global operations. They have already closed their Canadian subsidiaries and are in the process of restructuring their France units in order to mitigate losses from those regions. They are also working on expanding their capacity by opening up a new integration facility in Bengaluru.
All right, Parth, thank you so much for getting us those details on Centum Electronics. The stock almost trading at its day's high point as we speak, up 12%. But with that, Gaurang, thank you so much for helping us with your views on all the stocks and of course the spaces that we discussed. Viewers, completely out of time on this edition of Small Cap Buzzers. But if you have any stock related queries, then do stay tuned because Ask Profit is up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
A lot of legacy brands are sort of struggling to catch up with the pace of the change that this new generation of consumers are demanding. Add to that a layer of social media where global trends are creating local demands, builds a perfect opportunity for us to probably scale our business, our mission 10x from here.
For those who are not familiar with what Urban Platter is, how do you describe the company and what it does?
We are a specialty food company. Our mission is to make specialty and gourmet food available, affordable and accessible to everyone.
How do you then stumble upon food as a space that you want to be in?
I used to just cook on the weekends and stuff like that. And sometimes when you want to buy an ingredient, have a certain quality of experience at home, it used to be a matter of struggle all the time.
2021 is when, Hari Bhartiya comes on, Jubilant comes on. That's a mega brand. But no investor activity since then.
In 21, we were very busy serving to the frenzy of COVID buying that was happening.
Yeah, there was a time when everyone wanted to become a master chef at home.
One thing I've learned is money is an accelerator. There were a few things that we were not necessarily very good at, and we did go in the red for 2 years. We were very bad at understanding finances and managing money.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
Delhi, the Greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro Am, the course of champions, the conversation of leaders. 21st March, Kota.
Welcome back. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachhrajani. If you have any stock-related questions that you want to ask us, you can either call us on the numbers that is flashing on your screen up there, or even WhatsApp us on the number that's flashing, that will be flashing in a while. But before that, let's take a quick look on the markets. The Nifty has slid below the 23,200 levels as we speak now. Still trading in the green for today, up 0.8%. The last 1 hour is going to be crucial to kind of determine as to how markets end on a Friday. The Bank Nifty also right now is trading with gains of about 0.4%. Let's try to pull up the Nifty 50 heat map and see as to whether the stocks that we discussed earlier are still holding up or not. And yes, they are. Your steel stocks, JSW Steel as well as Tata Steel, both up in that range of 3 to 4% each, and some IT names doing fairly well. HCL Tech Mahindra. Apart from that, Coal India is doing very well on the back of the subsidiary IPO that is launched today. Reliance is doing fairly well. ITC, Apollo Hospitals are some other names. Trent also up 2.4%. On the flip side, you have HDFC Bank, which has remained throughout the day, has seen downtick of around 1.9%, followed by Hindalco, HDFC Life, ONGC today seeing profit booking because Brent has corrected, and you have BL and Bajaj Finance which are also losing ground. Let's try to pull up the sectoral heat map to see as to what the sectors are looking like. Almost all in the green, and that's being maintained at least so far. PSU Banks leading that pack, up 2.5%, followed by Nifty Pharma, Nifty Metal and Nifty IT. Nifty Realty is slightly in the red, and followed by Nifty Financial Services, but just slightly in the red. Apart from that, all other sectors are in the green. Let's try to pull up the advanced decline ratio and see as to how the broader end of spectrum is looking like. Your advanced decline ratio has slightly moved, still in that range of 3:1 ratio, but has narrowed slightly by the hour since the afternoon. The mid cap 150 and the small cap 250. Cap 150 is up 1%, and the small cap 250 slightly off from its day's high point, but still trading around 0.6% higher. Let's try to quickly pull up the BSE 500 before we start taking your stock-related queries. You have counters like BOB, ABFRL, KIOCL, Escorts, Kubota, as well as AWL Agribusiness up in that range of 7 to 19%. But on the flip side, Petronet LNG, MCX, as well as Nalco and Rajesh Exports are losing ground. So that's with regards to where the markets go. But with that, let me also welcome in Lancelot Dikuna, CIO ValueX Wealth Connect LLP, joining us now, and CA Rudra Murthy, BV, founder and director of Vashana Investments, joining us now. Welcome to both of you, gentlemen, and a very good afternoon to the both of you. I'll start taking the first question, which is coming in from Sriram Raghuraman, who's writing us from Chennai and wants to know if this is a good time to buy into Reliance Industrial Infrastructure, is what he's asking. Rudra, I'll come to you on this one. Your view on the charts for Reliance Industrial Infra?
See, for me, this has been a stock which has definitely disappointed. And if you just check the price, it is in a clear downtrend and making lower top, lower bottom formation. You just get some bounces in between, but definitely they all get sold into. So I will definitely ask the viewer to exit this stock on any rise. So I don't advocate hold. On days like today, when you get a bounce, it is better to exit and switch to better counters.
So that's the view coming in on Reliance Infra. The next one is on South Indian Bank. Shankar from Bengaluru wants to know if this is the right level to make an entry into this one. He's already owning 1,700 shares at the levels of 39 rupees. Wants to know if he can go ahead and buy 1,000 more shares of this bank. Lancelot, your view on this one?
I think if you look at this bank, it's always better to be invested in larger banks. And because they have the ability to weather difficult financial conditions, and given that we may be moving into very trying and difficult conditions over the next couple of quarters, one should probably look at, maybe even if you are in profit, look at exiting and moving to some stronger banks. Like you could look at ICICI Bank or State Bank of India. These would be better options.
Okay, all right. So that's the view on South Indian Bank. The next question that we have is on Vishal Megamart. Murthy from Raizag is asking whether he can continue to hold this counter for a year or more. He's got 525 shares at the levels of 135. Lancelot, your view on Vishal Megamart as well as these retailers in tier 2, tier 3 cities which have a lot of expansion on their cards and have been doing fairly well as compared to the big players?
Yeah, I think the niche retail players have been doing well, but when you look at Vishal Megamart, it is expensively valued. It's almost 80 times forward earnings, and the margins are relatively on the narrower. So, and given that we are going to see some amount of disruption happening because of the situation in the Middle East, I think it'll be difficult, for them to manage or maintain these narrow and small margins. So at this point in time, given that it is trading at very expensive valuations, one may look at, booking profits or exiting from the stock.
Viewers who are tuning in, you can also give us a call on the number that's flashing on your screen up there. Call us, ask your stock related queries. We've got Sunny who's writing us from Karnataka asking about Blue Dart. He's got 16 odd shares at the levels of 5855. Let's try to pull the chart up. And wants a medium term view on this one. Rudra, I'll come to you. Blue Dart, enough data on the charts to indicate as to what should be the next course of action for our viewer?
Mahima, for me, 5,200 was a very crucial support and it was a medium to longer time frame chart support which Blue Dart has broken. So for me, on any bounce to levels closer to that 5,200, I would definitely advocate an exit from this stock and switch to any other better counter. So it has broken a very crucial support at 5,200. So at current market price or on any bounce, I will definitely look at exiting this stock.
All right, so that's the view coming in on Blue Dart. The next one is on Axis Bank. Our viewer wants to know if this is the right time. No, he's purchased 250 shares at the levels of 375 and wants to know if this particular counter can now reach 1500 in a short while. Interesting. So, Lansot, I'll come to you on this one. 375 is a very attractive level at which Mr. Gupta has bought Axis Bank. Do you think 1500 is possible on the cards in the medium term?
I mean, it depends on what you define medium term, but if one is looking at, say, 1 to 3 years as a horizon, then definitely 1500 is possible because Axis Bank has been doing well on almost all parameters. Even today, it's trading at about 1.8 times book, which is a fairly reasonable price to pay for a bank like Axis. It has increased its franchise and you've seen a good amount of deposit growth. We're seeing credit growth also improve along with the other businesses that they have added to their services. I think you will see a lot of growth coming in for Axis Bank, and with interest rates being relatively soft, margins should also improve. So if he stays on for the next 2 to 3 years, I'm sure you would be able to see 1500 as a price.
Okay, all right. That's the view coming in on Axis Bank. We've got Ajay calling us from Noida. Ajay, a very good afternoon to you. What's your query about?
Very good afternoon. Thanks a lot. My query is on Cipla. I'm a long-term investor. I'm holding for past 5 years. I have a 125 shares at the rate of 775. Is it profitable, but the stock hasn't moved for past couple of years. So my query is, any other pharma stock which the expert would like to recommend,
Sure.
or shall I hold Cipla?
Sure, got your question, Ajay. I'll take this up with Lansot. Lansot, here also, it is attractive. He's bought it at an attractive price, 775. The stock is nearly doubled. But wants to know if he can continue to hold this from a long-term perspective or switch to something more attractive in the pharma space.
So, I think this has been the case with almost other pharmaceutical companies, that they haven't really done well because they've been impacted by various things that are happening in the US markets. As far as the domestic market is concerned, also there are some changes, very many drugs going off patent. So I think if he's looking at the pharma space, I would be more comfortable in moving from here into the hospital space. In the hospital space, you have good growth coming from, this Narayana Rudalaya, and you have, Apollo hospitals also showing good growth. So maybe those would appear to be better options if one is looking at maybe the next 3 to 4 years kind of time frame.
The next question that's coming in, which is from Hututu, who's writing us from Telangana, asking about SBI. He's bought 578 shares at the levels of 1052. Wants to know if he can continue to hold this from a short-term perspective or sell at the current market price. Rudra, what is the view on the charts?
Mahima, a definite hold, and one can in fact add at current levels. We have seen decent correction from the top, and there has been enough profit booking in SBI in this downfall of market. But if you observe, last 2 quarter results are very good, and on technical charts there is a very strong support at around 1000 to 1050 zone. So at current market price, in fact, definitely I will add to this stock at current market price, and whatever he has, he can hold on to it, and he can even add at current market price. One can have a stop loss of 990 and look at all-time highs to come back, and even a further move from there can happen. So in fact, in banking, especially in PSU banks, SBI will be my top pick, and it's a buy at current market price.
Okay, so that's the view coming in on SPI. We've got Ranjit calling us from Chennai. Ranjit, a very good afternoon to you. What's your question about?
Yeah, I'm having SPML Infra stock. I'm holding 100 stock. The price is 180 rupees. So shall I hold or continue to accumulate this stock?
Ranjit, what is the time period that you would want to hold this counter?
Long term.
Okay, all right. I'll try to get a view. It's fairly a small company, but Lancelot, any view on SPML Infra?
So, they are engaged in the development of infrastructure in India, but it's a relatively a small company. Now, what happens with small companies is that, whenever there is a crisis in the market, their margins get impacted first. They may lose orders. So it is better to move to larger companies. If you see, for example, Larsen & Toubro has corrected significantly, but being a larger company, it has a lot more strength to be able to withstand difficult conditions. So my recommendation is better to move out and move into companies which are larger in size, like Larsen & Toubro. They would give you better returns going forward.
Okay, all right. The next question that we have is from Aniket, who's writing us from Karnataka, asking about DLF. Wants to know if this is the right time to invest from a long-term perspective of 4 years. Lancelot, your view?
Well, I think DLF, has seen a little bit of slowdown in the past, and the stock is relatively expensive. It trades at around 32 times its earnings. So given that, we are seeing a bit of saturation in the real estate market, it may be better to defer the decision to buy the stock if he's looking at buying, and maybe if he's holding it, he can continue to hold it.
All right, so that's the view on DLF. The next question that we have is from Rudra, who's asking about AGI Green Pack. Says that he's holding a small quantity, but wants to know from a technical point of view, is this a good hold or not? Rudra, I'll take this question up with you. Your view on AGI Green Pack on the charts.
Mahima, very crucial support at around 600 has got broken in the stock, and it is decisively trading below those levels. So for me, till this stock goes above 600, it is still a sell. And if he has this stock, any bounce to levels closer to that 530, 550 zone, better to exit. It is in a clear downtrend. So I will advocate a sell on this stock.
Okay, the next one coming in is on DAM Capital. Piyusha Kanodia is holding at the levels of 196 and 400 shares is what she has. Wants to know, because she's sitting on a significant amount of loss, around 26,000 of rupees, wants to know if she can hold average exit at the current juncture. She'd bought this from a long-term perspective. Lancelot, your view?
Mahima, you see, DAM Capital is one of the investment banking advisory companies. And while business can be good, it can be also very volatile. If you look at the valuation of the stocks, it is trading at a relatively expensive valuation, and maybe better to look at exiting the stock at this current levels.
Okay, the next one is on Fino Payments Bank. The viewer has bought the stock at 141. Wants to know if he or she can average at the current levels or not. Lancelot, after everything that happened in the last week with the MD and CEO, getting jailed, there is possibility on the cards that he might be bailed. But overall, considering that development, the stock did tank quite a bit. But your view, considering the fundamentals of the company, whether this is a good time to average or not?
No, I don't think it's a good time to average because, like I said, when it's a small finance bank, and its business can get easily impacted by changes in the environment with interest rates or even with asset quality. So it's better to exit small banks and smaller finance companies and look at strength or even strong companies like SBI, etc. They do much better in going forward.
Okay, so that's the view on Fino Payments Banks. The next one is on M&M. Shaunak Kulkarni from Mumbai has bought M&M at the levels of 3062. He's holding 657 odd shares. Wants to know if he can hold or sell. Rudra, your view on the charts for M&M?
See, for me, last 5 to 6 trading sessions, if you see, yes, the stock made a firm bottom and took support at around 2,900, and from there you have seen a small bounce, and again a retracement is seen in this stock. So at current market price, definitely a hold, and if you want to buy it with a stop loss of 2,900 on a closing basis. So it's a hold, and if someone wants to buy with a 2,900 kind of a stop loss.
Okay, Rudra, one more question coming your way. Manas is asking this one and wants your opinion on the Nifty for the next week. I know it's difficult to give that kind of view considering the entire geopolitical situation, but any support and resistance that you would like to give on the benchmarks?
Yeah, Mahima, if you see Nifty's move and especially yesterday's low, it has made a double bottom formation, and most importantly, even crude has made a double top formation at $115 per barrel in international markets. So for me, crude having made a double top formation signals bearish view, and for me, Nifty having made a double bottom formation signals a very short-term bullish view. We are definitely oversold, and these are not levels to short, and I feel these escalations have now reduced a lot in terms of the war front. So next week we might have a pullback rally in the market, and I see a firm bottom which has already been made at around 23,900-950 zone, which has been a very strong support. So for very, very short term and for especially next week, I am bullish on market. So definitely one can hold on or buy fresh into Nifty, and I feel yes, a target of around 23,500 can be seen. So a 300 point kind of a move from here is possible, and one can have a stop loss at around 23,050, which is about 100 points from here, 150 points from here. So 1:2 kind of a risk reward. At current market price, I will definitely hold on to my long position if I have, and if you want to buy at these levels, definitely yes, and keep a target of 23,500 to come from here on Nifty.
Okay, so that's the holistic view coming in on the benchmarks, the Nifty 50 especially. Moving on to our next caller, Mansingh is calling us from Kerala. Mansingh, a very good afternoon to you. I believe you have a query on KP Energy.
Yes, ma'am.
Go ahead, ask your question.
I'm holding 150 shares.
Okay.
Around 350 rupees. I want to invest more. I want to know the fundamental and the technical view. Should I start accumulating at the current juncture, or should I wait?
Okay.
Or should I shift to GMR Power?
Okay, got your question, Mansingh. I'll take this up with Lancelot. Lancelot, any view on KP Energy, slightly small company, and he wants a view of whether he should shift to something like GMR Power?
Yeah, I think if you look at KP Energy, it is involved in the development of wind power generation infrastructure, and it is actually looking of mainly involved in siting of wind farms, etc. So if you really look at that kind of a business, the margins are very low. It's a low margin business, and expenditure may be on the higher side. Plus, there are much larger players in this space, so it becomes very difficult to justify the valuations that that the company is currently enjoying.
Right.
And so it may be better to move out of this and look at other opportunities in the space.
Got it. Lancelot as well as Rudra, it's time for a rapid fire round. Try to keep your answers just to buy, sell and hold so that we can answer as many queries as possible. The first one is on Ashok Leyland. Is this a good time to invest, Lancelot, from a long-term perspective? Bhavani is asking this question.
Yes, I would invest at this point in time.
Natco Pharma, are these the right levels, Rudra, to make an entry from a 1-year time horizon? Rajiv wants to know.
Rounding bottom formation, so definitely yes at current level.
Okay, Jyoti CNC is the next one. Tony wants to know if these are the right levels to make an entry, and if not, what would be a good entry point? Rudra, your view.
Yeah, so for me, stock is in a downtrend, so I will avoid. Let it at least cross 770 levels and then you can enter, or else avoid at current price.
Okay. Tata Power holding since 210. Good time to accumulate, Lancelot?
Yes, one should have.
Okay. RVNL, what is the short-term view on this one, Rudra, on the charts?
So I will definitely avoid this stock in a clear downtrend.
Okay, the next one is on Birla Corporation. Our viewer has 31 shares bought at the levels of 1061. From a more than 1 year perspective, can you continue to hold, Lancelot?
Yes, one can hold.
Samvardhana Motherson, can I buy today's price for the next 1 year? Rudra on the charts?
Yes.
Okay, the next one is the IRFC. Our viewer is holding 500 shares. The price is not given from 2 to 3 year perspective. Can you continue to hold, Lancelot?
Yes, you can hold.
Godfrey Phillips on the charts from medium term perspective. Rudra, your view on the charts?
Buy.
Okay, Angel 1 bought at the levels of 266, 221 is the quantity. Balamurugan wants to know if this can touch 306 in the near term. Rudra, your view on the charts?
302 is very far away from here, but I can definitely say at current market price, I will hold on to the stock if I have.
Okay, Shilpa Medicare bought at the levels of 370, now sitting on a huge loss. Lancelot, would you recommend our viewer to continue to hold the counter?
I think you should exit the stock.
Okay, the next one is coming on Fact Chemicals. Whether this is a good hold from medium term perspective. Lancelot, considering the current situation, is this a good counter to continue to hold?
No, one should exit.
Okay, BEL bought 155 shares at an average price of 185. Hold or book profits from a long-term perspective, Lancelot?
Hold.
Okay, if I want to invest 20 lakhs right now in the semiconductors and data center space, Vinay wants to know what counters can he go ahead and buy. Lancelot, your view?
I think we don't have anything in semiconductors, so really can't give anything
Okay.
to buy.
Alright, PFC, Ekambarai wants to know if he can continue to hold the 300 shares that is bought at the levels of 425. Rudra, your view on the chart?
Yes.
Okay, the next one is Avas Financiers. Our viewer Abhijit wants to know if this is the right time to enter into this counter. Lancelot?
Well, yes, you can look at, adding to the stock.
Alright, that brings us to the end of this rapid fire round. Lancelot as well as Rudra, thank you so much for helping us all those stock related queries. Today we've managed to answer 127 questions combined morning and afternoon show. So thank you so much for that. Viewers, I know that we are in a situation where markets are very, very volatile and we're helping you answer all your stock related queries through these shows. So do stay tuned. India Market Close up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Delhi, the greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro App, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi.
A lot of legacy brands are sort of struggling to catch up with the pace of the change that this new generation of consumers are demanding. Add to that a layer of social media where global trends are creating local demands, builds a perfect opportunity for us to probably scale our business, our mission 10x from here.
For those who are not familiar with what Urban Platter is, how do you describe the company and what it does?
We are a specialty food company. Our mission is to make specialty and gourmet food available, affordable and accessible to everyone.
How do you then stumble upon food as a space that you want to be in?
I used to just cook on the weekends and stuff like that. And sometimes when you want to buy an ingredient, have a certain quality of experience at home, it used to be a matter of struggle all the time.
2021 is when, Hari Bhartiya comes on, Jubilant comes on. That's a mega brand. But no investor activity since then.
In 21, we were very busy serving to the frenzy of COVID.
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew. With me is Hiral Dadia. Hiral, good afternoon to you. And it's a relatively pleasant afternoon, all things considered. Green on the screen, you'll take it.
Green on the screen, I will take it for the next probably till Monday, because the word on the street is, because it's a time of festivities, that's the reason why you're seeing this kind of calm on the geopolitical side. Monday is the day we will have to watch out for how sustainable this is, because 3 days in a row we've seen that little bit of respite that has come in. Sustainability is going to be the key from here.
That's actually a good point. Also, we were talking to Kush this morning and we were asking about the technical setup, but he was also saying that there is a possibility that the shorts will get covered before the weekend starts. So that might also have lent a little bit of support on the upside. So that buying is evident, but we are off the high point of the day. In fact, let's pull up the mid-cap index as well as the small-cap index as well, because this breadth looks good, ladies and gentlemen, but it is actually weaker than it has been through the session, right? So the mid-cap index up about 0.75%, small-cap index only about 0.4%.
And you can see that breadth, right? Where you've come off from the day's highest levels in terms of your broader markets, which is telling you that sustainability is not there.
In fact, let's pull up the advanced decline ratio, Hiral. The point that you're making, it's very evident in the narrowing of that ratio.
I mean, from we started off at what, 2,250 stocks advancing, it's come down to 1,725.
Yeah.
And this is the problem.
Yeah.
This is what we need to take into consideration with a pinch of salt.
Absolutely. Pull up the heat map for the Nifty 50, because in the morning you had pretty much the entire screen that was green. That is still largely the case, but the green actually flowed all the way down to the bottom of the screen as well. That isn't the case right now. HDFC Bank continues to languish after that 5% hit that it took yesterday, a further 2% drop today, and the metal counters under pressure. This was expected to take place on account of the reduction that you've seen in global commodity prices here.
But with that, brokerages are absolutely firm when it comes to metals, and you're seeing that impact on what a JSW Steel, Tata Steel, Coal India. In fact, I think it's a Macquarie note where they are saying correction should be used as an opportunity to add in terms of metals. Absolutely evident in terms of the screen. IT companies are also bucking the trend to some extent in today's session on the back of the Accenture upping its guidance, and little bit of safe haven space coming in when it comes to pharma, because that is one sector which is still resilient in terms of geopolitical action. So Sun Pharma, Dr. Reddy's, and all of them are beneficiaries of the patent expiry when it comes to semaglutide.
Yeah, absolutely. Reliance Industries is also gaining about 2.8%, lending quite a bit of support to the benchmark Nifty 50. In fact, very quickly, let's also pull up the contributors in a Nifty 50. I would hazard a guess to say that the declines by HDFC Bank are in fact being supported completely by, it's a tale of two heavyweights today pulling in completely different directions. And so as a result of which, there is a balance here. But this green, where pretty much the entire screen is actually gaining, is where there is benefit. Lastly, let's also pull up the sectoral indices, and you will see that there is quite a bit of green here as well. In fact, there was no red on the screen in the morning, but now you have a few sectors that have fallen. Defense has actually fallen quite a bit, but you have PSU banks, you have IT that's up and about 1.5% higher at this moment, so it's a decent picture.
And real estate, it's the second level play when it comes to the impact of the Strait of Hormuz, and I think that's why you're seeing little pressure coming in here as well. And very quickly, NSE 500 components, if we can just get those on the screens, because that will, they will also tell us some story in terms of what's happening in terms of broader markets. Let's just quickly pull up the broader markets right now and see what's happening on that front in terms of, there you go, KIOCL, Escorts, Beercrop, Lloyds Metals, a whole host of numbers coming in there. MCX is the one which has been trading under pressure over the last couple of days. GR Infra is seeing some profit bookings, CSB Bank, Nalco, a few names we should be watching out for as well today, Alex.
Absolutely. All right. So there's plenty to talk about. In fact, let me call on Sharad to kick things off. Sharad, walk in. What are we talking about right now?
Well, we are talking about GMDC. That's our stock of the day. And interestingly, Alex had rightly pointed out that this theme is getting impetus from the government. And also, if you look at it, the company has announced a tie-up also with NMDC. Stock a little bit of correction coming from days high, but nevertheless, it is still up 7%. Now, they have signed an MOU with NMDC to explore this rare earth segment. Now, this focus would be coming in to get more rare earth value for the state of Gujarat. The engagement is primarily to explore opportunities in these four key sectors. This includes exploration, mining, processing, and even the beneficiation, basically the entire value chain I'm talking about. But there are some potential industry triggers also, which is very much important. And today itself that announcement has come, so it becomes very important to talk about it. The government is seeking bids for rare earth permanent magnets manufacturing. This is coming in with Ministry of Heavy Industries also invited in this global tendering. They will be setting up a new integrated facility of 6,000 million tons per annum. That's the total setup coming up, and this scheme would be coming under the Sintered Rare Earth Permanent Magnet Scheme. So of course, company announcement is coming strong, and also we can see there is a government impetus, but the company recently announced an MOU with NTPC also for advanced gasification of coal and lignite resources. And let's look at how the stock tracker has been for GMDC this year. Of course, it's not been great, but for 1 year itself, the stock has doubled up, and last 5 years, it's a multi-bagger. Almost 9 times the stock has given returns to the investors. So this is the entire picture for GMDC today.
Okay, so that's with regards to GMDC. We're going to keep talking about this counter with our guests as well. But one stock that has been focused is the HDFC Bank, which is down, and this is on the back of the chairman exiting, and that's what has caused tremors. The stock did see mild reaction, recovery from the day's lowest levels, but continues to trade under pressure today. Let me head across to my colleague, Nisha Podar, who's now going to be in conversation with one of the investors from a mutual fund in HDFC Bank. Nisha, over to you.
Thanks for that, Hiral. Yes, it's a very important discussion because the Indian mutual funds, the domestic investors, hold about 23% stake in HDFC Bank. We have one such investor, Aditya Birla Sun Life Mutual Fund, that has about 8,000 crore rupees worth of shares of HDFC Bank. And let me also welcome on the show A. Bala Subramaniam. Bala, it's always a pleasure to welcome you on NDTV Profit. My first question, after the kind of stock sale that we saw yesterday of 5%, today also, while the market is still up, there is no buying seen in HDFC Bank. Does the worry really persist despite the market as well as the management really putting out a lot of words of confidence to allay the fears? Bala, can you hear me?
Thanks for having me on the show. As I put it,
please go ahead. All right, so we are going to be in conversation with Bala on the investment in HDFC Bank through various mutual funds of, Aditya Birla mutual funds. And also remember that a huge amount of FII investments are also there. So the stock has been down for quite a while. So Hiral and Alex, you can take it forward.
Absolutely. Thanks so much, Nisha, for that. Of course, we'll get you that conversation once we get a clearer line. We're joined at this moment by Deepan Mehta, founder and director at Elixir Equities, as well as Kunal Shah, senior technical and derivative analyst at Mide Asset Sher Khan. Kunal, I'll come to you first on what the technical setup is heading into the weekend. There is green on the screen, but we've come off the high point of the day. The question is, what is leading to this? Is it short covering that is coming to play, where people are heading into the weekend with reducing their positions, and therefore is this sustainable in your opinion, or would you take your profits off the table right now if you have any?
Good afternoon, Alex. Good afternoon to everyone. See, I think, Alex, last time when we met, I think we had discussed that there is one more leg which is left on the Nifty index on the downside. And that pullback, what we had got, should be utilized as an opportunity again to exit. And there we will see another leg on the downside. And that's how it has exactly played out. And we expected this on the downside because Nifty has a 61.8% retracement at 22,700 mark of the entire rally which started earlier. So that is where we expected Nifty to somewhere halt around. So still maybe 300, 400 points downside that could be left into the markets. Whether we stop at 22,700 or we stop at 22,500, it's difficult to predict the exact level of bottom. But I think from those levels, then you will see some buying interest coming in. So currently still the volatility is likely to be there. More downside is still left into the markets. Till the time, from a short-term perspective, 23,500 is not taken out on the upside. The view continues to remain as a sell-on price mode for the Nifty index. Now, for the Bank Nifty, again, it has been trading at a very critical zone of 53,500. That was saved in yesterday's trading session. Again, today we are back towards 53,500. And again, if we have a say a gap down opening on Monday, then probably this critical support zone will be breached, and then probably Bank Nifty will be heading towards 52,500 or so on the downside. So again, we are somewhere close to the panic bottom. At what level that panic bottom will be made is something to be watched out for. But overall, still some downside is left on both the Nifty and the Bank Nifty index.
Got it. Okay. But Kunal, individual stocks that you're looking at in this market at this moment, are there opportunities still, or would you go short at this moment?
See, I think there are opportunities both for the long side as well as on the short side as well. So firstly, I will discuss the ideas where I think some downside is still left into the stock. So over here, my pick from where the momentum has been absolutely lost is Voltas. Again, the entire rally, what we had got, we have even breached the 78.6% retracement of the stock. So again, further downside, the gap has been filled. So we expect further downside to continue over here. 1329 is where it is currently trading. One can sell this with a stop of 1360, looking for targets of 1300 to 1280 on the downside. So that's a sell for me at the current levels. From the buy side, I think power as a sector continues to remain on the positive side, and that is where you can see the momentum getting built up. Over here, again, I continue to be positive on Coal India as well. Again, a high top, high bottom formation clearly on the charts, and we are seeing strength at every dips. 459, 460 is a very strong support zone now on the downside. I'm expecting the stock to go towards 480, 484 in the short term.
Okay, so that's with regards to where, the topics that do come in. Let's talk about a GMTC. Sharad did get us an entire lowdown in terms of why GMTC is gaining in trade on the back of the rare earth mining bids that could be coming in. The stock has corrected from the day's highs, but still seeing gains of 7%. How are you looking at GMTC on the charts? You're on mute.
Kunal, if you can hear us.
Yeah. See, I think overall for GMDC, I think the structure is quite positive. Volume-based buying has been seen. The stock had been consolidating in a broad range, and now finally we have got a breakout on the stock. On the upside, 567, 568 was the resistance zone, and we are trading above that 571. So I'm expecting again further momentum to get built up into the stock in the next week, and probably the stock can go towards 625, 630 on the upside.
Okay, so that's with regards to where GMTC goes. In fact, let's also get in Deepan Mehta. Deepan, welcome to the show. Always a pleasure to speak to you. My question coming to you is, the last 3 days have been pretty strong, but there is still that cautiousness that prevails. How is the sentiment according to you looking like? Because biggest of the biggest news that have come in with regards to HDFC in terms of yesterday's session. How are you, I mean, what is the mood like according to you?
Yeah, good afternoon, and thank you for having me on your show. The mood is very, very uncertain, and people are extremely nervous over here. And what I gather is that this is not something that we have seen in a long, long time in the market, where there's a real and actual fear that the entire energy market can get completely disrupted. Now, what we have is assurances that the oil infrastructure in the Middle East won't be harmed. But if any of the parties involved, and there are now many parties involved, if they start attacking each other's oil infrastructure, then the entire energy market can get disrupted for several quarters, if not years. And that would mean persistently high energy prices for an extended period of time, dragging the entire world economy, India included, into inflationary zone and slow growth. So you would have a stagflation period. So that is really the risk. And all that the investors and the professional traders are watching is what is going to happen to the oil infrastructure. See, we all understand eventually this war will end, oil prices will correct, and there will be peace. It always happens like that. But what is the status of the oil infrastructure is the key question. So in one word, if I have to answer your question, it is nervousness.
Specific stories have also emerged, Dipan, and good afternoon to you, Alex, here, over the course of this week. And perhaps the biggest of them is HDFC Bank. And the way that it cracked yesterday, the scuttle that the management had to undertake in order to douse a fire that was created with the exit of the chairman. And the stock is under pressure, one of the top losers in trade today as well. What did you make of this entire, now I guess we can call it a saga, even though it's been a couple of days? Do you still have questions about what the chairman raised in his resignation letter?
No, none at all. I started my career in HDFC, also was born on almost the same period. And in the 32 years or so that they've been around, there's never been a single controversy around HDFC Bank or HDFC group companies. They are the epitome of corporate governance standard within India and globally as well. So I don't think for a minute that this is going to be any issue with the chairman resigning. It's more of an internal tussle the way I look at it. So I'm not bothered. If you're an HDFC Bank fan, I'm not, then this is no reason for you to sell the stock. And if you're anyway thinking of buying it, then this is a good opportunity to buy into it. But I have my reservations on the fundamentals of the entire private sector banking industry, which of course you can discuss. But from this particular event point of view, I don't think it's a risk factor or a concern at all.
You know, you've given both sides of the coin right now. Good entry levels for someone who likes a HDFC Bank. But fundamentally, when you say you are seeing some concerns when it comes to the private banks versus the PSUs, what would that look like?
So in my opinion, the entire banking industry is becoming or has become a red ocean. And what was the situation earlier was that the private sector banks were really growing market share and gaining access, setting up new branches, extending their entire network and advances aggressively because there was no competition from PSU banks. But lately, last 2-3 years, PSU banks have become well capitalized. They have provided for all their NPAs. Now the NPAs of the PSU banks are lower or equal to the bluest of the blue chip private banks. And if you see last 2-3, maybe 4-5 quarters also, their inherent growth rates, be it advances or deposits, is far better or equal to the private bank, and yet they're trading at a huge discount. So what we are seeing is a resurgence of a very large segment within the banking industry back into the banking business in full stream. And that's going to cause pressure on margins. So I think that you may have cyclical rallies from time to time, but medium to long term, I'm quite circumspect on the entire banking industry because these kind of NIMs are just not sustainable. Globally, they're amongst the highest. And on the whole, when they are grappling with low cost deposits as these banks have, and mind you, there's a huge competition coming from the capital market also for the savings that these banks are going after. So the whole picture looks very, very muddled for the banking industry. So medium to long term, I would be very careful. In any case, with 37% type of a weightage in Sensex and Nifty for the financials, that in itself suggests a high degree of over ownership. And these kind of high concentrations, they may last for some time, but in the long run, such highly concentrated sectors will underperform, as history has shown.
Okay. All right. So even while you were talking about that, Dipin, the equity markets coming off the high point of the day. In fact, the Nifty 50 now trading with cuts of about 1% from the high point. Now with gains of just about 97 points, the Nifty Bank having slipped just about into the red, dropping about 1.8% from the high point of the day. And quite a bit of this pressure coming through on account of the private banks as well. So broader markets as well cooling off, just by the way. You have the mid-cap index that's trading with gains of just about 0.5%. The small-cap index now up just about 0.25% or so. The question though is, what are the dealing room checks suggesting? Because you're heading into a weekend in a volatile, uncertain scenario. Somit Sarkar joining in to tell you about what the chatter from the dealing rooms is in Heard on the Street. Somit, what are you picking up?
Yes, yet another volatile week is what we are seeing here, and this could be the fourth consecutive week where Nifty could end in red. And one thing that I can tell you for sure is that no one is carrying any large positions over the weekend this time around as well. Few stocks that dealers have highlighted, LTI Mindtree. Now, if you look at this counter specifically, even when the IT index at the start of the trade was on a higher note, LTI Mindtree was trading lower. Now, there are sell flows on the institutional desk, and dealers have specifically highlighted here that the initial estimates for the fourth quarter are suggesting a weak growth for LTI Mindtree, and that was the main reason why LTI Mindtree was under pressure right from the start of the trading session today. When it comes to HCL Tech, the stock has come off from the day's highest point. Dealers are indicating that there are some sell flows on the hedge fund desk that they are seeing at higher levels in trade. For SRF, the stock might be trading in red today, but there are some buy flows on the lower levels on the large HNI desk is what dealers have highlighted, and this is largely because dealers indicate that the prices of R32, which is one of the main gas that SRF sells, the price of this in the domestic market has been on an increasing trend, and this should benefit the company going forward. For Cello World, there's a buzz that the promoter has already appointed bankers and is looking to sell a part of its stake. Now they own around 75% stake. They might sell around 50% of this, and a clutch of PE investors have shown interest. And despite this weakness that we are seeing overall in the market yesterday and today, this is one stock that has been gaining in trade. And lastly, when it comes to Tata Power, the stock opened on a higher note given the positive news flow that we had seen on Mundra, but there are sell flows that are coming in on large HNI desk at the higher levels, and this is because dealers believe that all the positives are largely priced in. Despite the weakness that we have seen on a month-to-date basis in market, Tata Power is one counter which has managed to gain, and positive now seems to be priced in, and hence this sell flows coming in at higher levels.
Got it. Interesting set of stocks as usual, Somit. And Tata Power in particular, we spoke with the management this morning when the announcement came through, and they said that a significant amount of cash that was being burnt in this particular facility will now move to the positive side heading into the next week and then therefore the first quarter. But in the real estate space, we've been looking at this as well. There are implications that have come through from the Middle East crisis, and first and foremost, it is impacting certain components that are required for the setting up of houses, the construction of houses. You heard just a short while back that there was a stoppage in the manufacturing of ceramic tiles. But Ridhima has got us a ground check on whether or not realtors are using force majeure. Have they started doing that yet? Listen in.
Real estate industry margins could see a hit by 5% as per the real estate builders. Now this is mainly due to the construction costs which have risen by 10 to 15% due to the Middle East conflict. And not just this, builders could also seek a force majeure if the disruption lasts longer. Now let's understand that why the real estate sector is so hit. This is mainly due to the tile production which has halted, especially in the Morbi factory in Gujarat, which supplies around 89% of the tiles for India. Due to this, the tile supply has reduced and the price of tiles has increased by over 20%. Not just this, the prices of aluminium, steel and also the crude have risen, which has led to the increase in the transport costs. If we just talk about March, aluminium costs have risen by 4%, steel by 9% and crude oil prices have surged by 48%. So what are the companies doing right now? So the real estate companies for now have decided to absorb the shock and not pass it on to the customers. They are also contemplating to seek government help, mainly for the extension of timelines for the real estate projects. But if the disruption lasts for longer, they are likely to pass it on to the customers, which could lead to rise in the real estate prices.
Okay, thank you, Radiba, for that, because this gives a lot of perspective in terms of what's happening on the supply side, what could potentially happen on the demand side as well. But who better than Dhaval Ajmera, Director Ajmera Realty and Infra, who could come and explain this to us. Dhaval, you've come to speak to us at a time where markets are seeing a correction. You've seen Bank Nifty, which is at the low. You have the real estate index also, which is aiding the markets to actually hit the bottom right now. What is the sense that you're picking up with regards to a mood check, if you have to look at that aspect on the back of the impact of the war? Because I don't think so anyone really thought in their minds that a war globally could probably impact a sector like yours.
Well, Ridhima, the whole thing is that
Dhaval Hiral.
Sorry, Hiral. What we see is, the real estate market today obviously is on at least over the last 1 week, what we've been observing is a lot of transactions are looking on a cautious mode. I would not say that transactions are not happening, but definitely, and it is given so with the way the things are moving across the world, things have been on a cautious mode. And I mean, yes, the cost has temporarily currently increased, and I just hope that this is a temporary phenomena and not a permanent one, or not a long-term one, at least I would say, which will lead to the rise in cost if it is going in a longer way, or also if it is coming to a force majeure, if the supplies start hitting in. Developers have started to put their stocks in place in terms of all their products which have to be delivered, etc. But they can only stock in trade only little bit of whatever that is possible, but not everything. So I mean, there is a lot of crisis management which is happening right now, but and not in a negative way, but to ensure that the developments happen in a smoother way and not just on a panic mode. So that's what I currently see right now. But honestly, we need to wait and watch for a few more days the way things move up in at least in the Gulf region.
Dhaval, hi, good afternoon. Alex here. Just trying to understand from a legal standpoint, right? And you obviously study the RERA provisions much closer than all of us. So you'll be able to tell us how this will work. There are guidelines with regard to delivery on a particular schedule, and there is compensation that needs to be provided by a realtor in the event that this is not met. But these are not situations that anyone would have anticipated. So I'm trying to understand whether the law provides for force majeure situations, what are the preconditions that need to be met, and whether or not real estate companies will likely have to use force majeure if this persists for longer than expected.
Honestly, it's a little too early in the day to say that. But yes, if this continues, in my opinion, for 2 or 3 months, then definitely the projects which are nearing completion or coming to completion over the next 6 to 8 months' time will be affected with the supply coming in, and the inventory will start not being able to deliver because of the supply of material. So force majeure will have to come in place, and it will come into effect. But frankly, I'm crossing fingers and hoping that this situation doesn't arise. But as of now, I don't think there is like a force majeure which anyone can impact. But it has to be observed over the next 2 to 3 months if this continues.
Well, a quick response to this. What is the chatter with the demand situation from the NRIs? Are you seeing that demand come back even if the domestic demand remains weak for some reason?
My assessment, at least, and a lot of us in the industry feel that the NRI market will play a significant role in the next 1 year or so. and with the way Indian economy is growing and being resilient to a lot of extent in this current situation as well, I think there will be a lot of investments coming in from NRI in the next 1 year.
Dhaval, thanks so much for that mood check, for joining us and explaining the situation. Wish you all the best.
Thank you.
Dipan, coming to you on the real estate space, there are various angles here to talk about and unpack, right? This obviously is a disruption that they're facing, like several other industries are facing. So what is your opinion on what you've seen in the quarters running up to today? Do you like real estate as a sector, or do you not?
First of all, no, real estate underperformed for the last 2 years or so. And whenever a sector which is vibrant as real estate is, and where there is generally good demand, I would say good dynamics, good underlying fundamentals, and it's still underperforming, one should have a look at it and keep it under close watch, because when the turnaround comes over there, then you could see a retracement of the kind of negative return these companies have given. So generally very positive on real estate. I think what has happened is that they've hit a soft pocket, or kind of an air pocket in a long-term upcycle in the real estate industry per se. And I would say that if you're underweight real estate, keep a watch out for these companies. And our preference would be for companies which also have certain amount of annuity revenues coming in through rentals, like DLF, Prestige, and Oberoi. They all, and to an extent, you can add even Phoenix to that because we operate the malls. So that's a good way to kind of, hedge your bet when the real estate industry per se is down and construction and prices are slightly softer. Then the annuity incomes also tend to chip in and maintain a little less volatility in the earnings. A new way to approach real estate would be through these new companies like Office, which is there, which is like a WeWork kind of a thing, business model, and there's WeWork also, which is listed. So this Office and WeWork are another way to play the real estate industry. They offer to the GCCs and to large MNCs instant office on a shareable basis. You're aware of the business model, and they're expanding aggressively, and there is genuinely a short supply of good quality commercial space. So I would say that there are many ways to play this real estate industry. I would prefer companies like Office Space and WeWorks. Having said that, it's companies in which we are looking to invest as a measure of disclosure. But it's a new way to play the entire sector, and their business model is entirely annuity based, and good growth prospects over there as well, because as I said, shortage of good quality commercial space and great demand coming in from GCCs and a whole host of MNCs looking for flexible workspace.
Okay, so it's the commercial-oriented real estate players that could be in focus. But thank you, Dipan and Kunal, for joining us on the show. Always a pleasure to speak to you. We'll quickly slip into a short break. On the other side, we'll get you an exclusive news break on what can be the import hit for India amid all the rising inflation risks as the war is persisting, the hit that the industries could take. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
A lot of legacy brands are sort of struggling to catch up with the pace of the change that this new generation of consumers are demanding. Add to that a layer of social media where global trends are creating local demands, builds a perfect opportunity for us to probably scale our business, our mission 10x from here.
For those who are not familiar with what Urban Platter is, how do you describe the company and what it does?
We are a specialty food company. Our mission is to make specialty and gourmet food available, affordable and accessible to everyone.
How do you then stumble upon food as a space that you want to be in?
I used to just cook on the weekends and stuff like that. And sometimes when you want to buy an ingredient, have a certain quality of experience at home. It used to be a matter of struggle all the time.
2021 is when, Hari Bhartiya comes on, Jubilant comes on. That's a mega brand. but no investor activity since then.
In 21, we were very busy serving to the frenzy of COVID buying that was happening.
Yeah, there was a time when everyone wanted to become a master chef at home.
One thing I've learned is money is an accelerator. There were a few things that we were not necessarily very good at, and we did go in the red for 2 years. We were very bad at understanding finances and managing money.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
Delhi, the Greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro app, the course of
Welcome back. You're watching India Market Close, and as we speak right now, you have the equity markets that have given up some amount of gains. They're trading with gains of about 125, 126 odd points for the Nifty 50, up about 0.6%. So it's a bit of chop and churn heading into the end of the week. But of course, everything is centering around this geopolitical crisis in West Asia. As the war a crisis continues to remain in focus, the Director General of Shipping estimates an annualized impact of 30,000 to 50,000 crore rupees in additional import bills if the crude level remains where it is right now, above $100 per barrel. Rishabh joining in with more exclusive details of what he's picked up. Rishabh, over to you.
Absolutely, Alex. What we're picking up is the first sort of an official assessment of this war on India's macroeconomics. What we're picking up essentially is that the DG Shipping is set to make a presentation to the Cabinet Secretariat very, very soon. And what this will have, it will have details of all the sort of implications that it holds for India. The first one being, of course, the 30 to 50,000 crore worth of additional import bill burden that India will have to face. That is, of course, a result of heightened crude levels. What we're seeing also is the fact that there is a trade deficit that could see a widening of $5 to $10 billion quarterly if the current situation continues. Another part of this assessment is on inflation. Now, wholesale price inflation could see a rise of up to 0.3 to 0.7%, while India's exports, a number that the government wants it to reach about $1 trillion for every year, goods and services included, that could see a degrowth of about 2 to 4%. Now, the logistics cost as a percentage of GDP, that is something that every country wants endeavors to sort of bring it down as low as possible for ease of doing business. That number could see a temporary spike of from about 13 to 14% currently to 14 to 15%. So those are a few assessments that the DG Shipping has made and will present to the Cabinet Secretariat very soon. What they've also said is that over the next 3 months. As a result of this, there will be broader macroeconomic pressures. Also, if this is a prolonged disruption, it could have material economic consequences. That's what the DG Shipping has said.
Thank you, Rishabh, for that, because these are big macro numbers that one needs to watch out for in terms of the impact, and it is seeming to be slightly on a downhill now. Let me also get in our guests to discuss more on this. We have Richard Jain from Motilal Oswal joining in, and we have Sunny Agarwal as well from SBI Cap Securities. Sunny and Richard, welcome to the show. Sunny, let me come to you. We are talking about an annualized impact of what, 30,000 to 50,000 odd crores right now on the back of the war. They're saying that the trade deficit could widen to the tune of almost $5 to $10 billion on a quarterly basis in the short term. Inflation could rise, exports could see a hit of around 2 to 4%, and logistic costs could see an increase of around 14 to 15%. Culmination of this impact on the markets, according to you?
Yeah, first of all, very good afternoon to everyone. I think in case this war prolonged for a kind of 2-3 months, and in case the crude prices continue to hover about $100 for a quarter or more, then definitely all the impact which you have just recently alluded to will definitely play out. And I think markets are already penciling those numbers and have discounted all this negative factor, and that is the reason we have seen a very sharp correction post this eruption of war on 20th of Feb. So I think most of the negatives are already in the price. We already know that the narrative as we speak is on a similar line, that since the crude oil prices will continue to remain above $100, then what can be the impact on the rate sensitive? And that is the reason we have seen a very sharp sell-off in all the rate sensitive names, whether it is banking, auto, or for that matter, we are seeing a pressure on USD INR, which is trading at a live low. So I think all those factors are already priced in. That is my understanding. Obviously, going forward over the period of next 2-3 weeks, as the situation plays out, maybe market will change the narrative, and accordingly we can see the impact on the equity markets also.
In fact, it's very interesting to see how the markets are actually recovering from the day's lowest levels as we speak right now. Just pull up Nifty 50 on the screens as well. That mild recovery that has come in right now. Let's just pull up Bank Nifty and we'll see the broader markets as well, if that recovery is mirroring there. Bank Nifty absolutely mirroring the charts in terms of Nifty 50. Mid cap and small cap index as well is what we should be watching out for. Not much there, but you are seeing that little hope that comes in, Alex, as we speak.
Yeah, absolutely. Now with gains of 0.75%, at least for the frontline stocks, you're seeing a little bit of a comeback from the low point of the day, about 0.6% or so. Let me go across to Ruchit Jain, just to get a sense of how things stand right now on the technicals as well. Ruchit, good afternoon to you. And would you bet on this spurt that you're seeing, or would you say that it's more likely to be called a flash in the pan later on?
Yeah, hi, very good afternoon to everyone. Well, last 1.5 months when the markets have corrected, the data because of which the markets witnessed this correction, to name 3 or 4 points, one is the geopolitical tensions which have risen consistently. FIs have been consistent seller. You can see this month's FIs selling figures in the cash segment is one of the highest of the recent times when they have been sellers in last 8 to 10 months. USD INR has depreciated. In fact, today also the INR is trading at its all-time low level. And Brent crude, which has seen a sharp up move and is still trading above the 100 levels. So these are the various factors which directly impacts the equity markets, and they all have not been in favor of the markets. So I think rather than watching these minor pullbacks, I would rather wait for the data to change. Any of these data, if changes, either geopolitical news flows turn a bit positive, or FI stop selling, or INR appreciates, or Brent crude goes below 100, then only I would take this as more sustainable pullback move or an up move. So till then, I think it's better not to trade in such pullback moves and rather wait for the data to change rather than trying to bottom fish where the bottom then Nifty would make.
Yeah, staying on the sidelines is a completely legitimate and completely understandable strategy at this moment. Meanwhile, let's talk about two aspects. One, Brent crude, and 2 rupee. They are tied after all, because Brent crude once again is heading towards that 110 mark. It's something that has been incredibly volatile, understandably so, as infrastructure in the West Asia region has been targeted in the latest round of attacks. Now, the rupee, of course, has hit a new low. It has blitzed past 93, in fact, heading towards 93.5 right now. Jayesh Mehta, Vice Chairman and CEO of DSP Finance, joining us right now to make sense of how things have gotten to this point. Jayesh, thanks so much for taking the time. And somebody tuning in right now would be wondering, where's this going to end? And where's this going to go? Do you have a sense at this point, or at what level will there be a semblance of at least not normalcy, but where will this stop?
I think very difficult to put a number, very difficult to put any semblance, because we don't know, right? Like we did see some sell-off also right now because of the weekend risk and stuff like that, right? I think till we get some clarity on what happens to the Middle East, what happens to the crude oil prices, like the previous speaker said, that we are moving to 110 again. Who knows, like, where are we moving in next few days, right? So it's very, very uncertain there. And let's be very clear with India particularly, Asia and India particularly, very sensitive to crude prices. And therefore, that is going to, every increase is going to hurt both equity market and the currency market, right? So that is kind of a little bit painful there. And at the same time, even before the war started, we had a continuous outflow of FPI, and that is still remaining continuously. And I think we are not doing anything major. And to top it up, we had HDFC Bank issue yesterday, and that is also further not helping the equity market and at the same time the currency market.
Right. I mean, Jayesh, everything, I think things are going downhill to some extent. My question to you is, a colleague of ours just got us an exclusive story where the DG Shipping is saying that he's estimating the annualized impact of almost 30,000 to 50,000 odd crores if crude levels stays at current levels, on the back of which the trade deficit could widen by almost $5 to $10 billion in the quarterly basis. And the the WPI inflation could hit 0.3 to 0.7%. Now, if you have to look at this aspect, do you think the rupee will continue to further depreciate if these are the numbers that are coming to the forefront now?
So right now, yes, we need a definitive pullback for crude to come off, and that is definitely weighing back a lot on the rupee. And at least till the time it kind of stabilizes, say below 100 or something, we are going to see pain. As you see, like with every tick, people are going to react. There is a limit which a central bank can do when it is not the Middle East event is not in their control. So beyond a point, they also cannot heavily intervene, right? They will intervene when there is something which is within their control, right? Or something which is not to impact them and people are reacting. But this is definitely impacting the country as a whole. If the price remains the same for next 3 to 4 months, then why only India, right? Global GDP growth will also slow down. I think there's a lot of impact going to happen globally, and therefore flows. I think for us, the equity flows are important equally. And without getting that flows, we will have a net outflow. So because of the higher oil prices, so that's not a good situation to be. We can be always hopeful and wishful thinking that with the positive statements and all that, hopefully this next 1-2 weeks, if that a little bit clears off, crude get controlled. We still then have another issue of FPI selling continuously, and that needs to be really, really looked into it in detail. It is not just valuation and FPI selling, right? It is like we have to look further detail into the gross numbers of FPI.
Yeah, it's a good point, Jayesh. Thanks so much for joining in, and pleasure speaking with you as always. All right, let's talk about a related piece, because this entire disruption in supply chains is affecting sectors differently. And for example, India's basmati rice exports are facing pressure as freight rates have surged sharply amid ongoing disruptions. And Nimit has this report on what exactly the sector as a whole is facing. Listen in.
yes, Indian rice is in the pressure cooker. That is the Middle East conflict right now. Exporters tell me that rising freight charges, logistics and shipping cost, as well as non-availability of containers increases prices abroad and reduce prices in India. Let's talk about the exports first. In India's shipment to the Middle East, especially for basmati rice, India Gate producer KRBL says is the cornerstone of the Indian shipping industry. 70% of India's basmati goes to the Middle East. Now, a $13 billion industry of rice exports, about 3 to 4 billion of that is basmati, and 70% of that goes to the Middle East, which is a big chunk. Now, Amir Chand's rice exporters, they run under the brand Aeroplane. They're going to list next week on the Indian Stock Exchange. Tell us that freight charges have gone up from $600 to $1,200, a 2x increase in what they used to be, which is adding about $50 a ton on rice exports, and a cost increase overall about 5%, which is substantial in a low margin industry. On domestic prices, Grant Thornton's experts tell us that domestic prices, because of non-availability of supply containers outside, is seeing more internal supply of rice, which means that rice prices in India have gone down by about 10%. Again, in where margins are low, this could mean a substantial impact drop, and costs will likely be absorbed by these companies themselves. Now, all of them say, especially KRBL, that they're in touch with their regional partners abroad, and the government, in fact, needs to step in, is something that Grant Thornton's experts are saying, that there needs to be a body that needs to look at these prices, control maybe how it's being moved, so that the pressures need not be absorbed, especially in the case where this war goes on for a longer period of time.
I mean, thank you, Nimit, for that. You know, in fact, though, in spite of all of this, you have the rice companies which are trading in the positive as well. Kunal, let me come to you with regards to where rice exporters are concerned. Except LT Foods, everything else is down and about in trade. Ruchit, what are charts indicating? What would you advise investors to do?
I think it's more because of these global news flows, what we have witnessed, the recent price action. But overall, if we look at the positional structure, then still it does not seem that we would see any kind of big run-up move from current levels as well. So I think some consolidation or some corrective phase could be there for next for in the short term. As far as LT Foods are there, I think 340, 330 remains a very crucial mid to long-term support. So in case in any dip, if the stock dips towards that 340, 350, 330 range, then the risk-reward ratio could become favorable to take some counter trades. But at current levels, I would just advise to keep a wait-and-watch approach.
Wait-and-watch approach when it comes to charts, when you talk about rice companies. In fact, earlier today, Mahima spoke to Rajiv Sethia, Joint Managing Director and CFO at Chamanlal Sethia Exports, and Sanjay Gupta, treasurers at All India Rice Export Association, to understand the impact. Let's listen into that conversation.
We are now joined by Rajiv Sethia, the Joint Managing Director and CFO at Chamanlal Sethia Exports, and Sanjay Gupta, Treasurer at All India Rice Export Association, joining us now. Welcome to both of you, gentlemen. Rajiv, I'll take up the first question with you. This entire freight rate surge which has happened, 100% surge is what we are seeing. How does this impact your business?
Admittedly, it is affecting the business because suddenly the ocean freights are going up, war surcharges are being implied. So there is advisory from the government also not to cheat exporters, but some people are still trying to take advantage of this tough situation. I'm talking about shipping guys. But a good handholding has come from the government. About 500 crore has been earmarked to mitigate the losses in these respects. And the mandate is given to ECGC. They have deep knowledge about exports. So let's see what happens, because the voyage are stopped. It's a tough time. So we as a company are relying on US, Canada, New Zealand. We have Africa market. We have Far East markets. Everywhere we are doing. Because we had limited business for Middle East. So we are not hit in the way too much.
Rajiv, when you say limited, can you give us a percentage of your exports to the Middle East as a whole?
Is maximum 20% to Middle East. Rest is
Got it.
we
So,
have-
okay. So 20% is also huge, Rajiv. Just want to understand that if this continues, what is the kind of impact that you'll be seeing on your top line as well as bottom line? Just a rough view, you might have done some internal calculations.
Yeah, some effect will definitely come on the top line, at least 10 to 15% can come.
Got it.
Uh,
Got
yeah.
it. Okay. Sanjay, coming to you. Recently, the Rice Exporters Federation did announce that, they did given a, advisory statement telling exporters that, try to stop using the CIF mode and try using the FOB mode instead of for the exports going forward. Your entire view on this entire West Asia crisis, how is it, impacting the entire industry? And if you have any request that, this should be the course of action that the government must do, what would that be?
Actually, I must tell you that 80% of the basmati rice is exported only to the Middle East. Okay, so rice industry is the most affected industry, like in this condition, in these war conditions. Okay, as you said, we also convey the messages to our buyers that convert this business from CIF to FOB. But this is not a solution of the problem. The problem is this: right now we are losing the huge amount of the money because our money is got stuck over there. Our shipment is also got stuck over there. Today the shipping lines, they are asking minimum $2,000 to $2,500 per container extra war risk surcharges from us. It's a huge, like if we export it to UAE, it was like $200 freight. Now today we forced to pay $2,500, $2,600 freight. This is the main problem in our industry right now. And as you know, as everybody know, that 80% of the basmati rice is exported only to the Middle East. And from this 80%, 50% is rice going through the Strait of Hormuz, where is the main problem is happened. So, that yesterday the government, DGFT, Commerce Ministry, they announced some relief for us to give another 500 crore rupees package through ECGC to settle down this extra cost to us. But still, they are it's not enough for us because we have to pay extra damages charges, extra storage charges, extra detention charges to the shipping lines. And the shipping lines people, they are asking for anything. They are not given the clear picture to us for what kind of the charges they are asking from us. They are just say, if you want to be offload your containers, okay, you should pay like this. And our buyers, some of the buyers, those people, they need the rice at time. They are ready to pay. But 50% of the buyers, they are not ready. They said, we will wait because it's also not competitive for us in their local markets also.
Okay.
This is
Okay, all right. So that's the management of two companies talking about the implications of what is happening with freight rates and the fact that there will be an impact. Sunny, you were listening to that conversation. If you were to talk about some of these exporters, not just the rice exporters, this is not something that seems to be getting settled very quickly. So if that does remain the case, and at this point we have to draw hypotheses, that's all we can do. So how would you treat this if this is in your portfolio? Do you take the hit, or do you think that there's a good reason for you to exit at this point and maybe consider it down the line when things get better?
I think maybe second option is a better option. As I was hearing to the conversation, there is a substantial rise in a freight, and at the same time, demand is something which is not being there at such a higher price. So obviously, right now there is likely to be a temporary disruption. And earlier instances where we have seen the similar crisis playing out during the Red Sea crisis, we have seen a significant hit on the margins of all these exporter, which include the rice businesses. Also, the KRBL, I remember during the Red Sea crisis, got impacted significantly due to the shipment getting stuck and extraordinary or obnoxious increase in the sea freight rate. So I think makes sense if somebody is holding this stock in his or her portfolio, should continue to hold. But if somebody want to deploy fresh capital, better to wait and watch. And if somebody is a trader, better to exit and reconsider the position at lower levels.
Very quickly, we have HPCL which has gone ahead and hiked prices as well, and this is of premium petrol which came in some time back. What does this actually tell you, Sunny, when it comes to a potential price hike that could be in the offing as well? I know premium petrol is not controlled by the government. It's mainly, normal petrol which is controlled. But do you think this could be a precursor?
Yeah, I think again for all the OMCs, most of the negatives are already in the price. We have seen a very sharp correction, and in fact, it is penciling that quarter one of FY27 can be a loss-making quarter for all the oil marketing companies, and that is the reason we have seen a very sharp correction in the entire oil marketing companies, including HPCL. The recent price hike on a premium portfolio definitely again a surprise ahead of, especially in the backdrop of state elections which are likely to scheduled next month in the month of April. So I think maybe for next 1 month we may not see any price hike ahead of state election on a normal petrol or diesel prices. Post announcement of results on 4th of May, again we may see some action from the government in case the crude oil continue to sustain about $100. So it seems that again, the clear trajectory is that quarter one is likely to be on a weaker footing for all the oil marketing company. But most of the negatives are in the price. Maybe for a fresh accumulation, better to wait for a few more weeks, let the things settle down around the crude oil prices, and then that will be the right time to buy from a medium to long term perspective. Short term, definitely everything is discounted.
Got it. All right. Again, let's take a check on a manufacturing sector that has been bearing the brunt of frenetic selling in the recent past. It might have bounced back a little bit. Pull up the auto index and see what it's doing today. It was one of the worst hit yesterday. It has bounced back to the extent of 1%, but there is an implication. For example, with LPG being used for drying of paint, and that's only one instance, but there's also commodity prices that come into play. Let's bring in Danish to tell you what exactly the situation is for the automotive industry with the disruption in supply chains being caused by the Middle East crisis. Danish, over to you.
The war in West Asia, which has reached the third week, could impact India's automotive sector in the upcoming 4 to 6 weeks. Sources are telling us that as of now, the inventory levels at different auto companies is adequate, and the flow of key raw material is also okay at the moment. But industry fears that if the war does not stop in the upcoming 6 weeks, then it could have a bigger impact on the sector, because we are seeing because of the Strait of Hormuz is shut, it is impacting the key cargo movement, and as well as we are seeing that there is an energy challenge across the globe, and India's auto sector is also dependent on gas, especially commercial LPG for various forms of manufacturing practices. But people in the companies are telling us, as far as Tata Motors is concerned, Tata Motors and Maruti told NDTV Profit that right now the production level is normal. They don't seem any kind of shutdown in any of the manufacturing activities. Similarly, Mahindra also echoed the same response, and they said that they are able to manufacture as per the monthly targets, and as far as sourcing of key raw materials concerned, they are in touch with tier 1 suppliers, and they're trying to work out and they're trying to see that in the future what kind of raw material key components could face some shortage. But if we look at it from a different point of view, in auto industry as of now is completely comfortable. But if the war persists for long, then we can see a major impact on India's automotive sector, as gas, if it is further curtailed by the government of India, then it could hamper the manufacturing process in auto plants. So all in all, if we see, as of now, things are completely normal, but no one knows that what could happen after 4 to 6 weeks if the war persists for long.
Okay, thank you so much, Danish, for that. And this is going to be an interesting conversation. But Ruchit, a quick word in terms of auto, with the pressure that's building in, anything that you like?
I think Nifty Auto Index as a whole has seen a decent time-wise as well as price-wise correction. And since it has recently breached its 200 EMA, the short to medium-term trend still remains on the negative side. I think one exceptional stock which has rallied in spite of this is Ether Energy. I know the stock, if we see, then in spite of the entire sector-wise correction, the stock has managed to show some good momentum on the positive side. After a consolidation phase, the breakout has been seen. So not the traditional auto stocks, but Ether Energy is one stock that one can look at in terms of outperformance.
Got it.
Okay.
All right. Thanks so much, gentlemen, for taking the time and for speaking to us on NDTV Profit. Pleasure having you as always. Winding down, we're looking like we're going to close with some green on the screen, which is always a good thing, but just about 0.5%, significantly off the high point of the day, Hiral, for the broader markets as well. The mid-cap index now only about 0.6% higher. The small-cap index off now 0.5% or thereabouts. Small-cap index just about 1/3% higher. And
in fact,
look at this.
Yes, the advanced decline is going to be very interesting. If you can just pull up the intraday chart of the advanced decline ratio with the way the breadth was panning out, absolutely narrowed down. This is telling you sustainability, as we started off, is a concern. Let's just look at the components in terms of Nifty 50 as well, either the contributors or the components, and that will tell you the story. Still, you know, the reds have increased, but you still have your metals, you still have your IT, which is trading in the positive. RIL, slightly gains have been given up, but you're still trading with gains of 2.5%. Pressure mainly in terms of HDFC Bank, your life insurance companies. SBI has corrected quite a bit, but Kotak Mahindra Bank, Bajaj Finance, a few of the ones. ONGC, with the way crude has panned out, it came off, and that's what put pressure on ONGC as well, Alex.
Yeah, you said it. And these oil sensitives, you've been warned to stay away from them for the short time because of the kind of uncertainty that you've been seeing. Pull up the sectoral indices just very quickly to wrap things up, and you will see that there is a fair bit of green on the screen, but you've given up on a certain amount of ground. Realty ending with...
we started off with cuts of 0.3%.
Yeah,
there it is.
Now with the worst performer on the indices, down about 0.7% for the defense pack as a whole. What's worked is IT. It's ending very close to the high point of the day. So is the PSU banking index, but private banks have been a tad bit weak. It's been an eventful week for the equity markets. Gains for 3 sessions and then wiping out of all of that. And of course, we're ending with gains on the screen once again. The question is what happens over the weekend. And of course, there's a fair bit of uncertainty. We've got lots to talk about. In fact, after this very quick break at the end of this program, we're going to have the editor's cut for you. We're going to discuss several things that have occurred during the week. And we're going to look forward to what is lined up in the next week as well. I'd encourage you to stay tuned for that. From Hiral and myself and the team that put this show together, thank you so much for watching. Do stay tuned. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
A lot of legacy brands are sort of struggling to catch up with the pace of the change that this new generation of consumers are demanding. Add to that a layer of social media where global trends are creating local demands, builds a perfect opportunity for us to probably scale our business, our mission 10x from here.
For those who are not familiar with what Urban Platter is, how do you describe the company and what it does?
We are a specialty food company. Our mission is to make specialty and gourmet food available, affordable and accessible to everyone.
How do you then stumble upon food as a space that you want to be in?
I used to just cook on the weekends and stuff like that. And sometimes when you want to buy an ingredient, have a certain quality of experience at home, it used to be a matter of struggle all the time.
2021 is when, Hari Bhartiya comes on, Jubilant comes on. That's a mega brand. but no investor activity since then.
In 21, we were very busy serving to the frenzy of COVID buying that was happening.
Yeah, there was a time when everyone wanted to become a master chef at home.
One thing I've learned is money is an accelerator. There were a few things that we were not necessarily very good at, and we did go in the red for 2 years. We were very bad at understanding finances and managing money.
Hello and welcome to Editor's Cut, a conversation over the next 25 minutes when we talk to our guest editor and amongst ourselves about what we think are the key talking points of the week gone by and what could lie ahead. And Jakes, thank you so much for joining in, but this is just the second edition of the Editor's Cut and it's a delight to have you in the studios.
Well, thank you. It's a great time in the markets as well. And I say this with actual genuine sort of emotion and sentiment, as it were, that this could well turn out to be a place we look back 6 months from today and say, what a great time to have had a discussion.
Oh,
Would you say this is a precursor to something where people missed the COVID right that time? Because, you know, once COVID was done and dusted, a lot of people were of the opinion that I wish we had invested in markets then.
You know, it's tempting to sort of make comparisons. I think we shouldn't run away from the risks that exist today. And if everything was clear-cut, that is so obvious that it is another COVID, then frankly the markets wouldn't be at these levels. Clearly there is pain. I mean, there is no question about it. I think there are short-term uncertainties which could be pretty tremendous. For instance, everybody is talking about oil.
Yeah.
Everybody is talking about the unpredictability of announcements, if you will. And I await eagerly every morning the WhatsApps that he sends me, which kind of encapsulate the various things that big people around the world say, largely big person around the world says. So I think given those kind of uncertainties, it's never easy to say this is like a COVID. But where I think the comparison ends and where the similarity begins is the fact that stocks have been absolutely pummeled. And you know, this has come through at a time when March, which is usually a difficult period for our markets, liquidity, we've had problems of, all kinds of margin increases that the exchanges have put in, etc. Funding has become a big problem. So the average Jim and Joe on the street, as it were, has actually had to keep selling because the screen is bleeding red in terms of the portfolio. You know, stocks are down 30-40%. Yeah. So now, if you traditionally look back to when great moments are there, they say you must buy when the blood is on the streets. The caveat being, it shouldn't be your blood on the streets.
That's a good line.
You know, so there is blood on the streets. There's no question about it. There is uncertainty which we hadn't baked in, which is this entire Middle East sort of thing. Having said that, maybe we can parse over the next 30 minutes some of the things and say, is it as bad as the screen is making out to be? Because portfolios are down, stocks are hitting 52-week lows with gay abandon, as it were. But I think the important thing here is that value in a number of sectors has emerged. And surprise, surprise, some new sectors have emerged, which is not always the case. And banking, for instance, which was leading the rally right through, is now being hit with the prospects of higher inflation. Are we in for a reset?
Yeah, that's a very good question. But on that subject, right, and Neeraj, we've been having debates through the week. I think very early on, Jake's in the conflict, and Neeraj made the point saying that this does not seem like other scenarios where early on you were seeing those cracks on the screen and red on the screen and people were saying buy the dip, buy the dip. That seems like a natural response. I think we've come to hear that every time there's a sizable drop in the market. But Neeraj was advocating caution at that moment. And I think that it has become a tale of two camps where the bears are being very vociferous in what they're saying and saying, hey, you know what, we told you so, now bear the brunt of what we told you about. And the bulls are saying, you know what, this too will pass. I wonder what everybody on the table thinks and which side of the fence they're on.
So I have a thought here, if I can express, and it was a Pavlovian response of sorts, right? That every single point of time a dip comes in, you go out and buy. But to my mind, all right, I think there is merit, and I would love to know what both of you think, and then what the practitioner Jakes thinks here as well, right? But I think there is merit in respecting the macro cross currents as we speak right now, because this seems slightly different, purely because of the fact that even if growth doesn't collapse in India, and India might still turn out to be Trump's, but the supply chain disruption.
Today he has several puns that are unintended. He was talking about fingers crossed when he was talking about Netanyahu.
But the rate hikes and the supply chain disruptions might hit companies for a lot longer. And today, by the way, we had a couple of corporates who came out and said that, right? They were not. I think the beauty about a conversation, for example, two conversations we had today in the morning, was that the corporates themselves said that we do not want to give out the extent of damage that is there, because I don't think corporates themselves have an idea about this. And yes, I mean, a little bit of cool off today on oil, but it's been as volatile as playing cricket with a rubber ball, right?
So back at 110.
And when you're talking about oil right now, we just thought that probably oil prices or petrol prices will not go up. You have HPCL, which has gone ahead and announced prices of premium petrol, which is paid. I know it's not government controlled, but still that's happened. You have IOC, who's now gone ahead and increased prices of industrial fuel. So you know where we are going now.
Yeah.
And you have the DG Shipping, who's estimating an impact of what? 50,000 odd crores is what Rishabh got for us?
Yeah.
In terms of the entire trade deficit, I think that was the number. So if you're talking about a number of 50,000 crores in terms of impact, initial
Basically,
estimates.
Increase in oil, import bill.
Your import bill, correct? So, I mean, that's telling you where you're going. And is the market pricing this in, is the question I have.
But what is the point that you were making, which is to hold your horses?
Just this last submission here was just this, that because, I mean, it's okay to buy 5% higher, no? Why do you want to necessarily catch the bottom if you're not an N. Jayakumar, who's seen many cycles?
No.
Or anybody for that matter, right, Jakes? I mean, since we talked to the retail investor.
No, I'll tell you what the issue here is. The issue here is that when you say 5%, etc., it almost seems to believe when the knife is falling, you don't know where it's going to stop. So either you say there's going to be a substantially deeper cut, or you say that it doesn't matter whether it's 3 or 5% because prices have come off dramatically. Presumably the 3 to 5% you talk about is not individual stocks but the index. Now the index can overshoot. I mean, today...
No, I was talking about a rise, Jakes. I'm saying when the market rises.
I understand. What I'm trying to say is here, you're saying don't catch the thing. We don't know when the rise happens. 2 days ago we had an 800-point rise. We retraced that entirely. So I think it'll be impossible trying to have individuals pick bottoms in the market. I think we'll have to go down to saying stocks that you like, stocks that you know a little bit about, have read, and where you feel comfortable, you should buy. Because things like, hike in import bill for a short period of time, etc., will pass. The only time when this entire argument fails is if there is an absolute blow up of sorts that oil settles at 150 for the next year, for instance. Now, you can never say never, because this, the world has shown that anything that you say and, you tempt fate to sort of make it happen. But I think because it seems different, people are saying, let's take a different approach. And I put take a slightly longer time frame. There are good businesses. Valuations, for instance, the entire range of solar, wind and sort of green energy stocks, if you will, have come down by 50%. Now, if you like that space at a particular point in time and it is not predicated on import, export incentives and sort of protection against China alone, then some of those become screaming buys. I mean, there are good, solid wind energy companies that are 50% down from peak. That's a lot. Some are down 70, 75%. Because what's happened is the baby and the bathwater have both been thrown out when the margin trading, the MTF book has been the pain point. So while the frontliners still get institutional support, but a lot of the MTF stocks have just been dumped. And therefore people, when they need to pay up differences, the financier isn't waiting. He just goes and dumps the stock if new margins aren't forthcoming. And people haven't been able to come out of margins at this particular point in time. That's why I think a lot of disruptive selling has happened, which is where I think the opportunity might be in some of those stocks. That's number one. Then the second thing is, you have to see the fact that every time in retrospect, it seems, you don't go back to see exactly what happened in COVID that made you, it's just in retrospect, you said it was a great buy. People didn't sort of thump the tables. So I'm saying the way you have to look at it is, if you still believe the India story and you still believe that now valuations have come down, headline numbers have come down a lot. Now, who, for instance, knows that the index doesn't get pummeled by, let's say, an HDFC kind of event? Now, I might have a different take on it, and it's something I'd like to talk about.
I would like to talk about
it. Which I think is absolutely, I want to put on record, I think it's almost unthinkable, unforgivable. And I've tweeted about it on the day that it happened.
You replied to our story as well.
Yeah, which is that I do not believe any outgoing chairman, if he has no ability to substantiate what he says, it's absolutely scurrilous, the fact that he goes out and says things like this, but has no evidence to back it. The next day he comes and says, like a garden variety thing, hey, you know what, I'm actually okay with everything.
In fact,
at the same point, right?
Let me lay that out, because Jakes, believe it or not, before you tweeted, I made the same point on the show before the market started and before the crash happened. Let me just, for everybody who's missed this, I don't know where you've been if you missed this, but I'm going to read this out for you, right? 2 quotes. First one came through in his resignation letter. I'm talking about Atanu Chakraborty. Certain happenings and practices within the bank that I have observed over the last 2 years are not in congruence with my personal values and ethics. This is one cut of what he has said. And then in a conversation with my colleague here on the phone has said, HDFC Bank is an organization I nurtured for 5 years. I am not pointing out to any wrongdoings at the bank. My ideologies did not match with the organization, and hence it was time to part ways. 2 possibilities, gentlemen, and also Hiral, please weigh in. There were real issues, and they need to be investigated, which is problematic because the RBI obviously does regular audits of everything, systems and processes, and has said in a recorded statement was put out that there were no material issues, according to them. Second possibility, that there were no issues, and this is on account of differences and a possible ego battle, in which case, again, an important question needs to be asked, which is, in my opinion, should there be a code of conduct that is put in place, not just for banks, but for large listed companies, systemically important companies, where you need to put in place a code of conduct for anybody at a senior level who's leaving the organization? Because a call was seemingly taken, in my opinion, to burn bridges and cause a little damage while you're going out.
Well, I think you put it euphemistically. You're almost saying it's okay to have said this, provided he could explain. I think it's just absolutely unthinkable that he was there as quote-unquote part-time chairman for 2 years and didn't point out anything while it was going on. And the fact is, I would go to the extent of saying that actually there should be a show cause notice issued to him if the bank has nothing to hide. And that, is, to my mind, is the real issue. This is not, by the way, an ordinary, 1,000 crore mid-cap company where some director is quitting. This is the #1 private sector bank in the country. And I think, as I have actually mentioned, it doesn't behoove somebody of any status, let alone the chairman of the largest private sector bank, to make these motherhood statements about ethics, ideology. He's not running the bank. And my personal feeling is this has done greater damage to India than it has done even to the bank. Because if HDFC Bank can be, and there's no response that comes out which is other than generalities and sort of inanities, if you will, I think there is a real issue. They need to either come out strongly or, as you could see on a day like this, where the market was up and ostensibly HDFC Bank was being switched into Axis, ICICI and SBI. So I think that's a real issue.
Yeah, no, it's an important one also because I wrote it in my column as well, that HDFC Bank, after 3 years of losing the top brand of the country award to TCS, reclaimed it in 2025. 4th time since 2014 that HDFC Bank has been the top brand in India. And for the top brand and the top bank in India to have the chairman questioning the ethics, morality, whatever you call it, just
I think it's terrible use of words. Frankly, if you ask me, coming from the chairman, it's even worse. And I personally believe that there is no way that this should be seen as the last word on the subject.
Absolutely not the last word on the subject, but You know, to my surprise as well, just a quick one on HDFC, the tonality that I heard from the exiting chairman was absolutely very calm, which I was very surprised. For someone who's given out a strong statement like this, for him to be as calm, and in consonance to that, you had the management also, and the board also, who's remained absolutely calm. Absolutely to what you're saying. If there was a statement that was made by the chairman, there should have been something that the board or the management should have, that they
hopefully we'll hear it soon. Hopefully.
And I think this is going to be a time where there will be that overhang on the stock, because one, you have Keki, who's going to be the interim for the next 3 months. After that, you have Shashi, whose renewal comes in play at October. So they will have to make a recommendation for Shashi as well by, say, end of April, May latest. So I think by the time we reach that month of April, this is going to be a major overhang, from a stock perspective, and investors are going to be little dilly-dally when it comes to HDFC.
Well, I'll tell you, going through a blue mood for a stock is like part and parcel of life, if you will. But when you're the industry leader and the number one bank, my own assessment is responses need to be faster. And I think that's the limited point. I don't know the truth. And frankly, at one level, I don't even care. I don't hold the stock and I'm not recommending it to anybody. But I do care for the larger good of the markets and the larger good of the fact that knowing HDFC Bank for the last now 32 years, I believe it's a pretty good bank. It's had its issues, which is a business level, which they will address. But this kind of seemed almost uncalled for.
Uncalled for. One more point I want to take from your conversation is you spoke about stocks which have been beaten down and have hit a 52-week low where there could be opportunities. I was just looking at some data. Oil and gas, 60% of the stocks are at a 52-week low, which is followed by IT. Again, 60% of your IT stocks. FMCG also 60%, and your financial services at 55%. So these are the sectors where you're seeing probably opportunities arise. Would it be easy to say that?
I think you correlated two things. I said there are 52-week stocks that are sort of symptomatic of the issues and the pain that there is. And I said the market there are opportunities to buy.
No, so that's what I'm asking is, are you seeing opportunities there?
No, because I'll tell you. So there could be rallies in stocks that have been beaten up, especially when April comes, new money comes in, there could be a rally, and also markets are oversold. That doesn't necessarily mean that constitutes an important part of your portfolio going forward. So, for instance, I think people moved into IT for a variety of reasons. One is the entire, stable labor arbitrage story. But, dollar rupee 60, 62 to dollar rupee 93 at a bit, their margins haven't increased. Which means that the people they supplied to have constantly eliminated 80 to 90% of the currency gains. And the 10-20% was the kind of pay hikes, etc. that it took. So really the margins have not improved, but people found it a safe place to put what's the index weight of IT is about 11.5%.
11.5%,
On the other hand, another sector which has been doing the same thing, similar balance sheets, largely deleveraged, is the pharma space. And the pharma supplies to, there is competition, they also supply to distributors, but ultimately it's the retail end, and because their pricing is so, on the generic side, so much below the patented equivalent, you actually have a scenario that they've had to pretty much not pass on any of the gains. And suddenly, Euro, for instance, you see some of the top generic guys, they've expanded between 15 and 20%, they've grown in Euro terms. And that currency has moved 25% against the rupee in the last 18 months. So I think pharma, to my mind, is I don't want to say poor man, it's 3.5% of the weight, the index weight, and 70% of that is occupied by one stock, which is Sun. But I think pharma could be the new IT in some senses.
Okay, now we have 4 minutes left. We have to talk about the big elephant in the room, which is geopolitics. So Alex, a minute to you, right? Because you've been looking at this very closely, and then let's get Jake's view on how does he think it shapes up, very quickly.
So I worry that this is going to take a long time to subside, not least of which because of the action that was taken on the oil fields. It is a little naive to think that if Donald Trump and Netanyahu making statements to say that now oil infrastructure is not going to be hit, that Iran is not going to reciprocate and is not going to try and create as much damage as it possibly can. So if that does take place, unfortunately, we're looking at the oil infrastructure getting impacted for long periods of time, and the possibility, Jakes, as you pointed out, of oil being higher for significantly long.
If there was,
but there is a significant possibility, in my opinion.
Also, Jakes, just tying into that, if indeed the infrastructure is already damaged and if it takes a long time to come back, do we see higher for longer oil prices? If not 120, then maybe 100, maybe 90.
So I'll tell you, my personal feeling is that if we had settled into a 60-70 range for a while,
right,
we probably now are at an 80-90 range. This is my personal feeling. And I do not subscribe to the view that it will last long, specifically because the players in the room are people with instant gratification needs. It's highly, oriented.
At least two of them, no, Jakes? What about Iran? Iran, you have the leaders that have gotten really killed.
So I am assuming that for a moment, that some truth is there in social media, that the public at large is not unhappy at there's a change of dispensation. Maybe the people who are at the helm were not wanted, and there may be a natural transition to something more moderate. That is the study from the ground. Having said that, I do not believe they will continue. Right now, it's a show of strength that's happening. Let's not, confuse the smoke for the real cause. I do not believe that the players in the room are going to afford a much longer confrontation. There will be this "I won the war, I walked away" kind of conversation, which could happen. My own personal feeling is that we are close to that. If oil had to move up in this day and age of huge money, hedge fund money, etc., moves into markets like oil, where a commodity like oil, ostensibly the most liquid, can move from 75 to 120, back to 75, back to 120 in the matter of 2 weeks, should by now have gone, if people calling for 150 and 180 should have gone there. It's still on the boil, but I think we are closer to the end than the beginning.
So then, opportunity to buy.
But we could be in for a slightly longer haul in terms of getting oil prices back, because the world is searching for inflation. World is searching for growth. Oil has been disrupted because of supply. It's not oil has disappeared from the world. It's the supply side which has had disruptions. I think we should not differentiate. We should differentiate between the two.
You think it's going to get over soon?
No, I hope it gets over soon. But frankly, I think the answer is that nobody knows. Even Jakes in his answer is saying he's hoping for it because this is a very difficult situation to ponder. Sorry, Hiral.
On a lighter note, it is time of festivities in all these nations, and that's why an interim ceasefire is what could be on the cards. It's happy. It's Eid Mubarak. It's Eid around. So it'll be probably some time of silence in all of these nations. I think Monday is when we need to see if they get back with each other, is what I think.
Let's cross fingers for that. So on a lighter note, guys, Jakes, this is also the Durandar week in India. Are you going to watch that movie?
Yeah, sure. I mean, the moment we can get tickets more easily, we will.
You watched the first one?
Yeah, of course, absolutely. I watched it twice.
Wow.
In the theatres, is it?
Yeah, unashamedly sort of bullish on Hindi films.
Contributor to PVR.
I watch every single Hindi film that gets released.
Are you serious?
Yeah, every single. And this I have seen twice, and I'm hoping to see this one. So well prepared for it.
Interesting.
Excellent.
Well, I think Ajay Bijli loves it.
And I see it all in theatres, by the way.
Yeah, that's why I said Ajay Bijli.
And most of the time, there's nobody on either side for long periods of time.
Which is excellent. And there's popcorn to enjoy as well. But just the last word, and to me, this is also one of the big stories of the week. It's the rupee. We've hit 93.5. I'm wondering where it stops, because nobody knows at this stage, right? Is that something that worries you?
No, I'll tell you. There are many things that worry me.
Sure.
How many are in my control? Very few. What do you do about it is what I'm more interested in.
Yeah.
If rupee is going to remain weak for long, I will go in for export-oriented industries and see where. So that's the way
You'll play it. Okay, you'll counter it.
My worry has no meaning. I mean, I have no control.
Yeah.
So every morning I do this little thing, 20 things that worry you, 18 of them zero control. So forget about those. See what you can do about the others.
I'm going to try that.
Yes.
That's a really nice one.
It's something I've been doing for years. Focus on what you can control, and you have less things to worry about then. I mean, what Trump will say, do I have any say in the matter? What Netanyahu will do, whether he's alive or dead? Actually, frankly, none of these things, while they may worry you, but you have no control over them. So why do you do anything to...
That has to be the last word.
The best part of the show. Let's call it a day.
Let's go home.
Thanks, guys.
No, Jax, thank you so much.
Thanks for having me over.
And viewers, please do write into our social media handles if you like the kind of conversations we're trying to do out here every Friday. It'll be a delight to hear from you. And from all of us here, have a great weekend and see you with the markets Monday morning.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
A lot of legacy brands are sort of struggling to catch up with the pace of the change that this new generation of consumers are demanding. Add to that a layer of social media where global trends are creating local demands, builds a perfect opportunity for us to probably scale our business, our mission 10x from here.
For those who are not familiar with what Urban Platter is, how do you describe the company and what it does?
We are a specialty food company. Our mission is to make specialty and gourmet food available, affordable and accessible to everyone.
How do you then stumble upon food as a space that you want to be in?
I used to just cook on the weekends and stuff like that. And sometimes when you want to buy an ingredient, have a certain quality of experience at home, it used to be a matter of struggle all the time.
2021 is when, Hari Bhartiya comes on, Jubilant comes on. That's a mega brand. But no investor activity since then.
In 21, we were very busy serving to the frenzy of COVID buying that was happening.
Yeah, that was the time when everyone wanted to become a master chef at home.
One thing I've learned is money is an accelerator. There were a few things that we were not necessarily very good at, and we did go in the red for 2 years. We were very bad at understanding finances and managing money.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you.
Benchmarks end of days high with Nifty closing above 23,100. Broader markets also end higher. Sectors finish mixed with Nifty IT as a top gainer. Rupee ends at 93.7 versus the US dollar after breaching the 93 mark for the first time amid weak global cues. Sharp decline surpasses India's currency previous record low of 92.63 from Wednesday. Oil prices cools off after Israel's Prime Minister Benjamin Netanyahu says that the country will not attack Iran's energy infrastructure anymore. A little after President Trump claims that he told Netanyahu to do so, Brent trades around $109 per barrel. Qatar Energy expects $20 billion in revenue loss after Iran's attack on Ras Laffan gas facility, says the repair may take up to 5 years. Analysts, though, say attack on Qatar's LNG facility will not impact India's gas flow. Premium petrol gets costlier by up to 2.35 from March 20th, but the price of regular petrol remains unchanged. India could see 50,000 crore rupee import hit and rising inflation risks as the Middle East war persists. Sources say DG Shipping will soon make presentation to the Cabinet Secretariat on macroeconomic impact. Trade deficit could widen by $5 to $10 billion quarterly. India's GLP-1 drug market is set for a rapid expansion as Ozempic's patent expires. Indian Pharma market will now be driven by intensifying competition and accelerating volume-led growth. Anil Ambani appears for the second day before the CBI for questioning in the alleged fraud case of 2,929 crore rupees against Reliance Communications. Investigation follows an FIR filed by the State Bank of India. Dhurandhar 2 opens with a gigantic number at the box office, crossing the 236 crore mark in collections. Shatters Jawan's opening day next collection of 75 crore rupees. Hello and welcome viewers, this is Profit 360 on NDTV Profit and I am Malika Mishra. Along the next half an hour, we'll take you through some of the latest updates on markets, national as well as international news. Let's first go through the markets. The benchmarks ended off on the day's high note with Nifty closing about 23,100. Broader markets also closed higher, but sectors finished mixed, with Nifty IT being the top gainer on a sectoral front and Realty being the worst performing sector. Let's go across to my colleague Varsha for a wrap of today's market action.
Well, Nifty ends in green is up 0.5%. Tech Mahindra and JSW Steel are top gainers in Nifty today, both up over 3%. Broader markets ends in green as well. Nifty Midcap 150 closes up 0.6%. Indian Overseas Bank escorts gain most when it comes to Nifty Midcap 150, both up over 7%. While Nifty Small Cap 250, if you see, closes at 0.3% today. First Cry and GMDC are top gainers in Nifty Small Cap 250. First Cry, if you see, closes in upper circuit, ends 20% above. GMDC gains over 8%. All Nifty sectors ends in a mixed note. Nifty IT is the best performing sector, up over 2%. LTI, Mindtree and Oracle Financial Services are top gainers in Nifty IT, both up over 3%. Nifty Realty is the worst performing sector, down over 0.9%. Nifty Realty ends in red for the second consecutive day. Lodha and Phoenix Mill are the top losers in Nifty Realty, both down over 2%. Nifty Metal snaps 2-day losing streak. Nifty FMCG snaps 3-day losing streak. While Nifty Media, Nifty Financial Services and Defense falls for the second day in a row.
Right, as markets make a comeback, Wael Awadh, a trusted West Asia strategist, warned that the ongoing war is getting much worse. He told us that what started as a regional conflict is now turning into a global war. Global markets are already feeling the direct impact, with big effects on energy prices being prominent. Awadh stresses that without quick action from global powers, the crisis could spread even more. Listen in.
I believe the war is aggravating, and it's coming out being a regional war into a global war, especially with the global market is being directly affected by the development in the region, especially after the Israeli intentional attack on the gas of the Iranian, were in the largest gas reservoir in the world, and then followed by Iranian retaliation against UAE, Saudi Arabia, and Qatar itself, which also brought down the production of Qatar 17% lesser than the actual production. So therefore, there is a current situation, need the international community attention to make sure that this war should be put to an end.
Viewers, the Indian rupee has hit a new all-time low, breaching 93 against the US dollar today. And this marks a fresh record, surpassing the previous low of 92.63 set on Wednesday. The rupee has in fact weakened significantly, 5.3% over the last 6 months and 3.1% year to date, making it one of the worst performing Asian currencies in 2026. And there are 3 key reasons driving this fall. First, surging oil prices from the Middle East conflict have pushed Brent crude up roughly 40%, raising India's import bill and draining dollar reserves. Second, global uncertainty has boosted demand for the safe haven US dollar, hurting emerging market currencies like the rupee. And third, the US Federal Reserve's hawkish stance, keeping rates steady, is pulling capital away from Asian markets and strengthening the dollar further. Let's focus on crude. Oil prices have eased a bit after the stakeholders in the Iran war show signals of prioritizing energy supply. Brent, for instance, has pulled back to around $109 per barrel after going as high as $119 earlier this week. WTI crude is trading anywhere in the range of $96 to $97 per barrel as well. The relaxation also follows after Israeli Prime Minister Benjamin Netanyahu said that US President Donald Trump urged them to hold off attack on Iran's energy facilities. He also established that the war would end earlier than many feared. Let's listen in to a part of PM Benjamin Netanyahu's comments from the presser yesterday.
Well, I'll say two things. Fact number one, Israel acted alone against the Slawiya gas compound. Fact number two, President Trump asked us to hold off on future attacks, and we're holding out.
While this easing brought some relief, uncertainties persist, especially around supply routes like the Strait of Hormuz and the ongoing regional tensions. For instance, Iranian missile attacks that hit Qatar's key energy facilities, including the massive Ras Laffan LNG plant, has disrupted about 17% of Qatar's LNG export capacity. And this sidelines about 12.8 million tons per year for 3 to 5 years. Qatar Energy has declared force majeure on long-term contracts, meaning deliveries to buyers could be halted for up to 5 years until hostilities end. Nations hit hard include Italy, Belgium, South Korea, and China. As far as India is concerned, analysts say this attack on Qatar's LNG facility wouldn't impact our domestic gas flow. But also note that Qatar Energy CEO Saad Al-Kabi called the attack unprecedented, especially during Ramadan, and said the region is set back 10 to 20 years. That's 1 or 2 decades easily. Viewers, on to an exclusive and important story. But secure domestic flows may not be enough to support the economy. Sources indicate that India could face a big economic hit from the ongoing West Asia crisis and high crude oil prices. Their estimates show an extra 30,000 to 50,000 crore rupees added to the annual import bill if crude prices stay high. And this could widen the trade deficit by at least $5 to $10 billion every quarter in the short term. In fact, the Director General of Shipping plans to present to the Cabinet Secretariat soon on the macroeconomic effects of this war. My colleague Rishabh Bhatnagar joins us with all the needed details.
What we're picking up is the first sort of an official assessment of this war on India's macroeconomics. What we're picking up essentially is that the DG Shipping is set to make a presentation to the Cabinet Secretariat very, very soon. And what this will have, it will have details of all the sort of implications that it holds for India. The first one being, of course, the 30 to 50,000 crore worth of additional import bill burden that India will have to face. That is, of course, a result of heightened crude levels. What we're seeing also is the fact that there is a trade deficit that could see a widening of $5 to $10 billion quarterly if the current situation continues. Another part of this assessment is on inflation. Now, wholesale price inflation could see a rise of up to 0.3 to 0.7%, while India's exports, a number that the government wants it to reach about $1 trillion for every year, goods and services included, that could see a degrowth of about 2 to 4%. Now, the logistics cost as a percentage of GDP, that is something that every country wants endeavors to sort of bring it down as low as possible for ease of doing business. That number could see a temporary spike of from about 13 to 14% currently to 14 to 15%. So those are a few assessments that the DG Shipping has made and will present to the Cabinet Secretariat very soon. What they've also said is that over the next 3 months, as a result of this, there will be broader macroeconomic pressures. Also, if this is a prolonged disruption, it could have material economic consequences. That's what the DG Shipping has said.
And viewers, let's give you some updates on the Iran-Israel war. As it enters day 21, the conflict is now spilling across the Gulf region, raising scares and fears of a full-blown regional crisis. Iran has sharply escalated its offensive, targeting critical energy infrastructure, including Kuwait's Mina al-Ahmadi refinery, with drone strikes, while also firing multiple missile salvos towards Israel. Israel has hit back with force, launching fresh strikes deep inside Iran. Explosions were reported over Tehran even as the country marked its new year. The regional spillover is now undeniable. Blasts reported in Dubai, drones intercepted over Saudi Arabia, and even a fire breaking out in Bahrain. Meanwhile, Iran is showing no signs of backing down. It has warned that the war will continue until its enemies are exhausted. The Islamic Revolutionary Guard Corps has also confirmed the killing of its spokesperson, General Ali Mohammad Naini, in what it calls an Israeli-US missile strike. Trump, for his part, has struck a careful tone, saying the US shares strong ties with Israel but operates independently, a clear attempt to distance Washington from the latest attacks on Iran's energy assets. With oil prices surging and the Strait of Hormuz under threat, global markets remain firmly on edge, watching every move in what is fast becoming a wider regional flashpoint. And viewers, India's chemical and petrochemical industry is facing serious supply-side stress as LPG availability has dropped sharply amid ongoing geopolitical disruptions. Industry representatives also said so. Satish Wagh, chairman of Chemexcel and executive chairman of Supriya Life Science Limited, told NDTV Profit that LPG availability has fallen to as low as 20% of normal levels, severely impacting industrial operations. The disruption is particularly affecting processing units and downstream production of key chemicals such as propylene, isopropyl alcohol, and acetone, which rely heavily on LPG and its derivatives. Wagh flagged that the shortage of propylene, which is a critical byproduct of LPG processing, has emerged as a major concern with implications for the broader chemicals and petrochemicals ecosystem. The Middle East war is likely to impact the auto sector, with raw material prices to spike soon due to LPG shortage. Let's go across to my colleague Danish Anand for more details on what this impact exactly is.
The war in West Asia, which has reached the third week, could impact India's automotive sector in the upcoming 4 to 6 weeks. Sources are telling us that as of now, the inventory levels at different auto companies is adequate, and the flow of key raw material is also okay at the moment. But industry fears that if the war does not stop in the upcoming 6 weeks, then it could have a bigger impact on the sector, because we are seeing because of the Strait of Hormuz is shut, it is impacting the key cargo movement, and as well as we are seeing that there is an energy challenge across the globe, and India's auto sector is also dependent on gas, especially commercial LPG for various forms of manufacturing practices. But people in the companies are telling us, as far as Tata Motors is concerned, Tata Motors and Maruti told NDTV Profit that right now the production level is normal. They don't seem any kind of shutdown in any of the manufacturing activities. Similarly, Mahindra also echoed the same response, and they said that they are able to manufacture as per the monthly targets, and as far as sourcing of key raw materials concerned, they are in touch with tier 1 suppliers, and they're trying to work out and they're trying to see that in the future what kind of raw material key components could face some shortage. But if we look at it from a different point of view, in auto industry as of now is completely comfortable. But if the war persists for long, then we can see a major impact on India's automotive sector, as gas, if it is further curtailed by the government of India, then it could hamper the manufacturing process in auto plants. So all in all, if we see, as of now, things are completely normal, but no one knows that what could happen after 4 to 6 weeks if the war persists for long.
Right, viewers, it's not just the auto sector that stands at the risk of an imminent effect from the war. India's ceramic industry is beginning to feel the heat of the LPG crunch, with tile prices rising sharply as production slows. Traders warn that existing inventory may last only about a month, raising concerns for the real estate sector as well. Our colleague Ridhima hit the ground to bring us this report. Take a look.
As we know, the Middle East crisis is going on, and due to that the LPG shortage has happened,
and which has also hit the tile industry now. As we know that Morbi industry in Gujarat has shut down in the past 5 days, and which used to produce 89% of the whole production of tiles for India. Now with that gone, the tile prices have surged, and we even spoke to few shopkeepers out here, and we are here at Hind Mata Market, which has many tile shops in Dadar, and we spoke with shopkeepers who told us that the prices of the tiles have increased by 10 to 20% because the demand is there, and there are less tiles available. So we have a person, a tile seller here, Premalji, who sir, so how long, from how many days has this disruption happened?
So from nearly 1 month ago, they have already informed us that Morbi, most of the factories, they have not supply of gas, so they are going to close, and 10 to 20% increase in tiles they have done. So let's see now, if we know it would be more further for 1 month, 1.5 months. So let's see now.
So you mean how long is the supply there, like with the distributors, if you have a sense?
More than 1 month.
Viewers, India's basmati rice exports are coming under pressure as freight rates to the Gulf surge and logistics disruptions intensify amid, of course, the West Asia conflict. Exporters say shipping costs have nearly doubled, containers are in short supply, and delivery timelines have stretched, even as the Middle East remains the largest market for Indian basmati. My colleague Nimit brings us this report on how the crisis is impacting the trade.
Yes, Indian rice is in the pressure cooker. That is the Middle East conflict right now. Exporters tell me that rising freight charges, logistics and shipping cost, as well as non-availability of containers increases prices abroad and reduce prices in India. Let's talk about the exports first. In India's shipment to the Middle East, especially for basmati rice, India Gate producer KRBL says is the cornerstone of the Indian shipping industry. 70% of India's basmati goes to the Middle East. Now, a $13 billion industry of rice exports, about 3 to 4 billion of that is basmati, and 70% of that goes to the Middle East, which is a big chunk. Now, Amir Chand's rice exporters, they run under the brand Aeroplane. They're going to list next week on the Indian Stock Exchange. Tell us that freight charges have gone up from $600 to $1,200, a 2x increase in what they used to be, which is adding about $50 a ton on rice exports, and a cost increase overall about 5%, which is substantial in a low margin industry. On domestic prices, Grant Thornton's experts tell us that domestic prices, because of non-availability of supply containers outside, is seeing more internal supply of rice, which means that rice prices in India have gone down by about 10%. Again, in where margins are low, this could mean a substantial impact drop, and costs will likely be absorbed by these companies themselves. Now, all of them say, especially KRBL, that they're in touch with their regional partners abroad, and the government, in fact, needs to step in, is something that Grant Thornton's experts are saying, that there needs to be a body that needs to look at these prices, control maybe how it's being moved, so that the pressures need not be absorbed, especially in the case where this war goes on for a longer period of time.
Viewers, we saw the war affect tiles, auto, basmati rice, and now it's also the real estate sector, with construction costs rising by as much as 15%. Realtors tell NDTV Profit that they are mulling force majeure on timelines if the war continues. My colleague Ritima Bhatnagar gets us this ground report on this topic as well.
Real estate industry margins could see a hit by 5% as per the real estate builders. Now, this is mainly due to the construction costs, which have risen by 10 to 15% due to the Middle East conflict. And not just this, builders could also seek a force majeure if the disruption lasts longer. Now, let's understand that why the real estate sector is so hit. This is mainly due to the tile production, which has halted, especially in the Morbi factory in Gujarat, which supplies around 89% of the tiles for India. Due to this, the tile supply has reduced and the price of tiles has increased by over 20%. Not just this, the prices of aluminium, steel and also the crude have risen, which has led to the increase in the transport costs. If we just talk about March, aluminium costs have risen by 4%,
steel by 9%, and crude oil prices have surged by 48%. So what are the companies doing right now? So the real estate companies for now have decided to absorb the shock and not pass it on to the customers. They are also contemplating to seek government help, mainly for the extension of timelines for the real estate projects. But if the disruption lasts for longer, they are likely to pass it on to the customers, which could lead to rise in the real estate prices.
Viewers, while that was a list of different market segments being impacted by the Middle East crisis, let's now focus on an important corporate story that really ruled the sentiment yesterday during the trade. HDFC Bank remains under pressure for yet another session. It in fact ended over 2% lower in trade today as concerns around the chairman's exit continue to weigh on investor sentiment around this particular stock. But the bigger question now is, how are long-term institutional investors reading this turbulence? We caught up with A. Balasubramaniam of Aditya Birla Sun Life AMC, one of the key mutual fund investors in the bank, to get a sense of their outlook amid the leadership churn. Let's listen in.
Fundamentally, is a sound bank, but however, the current uncertainty of geopolitical risk, coinciding with the resignation of the chairman, and subsequent to that, management was quick enough, given the vast experience that they have. They have not only announced the new temporary chairman, they have also, of course, come on the call and clarified all the concerns that otherwise the market would have had. But I would assume it is actually good of the part of the management to quickly clarify some of these apprehensions. But having said that, must also remember that it is widely owned, and therefore, to some extent, people always look at the portfolio in terms of exposure, how much they own, and how much they should own other banks versus this. Could be one of the reasons why I would assume the price could correct. But otherwise, fundamentally, we believe that it is one of the most respected, sound, and fastest growing private sector, large private sector banks in the country. Therefore, we as the shareholders continue to keep our confidence very high on the overall business, as well as being one of the large players in the industry.
So positive take on HDFC Bank, but moving on, viewers, India's market for diabetes and weight loss drugs is set for a shake-up as Danish drug maker Novo Nordisk's patent on semaglutide expires today. Ozempic's patent expiry has opened doors to cheaper weight loss drugs in India. So the country's GLP-1 drug market is basically set for a rapid expansion, which is driven by the entry of 50+ branded generics from domestic pharma companies, with intensifying competition and accelerating volume-led growth. My colleague Hiral spoke with Vikrant Shrotriya, Managing Director at Novo Nordisk India. Let's listen into a bit of that conversation.
We have now launched, along with Emcure, as well as with Abbott, the solution for obesity and diabetes, and we have priced it very competitively for Indian market for a wider reach. So on one side, we have got the brands from our own portfolio, but we have also localized it for India and making it possible for many more patients across India.
India's weight loss battle is at a tipping point. With low-cost options entering the arena, is the obesity fight about to be democratized, or will the big brand loyalty still call the shots? The debate at 7 p.m. Do not miss that. Only on NDTV Profit. Reliance Group Chairman Anil Ambani is being questioned by CBI in Delhi today, and this is the second day of examination in connection with the FIR in SBI loan fraud case. The CBI had registered a complaint after SBI claimed a loss of 2,929 crore rupees resulting from alleged misappropriation by Reliance Communications and Anil Ambani. The PSU Bank classified the accounts as fraud in June last year. And viewers, that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
a lot of legacy brands are sort of struggling to catch up with the pace of the change that this new generation of consumers are demanding. Add to that a layer of social media where global trends are creating local demands, builds a perfect opportunity for us to probably scale our business, our mission 10x from here.
For those who are not familiar with what Urban Platter is, how do you describe the company and what it does?
We are a specialty food company. Our mission is to make specialty and gourmet food available, affordable and accessible to everyone.
How do you then stumble upon food as a space that you want to be in?
I used to just cook on the weekends and stuff like that. And sometimes when you want to buy an ingredient, have a certain quality of experience at home, it used to be a matter of struggle all the time.
2021 is when, Hari Bhartiya comes on, Jubilant comes on. That's a mega brand. But no investor activity since then.
In 21, we were very busy serving to the frenzy of COVID buying that was happening.
Yeah, there was a time when everyone wanted to become a master chef at home.
One thing I've learned is money is an accelerator. There were a few things that we were not necessarily very good at, and we did go in the red for 2 years. We were very bad at understanding finances and managing money.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
Delhi, the greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro App, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. It's the most loved KYC show in town. Also, let's give you some hints for the stock which we'll be discussing today, and the management will also be coming. The company is India's largest commercial and industrial renewable energy provider. That's the first hint for you. The second hint is the company listed on March 2. That means it's a newly listed company. So we'll understand how to actually judge the company and also with the industry in which the company is operating. The stock is down 19% from the IPO price. Remember, the small and mid caps have been impacted because of global geopolitical tensions and massive sell-off in Indian markets. And the company, however, this is very much important, posted a really strong Q3 numbers, because at the end of the day, earnings matter the most. So that is something which we'll be talking about. But enough of hints. Let's get to the company which would be in focus. And the company in focus is Clean Max Environment Solutions. This is the company which we talk about. And in KYC, we'll be getting this company and asking more details from the management as well. But the question remains is, why are we getting this company? Ye company kyun aa rahi hai? The first reason is definitely going to be on the factors that led to a very strong Q3 performance, because it's the first time company came out with its numbers post its listing. The second reason why this is interest for me and for everyone who is following KYC is that the capacity expansion plans and the key commissioning times
This is very much important for this renewable energy player. The demand trends, especially in the C&I space, that the company says it's the largest player, that's called commercial and industrial segment. That is also very much important, which we'll understand more about. The debt picture post IPO, the reduction plans ahead. Of course, they have taken some proceeds and retired their debt, but we definitely like to know because this is an asset heavy business as well. Also important question is the cost of borrowing. That has improved from 9.46% last year to 8.7%. That means finance cost kam honge, profit badhega. That's an impact. Also, the impact on the pricing and the operations post these geopolitical tensions. The global inflation risk scenario is going up. Does this impact asset heavy businesses like them? If yes, what are the mitigation factors? And the further collaboration and tech tie-ups. Interesting global names have come in from US, Japan, and the company is very forward looking, especially when it comes to the tie-up. So these are the key questions which we'll be asking, and to give us entire perspective, we'll be joined in by Kuldeep Jain. He's the founder and MD at CleanMax, to give us the entire picture of the company and the industry in which they are operating. But apart from this, let's talk more about the company CleanMax Energy. What's the entire story all about? How the earnings have happened, and is it too technical? No, it is not. I'll make it simplified for you. It's India's largest commercial and industrial renewable energy provider, and let's get into more details about this company. Almost 570 corporate business customers they have, and 3 gigawatts of operational portfolio across Asia. GW means gigawatt. 2.7 gigawatt contracted is already the execution capacity which we talk about. These are the key numbers you should know. And also a third important point about the company is the strongest market presence they have in terms of the state presence is Gujarat and Karnataka. That is where they are having a good market share also. Apart from this, if you look at the key details, the global tie-ups they have, this includes of course the bigger name which is Google, and also Toyota Tsusho. It's like a Toyota group company, and they also have a JV. It's called Osaka Gas Renewables. So futuristically, the company is making the right moves. There are 7 states where the commissioning is there: Gujarat, Haryana, Karnataka, Maharashtra, Rajasthan, and Tamil Nadu. And remember, these states are having a very good growth in the manufacturing setup as well. But what caught my eye is the data and AI. That segment contracted volumes are major growth drivers. Remember, they are high margin, high growth industry. So you can expect the company to command a high valuation also in this segment. And almost you could say 42% of this RE, which is the renewable energy power sales, is contracted just on data and AI. And there's a big explosion happening in this sector. But अगर ये ज़्यादा टेक्निकल हो जाता है तो मैं आपको सिंप्लीफाई करके बताता हूँ. RE means renewable energy. C&I, confused मत होइए. It's just commercial and industrial. PPA, of course you must have tracked a lot of thermal companies. It called power purchase agreement, and the last one is the plant load factor. So these are the key abbreviations, and it's very simple, this sector. Now the numbers to track, that's very much important. 76% of the customers, the new contracted capacity comes in with the existing customers. That means the same repeat customers start coming in, and of course cross-selling also happens. If you look at the numbers, it's 3.84 rupees per unit tariff for the 2.7 gigawatt contracted capacity for the last 11 months ending in February 2026. And if you take it in the group level, this amount comes in at rupees 4.25 per unit as well. So this is largely in line with the industry, or actually I could say slightly higher on the premium side as well. And that's why the company might command a premium valuation with itself. Almost 53% of the renewable power sales revenue CAGR is something which the number has come over the last 3 years. That's the data, and this top line growth is of course going to be seen in the income statement as well, but that will come a bit later. Also, there's a very interesting takeaway here. DK Khara, Dinesh Khara, as we all know him as the SBI chairman, he's the ex-SBI chairman right now. He has joined the company as a lead independent director, and that definitely augurs well for the perception of the company. But let's go and understand what are the rating parameters where we judge the company in KYC. There are 8 of them, but the first one is the income statement, balance sheet and the cash flow. This is the holy grail of the numbers where we judge the company, and the return ratios. Of course, they might be a bit depressed in this industry, but nevertheless, it's very much important. Shareholding street cred, remember, stock को सिर्फ 1 महीना ही हुआ है लिस्ट में, लेकिन यहाँ पे देखिए street cred shareholding will have a limited history for that. Valuations, we'll compare them with their other peers. Interesting names are there, but these are larger players, and some of them are government related players as well. And the outlook, what the company wants to estimate and where the industry is going. So these are the 8 rating parameters where we'll judge Clean, Max and Viro. The first one is the income statement. Let's see what the numbers are, and the numbers are really strong. Revenue and EBITDA, let's look at it. 3-year CAGR, all of them above that 25% mark coming in. Even the PAT numbers are showing strength. What is important is the third quarter numbers. Let's see how that numbers has panned out, and this has been done really well. The margins, that has gone up to 62%. Now that's a big question. Are these margins sustainable or not? That's the number I'm talking about, 62%. But nevertheless, all the numbers beat street estimates as well. Brokerages also gave a thumbs up, and so I'm also giving a thumbs up because the income statement has been strong for the company. Let's talk about balance sheet, and remember, company has come from its IPO. Some of the proceeds were used to retire the debt, and the borrowing number is something, whenever you look at an asset heavy company like that, you should be always looking at borrowing first. It's still a bit elevated, but nevertheless some IPO proceeds have been used, and company is in its growth phase. A lot of commissions or a lot of plants are getting commissioned, so you're going to see elevated borrowing. But the cost of borrowing is something which is very much important, and that is coming down. Post listings, the bargaining power improves of a company. Cash bank balance, it's healthy, almost 1200 crores of that. So I would say the balance sheet management is strong by the company post its IPO. So I would be giving this a thumbs up as well. Talking about numbers, income statement, balance sheet, both of them have done really well. So I've given a strong thumbs up. But cash flow, let's talk about that. A little bit of lumpiness also comes in this type of industry. Remember, there's a renewable energy segment at play as well. The cash flow from operation, a good lumpiness jump in FY25, we are getting it. But nevertheless, this is very, you could say, the changes which are happening, it is not very much, you could say, certain. So that's why, to give it a balanced perspective, I'm going to give this a neutral rating for the cash flow segment. Let's talk about the return ratio. Generally, in this return ratios, the ROC numbers I have taken, and it's actually slightly coming down from FY22 odd levels, and it's kind of getting its long-term average numbers of 7 to 8 odd %. So that's a kind of a discovery we are looking at, and it'll be pretty much interesting. But nevertheless, I'll be giving this a neutral rating. Let's talk about the shareholding, and याद रखिए सिर्फ एक ही क्वार्टर का डेटा है, nothing much here. Promoters are having roughly 49% stakes. FIs, DIs have lapped up. Remember, there is some good investments coming in from the FIs, or roughly 30% of that is coming from the shareholding. It'll be interesting to understand more, but let's give it more time. So I'm going to give this a neutral rating when it comes to the shareholding. Street cred, of course, the market condition was also bad. We saw that in the month of March from the IPO. Stock is down 19%, from listing it's down 11%. Let's give it more time to give us a more perspective, especially कितना कमाई होता है आपके portfolio में. That's something which we'll talk for, and it's a neutral rating when it comes to the street cred. Valuations, I had mentioned you, this entire industry, the valuations is on the higher side. Clean Max, this is the P ratio which I have calculated. Of course, this is the trailing numbers. It's around 186 times right now. These keep on changing on the earnings. NTPC Green, Adani Green also above 100, and Acme Solar, however, they have some commodity business also, and that's why it's on the lower side, almost 47 times. But net, this industry will command these valuations until unless this becomes more matured. Then you will have a proper valuations to see in the industry. So let's give in a neutral rating for the valuations. So we have done 7 ratings. Let's go into the 8th rating. It's very much important. That's the outlook. Almost 11 gigawatt of portfolio one is continued momentum in the commissioning and the contracting. And also let's look at the other important futuristic outlook for the company. The second important point would be a strategic partnerships coming in. I'm very much interested in the Osaka gas renewables. What happens next here? The world is going under a lot of stress. So this company, if it reduces or not, that's the big question. Almost 1.5 gigawatts of power sales capacity addition you're expecting in FY26 to 27. We should be having that as well. And also, let's pull out other outlooks also. Almost 1800 crore run rate would be there from the capacity commissions. This is what I've picked up from their presentation in Q3. Data and AI, that caught my eye, and this is something will be a major growth driver. India is at the cusp of this explosion in this industry. Apart from these important outlooks, the current business cycle, the debt, that might continue to rise, but their cost of borrowing has become cheaper. So that's a good point to talk about. And let's talk about the final rating, because this is a strong thumbs up already. Income statement and balance sheet has done well. Cash flow return ratios, we need to wait it out. And also it's a newly listed company, so the thesis plays out for shareholding street cred as well. Valuations, this will keep on changing as the industry matures, but as of now 100 plus PE is nothing you could say extraordinary. It's largely happening across all the players, but the outlook is something, especially on data and AI and the growth capacity commissioning, is something I'm bullish on. So net on the higher side of the ratings which you give in KYC, I've given it 5.5 out of 8 when it comes to CleanMax Energy. But interestingly, we'll have Kuldeep Jain. He's the founder and MD of the company. He'll be joining us, and a little bit of snippets about him, about how things pan out. He has 26 experience in consultancy and renewable energy. It's 26 years on that. Also, importantly, he is an ex-partner at McKinsey and Company, and the education, if you look at it, he's from IIM Ahmedabad and a qualified CA as well. So pretty much interesting take. And so Kuldeep will be joining us, and interestingly in KYC we are doing this for the first time. The management is joining to me physically in our show, and I think joining us would be Kuldeep Jain. He's the chairman and the MD at CleanMax.
How are you?
I'm fine. It's a pleasure
My real
to have you
pleasure
here.
to be here with you today.
Exactly. Just to put that in perspective, we discussed about your company, Kuldeep. Of course, it's a new company, but there's a consultant in you who has started this company, the way I've checked your website.
Sure.
Just want to put that in perspective, how different you are from your other companies or your peers. What is it all about it? And then we'll, of course, talk about the other questions as well.
The most important differentiator about us is we are direct to customer, or rather, if you think about the power or green energy, renewable energy business, we are the retail segment and not the wholesale segment. Wholesale segment is all the listed companies like an NTPC Green, Adani Green, Acme, Tata Power, JSW, which is that they participate in a government reverse auction, wherein at the lowest discovered price, they sell large volume, say 500 megawatt per contract, to a state power distribution company. Now the state DISCOM does not consume the power, it then gives it to the end consumer who is in industry. We go direct to the end consumer. So we are retail and not wholesale.
Okay,
this is the difference.
So that means in this business model, if it's retail, that means your margins would be better. Yeah. And I checked one more thing, that 77% of them customers are repeat customers, to put it in a simplified manner. So how does this customer stickiness work?
So our tariffs are higher. So if you look at the last fiscal capacity we commissioned, our tariff on that capacity was 3.7 rupees. Look at for the other listed players, it would be around 2.5 rupees. So, you know, by going retail, you get a tariff premium. In any business, true in our business as well. And then the other dimension is that, then the question becomes, in any retail business, who are your customers? So about 80% of our volumes are with customers credit rated AA, AAA multinationals, and 42% is with data and AI.
And Kuldeep, the Q3 numbers, because there's always a litmus test which Dalal Street does, you have passed with flying colors, and of course the global situation was such that all the small cap, mid caps, large caps fell. So of course the price discovery at times doesn't happen, and it's fine, it's a market condition. But I want to know this Q3 numbers, the margins was something, it went up to 60%. Now on a sustainable basis, what kind of margin outlook we can expect, and can we expect this to continue in fourth quarter, first quarter as well? How the earnings looking like trajectory?
See, we have two business segments and margins should be looked at differently, and I'll explain why. First business segment is renewable energy power sales. We own the asset, we sell the power, right? This is approximately 83% EBITDA margin business. Right, so it's capital intensive, but 83% EBITDA.
So that's one part of it.
That's one part.
Okay.
And that has consistently been at this number. Even here, this year the margin is 83, last year it was 81, so it is on an improving trend. The second part of our business is renewable energy services. Some companies,
so basically it's like an asset management service, and
it's
I suppose
asset management service.
So if it's a core business, asset management services, that means it's like an AMC,
And
so you'll have a higher margin profile in that?
No, in that there is no capital intensity.
Exactly.
But the margins are 20%, which is above industry average, but it's 20%. So two segments, one is a 83% margin business, one is a 20% margin business. So जो weighted average आप full revenue पे if you see, of course then it's a function of the mix between these two. But in both these business segments, our margins have gone up.
Okay, so
energy
this trajectory is expected to go up?
I think certainly in energy sales, yes, with operating leverage, we would expect it used to be 3 years ago 75%, last year it was 81, this year it's 83, this will continue to improve.
Tell me about the cost of borrowing. वो सस्ता हो गया है. Debt आपका थोड़ा retire कर दिया आपने.
Yes.
Or right now debt is, of course, your business model is such you will have debt.
Yeah.
So how are you going to see this management going, and if finance cost gets reduced, can we get a good bump up in the little bit of margins also?
So as you've seen in our results, compared to start of the year, by end of the year, 50 bips or 0.5% finance cost has reduced
right.
on a weighted average basis.
Right.
And then if you see that the debt level at the end of the financial year should be around 9,000 crores, 50 bips of 9,000 is 45 crores of straight to the bottom line savings. So yes, that has been
So
a
this is
benefit.
happening fourth quarter, you'll get the benefit?
Fourth quarter and full next year is when you'll really see the full numbers come in.
Right. And also the AI and the data center pack, India is a huge, it's at a, crossroads of, good explosion of this industry comes in. So how do you come in, just to make it a very simplified manner for our audience, and because 42% of that orders are coming in the RE segment. So how does it actually work, if you just give us the entire flywheel of that?
Thank you. So 2-3 points. First, data and AI is now 42% of our contracted volumes, right? And has grown 10 times in 2 years.
Just 10 times in just 2 years?
In just 2 years. Right, so it used to be, so as of 1st March 26, our data and AI contracted volumes is 2,400 megawatt or so. It used to be 240 megawatt 2 years ago. So 10 guna in 2 years.
10 guna in 2 years, that's pretty much interesting.
Right, so that is a reflection actually. Of course, we have done well, but it's a reflection of the kind of boom we are seeing in the energy demand. And what we've also said in our results is we have a number of data and AI customers, repeat volumes with companies like STT, new volumes with L&T Data, Princeton Digital, Iron Mountain and so on.
Talking about the tie-ups also, there is Google, there is something from Toyota Group also, and also right now you are having a JV for your gas segment as well. So how does this foreign tie-ups help? Is it the technology transfer here, or is there something more to it?
So we co-invest with a lot of foreign companies. Because it is an energy intensive, it is a capital intensive business, and lots of leading foreign companies in the energy space want to do this kind of business in India, but do not have our kind of capability. We are the market leader. So they say, look,
and if you talk about being a market leader, is there a market share attached to it?
Yeah, it's called the CNI market. The market is defined as commercial and industrial market, which is the way I was explaining, if you're the retail part of the market, you go directly to a corporate, that's called CNI market. We are number 1 player in that market in India. We have a 12% all India market share.
And that's the organized we are talking about.
That's the organized market for direct supply of energy to corporates.
Right.
Right. We are number 1 player in that space. Now, what are we doing with companies like Osaka Gas is that we have a CleanMax majority owned joint venture. So we own 51%. They own 49%.
That comes in your consolidated in the numbers.
So it is our controlled and managed entity. And they have invested about 190 crores or so of equity in the first phase to build a certain volume of assets with us. Right now, why would we do it? What is the benefit for us? One is, yes, as you said, the strategic value. You get a great partner in from Japan. You get access to some lower cost
and
capital.
And you get access to their
certain
Japanese
clientele and so on. This is a sort of strategic value. But there's also a hard financial benefit, which is this is a capital intensive business and we are lowering the capital intensity for us. So that 190 crores, otherwise I would have had to raise and put and so on. So
exactly, because whenever we talk about net zero, Nordic countries comes to my mind, and eventually a Nordic tie-up and a Nordic funding is something which most of the Indian players also look forward or aspire to. Is there anything in the work from the Nordic front as well?
So we have a lot of we have 2-3 such partners. In addition to Osaka Gas, we also have Toyota Susho, which is not Nordic but part of the Toyota group, and they want to also invest in India, initially serving automotive and other Japanese companies and then expanding. But we are open to partnerships from like-minded players. Our focus though is that we are not seeking financing or funding. This is not a loan. This is a true equity partner who is with us for life.
All right. Apart from this, global issues are there. Your costing is increasing, be it any energy setup. Is that going to impact you also? And if yes, any pass-through mechanism is there?
See, the beauty of renewables is we are a 93% gross margin business. I used to be a consultant, you mentioned. I've never seen any business which is a 93% gross margin business. Because I always jokingly put it that Surya Dev or Vayu Dev paisa nahi lete, right? In other words, you don't pay for the cost of the fuel, right, which you have to pay in gas or coal.
But anything in the operational cost, any hit coming? Bit?
No, not really.
Not really.
Neither in operational costs, neither in capital expenditure. If anything, I think it's a huge plus because everyone's sitting up and taking notice and saying, listen, in the end, we've got to be self-sufficient in energy, which is our energy should come from our...
And maybe this is a big lesson. What we are going through right now.
All over the world that, you've got to be self-sufficient.
So energy security is important. But there's one kind of a concern. There is a word called net zero. It's at times used, at times it's abused. What is it actually all about, net zero? And does it actually fall under, where India is going towards? Or the net zero projects, have they actually come, or is it just the namesake certifications?
So, net zero really refers to ki if you are doing any business or any activity, you should do it in a way where carbon emission nahi hota hai. Why carbon emission is important? Because all the carbon emission added up is causing climate change and global warming. And that has real issues for countries like India. We talk about rain patterns are changing.
Exactly.
And farmers are suffering as a result. So it's not a theoretical concept. It's a concept which is hurting us also as a nation.
So is India lagging behind on this, or are some green shoots coming in?
I think we are making progress. But I started this business 15 years ago with the purpose that I will be net zero partner to corporates.
Right.
Because half of the power consumption in our country is corporate sector, and we can give them cheaper and greener electricity. So in their journey of net zero, they're also saving money.
Okay. It's a pleasure talking to you, Kuldeep. We are out of time. I hope we had more time, but of course we'll have conversations in future also. It's a pleasure talking to you about your company and the industry.
Thank you so much.
Thank you.
A lot of legacy brands are sort of struggling to catch up with the pace of the change that this new generation of consumers are demanding. Add to that a layer of social media where global trends are creating local demands, builds a perfect opportunity for us to probably scale our business, our mission 10x from here.
For those who are not familiar with what Urban Platter is, how do you describe the company and what it does?
We are a specialty food company. Our mission is to make specialty and gourmet food available, affordable and accessible to everyone.
How do you then stumble upon food as a space that you want to be in?
I used to just cook on the weekends and stuff like that. And sometimes when you want to buy an ingredient, have a certain quality of experience at home, it used to be a matter of struggle all the time.
2021 is when, Hari Bhartiya comes on, Jubilant comes on. That's a mega brand. But no investor activity since then?
In 21, we were very busy serving to the frenzy of COVID buying that was happening.
Yeah, there was a time when everyone wanted to become a master chef at home.
One thing I've learned is money is an accelerator. There were a few things that we were not necessarily very good at, and we did go in the red for 2 years. We were very bad at understanding finances and managing money.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
Delhi, the Greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro App, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management.
Buy the dip. Everywhere you look, you'll find people telling you that with markets crashing and your portfolio is melting like ice cream in summer, you should be buying. That's almost become a natural response. And it's not a bad thing. But quite a few of you have pointed out that we don't often talk about when to sell, which is the opposite, right? And that got me thinking, why is that? So that's what we're going to be focusing on today. When should you sell? There are several reasons why you would. It could be tactical, it could be because you need the funds, it could be for a number of different reasons. We'll cover all of that on this edition of MoneyWise, and we'll also talk about what your response should be right now with the war in West Asia raging.
Joining me on this show is Nikhil Kothari, Director at Etica Wealth. Nikhil, thanks so much for taking the time and welcome back to MoneyWise.
Thank you.
So, let me first ask with a slightly philosophical question, which is that on this show and otherwise, in the realm of personal finance, often we talk about when you should go out and buy. And we stress the importance of staying the course and having systematic investment plans and holding and being completely deployed. But we don't talk about when to sell. Why do you think that is?
So, Alex, basically, if you look at historical trend and if you're in the growing economy, then history always proves that in the long term, right, market will trend upwards only. So if you have investment for long term, you may have a short term dips in the market. But if the economy is growing, a long period of time, equities will give you better return than alternatives in terms of debt. So that's why advisor always believe that if your money is for long term and you continue to stay invested, you can make better return than alternatives. And that's why you continue to stay invested. But so idea is more about that if your money is for long term, history says that the market will be upward trending, right, in the long term. So continue to stay invested.
The argument against that is purely from an economic sense. It may not really draw a response from you, but economists and economic students will say that John Maynard Keynes said, in the long run, everyone is dead. And so therefore, you should take your money out on regular intervals.
See, you should take out, so what is the purpose of money? Purpose of money is to fulfill your goals.
Yeah.
So it doesn't mean that you continue to stay invested and never withdraw the money. You invest with a goal in mind. So say, for example, you say that, okay, this money is for my buying a car after 5 years. And you start investing in a, say, hybrid asset or equity asset. And after 3 years, you are very closer to your goal, right? That time, you should obviously move your money from aggressive assets to your conservative assets. And at the end of 5 years, you should go buy a car. So no one is saying that you should invest and never use that money. But idea is that you should reallocate your money based on your goal. Right. So if your goal is 10 years down the line and in 2 years markets have gone up, it doesn't warrant you to change your asset allocation from equity to conservative asset because markets have gone up, because unless you will end up paying taxation. And in the long term, right, the equities will again bounce back and give you desired return. So idea is that you should always have a goal in mind, and once you're closer to your goal, you should take off your money from your aggressive assets, which is equity, to a conservative asset, which is a debt.
That is one reason why you should sell, but there are multiple reasons why you would sell, right? There is also a tactical reason. And at the onset, let me ask you whether you can put both individual stocks, and people have individual stock portfolios as well, and mutual funds, which is primarily equity mutual funds and maybe even hybrid mutual funds, in the same bucket? Or do you treat them differently when you're thinking about when to sell?
No, this is a completely different perspective how you should look at it. See, when it comes to stocks, right, the stocks valuation, so how you look at stock is that, okay, if the fundamentals of stocks, right, the earnings of the companies is X, right, and based on that you pay a price of the shares. If the price what you're paying is far higher than what the earnings of the company is reflecting, then you should sell those shares. So in specific stock specific, you have to look at earnings of the fundamentals of the company and then take a call on whether you should buy or continue to hold the stocks or should sell the stocks, right? So that's why when it comes to equity investing, direct equity investing, you have to have that knowledge and time to look at individual companies and then say that you have to look at their quarterly earnings. See, if the stock earnings is going up and up and the stock price is falling, right, then it can be a temporary thing. Then it doesn't warrant you to sell at that point of time. But if the earnings of the company is going by X percentage, where the stock is rising by far more than what the earnings of the company is going up, and then now you know that the valuations have become too expensive, right? Because stocks can remain range bound for 5 years, 7 years, right? So in that time you should sell the stocks. When it comes to mutual funds, see, it's not a one stock, it's a basket of stocks, and where the fund manager can keep on buying and selling based on the individual stock fundamentals. So here predominantly selling for a small upside, right? Because markets have gone up slightly more than what the expectation is. Like it has gone up beyond the earnings by certain percentage. Doesn't warrant you to sell it, because then unless you're paying the taxation. So I'll say that you should never react. See, 80% of the time you don't have to react. You always have to react at the 10% of the extreme times. So when the markets has gone far beyond the fundamentals, right? That is the time you should take off some of the thing from the equities and put it into conservative assets.
But the same argument, let me extend that argument just a tad bit, right? Because your argument had to do with individual stocks, and the price of a stock as a multiple of the earnings, right? You look at price to earnings multiple. That's a simple way of looking at valuations. And there are moments, as you're saying, when those price to earnings multiples have gone through the roof. They're too expensive.
True.
Those are moments when you take money off the table. That's fair. But at the market level as well, Nikhil, an argument can be made at certain moments that the market as a whole is heating up. We saw that when the small cap and the mid cap bubble took place. Not necessarily a bubble, but you could see froth.
True.
And that was clear for everybody to see. From those heady levels, from those 52-week highs, we've come off for the small cap index 18-20%. For the mid cap index, we've come off 15-16%. So, and individual schemes have actually come off more than that. So the question to you is, if you understand that valuation perspective at the stock level, shouldn't you also consider it from the perspective of the markets and say, okay, markets have risen too much, let me take some money off the table?
Exactly, that's what I told you. You should have to react when the extremes happens on both the sides, right? So if you look at 1.5 years, 2 years back in around September 24, right, when mid and small caps are going up quite high, and their valuations in terms of PE multiples was far higher than the average, historical average of last 10 years, right? Then you should take off some profit from the table in terms of mid and small cap and move to a large cap, right? Or move to a conservative asset.
So rotating out.
You rotate from large cap to mid cap, small cap to a large cap.
Right.
See, that time large caps are not that expensive as compared to mid and small cap. Okay. Now when I'm talking broader market, see, when I'm talking individual stocks, here I'm talking that the P can be double of the historical average. Right? Here the market's P is not double of historical average.
Yeah.
So in case of when you're looking at broader markets in terms of mutual funds, your reaction should not be not very frequent.
Sure.
Right? It should be done. I'm not saying it should not be done, but it should be done in the extreme cases. Right? But when it comes to stock specific, right, you have to keep on looking at your stock portfolios and then say that at times you have to churn your portfolio very fast as compared to when you're doing on the mutual fund portfolio.
So the thesis that you should buy it, shut it, forget it. Buy it, fill it, forget it. Fill it, shut it, forget it. Fill it, shut it, forget it is incorrect.
So it applies. So see, so we cannot take any call at the 100% of your portfolio.
Right.
There is a something called strategic call and this is a tactical call. So if your portfolio allows you that, okay, this is a 10-year money, so it basically means that 60-70% of your money should be in equities. That is purely buy and hold. That I'll hold for 7 years, and once I'm closer to my goal, I'll reallocate that money. The 30% of the portfolio, 20-30% of the portfolio, that is what you play a tactical call.
So you're saying core and satellite.
Core
That's
and satellite.
essentially what you're talking
Exactly.
about.
So,
and this is only your equity portfolio. It's not your overall portfolio.
This is not your overall portfolio. Even for equity portfolios, say for example, you have a goal which is 10 years down the line.
Yeah.
You start with saying that, okay, today markets are reasonable. Let me put, because that goal is 10 years down the line, I'll put 100% of money in equities, which is completely fine from that goal perspective. Now, say for example, markets have already gone up far more than what your return expectation was. So you're expecting 12% return, and in 3 years, markets have given you, say, 20% CAGR return for next 3 years, right? In that case, because you know the markets have given return far more than what is expected from the market, it's a good time, valuations become expensive. It's a good time to book up some profit and move to conservative assets, right? So that's time you take a call that, okay, let me book 20%, 25% of profit and move to a conservative asset. You can't take a binary call that move 100% of your money because market can continue to go up and then you will have a fear of missing out, right?
Yeah, okay.
So that's why you take a tactical call on the 60-70% remains your static portfolio, 30% is what you need to do tactical call on the portfolio.
So let me ask you this, because in the past it's been suggested that emotions come into the play. And of course it does, right? When you're looking at your portfolio and suddenly it's looking green and you've crossed a very key threshold and the numbers are looking good and your portfolio is absolutely sparkling. There have been times over the last 4 or 5 years when that has taken place. There is this feeling that you need to grow more and continue to see that positive reinforcement take place. The point is that should you have a formula that you follow where if you've allocated and said that in this bucket, and you use either a bucket strategy or you have an overarching portfolio, and you say 80% of my investments are in equity, 20% in fixed income, or 70%, 30%, or what, 70, 20, 10 in gold. But there is a deviation when equity markets have gone up. And whether you see that as, oh, valuations have gone up, or simply as a percentage of your overall portfolio, because of this asset going up, it is now gone up to 80% of your portfolio from 70%, or it's gone up to 90% from 80% earlier. Should you have a simple formula to say at the end of the month or at the end of the quarter, I will review, I will see if there is a dramatic or sizable deviation from what I have decided, and I shift out and I book profits and move out to fixed income? Is it that simple?
So that's the best way to manage your portfolio. That's called rebalancing. Okay, rebalancing can be done every year, can be done every 3 years. Okay, now rebalancing is very important. Rebalancing doesn't mean that I will always follow a static allocation that 80, 10, 10, so it will be 80, 10, 10, right? You need to give some deviation to the portfolio. Say 80 at max can go to 85, or in the worst case scenario can, if I'm not very bullish, I can go to 75. So that's a range you need to give it. So say for example, next year your portfolio has gone to 82 and say 8 and 10. You can leave that portfolio as it is, right? And say, okay, let me not deviate, because not deviate too much, let me not book of the profit, because the valuation not be that expensive. Once the valuation becomes too expensive, then obviously your portfolio will also give you that direction. That your 80% has gone to now 85, 86%. That's a time to book some profit. It's 100% you should book your profit, right? And that's where the rebalancing comes in. If you do not rebalance, right, then you always carry a risk of volatility in your portfolio.
Yeah.
Because then you will have extreme volatility in your portfolio, which you may not be able to digest, and that's why the fear and greed comes in. So you feel very greedy when the market is only going up, and that's why you don't rebalance and then let the portfolio go. And then when the market falls, you feel fearful. And then because you've not booked some profit, you don't have any dry powder to put that money back in equities.
Let me ask you this as well, because the opposite, and we often talk about what to do when the markets are falling. So let me ask you that as well, right? Because in a sense, you're also selling to buy. If you have an asset allocation strategy, hypothetical scenario, you have 80% in equity and you have 20% in fixed income. Suddenly, you have a situation where just over the course of March, it's the worst month since COVID-19, and your equity portfolio has crashed. And you're suddenly sitting at 72%. You don't have money at hand. So you sell out. But do you only replace that 8%? Or in this moment, if you say that you don't need the money, Nikhil, for the next 5 to 7 years, and you're looking at 10 years plus, do you move whole hog into equity, and how do you do that?
Okay. So as I told you, you have a deviation, right? So today your portfolio has gone to 72%. Now you have to fill the 8% bucket, but you have extra 5% which you can take a tactical call. When you feel that markets are really cheap and it's a good time to add money there. See, in normal market will give you 12 to 14%, right?
Yeah.
How do you add extra return, right?
Yeah.
How do you add extra return? You add extra return by doing two things. One is that you buy something which is not in the flavor right now, and if that calls goes right, you make extra 1.5% return, and additional 1.5% return you make it when the markets are really down, and that time you add some money to equities. That's how you can make very good return on the equity. Otherwise, normal market will give you 12% return. If you want to make 14-15% return, you have to do two things, as I told you. Take a tactical calls in terms of contra calls, and buy when the markets are dip. So coming to this case, you can make extra return, and if you read that markets are really very, very cheap now, and I don't need the money for 10 years. So instead of just moving it back to 80, you make it to 85.
Okay.
Right? So that the extra money which you've added now.
But not 100.
See, it all depends on individual risk appetite. If your risk appetite allows you to go, see, you can never be 100, because tomorrow there's some need of money, and you don't even know what's the downside of the market. Market can, from here also can correct by 10%, the answer is yes.
Yeah.
So we don't know the downside. So you don't do 100%, but you can take a call of 5-10% extra beyond your strategic asset allocation. So when you say that 80 can go to 85, at max I can go to 90. Right? So that's a leeway, you should always have it, and you should use this leeway, right, when the markets are down. If you don't use this leeway, you don't then make that extra delta on your overall portfolio, right? So if you are aggressive, if you have a time frame, and if you have patience to hold the investments, right, then you should use this lever of adding extra money when the markets are down. That will add good alpha to your overall portfolio.
Okay. The other aspect is, and it comes to the fore often, Nikhil, when the chips are down, right? Because when the portfolio is bleeding, there is a tendency of underperformers to really underperform. And you would be more forgiving of a fund manager that delivers you less than expected return compared with peer and is just about meeting the benchmark. You'd be more forgiving of that fund manager as compared to the fund manager who loses 4 or 5 or 6 percentage point more than the benchmark in a market downturn, right? So when do you decide to sell and prune out underperformers? Because these kind of cycles, which move very quickly, can showcase underperformers who've not necessarily read the signs right and have not changed their portfolio strategies appropriately to guard against that. Because let's face it, fund managers have to get you money when things are going well, but they have to protect your money. That is also a responsibility. True. It's not just about getting you returns, it's about protecting your capital as well to a certain extent. So there's dual responsibility. When do you sell?
See, when do you sell is all depends on what the fund manager is saying and what exactly is doing. There can be always a different deviation between that. Say, for example, if the fund manager is a growth style of investor, and the growth style of investing is not worked in, right? Then you cannot blame the fund manager itself, because that fund manager says that I will follow a growth style of investing and I'll continue to follow that. And when the cycle revival happens for growth style, that fund will do good. But if the fund manager says that I'm growth style investing and the growth market is performing, and that time you're not performing, then he's not doing the right job. And that time you have to sell that fund manager and move to a better fund manager, because he's not able to perform on his own style. So that's where you look at it, right? Obviously, most of fund managers always believe that alpha can be generated by a fund manager when there's a downside, because they can protect it, because they will not. So when the markets are going up, right, when there is a bull market, a lot of people tend to end up buying micro cap stocks, right, and something which is not in favor right now, and because of that they generate their alpha, right? But fund manager says that we only buy fundamental strong companies, so you try to avoid those companies when the markets are going.
A lot of people did play that momentum game, and they had stellar returns over the course of the COVID-19.
So that's something most of fund managers believe that. That's something. So you need to understand that those fund managers who says this one should be able to protect your downside at that point of time.
Sure.
If they're not able to do that, then they're not able to play both the sides.
Sure.
See, it's a fund manager saying that I'll be a momentum player. I'll buy stocks which are in momentum. That fund manager is going to underperform when the markets are going down. So you can't blame that fund manager. But if the fund manager is not saying that I'm not playing momentum,
so then you have to rotate out. That
you have to
sell out.
Yeah.
But then, so the argument, of course, is valid. But the average Joe, and I'm not talking about people should seek advice, right? Let me establish that point. But what if somebody is studying, right, and is looking at this program, is looking to educate themselves as well? Nikhil, ultimately the advice is that you need to read the signs before things happen, and you need to rotate out of certain styles. It can either be quality, or it can be value, or it can be momentum, it can be various other things, right? So, but how do you do that? That's the question that I'm asking.
So coming to, see, nothing is permanent, right?
Right.
If say, for example, equity markets have done very, very good for last 3-4 years, it's bound to underperform in next cycle, right? Same if growth style have performed for 4-5 years, it's bound to underperform after that, right? And same goes for other styles also. So you need to understand that, okay, you should not chase the past performance. And most of people always end up chasing the past performance.
Right.
So if you look at lots of people in 24, right, have invested a lot of money in small cap. So if you look at Amphi's data, like last year, most of the money would have come to thematic and the small cap funds, because the past performance of those funds was very good.
Sure.
Right.
So now it's moving to flexi cap.
Yeah. So if you're only looking at past performance and investing based on those things, that's the worst way to invest your money.
Sure.
So you should not looking at past performance and investing your money. You should always looking, okay, is the valuation of this sector or this stock or this style is currently what it is as compared to its historical average. If it is reasonable or it's undervalued, then you should be investing in that sector and have the patience for 4-5 years to let the cycle play out. So you should always try to chase not the past performance, but something is not performed very well, right? But the fundamentals are strong, you should invest in those sectors.
And the other way to do it, of course, is to have a sprinkling of these styles in your portfolio so that you're not overly allocated to one style or the other.
So that's where the whole diversification comes in.
Sure.
That you cannot be biased towards one style. You should have growth also, you should have momentum also, you should have value also. But you also have to play a tactical call. That which style has not performed for last 4-5 years, I will have more bias towards that style. You cannot say I will just divide 30-30-30. Then your portfolio will always be average, right? So you take that tactical call of bias towards one side when the style has not performed for some time. Say, for example, if growth has not performed for last 3-4 years, and if you add extra tilt of your growth on your portfolio, and when the cycle turns in your favor, you make extra return, then that's how you generate alpha. So in 2018, 19, 20, value didn't perform. And if you have added tilt of value style on your portfolio, next 4-5 years have been great for your portfolio. So you need to keep on seeing that which sectors, which stocks, which style has performed, which has not performed. And if you think that the cycle will turn on for that cycle, you need to bias towards in your portfolio. So your portfolio cannot be 30-30-30, one style based on the past performance has to be slightly better, higher, and then you have equal division of other two.
So we primarily so far talked about tactical, and I think that's the most important thing to talk about right now. But we must spend a little time, Nikhil, to talk about what to do when you're reaching your goal. And unfortunately for a lot of people that had a goal in coming up either now or the next 4 or 5 months and who've been completely deployed in equity, that's not the way to go. You have to, for long-term goals, start rotating out of equity into fixed income 3 years before on a strategic basis. So there are systematic withdrawal plans which you can use, for example, which is the opposite of an SIP to pull money out, right? Or a systematic transfer plan for moving out of equity into fixed income. You should be doing that.
So all your investments, right, Alex, has to be done with goal-based investing, right? Every money has to have a purpose. You cannot just invest your money without having a purpose, right? So every money has to have a purpose. So if this money is for this goal, say this money is for my buying a car, this money is for my daughter's education, this money is for my financial freedom. So once you allocate that money to that goal, now track that your investment to that goal. So just to give you one example, right? One of my client, right, invested for his daughter's education. When he came to us, the daughter was like the graduation goal was 10 years later. So we invested in equities. Okay. Then came COVID to the 2020 after roughly around 10 years, right? Client says that, okay, I need to withdraw the money for my daughter's education. I said, yes, you can withdraw the money whenever you need it. So he said, I know I can withdraw the money, but in June 2020, when the markets are down, he said, my portfolio will be down. So how can I withdraw the money from equities for my education when the portfolio is like 30-40% down? I'm saying your daughter was going for graduation. It's not known to me today.
Yeah.
It's known to me for last 10 years. Right?
Yeah.
So 2 years before, we start trimming down your money which you require for next 2 years, the first year and second year. And you start moving that money to a conservative assets, to an arbitrage fund or a debt fund. And by last year, August 19, we have moved all the money which you require for first year and second year graduation to a debt funds, to arbitrage fund. Now, after the markets have gone up from August 19 to December 20, yes. But our goal is already achieved for the first 2 years.
Sure.
And we've already moved to conservative. And I don't know where the markets are headed for next 1 year.
Yeah.
But you will need the money. So that money is in arbitrage funds.
Yeah.
And you can withdraw it immediately. The money which you require in third year and fourth year, that is still in equities. Right? And that is down, the answer is yes. But do you require the money now? The answer is no. So why are you worried about it? So every investment has to have a goal in mind. So before doing any investment, first identify what your goal in mind. If your goal is say 10 years down the line, you start with equity. As you rightly said, after 7th year, start evaluating portfolio. It doesn't mean that in 7th year you have to start moving out.
No.
Because say for example, in the 7th year markets are down and you still have 3 years down the line. So let it be in equity. So on the 8th year when markets revive, then you start pulling out the money to conservative.
What if it's 3 years of bad performance?
See, normally, so if it's a 3 years of bad performance, so by the 7th year, before that equity has given you a stellar return before that. So your goal would already been achieved. To be very frank, if you see the 3 years of bad performance, it'd be followed, before that you would have 4-5 years of very good performance. So if I take the example, right, 2003 to 2007, right, was a amazing performance.
All of these things, Nikhil, sound incredible when you look at past years and you say that there are patterns that emerge. It's not necessary. Like, if you look at the last 2 years, they've been horrible, right?
Right.
They've been horrible not just because there's been a crack in the markets, but also because there's been a time value correction, right?
True.
So what is the guarantee, given the kind of geopolitical uncertainty that we currently have, that things are going to look up in 2026?
So Alex, let me take the same example, right? Say for example, you've come into 2020.
Yeah.
Right? And your goal was, say, in 5 years, I need this money.
Sure.
And you invested 100 rupees.
Yeah.
Your goal was that, okay, in 5 years, if I get 12% return, it should be 180 approximately.
Yeah.
Okay? If you see the first 3 years of performance, you already reached 180.
Sure.
Right? So then that's what I'm saying. The 2 years of bad performance, before that 3 years of very, very high performance. So your expectation was 12%, but you got more than 12% in the first 3 years as well. That's why you need to book your profits.
Got it.
Right.
Okay, so that strategy that you can utilize right now. Nikhil, thanks so much for this lovely conversation. I'm sure that it's been helpful for a lot of people. Let us know what you think. I hope that this is clearing some of your questions about when to sell. It's not necessarily a bad thing to do. And if you follow a strategy or a formula, you're almost always likely to step in the right direction. Thanks so much for watching. This is NDTV Profit.
a lot of legacy brands are sort of struggling to catch up with the pace of the change that this new generation of consumers are demanding. Add to that a layer of social media where global trends are creating local demands, builds a perfect opportunity for us to probably scale our business, our mission 10x from here.
For those who are not familiar with what Urban Platter is, how do you describe the company and what it does?
We are a specialty food company. Our mission is to make specialty and gourmet food available, affordable and accessible to everyone.
How do you then stumble upon food as a space that you want to be in?
I used to just cook on the weekends and stuff like that. And sometimes when you want to buy an ingredient, have a certain quality of experience at home, it used to be a matter of struggle all the time.
2021 is when, Hari Bhartiya comes on, Jubilant comes on. That's a mega brand. But no investor activity since then.
In 21, we were very busy serving to the frenzy of COVID buying that was happening.
Yeah, there was a time when everyone wanted to become a master chef at home.
One thing I've learned is money is an accelerator. There were a few things that we were not necessarily very good at, and we did go in the red for 2 years. We were very bad at understanding finances and managing money.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
Delhi, the Greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro App, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance.
All right, we have with us A. Balasubramanian, who's the MD and CEO of Aditya Birla Sun Life AMC. Bala, always a pleasure to speak to you. My first question, HDFC Bank, because of the chairman, resigning with some strong words in the letter, that particular counter really fell over 5% yesterday. And today also, while the rest of the market is seeing buying coming in, HDFC Bank still is down almost 2%. Is this a worry for an investor and mutual fund like yourself?
Yeah, no, HDFC Bank has been one of the widely owned stock in the mutual fund industry as well as by foreign institutional investors for two reasons. One is one of the largest bank in India as well as largest bank in Asia. And post merger of HDFC with HDFC Bank, they really become one of the largest bank in the world. And therefore the ownership has always been very high. And even from a profitability point of view, they have been, of course, growing about 20% year-on-year growth and close to about 8% growth of profit that they generated last year. This year, too, they continue to very good strength with NIM now close to about 4%. See, fundamentally, it's a sound bank. But however, the current uncertainty of geopolitical risk, coinciding with the resignation of the chairman and subsequent to that management was quick enough, given the vast experience that they have. They not only announced the new temporary chairman, they've also, of course, come on the call and clarified all the concerns that otherwise the market would have had. But I would assume it is actually good of the part of the management to quickly clarify some of these apprehensions. But having said that, must also remember that it is widely owned, and therefore, to some extent, people always look at the portfolio in terms of exposure, how much they own, and how much they should own other banks versus this. Could be one of the reasons why I would assume the price could correct. But otherwise, fundamentally, we believe that it is one of the most respected, sound, and the fastest growing private sector, large private sector banks in the country. Therefore, we as the shareholders continue to keep our confidence very high on the overall business, as well as being one of the large players in the industry.
My second question to you, Bala, is that is the lack of confidence now in the company, or are the investors really worried despite various confidence building measures being taken by the management as well as the board, because the stock has not really lifted back and has fallen more?
So I think I would not say it's the lack of confidence. I think it's probably I would say in terms of ownership, you have a choices. And second is, and the most of the ownership more in the range of about close to about 10%, almost double-digit ownership, anywhere between 7 to 10% kind of exposure. That most of the people who own it. And second is the foreign institutional investors also have been a large owner of these banks for a very long period of time. And given the current market conditions, naturally the index-based selling when it comes, naturally the selling also comes in. But otherwise, I would assume there is absolutely no lack of confidence from investors' point of view, especially fund houses like us. We absolutely don't have any problem in terms of the business as well as in terms of owning them as a long-term growth story. I don't think there is any such kind of concern. We must also remember another factor, that the index weight in the banking and financial services index, some of the two private sector banks had a very large weight some time back, and that got adjusted to close to about 25%. And to some extent, there was also continuous selling pressure which was coming in continuously. Therefore, it's more of ownership, how much you can own, and despite the market price falling, rather than having any kind of lack of confidence on the company post the recent development.
All right, I got your point on the ownership constraint and how much you can own. But also, Bala, in Aditya Birla mutual funds, you own shares worth around 8,000 crore rupees of HDFC Bank. What would your strategy be after the recent turn of events?
Of course, Nisha, we would go by the comparable valuations, and then the comparable growth that comes between the large banks as well as the mid-sized banks. I think we as a fund house have got a wider ownership in the financial sectors spreading across private sector banks, public sector banks, as well as in the non-bank financial industry. So therefore, for our point of view, though, we see there is somewhat of merit at the current price, both in terms of valuations as well as adjusted for the growth, valuation is cheap. To the extent, I would assume we would, as a fund house, we would be keen in looking at adding a price. But having been one of the large owners, again, at the reason that I mentioned about widership ownership within the financial sectors would still remain as the key decision maker in the portfolio management. To the extent, I would assume the portfolio buying would be largely on the basis of the portfolio correction, or either portfolio adjustment vis-a-vis the index, vis-a-vis the mandate that we have.
Right, and 2 points here, Bala. One is that Keki Mistry, an old hand of HDFC, coming in as the chairman, even though interim, does that add to the confidence and the corrective measures in the eye of such turn of events that the company has taken? And second, the CEO of the bank has come on NDTV Profit and stated that he is keen on his reappointment to continue as a CEO. Are those two really coming in as very bullish statements from the company?
Yeah, definitely, Nisha. I think the way one of the largest merger was handled by the current MD and the team, which between HDFC Bank and HDFC, and Keki Mistry being part of the HDFC for long, have also been instrumental along with Mr. Deepak Parekh. So therefore, the entire merger process, I think one of the, I would say, mega merger, this happened so swiftly and smoothly, and the entire thing was done by the current management team, led by Mr. Sachi and the rest of the members. And even coming together, they will also, of course, know how to manage these things. Given the fact that a bank, there's absolutely nothing wrong with the bank, absolutely nothing wrong with the management team, and therefore it is important for them to actually come together and boost the confidence of investors. And very fact that Keki Mistry has been appointed temporary chairman, it just goes to show the strength that how much you want to commit and support the management, purely in the base of their own merit and then strength. This is something that reflects on the management confidence. And Shashi and the team have been doing a wonderful job. I think they have got one of the best leadership team in the country. I think only the largest bank. And then he coming and actually talking about reinforcing the confidence. This is something goes to show the experience of managing a large company, as well as managing the expectation of investors, and be sensitive about these things and reinforce confidence to both investors and deposit holders.
Right. RBI has also allayed concerns around this to really bring back and recoup from this situation. But Bala, one more point that Atanu Chakrabarti mentioned in his resignation letter is that the full benefits of the merger has not been fully fructified. Do you agree with that? And what's your sense on the way the merger process has come about and the value creation for the investors like yourself?
So I think the whole merger, it is the largest private sector bank with a huge asset liability in terms of book they are running, purely the retail bank. And HDFC being one of the oldest, largest the real estate from housing finance company. Therefore, the merger would have, of course, would have had to go through some bit of challenges. But having done that, of course, being part of the larger entity, it has got its own plus points which will accrue over a period of time. It is not fair to actually assess the success of the mergers in the matter of these 2.5 years. I'm sure still they have a long way to go. And they being one of the largest player in even the housing finance market, being the part of the same portfolio, I'm sure this will start reflecting in terms of generating overall profitability further in the bank itself. Therefore, this is something the management is quite aware, and they, of course, they also been quite confident of running the merger quite efficiently. Also, we must remember that when they took over, all the bonds that are outstanding, which are high cost bonds, being part of the outstanding the bond, had to be absorbed, and over a period of time they all get matured. Therefore, one has to, of course, give time for all of them mature and start reflecting on the the liability, asset liability profile, as well as the NIMs, which I think the management has often have clarified the progress that they are making. Therefore, I think one has to give time for that rather than making any conclusion at this point of time.
Right. And what are the immediate potentials of growth that you really spot in HDFC Bank as an investor?
I think purely so I think we are on a high credit growth path. And in the last 2 years, we have seen deposit growth has been bit weak and credit growth has now just started picking up. I think HDFC Bank, one of the most trusted brand in the country, they have been taking a lead in terms of increasing the overall credit growth in the country, along with some of the other large banks. I think the lead indicators I think all of us look at is actually how credit growth has been picking up, and they are able to participate in the overall growth momentum that Reserve Bank of India has been trying to push. I'm sure the large bank like HDFC Bank would be the leader in this space in increasing the credit growth as well as the deposit franchisee that they are running at certain cost. Therefore, the NIM will also be improving. So that's the way I look at it. I think largely driven by the credit growth expectation that we have. As long as they are met, I'm sure the valuation is the only function of these parameters changing in the right direction.
So Bala, the present CEO's term is getting over in October. It is due for a reappointment. How critical is it for HDFC Bank to really showcase management continuity, and will the markets have more confidence in the same management?
So at any bank, Nisha, I think especially large entities like this, the leadership continuity is always important, especially at a time where the large mergers had happened very seamlessly, and outcome of that it will start coming in over a period of time. The same management who has done the entire exercise, if they are able to actually continue and pursue whatever the synergy benefit that they are looking at initially, and they are able to ensure that they get accrued to the benefit of the shareholders, they can always come only through the existing management. Ultimately, it will be the choice of the board. I'm sure they will be quite conscious about the fact that in any large banks, continuity plays a very large role, both from the bank's point of view as well as from the system as a whole point of view. I'm sure the management will take the decision as they feel is right.
Right. And Bala, my final question to you, and I can't let you go without asking about the current market situation. Of course, there are many moving parts, and of course, crude is a big worry, rupee is a big worry. How do you overall see the market, and what is your strategy to function and invest in this particular market?
I think there is, of course, a lot of the unprecedented stuff happening, Nisha. I think we have seen the geopolitical risk. We always used to say last 3-4 years, geopolitical risk, we used to say as a risk, but never bother about that it can have a huge impact in the commodity prices, and the world itself now is currently getting shaken up on the energy side risk that is coming in. I think India being one of the consumer of energy from overseas, definitely the energy being very high would have its own impact. But I think the way I see is, one, after every crisis, I think India is one, I always found ways and means of coming back very strongly, focusing on domestic growth, which in our belief, I think will come back. And second is the current order of the global uncertainty cannot continue for too long. If it remains for too long, it could not only impact the respective countries who are actually fighting, even globally, it can lead to a recession. Whether the global leaders would like to go for slowdown the overall economy and incur huge amount of cost on war rather than focusing on their own individual countries' growth. I'm sure somewhere the real sense will prevail and bring the whole current issue to the closure or maybe to an end, which I think hopefully we must see that happening. Therefore, from the overall perspective as an investor, we keep looking at a lot of attention we pay to the valuations and look at various sectors that can be beneficiary, that can, of course, can get impacted. Therefore, we play using the valuation as a parameter adjusted for growth and expectation that we have in India. That's something would be the overall approach that we will take. And also keeping in mind the current geopolitical risk, one, to what extent it can potentially create risk on India as well as global market. and accordingly apply the principles of valuation basis which I frame your investment decisions.
All right, Bala, thanks you so much for giving us your expert take on the markets. And as an investor in HDFC Bank, what you think of this particular bank and the stock. Thank you so much for joining us right here on NDTV Profit.
Welcome to the show, Vikrant Kshatriya, Managing Director at Novo Nordisk, who's joining in. Vikrant, let me start off with your initial comments and thoughts with regards to where the patent expiry goes. I mean, today probably, I'm assuming, is the last day.
Yeah, I believe there is still 1 day left when it comes to the patent expiry. And as an organization, we are very much prepared for this, like as a normal course for any kind of a product. Every product has a life cycle in which there is also something called as a loss of exclusivity. And we are also facing that loss of exclusivity in India. And this is completely natural for us. But this is not the first time. Here, if I have to say the patents or, exclusivity, we have seen this in another protein called insulin. Many of the players who have been there in insulin market, they started producing, and we were one of the original players. And we have seen that despite many of the players, every second person takes Novo Nordisk insulin, not only in India, but also across the globe. And likewise, semaglutide is also a complex protein. It's not a simple, you can say, chemical structure, or it is not something which can be made like a small molecule. This is a complex protein. It is made in our factories in Denmark with, you can say, years of production capabilities, not only 100 years for insulin, but for the last 12 years for semaglutide, made in septic conditions, made sure that the purity profile and the chemical structure remains intact. And not only that, the entire complete care cool chain of this biologics has stood test of time for 12 years. 49 million patient years have an experience of this product, and more than 40 clinical trials, in fact 50 clinical trials which has been done. So when you see the extent of this molecule, the experience of this molecule in the rDNA profile, we stand tall in terms of that experience and taking it forward more aggressively in this market, just to make sure that it doesn't become just a competition to gain more patients for the market share, but gaining more patients for better control, better outcome, and for what we call it not only weight control, but for cardiometabolic outcome.
Okay. So tell me one thing, Vikrant, how will Novo Nordisk then adjust to the pricing when it comes to names like Ozempic, Wegovy, in markets especially where India and Canada go? Because these are the ones where competition is going to be high. You're going to be dealing with, 50 plus pending generic entries.
Yeah, and often this question is asked on the pricing strategy. We are very, very sensitive to the Indian market. The first step was to get the innovation in the form of injectable Wegovy as well as injectable for, you can say, diabetes. We did that. And then we realized with the feedback from the doctors and patients that we need to tailor make the prices for India. And we reduced it by 37%. From that time, we have seen an acceleration and multiplication of the accessibility of this molecule. And more patients have started benefiting this novelty of this molecule. So I think we took that step much more in advance, not driven by the patient, not driven by what you can say by the competition, but by the patients, for the patients. And that has been the center point for our own strategy. I often say this, that we are driven by care and commitment rather than just by competition. So prices are adjusted to India. And not only that, we have now launched along with Emcure as well as with Abbott, the solution for obesity and diabetes. And we have priced it very competitively for Indian market for a wider reach. So on one side, we have got the brands from our own portfolio, but we have also localized it for India and making it possible for many more patients across India.
So accessibility is going to be the key from here on. You know, when you're talking about it, you have a Natco, which has actually launched its generic version of semaglutide in India at 1290, $14. How competitive do you think this is going to get? And you think it's going to be easy to match this kind of pricing?
Yeah, and we have to yet to see these kind of launches. Of course, the announcements are there, but we know the way we produce, the way we quality control. We know that how stringent the entire production line is and how stringent the entire value chain in terms of getting to the end customer, this complete care cool chain that is involved. And I think we are also very confident of the safety and the tolerability profile of our molecule. And this is RDNA based. So we have yet to see these kind of launches if they are for acute time for a chronic disease and how at the end of the day they remain, you can say, beneficial to the patient. I only can wish good luck because all these things bring better accessibility to the Indian patients. But we remain confident for our pricing strategy, which is very much tailored for India.
Okay, so do you plan to launch your own authorized generic or off-patent alternative to retain patients who may actually otherwise switch to lower cost domestic versions?
Yeah, and when it comes to the generic, let me just also tell that, you know, we are the largest generic players when it comes to the protein chemistry or the protein molecules, whether it is for insulin and also for semaglutide. Our factories have got the capacities like nobody's business. We have invested upwards of $20 billion in terms of making sure that these APIs, as well as the fill and ship formulations of these molecules, remain catered to the large population. So we are one of the largest. But at the end of the day, we just have to see that overall, you can say they cater to the masses also in India. And when we have launched with Abbott and we have launched with Emcure, we have kept that in mind that they also fight in the generic space.
Okay, last question, Vikrant. Are you working on any other breakthrough drug like a semaglutide?
We are looking forward to both Cagri Sema, let me tell you, and we are doing long-term trial, Redefine 4, it's Redefine 11, that's a trial name actually, which is a very, very long trial. And then we are also doing some of the trials in this molecule at a higher dose. And we remain confident of the outcome, but you know, it is too early to comment on these kind of an outcome till the time result is out. But on the other side, when we are talking about this amitriptyline, we call it zengametide, that also looks fantastic. It has just completed phase. These are actually in the development phase. We also have got a triple agonist, which is called as a UBT 251, which is also a triple agonist. But let me tell you, this science, this unique biology of amylin is just amazing in terms of finding out profound weight loss, also for HbA1c control.
Okay, so lots to watch out for. But thank you, Vikrant, so much for joining in. Always a pleasure to speak to you.
Dr. Wael Awad joining in. He's a West Asia strategist. Dr. Awad, thank you so much for giving us your time on NDTV Profit. You know, we want to understand, and we spoke to you closer to the start of this entire war, nearly 2 weeks in. Are we any closer to it ending?
Thank you for having me, Tamanna. I believe the war is aggravating and it's coming out being a regional war into a global war, especially with the global market is being directly affected by the development in the region, especially after the Israeli intentional attack on the gas of the Iranian, one of the largest gas reservoir in the world, and then followed by Iranian retaliation against UAE Saudi Arabia, and Qatar itself, which also brought down the production of Qatar 17% lesser than the actual production. So therefore, there is a current situation, need the international community attention to make sure that this war should be put to an end.
Dr. Awad, the tone and tenor of the messaging that has come both from the US as well as from Israel seems to suggest that US did not know about this strike on the gas facilities, right, on the gas fields. And Israel is saying that because the US have said that they should not hit these gas facilities, that they will cease doing that. It seems implicit in that they're saying that now Iran should not be targeting oil infrastructure of the Gulf countries. But there is no reason for Iran to accede to that. So is that something that will cause even more problems in the near term?
Well, it sounds like, a corrupted leaders having a brat son who bought a car and smashing the people and expecting the world to receive it with a good tendency that he cannot go to the jail. I think both are criminals in attacking the Iranian installation, and they knew it. If a superpower, the largest, the strongest power in the world, does not have a saying in this world, I think it is a gimmick.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
A lot of legacy brands are sort of struggling to catch up with the pace of the change that this new generation of consumers are demanding. Add to that a layer of social media where global trends are creating local demands, builds a perfect opportunity for us to probably scale our business, our mission 10x from here.
For those who are not familiar with what Urban Platter is, how do you describe the company and what it does?
We are a specialty food company. Our mission is to make specialty and gourmet food available, affordable and accessible to everyone.
How do you then stumble upon food as a space that you want to be in?
I used to just cook on the weekends and stuff like that. And sometimes when you want to buy an ingredient, have a certain quality of experience at home, it used to be a matter of struggle all the time.
2021 is when, Hari Bhartiya comes on, Jubilant comes on. That's a mega brand. But no investor activity since then.
In 21, we were very busy serving to the frenzy of COVID buying that was happening.
Yeah, there was a time when everyone wanted to become a master chef at home.
One thing I've learned is money is an accelerator. There were a few things that we were not necessarily very good at, and we did go in the red for 2 years. We were very bad at understanding finances and managing money. A lot of legacy brands are sort of struggling to catch up with the pace of the change that this new generation of consumers are demanding. Add to that a layer of social media where global trends are creating local demands, builds a perfect opportunity for us to probably scale our business, our mission 10x from here.
For those who are not familiar with what Urban Platter is, how do you describe the company and what it does?
We are a specialty food company. Our mission is to make specialty and gourmet food available, affordable and accessible to everyone.
How do you then stumble upon food as a space that you want to be in?
I used to just cook on the weekends and stuff like that. And sometimes when you want to buy an ingredient, have a certain quality of experience at home, it used to be a matter of struggle all the time.
2021 is when, Hari Bhartiya comes on, Jubilant comes on. That's a mega brand. But no investor activity since then.
In 21, we were very busy serving to the frenzy of COVID buying that was happening.
Yeah, that was the time when everyone wanted to become a master chef at home.
One thing I've learned is money is an accelerator. There were a few things that we were not necessarily very good at, and we did go in the red for 2 years. We were very bad at understanding finances and managing money.
We're speaking today to the founder and CEO of Urban Platter, a brand that you may have seen at your neighborhood supermarket selling gourmet items that you can cook at home yourself. Chirag, welcome to the Disruptors.
Thanks for having me here.
Okay. For those who are not familiar with what Urban Platter is, how do you describe the company and what it does?
So, in very simplistic terms, we are a specialty food company. Our mission is to make specialty and gourmet food available, affordable and accessible to everyone. And whatever it is that you want that falls in that category of either being specialty or gourmet, chances are that we may have it. So that's in a nutshell, that's what we are.
Let me think how to describe this. So fancy stuff that you are not everyday staples.
I would call it trending stuff.
Shirataki noodles,
Yes.
or edamame seeds, and health and fancy stuff. Why get into that space way back in 2015?
No, honestly, so when we started in 2015, my hunch was to solve the problem of availability of food and add a layer of convenience via e-commerce to it. And we started by selling a lot of third-party brands. And what happened over a period of time is what we realized was that consumers were still having a lot of problem with third-party brands that we thought we could solve in a private label play. So around 2016 or so, I pivoted our complete synergy into a private label play, started solving a lot of consumer pain points through our private label Urban Platter. And honestly, we just kept listening to consumers, saying yes to them, trying to figure out why they wanted what they wanted, and built this entire range.
So, when you started out, and I started my introduction with talking about your journey, you were very sure you wanted to be an entrepreneur, never wanted to join one of those MNCs or get a great job, always wanted to be an entrepreneur?
Yes, always wanted to be an entrepreneur. I don't think for a single day of my life I've ever thought that I would probably fit well working at somewhere or working for someone. I think that's naturally how we are raised, and being an entrepreneur is the only natural fitment to what I can do.
Yeah. No, but so when you want to start being an entrepreneur, you're 19. Your parents probably have to wrap their head around your decision, and then you're thinking of something to do.
Honestly, it may sound very serious, but back in the day, it was not. I come from the Kutchi community. So for us, being an entrepreneur is almost like an extension of your thought process. Everyone in the family is an entrepreneur. Back in the day, I still don't recollect anyone in my family, who does a job. I mean, they're all entrepreneurs, and that's how you are naturally wired to think. And the dinner table conversations or the general conversations are all also very entrepreneurial. It's more so around how to figure out to becoming a better entrepreneur rather than how to sort of be better at something or get a better job or a raise or something like that. So it was never an occurrence, and coincidentally, most of my friends in my college were also entrepreneurs, and all of them used to be in apparel. So it just dawned on me that apparel is a great industry, and that's how I got started. Of course, at 19 when I started, I was too naive to even understand the basics of business. So I built a great business which did not make any money at all. And that taught me a lot of lessons about resilience, cash flow, relationship management, and in general negotiation. In the hindsight, that was my college, the best coaching class, the best learning of my life.
A little more expensive than what anyone else would have paid.
Yes. And a bit stressful also, but it was all worth it. It just builds character.
So how do you then stumble upon food as a space that you want to be in?
So after my apparel business, my curiosity and passion in tech led me to my gaming venture, where I used to just enjoy playing a lot of skill-based games like poker and stuff like that. So with my brother, I started this company called Glamble Gaming Network, and we used to run this boutique poker game called Glamble Poker on Facebook when it was super viral. It was just opportunistic play done right. The timing could not be better. And as social media in general took off in India and the world, we also did phenomenally well. As a matter of curiosity of just unwinding from the daily chores of running a business, I used to just cook on the weekends and stuff like that. And thankfully, I got the opportunity to travel a lot, to explore the world. In general, that got me very curious and passionate about food. And just as a hobby, we used to sell some specialty coffees and ingredients and stuff like that on eBay, just to have validation of your liking and disliking in the market. And that gave me a lot of confidence. It gave me a lot of validation. And back in 2015, when my business naturally wound down, I took a brief sabbatical. Series of events happened, and I eventually got, for the lack of better word, dragged into this business, and I couldn't be happier.
What is the problem you were trying to solve? Every idea which is new and different is trying to solve a problem of that time. Today, perhaps access to different kinds of ingredients is not a big deal in the Indian ecosystem, but at that point it was very different, isn't it?
Definitely very different. So let me just give you some anecdotal examples, in the sense that when me and my wife, we had our first child in 2013, going out and eating out and stuff like that wasn't that much of a luxury. We became very inclusive. And one of the things we used to do was just cook at home, enjoy weekend meals and stuff like that. And sometimes when you want to buy an ingredient, have a certain quality of experience at home, it used to be a matter of struggle all the time. Sometimes you would have to settle for an alternative. Ironically, sometimes it would be an alternative of an alternative. So,
what? Which are the ingredients you found?
So, for instance, let's say you want to have a risotto. I mean, typically a good quality Italian style or an Italian risotto, you would want an arborio rice, and you would probably get some Italian style rice or something like that, which you could make do with, or sometimes you would have to settle for a Indian short grain rice from some South Indian region that would mimic the texture. It dawned on me that every time when we had to settle, the abundance of availability of these ingredients abroad versus the scarcity that was available in India really opened up a lot of white space in my head. And I tried to solve it, and sometimes when you try to solve it and you are able to solve it easily, you feel that, wow, there is a natural fitment, and that's what we essentially.
So it was
learned.
Easy to solve.
I would say relatively, yes.
So why was nobody doing it? Was that kind of demand not there, or didn't it seem like a big enough market?
I think every industry goes through a phase when the incumbents don't see opportunities in spaces where newcomers do. That probably was one of the things, because when I used to buy ingredients and products from my suppliers, they used to often tell me that, this doesn't sell, this doesn't move, don't get this, don't get that. And me and my curiosity-led nature, we used to be like, when we used to sell on Amazon in our early days, we used to be like, let's put everything out there. Let's not invest too much in things that don't sell. Let the consumers do the talking. Now, ironically, back in the day, what happens is what the traders per se feel that doesn't sell is what the consumers search online for.
Give me an example.
lot of examples. For example, there used to be a lot of specialty mustards from France and from European countries. Mustards with honey, mustards with some spicy peppers and stuff like that. And the typical thought process was like mustard as a condiment, only the standard Dijon mustard sells, and specialty mustards don't sell. And when we unlocked the availability of these specialty mustards on Amazon, turns out people who were looking for them and were not able to buy them all got a platform and the convenience of home delivery to buy it on Amazon. So back in 2015, when we started our business selling third-party brands, we built up this catalog of roughly 3,000 products, and almost everything in some measure or other was selling. That gave us a lot of validation, a lot of insights into consumer trends. Now, that validation, backed by Amazon's insights, backed by our instincts, backed by studying global trends and all, built this entire narrative in my head and my team's sort of playbook that specialty ingredients was here to stay. They were here to stay. Also, one of the most common question back in 2015 and even today that we get asked is, would people pay a premium for these products?
I was just going to come to that. Are you a premium top shelf product?
Honestly, premium has a lot of different connotations for everyone.
Are you an expensive product?
I think we are a costly product. I think there are costly products and there are expensive products. Costly is something that costs a lot to make. There is a reason for that. There is a lot of input, either of raw material or labor or compliance. And expensive is something which is just marked up and spends a lot of money in making sure that consumer sees value in that. I think we are a costly product.
You're also in a highly competitive space populated with FMCG giants who have the ability to replicate what you've done fairly easily. Was that a thought in your mind? I mean, if tomorrow a major FMCG player wants to come and sell edamame beans or this fancy mustard or the right kind of noodles or arborio rice, it's not going to take them that much effort.
Even back in the day and today, the answer is yes. I think it's very easy, relatively easy for someone if they set their head in right place to do what we do. I think where most people don't necessarily understand is the why of what we do. I think when your whys are very clear in your head, the what you becomes very obvious. With core FMCG or legacy companies, a lot of them are very set in their own ways, sometimes not necessarily listening to consumer trends and acting on them fast. I think being our scale, being set in our ways helps us, kind of build on trends at speed and identify opportunities that are necessarily not very big right now, but may get big at some point.
So you're saying the size has given you advantage, that you can be more nimble, more flexible.
I think it's size. I think it's the ability to listen to the consumers and act on speed. And I also think, in general, building expertise around executing international trends in this market at scale through an international network of suppliers, all of that put together gives us a little bit of that unfair advantage.
But you did have large players coming on. One large player is an investor. 2021 is when, Hari Bhartiya comes on, Jubilant comes on. That's a mega brand. How did that happen? Did you seek them or did they seek you?
Honestly, in 21, we were very busy serving to the frenzy of COVID buying that was happening.
Yeah, that was the time when everyone wanted to become a master chef at home.
Yes, and that was the time we were the most busy, to be honest with you. I think since the first lockdown and after that for over the next 1.5 years, we were really busy serving and delivering food, ingredients, what have you, to the consumers. And Jubilant and the family also happened to be one of our very regular consumers. So it was through a common connect that a conversation happened and they loved what we do. As a matter of fact, we were talking to multiple families in India who used to buy our products often. No names taken right now, but I think one of the conversations we had with Jubilant was a lot around vision, a lot around belief, a lot around, they understanding how big this opportunity would get probably 10 years from that day. And It was not necessarily validation capital. It was just acceleration capital. So more than that, more than the capital, it is just the company, the thought process, the mentorship, the value system that they brought onto our ethos really added a lot of value over the years, and truly grateful and honored to have them on board.
Yeah, but no fundraise since then. No growth. I mean, no growth, of course, but no investor activity since then, since 2021.
So we are not one of those typical D2C companies, that spends a lot of cash. We're always very grounded in our approach, always been a bootstrap, family-led business. Since 2015 to 2021, before we raised money, we were always profitable because that's the only way, at least I've been raised to build a business. And after we raised the money, I think one thing I've learned is money is an accelerator. What you're good at, you become very good at. What you're bad at, you really start sucking more at it. So there were a few things that we were not necessarily very good at, and we did go in the red for 2 years.
Like what? What do you think that phase was about?
I think we went extremely bullish on kind of new product development. We did not necessarily monitor our inventory health very well. We went too aggressive on kind of the speed of our business without necessarily building resilience of supply chain, and that's what hit us hard. One of the things, and I'm absolutely not at all going to sugarcoat it, we were very bad at understanding finances and managing money, and looking into the cost of capital as a part of how businesses are built. And all of them taught us valuable lessons. So it took me almost a year to figure everything out, to sit with my team, to just granularly go through everything and build that understanding. And happy to say for the last 2 years, we are back in the green, and that's how we intend to stay.
Yeah. Do you think to start, scale, and run a successful business, you need that kind of support in terms of degrees, or do you think it makes more sense to learn it on the job?
As someone who's never graduated myself, I would definitely say that today, if anyone wants to start a business, it would give them a little bit of unfair advantage, because I think education has evolved a lot over a period of time, but nothing beats the knowledge that you get while doing a job. So being educated gets you started. Experience gets you, it makes you wiser, and having good mentors and having real life examples just builds character. You need a hybrid, good blend of all of that.
Where does the growth story go from here? You have touched now you're going to touch this year about 100 crores in revenues. For someone who started this as, let's see where this goes, for a family-run operation, this is pretty good. Are you satisfied with where you are?
I would say not at all. I mean, for given our business mission and what we are able to make an impact on the lives of people, I'll just probably dial down a little back and say that one of the best things about building this business is how we get to meaningfully impact lives of people. I get emails all the time stating that, look, thanks to you, I was able to achieve this or achieve that or beat this disease or able to lose X amount of weight.
Really?
All the time.
I mean, people have a lot of options for that. Are you sort of, is there, you're one option that people have in the market?
I think we are one of those resilient, consistently available, reliable options that people have and they look forward to. I think in a world full of options, being very grounded in your values and being very consistent in the eyes of the consumer means a lot to them. Genuinely, when they see a brand that echoes with their values, they like everything about it, they want to explore more of it, it builds a very different narrative in their heads, which is what we have seen over a period of time. As a matter of fact, our repeats are over 45%. 45% of our consumers actually come back within 3 months, and that's the kind of love and repetition that we've seen from our consumer. And
how many SKUs now?
We sell roughly 800 SKUs.
800 SKUs. So you
all
have
private label.
All private, and you're making them yourself? Or
we manage the supply chain.
You manage the supply chain. So The interesting thing about the growth of D2C brands in this space in India over the last few years has been because of social media, because of Instagram. There's a lot of discovery. So there's a level playing field in terms of discovery. But the moment these brands get really out there, there's always a large shark waiting to lap them up. My question to you, Chirag, if there is an offer you can't refuse tomorrow and a large company comes and says, hey, Urban Platter can continue to be its own brand, we just fold it in. Because FMCG companies are massively shopping right now. Is that something you would consider?
So, I mean, since 2015 till date, I have built, with my team, we've built Urban Platter to win. We've never built it to be sold or, of some sort of that kind of a thought. That being said, I'm a very realistic person. There is only so much I bring to the table. If there is someone who can help us accelerate our mission, who can keep the values of what we do intact and get us where we probably want to go even more faster, that is always a welcome conversation. Our thought process is to be obsessed with the consumer, constantly listen to them, constantly course correct, improvise and build it for them. If someone can do it better than us, more than happy to have that conversation with them.
Are you having those conversations right now?
Not often.
So I asked you a short while ago, what next? Are you satisfied with where you are with 100 crore turnover? You have a good presence in large cities, maybe 3 or 4 large cities. What is the path from here on in your view?
So, I mean, if you look at the larger picture of how India is consuming right now, I think we are going through a very transformational phase in the journey of consumer products and consumer businesses in India, where a lot of disruption is happening through distribution and quick commerce, where a lot of consumers are becoming clearer about what they want, even clearer about what they don't want in their food. And a lot of legacy brands are sort of struggling to catch up with the pace of the change that this new generation of consumers are demanding. Add to that a layer of social media where global trends are creating local demands. Add to that a layer of digital discovery, digital delivery, digital gratification. There's a lot of excitement going on right now. And I mean, depending on which side of the table you are on, it could be very exciting, it could be very overwhelming. I think we find it very exciting because it builds a perfect opportunity for us to probably scale our business, our mission 10x from here.
10x?
Yes.
So you mean 1,000 crores?
Yeah, I would say even more than that.
By when?
I think we look forward to doing that in next 5 years. And we intend to just be us, just become better, become sharper. I think speed is a great companion to have on your side. If we can deliver faster to the consumers, if we can offer them better selection, if we can offer them better value and bring all of those synergies in a tighter, faster execution environment to the consumers, we will only keep going upwards from this point.
To grow 10x in the next 5 years, what do you need? You need more capital? Would you look at the capital markets? Do you need more investments coming in? How do you chart a path from 100 crores to 1,000 crores in revenue in 5 years?
So I think definitely we are going to, first and foremost, going to need that thought process to get there. The belief system that yes, we can build in this market. The market is